I don't want to interrupt your story, but I was driving my RV. I'll get to that in a moment. Go ahead.
Oh, you're driving your RV in the middle of the storm. You
Yeah.
had time to wreck the RV just before you go to sell it, just so you know.
Well, you don't want it leaking right before you sell it, so that's.
Oh yeah, because then you gotta
That's right.
seller has to pay for repairs. So wait, did the guy take delivery? He.
What's that?
So wait, did you were able?
No, he came to pick it up, but we took it for a drive real quick. But it was pouring rain.
Gotcha.
As you were
Yeah.
about to say.
Yeah, it was.
I mean, it was sideways. You couldn't see the cars in front of you. That's how, it was coming down in sheets.
No, I know.
Yeah.
I know.
You were out in that?
I wasn't. I just missed
Did the
it.
chauffeur have a good time? Was he getting around? Did he pull over?
The person that holds my umbrella was
Was
not
having a hard
happy.
time? Yeah.
Yeah, but wait, Pat, if you got a cash infusion for tens of thousands of
Oh my God, you
dollars,
sound like my daughter. Go ahead.
where are our bagels? Where are our donuts? Like, why aren't you making it rain pastries? And like, you got tens of thousands of dollars of cash.
It's not a winning trade.
Thank you.
Did someone not
You
hand
want
you
some of the
a
losses,
fistful
too?
of dollars? What does that show? Fistful of
doesn't.
dollars?
She does not take losses.
It was with Clint Eastwood or something.
Yeah, I'm a fistful of dollars.
Going back some time.
Yeah,
Before
well,
your time.
I work with
Guarantee
boomers.
you've never seen a fistful of dollars.
Yeah, I've never seen it, but I can name it.
Wow, good job out of you. I was if she saw it, if she's naming it.
Guarantee.
No, I've never seen it. It's not my speed. I'm
Such a good movie.
Only one you might have seen is The Good, the Bad, and the Ugly.
Nope.
Not even
No.
with the.
No, my mom's a big Western fan. Like she's the
I
one.
was seeing The Good, the Bad, and the
Yeah, she has.
But a fistful of
Was
dollars.
Vanetta a Western?
No,
Oh.
no. My namesake, no.
Fistful of Dollars is a good movie, but it's like you got to be a hardcore.
Spaghetti Western, right? It was
spaghetti.
dubbed over.
Yeah.
Oh, there it is. John's pulling it up for you.
Yeah.
Yeah. This is Clint Eastwood before he was.
Just leave it alone.
Also, like a young Clint Eastwood, like he could get
Before
it.
he was Harry Callahan.
Yeah, he could get it. Oh, Dirty Harry.
Yeah.
Yeah.
Before he was Harry Callahan.
Yeah.
Hey, you've come up with Harry Callahan. How'd
Yeah, I don't know his last name.
You know Harry Callahan?
I know it. I would never remember the name.
Oh man, it's
Yeah,
classic.
there he is. Shot in Italy, I believe.
What year is
They
this?
call him-
This, I'm gonna guess this is mid 70s.
Yeah, the music. It's iconic.
Okay, stash game on point. Oh, that's where this song is from?
Yes.
Oh.
I can't believe you don't know the movie if you know the song all the time. Horizon should have taken some cues from this movie. It would have been a good Western.
You know what, Tom? You could rock a poncho.
You could.
You could.
could. Beret.
That could be a
poncho.
serve.
Yeah.
Yeah.
I can.
Look at this look. You could pull. You
Yeah,
got the
you
little
could do that.
legs. You could pull this off.
Yeah.
I can honestly say I've never worn a poncho in my life.
Okay, so wait, does anyone live in this movie, or does just everyone just
Everyone
die?
does.
Okay, cool.
Yeah, everyone does.
Cool.
Nah. He saves them. He shoots the rope.
Yeah.
Oh, all right. Well, fistful of dollars then.
Yeah.
But yeah, I wanted
stuff.
bagels and donuts this morning.
Safe to say you didn't do any of that last night, right?
I didn't save anybody's life.
Save it-
No. I was out and about in my neighborhood, and
Did you see the water cascading off of Wrigley? So they had like a 90-minute delay at Wrigley, and just like sheets
I didn't.
of
see it.
water were cascading from the upper deck into the seats there.
It was so dark. It looked like the end of the world.
Well, it was also nighttime, sweetie.
No. Way before they.
I know. Yeah, it was just a major storm.
Way before they delayed the game. And the thing was, it was
Mentioning it a lot. Were you scared?
No, but I'm out on Southport, which is on the way kind of to Wrigley,
Yes.
People Park. So there's like all these Cubs fans, and they're walking to the game.
Well, that's unusual since you are at Wrigley with a whole game. And
I know. What
all
I'm
these
saying
Cub
is,
fans were there. Go ahead.
there's all these Cub fans walking to the game, and everybody's like looking up because it's black out, and they're all wondering,
Not a good omen.
should I go
Stay or
back?
should I go?
Should I go back to my car? Like nobody has an umbrella with them, okay? Because it wasn't supposed. I don't think it was supposed. So everybody's looking up at the sky, and there's like hundreds of people on the streets, and they're all looking up at the sky, and they're all in their Cubs outfits, and they're
In their Cubs outfits.
they're looking backwards. They're looking backwards
Here comes ensembles.
to like wherever they park their car. They're
Yeah.
this is dumb. Like, like I'm.
Well, the Cubs aren't that great. Like, I don't want to get struck by lightning for the Cubs.
I know, but people go to games like the game the other night. Like not last night, the night before last, it was sold out.
Sure, but that's great. I mean, Chicago, we support our teams no matter what. Yeah. Did you hear they want to, so United wants to do what Wrigley has done, and they want to build an entertainment complex in partnership with like the Reinsdorf family or whatever. They want to take 58 acres around United, have it be like mixed use, more for entertaining and retail and shops.
To build that up over there, but they didn't.
What are your thoughts?
All themselves. I mean, private funding and stuff like that, but then nothing from the.
Because you've been going to the United Center since like what, 81? Like it used to be a rough neighborhood. It's fine now.
Mm-hmm. I've been going to the United Center since we started.
1947.
You said 81 was my guess.
I'm gonna say 80. Well, I've been
84.
82.
Okay.
But I was gonna say we got season tickets when Jordan got, so it was 84.
Okay, yeah.
And we used to drive down Wood. I don't know if you remember Wood Street there.
Yes.
But it's kind of all projects.
Yeah.
And it was a little hairy at night. Yeah.
It's a little dicey. It was 40 years ago. Every neighborhood is transformed. Yeah.
The good news is back then they didn't have like all the parking that they have now. So all the parking lots were private. So one of the kids that traded in the bean pit. So he was a broker. One of the kids whose dad owned the lot was a broker in the bean pit. One of the guys that worked for us was a trader in the bean pit, was like his best friend. Uh-huh. So we got front and center. Like,
easy out parking, so the word you're looking for.
Basically, they sat in our car all night. Just,
Oh, that's nice.
Yeah, it came out. The car was right in front. It was all warmed up in the winter. It was beautiful. The old United Center.
The barn.
It was freaking great.
What was it called? It wasn't even the United Center then.
Chicago Stadium.
Okay.
Barn. It's called the barn.
Okay.
And it was loud. It was all on top. Everybody was on top of each other. And
kinky.
And it was a great place to watch hockey. It was a great place to watch basketball. I mean, United Center's
basketball in '84. Everybody was not on top of each other. There was 3,000 people in the stadium, and maybe there was 1,800 people in the stadium.
By Jordan's second year, it was
yes, 100%.
Yeah, by Jordan's second year,
100%.
When Jordan first got there, it was like, okay, this kid's probably going to be good, but like we didn't.
Here's the thing. Like, I don't super duper love the Disneyfication of like of all of these, like, because like I miss the old Clark Street corridor with the really sketchy Taco Bell, which was so great when you were drunk, with the Salt and Pepper Diner, with all of the bar. Like I miss, because that's Chicago.
I do Salt and Pepper.
I miss Salt and Pepper Diner. The rudest waitresses.
I don't miss.
It's a good service though. They're just like, yeah, we'll get to you.
The best service.
Yeah.
The old United Center though didn't really have food, so we used to bring in
Pasadena.
Bring in burritos in our pockets. Jules and I would walk in there with 2 burritos.
You guys were armed and dangerous.
It was gross.
It was gross.
After 3 games, literally after 3 games, we were sitting there. We're like, "Oh my God, this kid is
Jordan." Yeah,
Jordan. That's all there was.
Yeah.
The team was so bad, and we're like, "Oh my God, this kid he's unbelievable."
He was so lanky and skinny then, though. Still,
he was lanky, skinny. But he was kind of a badass right out of the chute. Like he wasn't popular.
But that's cool to be part of, that historical arc.
The team didn't like him. The other teams didn't like him. Like nobody really liked him. Nobody talked to him. It was weird. He was a little bit of a weird kid. Except
for just a motley crew of traders who took him into their fold and gave him a lifelong debilitating gambling addiction.
Today.
Yeah.
We can tell talent when there is.
Yeah.
We could figure that out pretty quickly.
Yeah, he has you to thank for his lifelong debilitating gambling problem.
After the 3rd game, Jules and I were like, okay, this kid's great. Not good, this kid's great.
It's great.
After that, by the 2nd year, you couldn't even get a ticket anymore.
Yeah, I believe it.
Yeah.
Well, very cool. Hey, we got...
And that was 1 year away from the Bears going to the Super Bowl in '85. So, like, Chicago...
Chicago peaked.
Chicago was on it, yes.
Chicago peaked.
The Cubs won the pennant. They didn't win the World Series, but they won the pennant in '84.
Right.
So, in '84, we had Jordan breaking in. We had the Bears actually getting good. by 85, and the Cubs winning the pennant.
Yeah.
Like the whole north side was like up for grabs.
Yeah.
At 90, it was over.
Yeah, you peaked. Yeah.
By 87, it was over.
Nah, the run of the Bulls in the
Oh, the Bulls
90s.
started in the 90s.
Yeah.
Yeah, come on, that's great. Hey, we got a great show for you today. A lot of really good content headed your way on this wonderful Wednesday here at Tasty Live. At the top of the 8 o'clock hour, we're going to do an options jive. Is the success rate sustainable?
Depends who you are.
Tom, you know that's not sustainable. You know that.
I mean, Liz and Jenny have been sustaining success for years. I mean, they are
They
great.
started with more than we have.
Yeah, the ladies are icons, but you.
Yeah, they've outkicked their cover. They've outlasted their.
Yeah.
According to Liz, she likes.
No, according to you, you're like, you guys got 5 years tops.
It's one of my favorite stories.
Yeah, of you being a jerk. That's great.
I wasn't being a jerk. I was being realistic.
Okay, that's a wonderful
It
story.
lasted 13 years. That's
Okay, I gotta keep it moving. Hey, and then at 8:40, it's Assume the Position Wednesday, so we're gonna do What's Your Assumption? Tom and Bat are gonna try to do as many trades as possible. These are viewer-submitted trades with an underlying and a directional bias. That's headed your way at 8:40. Then 9 o'clock, we got Jacob in the house, Skinny on Options Math, the views of Brownian motion. That's hard to say, Brownian motion.
Yeah, Jacob's going to look at a couple of different ways to look at Brownian motion, and then we'll take it from there.
And then we'll take it from there.
He's gonna confuse everybody.
And then live from the trade desk, my personal favorite, big boy Scotty S. Scott Sheridan, counting down all the top trending ticker symbols over at Tasty Trade. You don't want to miss that. And my also favorite today, Johnny Trades, Bat's son that didn't flip a golf cart, will be in with his trade ideas. Nicky Bat coming in to present his trade ideas.
Favorite to flip a golf cart. He hasn't flipped one by now. He's still a favorite in his lifetime.
No, he's matured.
Yeah,
He's matured. He's
Really?
He has. He's mellow.
He's matured.
Yeah, he's mellow now in his middle age.
Yeah.
I don't know. He's capable of. I flipped a golf cart with Jules when we were in our 40s.
Yeah, but that was just physics.
That's a weight.
that was just improper weight distribution.
I can flip a golf cart in our 40s, then he can. Nicky Bat's got at least 10 years left.
Yeah, okay. And then what everyone's waiting for today is Tom Sosnoff, Dylan Radigan, Truth or Skepticism, 1 p.m. What are you talking about with Dylan today?
I don't know. Dylan's on a roll, so I'm not sure. I haven't talked to him this week.
Okay, I mean, we've lived like a multitude of lifetimes in just this last week and a half. Like an unprecedented event happens like every day. So you guys have a lot of fodder. But that will be at 1 o'clock. And
I don't know. I don't think we're going to get political, but we'll see.
sure, when were you guys ever not political? But whatever. Okay, you guys are going to talk about PMI today. Like, what are you going to talk about? But that's at 1 o'clock. Broadcast here live on the Tasty Live, but also on the Tasty Live YouTube channel. Make sure you join us on our YouTube channel because it's fun. Hang out in the chat, say hi to Frankie, be nice to each other, and subscribe to our YouTube. But hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story, breaking news, across the wire. Our leading story, top story, jump in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's July the 24th. It's part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta, and I am on my way to my sparkling summer to live out my Swifty dreams.
Sparkle shine.
Smile, sparkle, shine. That's from Katie. But that's right. I'm going to go see Taylor Swift on Saturday. I'm not going to be here. I'm just leaving. And I'm super excited about it. And
Who's going to water the plants?
I don't know. You guys are on your own.
Are proofreading my cherry bomb.
I am not. No, I have my out of office emails set. Everything's going to get sent back to you.
I'm gonna turn the phone off and I'll text it to you.
Literally, I will be in the German Alps. I am not proofreading your email. But anyway, this is the part of the show we like to call the Daily Dose, where we talk about today's financial
I got
news.
$5 says you do.
This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
I could buy her for $20.
Mr. Bat earnings.
What's our German marks right now?
It's the euro, sweetie.
What's the euro?
So yeah, well, how old are you,
Since
German
about
marks?
2000, so the last 20
I haven't been
years.
to Germany. I I haven't had any German currency in so long. I forgot. Yeah, it's euro.
Yeah, it's everything's.
Let's see. Hold on.
Everything's the euro. Yeah. What's my rate? 107.
No, that was about a month ago.
108.5, a little bit better.
Yeah,
Okay.
almost 109.
Okay. Yeah. So you're gonna have to pay up. You're gonna have to pay up for me then.
It's worse for you.
It's not the worst. I mean, I was in Europe once and it was like $1.49, $1.50. So
Not the euro.
yes, it was.
Really?
Yeah. It was a while ago.
You're at like 109. You're gonna
That's
be
fine.
wrapped around 109.
That's fine. I'm so excited.
Can't hurt her. She's going to see Taylor Swift.
Yeah, that's right. That's right.
Can't hurt her.
Anyway, earnings, Mr. Bat, for tomorrow.
Okay, well, last night you had Tesla, which looks around
We'll get to it.
20.
Yeah.
Google down 7. EMPH up around 3. Today you've got CMG, which you reminded me. Thank you. RCL, Ford, NEM, Las Vegas Sands, AAL.
Tom, what are you doing in
That's
Chipotle?
great.
So Chipotle is like your biggest burrito that's out there, right?
Yeah, I can't believe EMPH moved $2 freaking. That stock never moves $2 on earnings. It moves like 100 each time. I mean, I feel like it moves like 20%.
You saying it's a scam?
No, I'm saying it's the one time I didn't play it.
Yeah. Well.
I have a crappy little position on.
Yeah. Well, what are you gonna
We
do?
made fun of it yesterday. Must we go?
What'd you say? What was your question?
What is your existing position in CMG?
Chipotle?
Yeah.
I'm just short puts in there. Let me just take a quick look.
You're just
That's
naked
52
short
and
puts.
change. It's actually up 10 cents with the market.
Yeah, we're just naked short. I'm short the 52, 53, 55, and 56 puts.
Okay, that's a lot of puts.
I know. No, it's not that. They're all small, but
Sure.
the stock.
I don't realize how big small really is.
I know.
So the first earnings post split.
Yeah, so the split was 66. It traded up to 67. It's down to 52. That's the only reason I got long it.
Okay.
Just like I don't give a crap about Chipotle. It just dropped
I know.
$50.
Hey, getting to my first headline of the day, brokerages are lifting the S&P 500 price target on hopes for a soft landing and rate cuts. Year-end targets are getting raised around the board for the S&P 500, like I said, spurred by expectations of a soft landing. As we round out July and sort of getting through the summer doldrums, normally market action ticks back up in August. What are your projections for end of year?
Well, my first half of the year projections were so spot on.
No, they weren't. Not even a little
We're
bit.
only off by 800 and 1,000.
Not even using new math.
Let me change that.
Yeah.
My first half targets were better than Tony's.
Okay. Okay.
Okay. Yeah, I was off by 20%, which is pretty impossible to do.
Yeah.
If you think about that. I thought we'd be around 4,700.
We overperformed.
Yeah, I thought we'd be at 4,700. We're at 5,700. Now 5,550. I think the second half of the year, we're going to be lower.
Okay.
I'm lowering, from where we currently are, I'm raising my original target. I'm lowering from where we currently are, so I don't care what other brokers is doing. I think we're going to probably close the year just a little over 5,000.
So Goldman Sachs has their target at 5,600, Morgan Stanley 54, Wells Fargo 51.
Those are below where we're trading right now.
Yeah. But they're still like you. They raised to lower. They lower to raise. I don't know what
They
you.
raised their lower.
They raised and lower.
It doesn't mean
They
anything.
raised their lower to overperform.
Hey, we got our first new Reuters Ipsos poll showing Vice President Kamala Harris slightly ahead of President Trump. Again, we all expected this. Again, I'm not putting too much credence in the polls
Yeah.
or whatever.
No,
That's not,
I-
no, wait, let me just
thought
get the
it was
headline
a
out.
couple weeks.
Let me just get the headline out. I know, right. But the heated U.S. election does raise chances of a Fed on hold. This is what I actually want to talk about. Do you put credence in the argument that there's
No.
a growing chance, if I can get this sentence out, there's a growing chance that the Fed Reserve could stand pat on interest rates until year end instead of entering the fray of doing a rate cut before the election?
No, because it's the role of the Fed to be independent of politics and to be independent of, the administration, whoever's
Sure.
ever in charge. And they have.
So you're saying they set a course, they
there's a
should
certain
stay the
integrity-
course.
There's a certain integrity to the Fed to be independent of everything, and so that should not change what they do with respect to to interest rates. So the answer is no. It shouldn't change anything.
What are you guys doing in treasuries?
Nothing. We
Bonds 119.02. Every time I quote them, they're like 119
Yeah.
something. I'm really
yeah we bought some notes the other. I take that back. We covered it. No, nothing.
Okay. Is SKU doing anything?
Yeah,
No.
not really.
See.
And by the way, that Reuters poll is kind of an outlier because I'm
not saying
predicted. Kamala has closed the gap, but she's still down to Trump.
But wide margins in younger voters though, which was like a 62
No,
to
it's
30,
almost
like 60 to 60-30 split, like for younger voters, and so
in the betting markets. It's gotten
46.
Yeah, in the betting markets, it got really close. It was 20 or 30% worse like 2 days ago. Now
Sure.
they're getting very close to being tied.
okay. Well, we'll see what happens. Hey, this is a fun headline. Is this ETF a meme stock now? Google searches for IWM are spiking for the small cap fund. Investors have been increasingly looking for ways to pop a small cap, and the Google searches for the iShares Russell 2000 are one of the most popular ETFs searches. It's actually the most popular.
Well, they goose premium in there yesterday.
Okay.
But
The search is only because on option trades today, every
That's
Tuesday
right.
and Thursday,
Every Tuesday and Thursday.
that did an IWM call ratio spread, which you all know takes advantage of the implied volatility spike on the call side that Sadnoff is talking about. Gets you short delta. As you can see, the market is lower today in the Russell by almost half a percentage point. That's why you're getting all these searches. You'll have more of these trades tomorrow on option trades today, right around noon your time.
Tom, do you have an IWM position?
Yes, I do.
Oh, you do? Okay.
my largest positions.
Oh, interesting.
It's I'm leaning a little bit long. We're down a little bit this morning. I'm leaning a little bit long, but I'm mostly just short premium. I have a wide strangle on.
Okay. The search interest in IWM even surpassed levels beyond those seen for the iShares Core S&P 500 ETF IVV during the pandemic crash of March of 2020. Okay, great. Hey, moving on. Oil is back, baby. Oil prices rose yesterday as U.S. crude and fuel inventories are seen to be shrinking. Falling U.S. crude inventories caused oil prices to rebound on Wednesday after several days of decline. Let's talk about crude oil.
Flirting with 78 this time on the upside, so I'm not trying to get over it again.
I mean, actually,
from around
crude
80.
was actually down yesterday.
Yes, down big.
And crude's been down big.
Yes.
It's gone from 85 down to 77. It's up a little bit this morning. We got a tiny bit long yesterday.
Oh, you did?
It did some put ratio spreads in the CL options, so
Okay.
a bit long.
How about for you, Bat? Do you have any? I know you're the world's worst commodities trader.
Yeah, since we said how good I was in IWM, let's point the other side there. I am the world's worst commodity trader. I do not have an oil position.
Anything in natural gas, since we're just already talking about oil.
Natural gas.
I turned down my heat a little bit on the pool. and
Okay.
the
Oh,
gas
that
was
is
lower
important.
this
Okay.
morning by about 6 cents.
Great.
Yeah.
Okay, good. Good to know.
You're not taking advantage of the lower prices. That's been a tough one for us. We're fighting from the wrong side of that market, but we're long natural gas, but it has not been kind to us. Is it over 220 right now? Let's see. Hold on.
Net gas 2.159.
Yeah. So we need it over 225. It's been a challenge. We're a little bit long here.
Okay. Hey, Bitcoin miner Riot is buying block mining for $92.5 million. The deal is a cash and stock deal. It will boost Riot's power capacity and exposure to additional energy markets. The purchase boosts its hash rate, if you care. But I know you don't trade Riot a ton.
We don't trade Riot.
Well, the move in Bitcoin has been interesting, so let's talk digital assets.
I mean, a $92 million deal for them is nothing.
I know, but like I said, let's talk digital assets overall.
Digital assets. Bitcoin's up a little bit this morning.
Mm-hmm.
Hanging out at 66.5, higher end of its range, but not on its highs.
Yeah.
Coinbase got upgraded yesterday. That's nice.
Did it again last night? Yeah, it is up $2. I saw it 2 days ago. Also got a little bit.
It just gets upgraded every day. I don't know.
259, 260. It closed at 257 and change.
Anything exciting in ETH? Because those ETFs started trading yesterday in Ether.
It was strong. Let's see. This morning, no, nothing really. Up.
It's gone sideways the last couple of days.
Yeah. This morning, ETH. The futures are unched actually.
Okay. Well, that's
Yeah, they're
not
it's
very
been wrapped
exciting.
around. It's been wrapped around 3,500. The coin. Nothing there.
Hey, let's get to some earnings plays from last night. Google parent company Alphabet reported earnings after the bell, and Alphabet's revenue was up 14% year over year, driven by search as well as cloud, which surpassed 10 billion in quarterly revenues. But Google's YouTube did miss on ad revenue. The company as a whole reported ad revenue, this is astounding, of $64 billion. That's a lot of ad revenue, up from $58 billion last year, just showing how Google's ad business continues to dominate. What is Google doing this morning?
Down about $7, about $7.50 or so to 174 and change. You remember just about 2 weeks ago it was 190
Yeah.
and change. So Google's got a little bit lower, making the market go a little bit lower too.
Are you going to do
It was-
a post-earnings trade?
No, it was up on earnings last night, and the market kind of sold off.
So you like the post-earnings potential in Google.
100%.
Did you have an existing Google position?
Yeah.
You did? Okay.
Yeah, I'm short a wide strangle. It's going to be fine. I did a what I would call them a bat trade.
Yeah.
Yeah.
Yeah. Okay. Hey, in other Google news, Google was going to buy this company called Wiz, and the Israeli-based company has announced they're going to walk away from the deal with Google that would have valued them at $23 billion, and they're instead going to pursue an IPO. You can read more about this on the tastylive blog. Thomas Westwater
I thought they were talking
wrote
about the old play.
a story about it. He's on down the road.
He's on down.
He's on down the road.
Come on, Tom.
Last company that walked away from
A Google thing was
Really?
Groupon.
I was going to say it was Groupon.
Yeah.
Where's Groupon today?
A lot lower.
I haven't looked. GRPN
Is it even still a thing?
Yeah, it sure is. Reverse split, almost $18.
Oh,
Had
nice.
a nice rally. What's the market cap in there now? They've actually
But what?
had a nice rally if it's up to 18.
What was the market cap when you were looking at it?
Last time I looked at it, it was a couple hundred million, 300 million.
662 million.
Hey, they doubled.
Doubled.
That's not bad.
Yeah.
And I think they only turned down, it was like a $3 billion deal or two.
It was a
like
$3 billion.
Yeah, it was $3 billion. Well, this would have valued this startup Wiz at $23 billion, right move?
I have no idea. I don't even know what they do.
Yeah, it doesn't matter.
It's accretive.
It's accretive.
Just use a word.
Yeah. There you go.
I have no clue.
Hey, in other earnings news, though, we have to talk about Tesla. Tesla reported a 7% drop in auto revenue as earnings fell short of Wall Street estimates. Earnings per share came in below Wall Street estimates. They have the worst margins that they'd ever seen. They did report a 2% increase in annual revenue. The share slid more than 8% in extended trading. Tesla brought in revenue of $25.5 billion versus $24.77. Musk was trying to tout all of the initiatives going around the company, from the robo-taxis to the robots and self-driving updates. But again, the numbers are what they are. What are you doing in Tesla?
We sold some wide strangles, and we also sold a bunch of extra calls. Because I was looking
225 down 20 is actually inside the expected move.
Yeah, I was looking for Tesla to go lower, which it did, and I thought Google would be unchanged or higher, which it was originally. So I think we had last.
That's a win-win if it was at one point.
Yeah. It was a win. It was a win for us on both sides last night. Tesla, we sold 2 calls to every put. So Tesla should be a good one this morning. But
Yeah, it's inside the expected move. Whatever you did should be good.
yeah, I'm right now. I'm kind of pretty sour on Elon.
I know, but I love this price of 225 from this month.
Better than 260.
So
Yeah, it's 260 to 180. It's right in the middle of the range. It's like place your bets. What do you want to do?
Yeah,
You know,
I agree with you there. It's better.
Are you going to do a post-earnings Tesla trade? Yeah. But here, John, can we go to the next story, though?
I'd rather do post-earning Tesla than Google. Google kind of sucks.
So, in the funniest thing, so like I said, we've been going through a flurry. We've been going through a flurry of events, and it's hard to keep up with everything. But something you might have noticed is that Elon Musk previously had pledged that he was going to give a PAC that was supporting presidential nominee Donald Trump $45 million a month. But then the earnings call happened last month, and now he's walking back those statements to the hilarity of Twitter. He says he never actually pledged to give Donald Trump $45 million.
Funniest thing.
And he says what's been reported in the media is simply not true. And so
Trump thought it was true.
Yeah.
The funniest thing about Trump is that, like, he couldn't contain himself. So he was like, we need smart people like Elon. Like, he went off on this whole...
Right. Well, because someone had given him the memo that, like,
But his response was, like, this is typical Trump, but he said, we need to take care of our really smart people like Elon. Mm-hmm. And basically implying that if you give him $45 million a month, we will take care of you.
Right, because his previous speech was like, we're going to get rid of these EV mandates. So then someone was like, and he's like, we need to support smart people like Elon Musk. So, we'll see what happens with that. Hey, in other automotive news, GM reported earnings yesterday, and those shares are down 6%, despite a second quarter beat as Wall Street fears the good times won't last. The Detroit automaker now expects full-year adjusted earnings before interest and taxes of between $13 billion and $15 billion, up from previous guidance, but still Wall Street has concerns. We don't talk about GM a ton, but
we don't trade GM a ton.
I know.
Unfortunately, it's actually liquid.
Yeah. And
it's very tradable. And if you're in that, like, if it's in that price range for you, where because it's a less expensive stock.
Mm-hmm. It's a $46 stock now, $45.75. But yeah.
Tom's like, if you are a poor.
It's a $33 stock. Let's be fair. It's
sure.
Oh yeah, 100%. 100%.
Yeah.
Hey, something, it already had earnings, but it was such a massive fail that I'm bringing it up post-earnings because I don't know if there's anything that can be salvaged here, and that's UPS. UPS shares had the single worst day in the entire stock's history where the delivery service, the shares fell 12%. Not only did they miss earnings, but they also cut their guidance. They cut their guidance to $93 billion, but anyway, just total annihilation in the shares. Like I said, single worst day for the stock.
I tell you, last night, so I'm driving home, and there's a UPS truck. Now, I traded UPS yesterday all day because I had a bad position on there.
Oh, okay.
Not the greatest markets in UPS.
They're not the greatest markets, and the stock opened, like you said, below its expected move. So I had a short, I was short a strangle, so the put was challenged. Trying to roll the call down, the markets were too wide at first. Stock got away from us to the downside. It was probably my worst stock yesterday.
Oh, wow.
So I'm driving home. Some UPS truck, because the roads in the city of Chicago aren't that wide. Some UPS truck.
This story, I wish we had tape of this, but go ahead.
It's a UPS truck. The guy is parked basically so that nobody can get by him. Mm-hmm. And he's just
chitty bang bang and just flew over him.
Well, where's he supposed to park? Like, if he's delivering packages
down the block and walk.
This was a blocked all street. So there's a whole line of cars.
Sure.
This guy's blocking the street, and he's going like
door to door, taking.
He's going door to door, and then he comes back to the truck, gets a few more packages, and goes back out. Like he didn't.
That's literally how his job works.
Okay. Well, people were bitching.
All right. Well,
and you weren't one of them though. You were patiently waiting.
It was a bad day for UPS. That's all.
Well, no, it's actually a good day. So I have a UPS box, so I pay for a UPS box.
UPS box.
So you just like at a UPS store.
Deposit box, but for packages.
At a UPS store, right? So yeah, it's like a safety deposit box, but you can't
buy a UPS box.
Yeah, So I have I have a permanent address because I don't want packages delivered here. At our other office, you could just get stuff delivered because people were there, but now we're hybrid. Anyway, so I pay for a UPS box. And so I went in there yesterday because all of my Prime Day purchases got delivered, but so did everyone else's. Yeah. But it's basically like they're Vietnam. Like they were just like 1,000-yard stare. And they're like, hey, Miss Logan. I'm like, you guys okay?
UPS box.
Let me guess. $16.
It's, do you want to guess?
I have no idea. I'll say $20 a month.
It's $100 for like 3 months, yeah. But But it's unlimited.
more.
It's unlimited deliveries though in a secure. And I've had no packages get lost. I've had nothing get like. Well, no, we left it at your.
You fancy hoe.
No, but it's just. It's just.
Unbelievable.
I didn't even know you could do that.
Yeah. So you get a UPS box because then that way when you're traveling and you don't have to sit home. I just hate being
I've never ordered anything
hostage.
on UPS. I've never ordered anything.
No, but Amazon.
You never ordered anything on Amazon. You never ordered a UPS. You don't.
No,
have
FedEx
heat
will
and air
deliver. They'll
conditioning.
take
You have any more
FedEx. They'll
plumbing?
take UPS. They'll take DHL. They'll take. I initially got it when I was remodeling.
Well,
my
you can send
bathroom.
FedEx there.
You can send anything there.
You sometimes send stuff to yourself just to see if it's working.
But no. So when I was remodeling my bathroom, I got it because I was having like expensive plumbing fixtures.
Yeah, of course
delivered.
you were.
All right, I hate you so much. I'm gonna keep it moving. Hey, Meta has debuted its newest Llama AI model with help from NVIDIA and cloud partners. Meta announced the latest version of its Llama AI model, Llama 3.1. The newest Llama comes in 3 different versions, with one variant being the biggest and most capable model Meta has ever produced. Like previous versions of Llama, the newest model continues to be open source, which means it can be accessed for free. Meta.
That doesn't have earnings till July 31st, but it's acting like it has earnings today, down around $14 or so.
Oh, that's a big move.
Trading $4.74. Market's down
Sure.
significantly. This
Yeah,
week.
yeah.
Nasdaq's down 1.5%, $300. Even the S&P's down 50.
I really don't like the name llama.
Llama. Did you ever read the children's book like
You like
the
llamas
llama
themselves?
The llama in like llamas in pajamas?
Llama, but I heard they're nasty and mean.
You've never been intimate with a llama?
Yeah.
Oh, hey, Guaro.
Got it.
No, it's a children's book. Llama pajamas. Llamas. No. Okay.
But I don't like. I heard they're like. What is llama like? It's
Like an alpaca.
yeah, like an alpaca, right? There's
I speak Tom. Yes.
yeah, like an alpaca. Like what? People.
They might spit at you, but they're not. I mean, people have.
Might say you. That's like doing a
They
show.
own alpacas. You can use like alpaca wool. I have alpaca socks.
People that live in Chicago don't own alpacas.
I didn't say people that lived in Chicago
You
owned.
live where Tony lives. Tony, you might have a
No, but who's the guy that used to be on our show? John
No.
Carter.
My neighbor married one.
Carter.
John Carter has an alpaca farm.
He has a lot of weird animals. John.
Okay, but
John.
you were coming out of the gate being like, no one owns alpacas, and I literally give you a person that you know who has an alpaca farm.
Every time I talk to John, I catch up with him all the time, and every time I talk to John, because he lives in Austin, and every time I talk to John, I go, "What have you?"
He's doing his best to keep Austin weird.
Yeah, I go, "What crazy animal have you bought recently?" And last time he goes,
He and TP both have ranches.
"Yeah." I go, "What have you bought recently?" And he goes, "You know what he told me last time?
What?
A zebra."
A zebra?
A zebra.
A zebra?
I think he said he had 2 zebras, and I'm like, "Who?"
Are they rescue zebras?
I don't know. I don't ask that question.
Oh, that's nice.
Where do you get a rescue zebra?
At the Rescue Zebra Foundation.
Of America.
Yes.
I'm like, who in America owns a zebra?
I want a rescue zebra. Hey, I gotta keep it moving. Tom, I thought you would like this. Apple reportedly working on a foldable iPhone for 2026.
You know what?
No more butt dials for you.
I know. I freaking.
You missed the old motor.
I am boomer tech support. If you're new here to
know.
Tasty
We're
Live.
not boomers, by the way.
You are boomers.
No. Like if you were too young to go to Woodstock, somebody just wrote me, said you're not a boomer. So we're like,
That's not how that works.
Not how
It's
that
a generational of no.
Yeah,
not
but
that
let me
you
tell
were
you something.
too young to
we're
go to
not
Woodstock.
boomers. They
No.
told me. I got it right here. My
No,
time
you're
sources.
you're the boomeriest of boomers.
I want that. I need.
You want a folding iPhone?
I just don't like all.
It could mimic a similar move by Samsung, which pioneered a foldable segment in 2019.
I know.
Generation Jones, not quite unique enough to be Gen X. Or
Generation Jones.
Who's Jones?
Just telling you what he's telling me.
Is the person emailing this to you from their AOL account? You're like, no, man, you're still hip and cool. Okay,
Canadian AOL account.
I am. Well, I've been reading up about Brat Summer, just so you know.
You know what Brat Summer is? Oh, Kamala is Brat.
Tony doesn't know.
You don't know about Brat Summer. It's Charlie XCX.
I live in the suburbs where we put our packages on the doors. I don't know anything about Brat Summers. No.
Although I will tell you the fandoms were fighting, so the Swifties and Charlie's fandom were not having, because Charlie's album came out and she wanted #1, but Tay was like, have a seat, because she dominated the charts for 12 straight weeks for the Tortured Poets Department. Anyway, but we support all initiatives to get young people to go out and vote. But yes, Brat Summer. You could have a Brat Summer.
I'm sorry. I act my age. I apologize. Not into
Hey, what are you guys doing in Apple? Let's keep it about the stock here. What are you doing in Apple?
My position is really small.
223, down $1.50 or so. Apple's been on a nice little tear.
I think it also got upgraded. I think again.
Everything.
I know everything gets upgraded. Hey, now things are so serious that the Department of Transportation is investigating Delta over its IT outage chaos, persisting for days after the strike. Look, Hartsfield-Jackson, I don't know if you've been seeing the TikToks that have been coming out of Atlanta, but it is not good. It is unbelievable. So now the Department of Transportation is like, look, Delta, you've got to get your ish together because it's bad. And so the outage was Friday.
The only one how's the Delta the only one that was like...
I don't know, but there was a funny fake tweet from Southwest was like, ha, bet you're not mad that we use Commodore 64s now. They didn't really tweet that, but it went viral, but it was pretty funny.
That's pretty good.
Southwest was like, yeah, we don't update our technology. But it's really bad at Delta. I have friends that are stranded. And
people like...
There's no rental cars. There's no hotels. People have been at the Atlanta airport for like 4 days now.
They better clean that place up before we get there.
Yeah.
I don't know, but I have a literal flight this evening, and so help me, I will burn the airport to the ground if I cannot get out.
Can you imagine?
O'Hare is fine.
I know, but I'm just saying it's a whole cascade of a ripple effect of all.
You know what's crazy is when I flew in on Sunday, you never ever see Delta flights at O'Hare. Like you never.
Yeah, no, there's no hub there really.
There's no hub. Yeah. There's only like one gate. It's nothing. All of a sudden, as we're coming in, there were like 10 Delta planes at O'Hare.
All the Delta planes are at O'Hare. Get them to Atlanta.
Why are there all these Delta planes? Because you never ever see a Delta plane at O'Hare. Right. And the reason is they probably have nowhere to go. They can't,
Yeah.
They're stuck there, parking them there.
Are you trading Delta? Should you be trading Delta? Because this is a huge issue now. This is a massive problem.
I don't trade Delta. I haven't traded it since...
$43 and change, basically unchanged, maybe down a dime or so.
It's down from like 50, isn't it?
It is, yeah. No, yeah, you're right. Down from around 53, 54 back in.
Yeah.
What's the IV in there?
Pretty good at 36 with no earnings coming or anything like that.
So do something.
You may have did something. You're right.
It's not a great trading vehicle. If you want to do something...
I'm just saying, like...
My reporter in the street here, Dino, says there's an alpaca farm in Lake Zurich we can go to if you ever want to see it.
Thank you, Dino.
They sit around all day eating grass.
You can, in Michigan, you can camp on Hip Camp. I saw a camp that I was going to reserve once, but I didn't. But you can camp at an alpaca farm. I was going to take the bike up there.
I reserved one too, but I didn't.
I was going to take the bike up there.
American Airlines has earnings today.
Oh, AAL.
Yeah, Ford, NEM, Las Vegas Sands, AAL, RCL, and CMG. That's what I told you.
But he just said it, so write that down, Bat. Write that down. Hey, real fast, this is really interesting.
87 cent expected move into August. You could sell the 10 puts for 30 cents.
In AAL? Do you like it? Free money? Oh, no, sweetie, don't do it.
For 30 cents.
No. Back away from the edge. Don't push that button.
Days?
Don't push that button, Saz.
23 days.
Hey,
We got August.
Yeah, go ahead.
Hey, this is interesting. So the U.S. FTC is looking into targeted pricing based on personal data. The agency said they'd ordered MasterCard, JP Morgan Chase, and 6 other companies. So look, this is wild. So if, let's say, JP Morgan, before they offer you a financial instrument or something, they know where you live, they know if you've taken an expensive vacation, they know how much you're spending, and then what if companies are tailoring what they charge you based on all of the information that they've collected about you in an opaque sense? What are your thoughts?
I mean, I'm all for chipping every individual. So
you want to pay more because they discover you're a high net worth individual in a prestigious zip code, and so anything you want to, I'm serious, anything you want to buy, because for me the inverse is true. Because of my zip code, I get charged more for my insurance and other things, and I have a hard time refinancing because they're like, oh no, you can't do that, and then they got in trouble. But should it be the other way, where if they see that you have a lot of money, then they charge you more?
Sure.
Really?
I mean,
you don't believe
Can't we
that.
just get the good with the good and keep the bad away?
what I do believe
Yes.
is the more we know, the more
Less we don't know.
The more we know, the more efficient we can make everything.
So the FTC is seeking information from IT services provider Accenture, as well as from McKinsey and other groups who are collecting all of this data, again, using algorithms and other opaque methods to collect information on U.S. consumers and then levying that information for what they want to charge you for stuff. So anyway, hey, fun news, Overstock.com is back from the dead. Your boy Mark Lemon, what is his name? Lemonis? Lemonias?
Lemonis.
Lemonis, yes. He's back. He's bringing back the Overstock website. It was Overstock, then it was Bed Bath and Beyond, and now it's back to Overstock.
Marcus Lemonis.
Yes, Marcus Lemonis. Thank you very much. So in June 2023, Overstock changed its name to Bed Bath and Beyond after they bought, the dregs of it in a sale. But now, what do you think of the rebranded logo and the look?
It looks like somebody
I think
decided to put a garage sale.
I think it's OSTK, Bat, maybe.
I would not trade this with your money.
Okay, well, you wouldn't get very far with my money. But I do love a sale. And also 65% off jewelry, not mad at it.
That's what they say about everything.
65% off garbage.
All right, well, hey, Overstock, can you trade?
Can't do anything.
Okay, that's fine. Hey, Nike, hoping to make a comeback after dismal sales. They released images of a prototype shoe for Wimby, but it looks like it's time to go back to the drawing board. Do you like it?
Yes.
Like it?
Love it.
You would wear this?
Not me.
Well, it looks like he has a club foot, which he does.
It's like very futuristic and like alien.
I love it.
Kind of. Okay.
I love it. Yeah.
Okay.
I would wear a Wemby shoe.
Okay.
You wear a woman's shoe, did you say?
Wemby.
Oh, sorry. I said woman's shoe.
Hey, we don't judge. What are you guys doing in Nike?
Nike NKE trading at 72.
Long it.
All right, call it 73 since you're long. It's really 72.99.
So we bought it higher. I needed. We're down money because after earnings they've been
Right, it got crashed.
up big the other day. But
Ivy rank is 20.
I need Nike over 75. 77 would be perfect. So we're down money in there.
And they're normally at the very, very tail end of earnings. So
Yeah, but I do like that shoe.
okay. Hey, finally today for my viral video, wrapping my viral video into my last news story, a thermal pool exploded at Yellowstone National Park yesterday, sending tourists scurrying for their lives. The Black Diamond pool violently erupted. It spewed black water, mud, and rocks, but no injuries were initially reported. Here's the video. Of course, now this area of the park is closed.
I was there.
Look at that. And so there's a little bad language.
You were there in 1987?
No, that's where Jules, Scott, and I went.
Yeah, what year?
But this isn't Old Faithful. There's a bunch of geysers in the
Oh,
park.
this is not Old Faithful?
No, I literally said the Black Diamond pool. Okay.
Oh,
Hey,
There's more that, but I know you were thinking of Old Faithful, but there's a bunch of,
we were at
there's a lot of geothermal
we're at a couple
activity
because they
in the
got
park.
lost.
Okay.
I don't know which one we were at.
Okay, I know you don't.
Faithful, but some other ones. But you're just sitting there. You're kind of waiting, hoping for this. There's nothing else to do.
You're not hoping to be
When were you there?
scolded.
What year?
I don't remember the year.
92,
No.
87.
It was in the winter, though.
Oh, so what year did we have a winter?
I mean, it was me, Jules, and Scott, probably in the 2000s. I don't know.
All right. Hey, this has been super fun, but I have a flight to catch. Pat, what's coming up next?
I have a 6 o'clock flight.
I
I got stuff to do.
We'll take a quick 90-second break and come back. We got more Tasty Live after this with, what do we have next, Tom? That's right. Confirm and send. Good thing we had you. We'll be back in 90 seconds. Tasty Live.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
Whatever.
This is English. You should watch him read.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You know, my first concert was when I was very young. It's quite embarrassing.
Hanson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God,
that's amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
I am a self-taught retail trader. I didn't go to school for finance, and it's not necessary to be successful in this industry. All it takes is a little bit of dedication and a lot of time to learn the lingo and learn the strategies. So standard deviation is basically just the probability of being in the money or out of the money. So one standard deviation with options is going to be probability of 16% being in the money on one side and 16% on the other side. So if you take those two together, you have a 68% range in that spectrum. So that would be one standard deviation. If you just focus on a couple of core key concepts and go from there, it will allow you to educate yourself and propel yourself through the options trading system.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live and Confirm and Send. But before we do, would you like to take a quick look at the market? How often do you look at the market, Sosnoff?
About every second. But
well, let's take a quick look through my eyes this time, okay?
I'm shocked that, I mean, I guess I'm not shocked, but down 54 is a pretty big
move. Big move, 1%.
We haven't had a lot of 1% openings. Yeah.
You are correct. NASDAQ down even more, down 300. That's about 1.5%. Russell down 0.5%, call it $13.70. And the Dow down 190, actually the strongest of the group of the four I just mentioned. Volatility, that's the key for me, up 53 cents, lifting its head back up over the last 2 days. They crushed volatility yesterday across the board. I don't know if you were looking through your positions. A lot of stocks really helped you with their implied volatility.
Yeah. Oh, I know that.
They're going to try to take it back today.
Yeah.
Volatility up 50 cents. Bonds, 119.04, sitting right there. The price I've been quoting just about all week and most of last week. Bitcoin hanging out at 66,000 and change, also between 66 and 67 for quite some time. Quad 7, Sosnoff, on oil, 7777. Just missing 78. It was slightly over 78. It flirted with 77. It's at the high end of its range for today. Gold up $15 and change. Last couple of days took a little bit of a slide, getting back about 25% of its slide over the last 4 days or so. Silver up 18, also doing the same as gold, working together. I know we mentioned nat gas. I don't trade too much of it. I don't think the public trades too much of it either. Down 6 cents. But Sadlov, I'm surprised you didn't mention the yen today. Yen up 7.5 cents, a big move to 65 and change. Go ahead, strut your feathers.
70 basis points, not 70.
Sorry, yes. Strut your feathers.
No, listen, that's one of my biggest positions.
That's what you expected to happen.
That's, of course, what I
did. Act like you've been there, Bat.
I even sold some futures last night because I had this bad feeling. I did not like them. And every time I sell futures at night, and then
it bites you in the arse. And
usually bites me in the ass the next morning, and always. And last night, it actually worked. I just covered them.
Beautiful.
Sold NASDAQ down 100, bought it down 300, sold S&Ps down 17, bought them back down 55. So that's
very nice.
Shocking. That never works, by the way.
I know.
Anyway, these are emails.
Well, two earnings plays, Tesla down around 20 and change, Google down around 8. Sorry, go ahead.
Run a little late. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending your morning with us. These are emails that came into us overnight from traders all over. And let's see what we got today. I know you like trades like strangles for earnings, but what about trades like a diagonal or a double diagonal? The back month options aren't as rich as the front month, and I'm still giving myself a chance to profit from the vol collapse. What do you think?
100%. Uses less buying power. It's going to have a little less movement to it also than a strangle might. It's going to have less risk. It's going to have less reward. High probability trade. I love the whole process. And actually for earnings, especially if you have a directional bias, it's an intelligent trade.
Okay, I'm completely on board with Bat on this one. This is a no-brainer for us. The reason we don't do a lot of diagonals for earnings and double diagonals for earnings is they're high probability trades, low risk, low reward. And for earnings, we kind of feel like if we're going to take the risk, we want to get a higher reward. I'd probably be a lot smarter if I did more diagonals and double diagonals, but no issue with this whatsoever. We just tend to do more strangles, but yeah, go for it. It's totally fine. Again, low risk, low reward, so don't expect too much. Let's go next slide. What are your thoughts on game theory and its place in trading? Is it something you think we need to understand in order to trade, or is it just one of those things that's overkill? This is a tough one. Hey, John, I put this up here for Tony because I didn't think it was fair to ask a question.
I was wondering, was that on Channel 7, game theory? Was that
go to the next slide, John, just for a second. Okay, so game theory studies interactive decision making, where the outcome for each participant or player depends on the actions of all. If you're a player in such a game, when choosing your course of action or strategy, you must take into account the choices of others. Now go back. That's game theory. So what are your thoughts on game theory? You take into account the choices and what other people are doing as well as what you're doing. I mean, I think this is the real part, the crux of the question.
Sure. My original thought was no, not at all. And giving a second to think about it, I think that you do take advantage of it, and let me explain why. If volatility is expanding, that means that more options are being bought than sold by the public, and you're looking at that as an advantage to do something. So I think it's part of the landscape, but it's not something that I look at to make a trade. Yeah. But I think it has a bearing to it.
Yeah. So I wrote back to this person and said, listen, we don't get a lot of questions on game theory, so that's why I put it in here. But I think when it comes, the more efficient that markets have become over the last couple of decades, the less important anything to do with game theory comes into play. We really don't take into account what others are thinking or doing.
But you'll call yourself a contrarian, and that's doing the opposite.
That's based on price, but not based on what other people are thinking and how they're plotting stuff and things like that. I just think that game theory is overkill, and I don't really think that it has a place in 2024 kind of quantitative analytics or quantitative math when it comes to trading. So I'm going to say it's overkill and it's not really necessary. Let's go next slide. So the market measure, we did a market measure yesterday on VIX. The market measure on VIX being up overnight was great. Jacob did a market measure yesterday. I think it was Jacob, did a market measure on 0 DTs yesterday, where if the overnight VIX was up, the 0 DT trade was better than if the overnight VIX was down. So my question is, if the overnight VIX, which by the way, the overnight VIX is /VX or /VXM. That's the mini VIX or the micro VIX. It's not the VIX because that doesn't actually trade overnight. So the overnight VIX is /VX, the future. If it's up, but the VIX 1 day, the VIX 1D is down, or it's still under 10, because it doesn't trade overnight, it just is what it is. Would you still do a 0 DT trade?
Let's not confuse this. Yeah, 100%. /VX is what I'm looking at. I'm not even probably looking at VIX 1 day when I'm trying to make that decision.
Okay, so this is a little bit.
You rarely look at VIX.
This is really getting into the weeds, and this is a tough one. The research piece had nothing to do with VIX 1D. The research piece only had to do with the VIX up overnight or the VIX down overnight. Yeah. Personally, I do not like trading 1 day, 0 DTEs, if the VIX 1 day is below 10 or even below 12. And that's why I haven't done them in a couple of weeks. But if you want to trade 0 DTEs, you're better off when the overnight VIX is higher as opposed to when the overnight VIX is lower. If you want to go back and look at yesterday's research piece, it's a great one. You should just go back and look at the market measure from yesterday. But personally, I don't do 0 days when the VIX 1 day is below 10 or even below 12. The best is 15 to 20 in that range. Let's go next slide. So how do you manage a Jade Lizard breach to the call side? What about if it's breach to the put side? So how do you manage a breach Jade Lizard is the question.
Remember, Jade Lizard breach to the call side is exactly what you want it to happen.
Exactly.
Jade Lizard is a bullish position. You're short a put, short a call spread, no risk to the upside, all things being equal. So it going higher is going to be a profitable trade for you. I'm going to take it off. That's going to be my answer. I'm going to take my profit and run like a thief in the night. Now, when the put side is breached, completely different story. It's a bullish strategy. You want it to go higher. You were completely wrong. Stock's going lower. I'm probably going to close that call spread, which is trading close to zero, nickel, dime, 10, 20 cents, whatever it is. And I'll take that naked put that I have left and roll it to the back month, hopefully even roll it down a strike and do it for a very small credit, keep the dream alive to the upside. I probably wouldn't sell a call spread on top of it, but you certainly could.
So my take on this, just like Tony, if Jade Lizard breached the upside is actually a high-class problem. The only difference is that I probably cover the put and then let the call spread ride. You can cover the whole thing, but I tend to cover the put and let the call spread ride, or cover the put and sell a put spread that's closer, just to keep, to see if I can maximize the profit in there. And then what if it's breached the put side? I just roll down the call side. So you're short a call spread, I roll the call spread down. That's really all I do. Or you can cover the call spread and sell a naked call. But those are your two choices.
Oh, you mean make it a strangle in the back?
Make it a strangle.
Certainly could.
There's no additional capital. All the things we just discussed require no additional capital. The whole key to managing a Jade Lizard when it's breached is not to use any additional capital. So whatever you do, if you turn your short call spread into a naked call, it requires no additional capital. If you turn your, if you cover your short put and just stay short the call spread, it requires no additional capital. Actually, you get back capital. Let's go next slide.
The key to the Jade Lizard is getting the direction right.
Yeah. Yeah, the Jade Lizard is high implied volatility and you're hoping for a bounce. How accurate are the probabilities we use to trade? For example, a 16 Delta Strangle shows a 68% probability of being profitable. What are the actual results?
70. Yeah, I mean, they're about as accurate as you can get. I mean, they're the best thing that I have. They're a little understated, if anything. I mean, sure. So that's what I would go.
Anytime you have limited profitability and unlimited risk, remember, if you sell 16 Delta Strangle, you have unlimited profit. I'm sorry, I take that back. You don't have. Anytime you have limited profitability, which is what you have with a 16 Delta Strangle, and unlimited risk, your theoretical probability is going to be understated. Your theoretical probability in mostly everything we do at Tasty is going to be understated because we're premium sellers. If you're premium buyers, your theoretical probability of success is going to be overstated because you have unlimited upside. Today we're doing a piece right after this, which is called "Is the Success Rate Sustainable?" So the next piece we're doing on an option jive is actually covering this to a certain extent. Are success rates sustainable? But the actual results are: if you're a premium seller, that theoretical number is too low. If you're a premium buyer, the theoretical number is too high. Let's go to the next slide. And the last one. What is a good way to trade earnings without trading the actual reporting companies? So if you, for example, if you want to trade earnings last night with Google and Tesla, but you didn't want to trade Google and Tesla.
I mean, Google and Tesla are probably an easy example because they have a bearing on the market. The NASDAQ would be the one that I would tie it most to. With the EMA and the S&Ps, I would tie them to. So you could have made the assumption that if Google and Tesla were going to be weak, that you would want to get some sort of short deltas in the Qs or EMA and the S&Ps. That's an easy one. When you have AAL and you have an opinion on AAL, it's very hard to get into an ETF or anything else like that could benefit from that earnings move without trading the earnings.
Yeah, like if you wanted to trade, like, what is the ETF, Jets or something?
Yes, okay, yes.
Like if you wanted to trade Jets because you thought AAL earnings were going to be good, let's say you want to sell puts in Jets. I mean, is it Jet or Jets? I don't even remember. I haven't traded in so long. I think
it's Jets with an S.
Yes. I don't know. What's the trade, like $15 or something?
$19.08.
So if you wanted to sell puts in an ETF like Jets, or, yeah, sure, go ahead. This is a less than perfect trade. In its absolute best, this is a less than perfect trade idea or trade concept. Yeah. I would say last night, if you were bearish on Google and Tesla and you sold calls or got short in the NASDAQ, this is probably the greatest example we've seen in 5 years of the market opening down when those stocks open down. Because normally you don't get this kind of payoff.
Right.
So, like Tony said, if you were playing American Airlines tonight, I guess you could, if you were bearish, sell calls or bullish sell puts in Jets, but
NEM gold mining. Are you going to go into gold? I don't think so.
I mean, if you think you can trade American Airlines by trading United or Delta, oh boy, I do not like that trade.
It's a tough one.
It's a really tough one.
Awesome. Hey, listen, even the S&Ps haven't moved too much, but they are down almost 1%, down 52 points. We'll take a quick 90-second break and come back. We got more Tasty Live after this with, as Tom likes to say, an option jive.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
If you missed the live show, here's our cherry on top weekly recap.
You're making it seem I want to go.
I know you do. Listen, there's a lot of things I want to do too.
I'll be the
last night. I didn't have it in me. But back in the day, I could do it. I'm older now.
Omaha.
Hold on, what did you want to do last night? I missed that.
Don't repeat that. No.
No, what did you want to do?
Do this every time I'm here.
I just want to know what
every time I'm
what did
here,
he say
we gotta
he
go down
wanted to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Get in the. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw up.
The thought of you guys is like sickening. I'm sitting here like this, like, oh God. It's hot as hell in here. I'm like sweating, like it smells.
Hello everyone, this is Kai. Welcome to the Trade Talk Show. A good strategy should be able to achieve higher return on capital and lower volatility. This is exactly what we found in managing at 21 DTE. That is why managing at 21 DTE is such a simple but brilliant idea.
My trading style really depends on the market environment. So when the IV is low, I tend to place more diagonals and calendars. In the high IV environment, I tend to use more aggressive strategies, put on more strangles and straddles, or naked shorts.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
It's option jive. Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with an option jive. Even the S&Ps have moved 3 points. Usually that's a lot, Saznoff, in the morning, but not this morning. Why is this morning different than every other morning? Because even the S&Ps are down 50 handles. NASDAQ's down 278.
Does it surprise you with the NASDAQ down almost 1.5% and the S&Ps?
I got short Delta and IWM yesterday. Do you think this down move surprises me? I ask you.
The VIX is up 56 cents was my question.
I didn't think we were going to be down like this. No.
So
we were getting a little bit lofty, and maybe volatility in the ETFs were getting a little bit lofty, but I had no idea we were going to do this. No, I didn't. Google, Tesla being lower, I was like, okay, I get those two, really, to be honest with you, but I think the rest of the market would participate with it. No, I did not.
Option jive. Don't forget today we have a packed schedule all day long, including podcasts with Dylan and myself. Tony and I here all day. We also have Liz and Jenny on the floor of the Chicago Board Options Exchange, the CBOE today. We are the only media outlet that broadcasts from the floor of the exchange.
I spoke to a couple of guys from the floor. They love having the ladies down there.
Yeah, well,
not looking forward to the day that we go down there. They did tell us that.
I'm sure they're not. I mean,
you and Saz can stay home.
I don't know. There's still about 500 guys on the floor. You mean two women coming down there? It's like, if it wasn't those two, it would be intimidating to most women because it's like, I don't want all these creepy guys, staring at us. But those two are used to it, so they're fine. But I mean, they control those guys really well. But yeah, of course they're fine with it. What do you mean? They got they're sick of each other. I can promise you that. Yep. The guys that are still left on the floor have been there for 150 years. They're actually kept alive. It's like they're kept alive through feeding tubes and
like light fixtures down there.
They are so sick of the person that's next to them that even if Tony and I went down there, it would be a change of pace.
Yep.
Because there's definitely they've been around for a while.
I think I'm going to be there next month for a segment or something. I think I'm filling in for one of the ladies one day.
You're going to do it from the floor?
Yeah.
Oh, you're going to be like a hero. Yeah. I gotta. Oh, I'm
gonna have to. I mean, I probably should bring like an entourage with me or a bodyguard or two. You know what I mean?
Bodyguard.
Yes.
Bodyguard.
Hey, get back here. I go, no, it's okay. Let him in.
Hey, nobody takes pictures of Tony. Bring your own Tony heads with you. Pass them out.
Let's see if they want them for sure. I'll do that.
Yeah. Oh, we can have some fun with this. Yeah. Oh, that'll be good. Sign autographs. Oh, you know what?
I get some 8x10 glossies of myself.
We can bring your what's that thing called? The big cutout we have of you.
Yes, I know exactly.
Flat Tony.
Yes, Flat Tony.
We can bring Flat Tony down there and have it just sit around and freak people out.
Yeah, they can throw their heads at it.
Is the success rate sustainable? Let's take a look. We have heavily tested the strategy of selling 45-day, 1 standard deviation SPY strangles and have found the success rate about 77%. Now, somebody wrote in the last email, they said, is that 68% theoretical number correct? And we said, well, for undefined risk, the number is going to be higher because you have defined profitability. For defined risk, or when you're long the underlying, it's going to be lower because you have unlimited profitability. That's how this business works. Everything is the the risk return graph is perfectly symmetrical. So that's why it looks like that. So the 77% is well above the 68% theoretical number. And this rate is well above the threshold, like they're saying. How do you get to 68? Well, you take your 1 standard deviation is 16 deltas on each side, multiplied by 2, that's 32, subtract from 100 to 68. Do success rates for the same strategies differ greatly across different stocks? What do you think about that? Do success rates for the same strategies differ much across different stocks?
I gotta say yes, and
answer is of course no.
Yeah, I know, but I'm going to tell you why I gotta say yes, because we do studies where a strategy works in a time period better or worse than other stocks. Like if you were looking at just naked puts in, say, gold would be a bad example. Nat gas versus gold, two different commodities. Gold had a nice upward move.
But we're talking about random results in different, the answer is it can't. They have to all be the same.
Well, the probability of success is going to be the probability of success, whatever that is.
Let's take a look at the next slide. So to determine the answer to that question, we examined multiple stocks from different sectors, including telephones, Pfizer, Apple, Microsoft, Tesla, Baba, First Solar, Exxon, JP Morgan, and UPS. We compared the success rates of 16 and 30 delta strangles with both with and without management at 21 DTE. Theoretically, according to the Tasty platform, the win rates of the 16 and 30 delta strangles should be around 68 and 55% respectively. Okay? Let's go to the next slide. In your head, remember that 68 and 55. So for 16 delta strangles, almost all the stocks tested have a much higher success rate than theoretically suggested. Apple is the only stock with a lower success rate. Overall, the average success rate of these stocks is consistent with that of the SPY, which is what you would expect. The SPY at 77, and when you look at all the other stocks average, it was 76. That difference is statistically insignificant. But you can see the actual results up here. If the SPY is 77 and Microsoft 78 and Bob is 78 and First Solar 78 and JP Morgan 78, Tesla 74. I mean, you can see it's pretty damn close.
Also answers the question from that confirm and send that we had.
Exactly. Yep. Just from 5 minutes ago. Let's go next slide. So when you jump up to 30 delta strangles, for the 30 delta strangles, the success rates are more consistent compared to those of the 16 delta strangles and higher than the expected 55%. So the average success rate is identical to the SPYs. So the SPYs have a theoretical of 55. They have an actual of 66. And all these stocks together have an actual of 66. And so when you look at this, you're like, wow, that's amazing. See, we've done so many studies over the years on how accurate option pricing is and how good these high frequency firms are at making markets, and dollars at risk almost comes out the same regardless of what you're trading. That doesn't mean that there's not some edge in one stock versus another stock because the IVR is higher, whatever it is. But over time, as everything normalizes, the 30 delta comes out to exactly what the 30 delta should be. The 16 delta comes out to exactly what the 16 delta should be. Okay, and dollars at risk are completely commoditized. They're normalized across the board. Let's go to the next slide. So existing positions at 21 DTE, what that does is it smooths out the results across all the stocks. So Apple's success rate, which was a little bit lower before, is significantly improved and in line with the other stocks when you manage early. Essentially, what does managing early do? It gets rid of the volatility of your portfolio. Gets rid of that wild standard deviation, those swings in your portfolio.
And you just talking about it, you don't realize how important that really is to your overall trading. Because if you can have a smooth curve, whether it's smooth curve going higher, sideways, even a little bit lower, you can stay in the game. When you have swings like this, you don't make good decisions.
As you notice on the right-hand side at 21 DTE, the stocks themselves had a higher average success rate than the SPY did. Take more risk. If you manage early, you get paid a little bit more. Managing early here is the key. And this is the 16 delta slide. If you go to the next slide, John. We found that when the 30 delta, the improvement is way more significant with larger deltas because you don't have those outlier drawdowns. So the success rate's equal to or greater than the hold to expiration approach in all 10 stocks. So even though the average is still at that 68, the numbers are really strong. And again, we don't sell a lot of 30 delta strands. We're in that kind of that 16 to 20 to 22 range. Yep. But managing early is the key here. Just manage that trade way earlier, take a lot of that risk off the table. Next slide, please. So some of the takeaways. Selling options in individual stocks can achieve relatively consistent success rates despite the sector differences. Dollars at risk normalized across the board. On average, the success rate is similar to that of the SPY, using individual stocks or SPY, it doesn't matter. And managing positions at 21 DT reduces the success rate volatility with more significant improvement observed in large delta strategies. So what happens is the more risk you take, the more improvement you see at that 21 DTE, just in kind of flattening out your vol risk.
Very nice. So let's take a quick 90-second break. We'll come back. We'll get ready for the opening bell next with Tasty Live.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap. How come I'm the only person in the office?
Tell you why.
Yeah, what happened, girl?
I had been waiting for a year and a half for Tony's guy, this is the truth, to come fix my HVAC system.
Nobody else can fix his heat and air conditioning. He's had other people there.
It's too complex a system.
What time is he supposed to be there?
Hold on, it's him texting.
Oh, yeah. We need to stop meeting on Mondays because last Monday it was the debacle with the RV. This Monday the debacle with the missus. Next Monday we're Hey! Update on the RV. I got a bid for it. Oh, reasonable? No, 30% below asking price, but I got one.
It's literally 78 degrees and muggy outside, and you guys look like you're going to Vail.
Well, I wore a T-shirt underneath mine, which I never usually do because Beth says I never wear a T-shirt under mine. So I did it for...
We appreciate it.
I had a white T-shirt on, but I didn't want to... I thought it was like too revealing, showing all the muscles and,
all the muscles? Oh, sweetie.
Have you seen? I did bring the video in. Have you seen?
No, can you play the video?
Really?
Beth, do you have the video?
You
have the video?
For the past few months, she's been trying to get Scott Sheridan together with a woman you will meet in just a few moments. Scott, your age?
25.
Occupation?
Trade at the options exchange.
How important is physical appearance to you on a scale of 1 to 10 when you meet a woman?
10.
That's some good hair.
Was that the weekend that you two met?
Yes. So Al, who was in that video, invited me. And he's like, there's a bachelor's party, and said, come with. And I said, but I don't know anybody. He's like, doesn't matter, you'll stay in my room. So we went, I'm in Al's room. It's just a regular room, 2 beds. I'm like, okay, great. And I said, what's that door for in the corner? And he's like, that's the Tom's room. And I opened it up, and it was a Rain Man suite, the 2 split level. I couldn't see Tom, it was huge. I just turned around, I looked at Al, I said, who's Tom? And 36 years later, we're sitting here.
Get the full scoop by checking out the archives at tastylive.com.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, with special guests Mad Mike Martin and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. It's imminent, so I don't know, about 2.5 minutes. Even the S&Ps are down 52 handles. NASDAQ down 288 handles. That's a point in NASDAQ, and a point in the S&P is a handle. Russell down 16 or 17. Dow down 176. Volatility down 63 cents. My friend JC did remind me that NASDAQ, don't get too upset here, Sadnov. Friday, it was 19.7. So we really haven't gone anywhere. You're looking at this move lower by 1.5%. He's like, pump the brakes here, everybody. Just a little bit. We're right where we were on Friday. What do you have to say about that?
I have to say your friends.
Close all watertight doors?
Your friends, right, but close all watertight doors, yeah.
Understood.
I'm just looking quickly at our stuff here to see if there's...
I don't know if I said it before. IBM has earnings also after the market closes. You got Ford, Las Vegas Sands, Chipotle.
You did not say IBM. I do have a position on in there. Let me see what we got. IBM, stock's 183 and change. We have...
Down about 50, 60 cents.
I got the 180, 190 strangle on. I got to widen that sucker out.
180, 190. Oh, you got almost a $10 expected move. You're 184. That's way too close for you. Oh, I don't think does your trust fund know about this risk you're taking? Seriously, do they know? Oh, I'd be careful if I was you.
You're damn straight. You're damn straight. I don't know what I'm going to do here. How much time we got?
Less than a minute. GM had earnings yesterday, down around 50 cents, and you've got Ford today. Mean anything to you?
No, I'm not trading Ford. I am thinking of selling some putties though in American Airlines.
Oh, I thought you were thinking about selling putties in Baidu, which took me down in. Baidu's down about 30 cents.
Oh, I'm already short enough puts in Baidu. American Airlines, though, I do want to sell. I know you're going to hate this trade, but I want to sell the 10 puts in. I want to sell the 10 puts for 30 cents because American Airlines always does the exact opposite of what every other airline does. And Americans
unchanged, maybe even higher depending on where it ticks. Well, there you go, South enough. I don't need to.
Americans on its butt.
Let's see what's moving the market lower. BKNG, haven't talked about bookings.com in forever. Well, down $41. Doesn't really mean anything because it's a $3,800 stock with horrible markets. Tesla down 21, Meta down 15. Costco, that's the meme stock that never goes down $8. Costco. Let's see what the upside is bringing us, South off. The upside, numbers are a lot smaller. Crowd up 280.
Oh, that's good for the good. That's good for the good kids.
I know, but that's it.
Crowd?
Yep.
Let's take a look at the crowd strike.
Let's do it. Volatility's still expanding in there.
I thought that was good for the good kids, but we're not up any money in there today.
Volatility's still expanding in there. Up 15% in the last 5 days, South enough.
All right, let's see where these Tesla trades are. Are they open yet?
Well, let's take a look. There's only one way to find out. Now, South enough, a nice little trick on the platform. If you go to the trade page and you open up August, if these are green and red, then those options are open, South enough. It is open. It's opened down almost $22.
All right. Well, my first Tesla cover. The
calls, that was easy to buy.
Those were easy. Stock down $20.
The easy part. Most people do the hard part first and then the easy part.
Really?
Done.
I'm not most people.
That's true.
I'm not most people, but I'm going to cover my nothing done yet in Tesla. Let's take what?
You're going to attempt.
ENPH up $8. Hate that stock, by the way.
That had earnings too.
Yeah. Yep. Had earnings. Absolutely despise that company. Everything I do in there is always wrong.
I don't know. It seems like it's in a really nice channel here between 95 and 130. Get down to 95, you buy it. Gets up to 130, you sell it. I mean,
Stop your channel crap.
doesn't seem like a hard thing to do.
So let's cover. Would you cover Google? Get it out of the way.
Yeah, sure.
Earnings plays off the board. That's what I say.
You're gonna try.
Just get them off the board. Let's move on.
Mm-hmm.
Google.
There you go. 67 cents.
Yeah.
Even you don't sell anything for 67 cents, so that must have been
Google.
profitable trade. I mean,
we made about 67 cents.
oh, you made about 67 cents on that 67.
So Google and Tesla are both winner chicken.
You didn't cover your Tesla yet, though, did you?
No.
You covered your calls. You didn't cover your puts.
Yeah, I know. I'm about to do.
Chasing them so hard. You're chasing them.
No, I'm not really. It's just
teasing you.
You know what? It's just kind of like it's Tesla. All right, I'm done with Tesla.
125 on the puts, 10 cents on the calls.
We usually don't make any money in Tesla and Google, so I guess I'm happy today. Tesla was a good winner. Google was a small winner. ENPH, next one. The last earnings trade on the board. I can't believe the earnings trades worked out because they never work out. ENPH,
you're
off
out.
the board. All the earnings trades.
Somebody wasn't going to trade earnings, just closed 3 earnings trades. That's pretty good of you. Do you always lie?
I'm happy if it means winners, we're happy to take them. Let's take a look here. So all 3 earnings trades were winners last night. Amazing.
Tesla down almost 25 now. Meta down just about 15. Google down 9. Qualcomm down 5 or 6. Microsoft down 3. It's pretty broad based. And on the upside, it's not. PDD up 54 cents. That's your up move.
I'm looking to see what we have here. By the way, Baba's up today.
You said Bob is up? Baidu's down 28 cents. I'm looking at Bob. Yep, small. You're right.
I'm going to sell some American airline puts just because I said I was.
I'm going to sell those. You even got price improved 31 cents.
Right.
You even got price improved 31 cents. Winning at 30 cents. Darn market makers paying more. Unbelievable. Is that because they help like the handicap stuff like that? Or those challenged with eyesight or something?
I sold more.
31 cents, so you showed them.
Yeah. All right, next stock, IBM.
You gonna give them all 31 cents at one time?
IBM. We got to put ourselves in a position in there. I got to widen.
I have you ranked at 82. Very good, Sadnut. But let's take a look at what the monthly implied volatility is. It's in the 30s. Are you going to go to August or September?
I'm actually staying in August. I'm just going to widen the strikes.
So you're going down to the 165 puts and up to the 205. You know, IBM has a great name. You know, IBM, everybody's heard of it. Markets are in there. 2.5, 3-star liquidity, right? I mean, you got 20-cent wide market, 10-cent wide markets. You would think they'd be a lot deeper than that.
Surprisingly crappy is what you want to say. And let's see. The Russell's actually pretty damn strong.
Russell is strong relative. It's basically unchanged. I picked the one indice that didn't really go down.
Yeah, you did. Because, I mean, SPOO's down 59 is kind of a little ugly. I mean, they are pumping some juice in because I have a short strangle in IWM, and it hasn't really moved much. My deltas are flat, but my P&L's down.
You are right. Let's take a look at IWM.
Yeah.
Down 32 cents is nothing. Take a look at SPY, just to give you an idea. Down $5.76. Much bigger move.
Yeah. Anyway, just looking at some of the individual stocks here that are getting a little bit whacked today.
Dell down $3, 122. That thing can't get out of its own way these days.
No. Dell
down $2.20. It's had a nice little rally, kind of come back a little bit.
Yeah, I'm gonna knock down some little deltas. They don't look that good, so I'm gonna sell some deltas kind of across the board.
By rolling down calls and
positions. Yeah. We don't really have any problem. The only thing we're losing money today is IWM, which is kind of weird.
Well, you're long IWM.
I know. And stock
it's unchanged is what you're saying, and you're losing money in there. Yeah, it's all volatility.
By the way, the S&Ps versus the rut and the NASDAQ versus the rut.
Oh, it's got to be doing well for you today.
My NASDAQ rut trade is my biggest winner.
Well, you're allowed to. I mean, I don't sound so surprised. But you're right. It's moved about, I don't know, about 10 grand or so per.
Yeah. I kind of think there's one of those trades has to come off the board
I can't
today.
believe you've been able to hold it this long. I don't know what happened to you. I don't know if you're taking vitamins or something like that. Are you taking like a multivitamin? Something like this. Usually if something moves 30 cents your way, you're out. Oh.
I can't believe it either. I can't believe that rut trade, NASDAQ trade, today, just a one lot, just moved $7,000. The rut's up $1 and the NASDAQ's down $350.
Yeah.
I just took off one tranche, but it's crazy. That's crazy.
Big move.
That is a big move.
Understood. All right, are you ready to take a quick 90-second break?
Yeah, I am. Yep.
Well, you want to pat yourself on the back a little bit more for the NASDAQ Russell spread?
No, I'm good.
Are you sure?
I'm actually
You
going
done? You hurt yourself?
I have to roll up puts in the rut right now. I can't believe it.
What's up?
I know.
What's saving the market?
I know. I have to roll up puts in there.
I stink. I picked the only 1% move in the market in the wrong
Yeah,
index.
you were bragging earlier.
See, here's what goes.
You were a little puffy chested, and you.
See what happens when you spit up in the air? Now I'm like Sosnoff. We'll be back in 90 seconds. I got more Tasty Live coming up after this with what's your assumption next? We came to you, you came to us. We got your ideas. We'll be back in 90 seconds.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all freaking losers. There's no skill.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I will pay for the first bar mitzvah that has eggplant parmesan as the primary dish.
Can you throw weddings in? I'm done with bar. I'm done with bar mitzvahs. If you throw weddings, right? If you throw weddings in.
Wait, hold on. Cancel the quinceañera. You're in shoe now. All right, we got it.
If I got married again, I would have eggplant parmesan as my dinner.
If I get married again, how stupid are you?
Not if I get married again. If I was
exactly
getting
what
married.
you said.
Don't cut that out, Beth, for him.
If I got married again, I would have eggplant parmesan as my dinner.
It was a great show. It was very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
We built the Tasty Trade app for today's traders. See it, tap it, trade it. Deposit and withdraw money right in the app. View company financials, forecasts, news, and more. Set custom alerts to stay up to date. See things bigger in landscape mode. Get the customizable trading experience you want. The tools, the data, the knowledge. See it, tap it, trade it. Join the club, genius. Tasty Trade.
In
In the 20 plus years you and I have been working together, our trading has really evolved.
Yeah, no question.
Completely.
Yeah.
And one of the things is that we're not married to a strategy.
No, of course. Yeah.
If we can do something better, we will do it better. One of the misconceptions there is about being a professional trader is that we do such complex strategies, and that's just not the case. What we do are simple things very frequently every day. That might be taking 50% profits. That might be rolling a position to a different expiration or a different strike price. That might be selling some premium to improve the cost basis of a losing trade. What I want people to learn is an effective way to approach the financial markets and to use options to their fullest advantage.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with, what's your assumption?
It's kind of a crazy market this morning.
Now you can talk. Yeah, kind of a crazy market. Even the S&P's down almost 60. Russell's up 2. Nasdaq's down almost 2%, 380. Dow's only down 136 at the third of a percentage point. Really a mixed bag of tricks. The way you wanted it, though, Russell higher, Nasdaq lower. This is your dream. So I don't know if this might be it might end up being a nightmare by the end of the day or tomorrow, but it's a dream right now for you. It's a good one. Dream scenario.
Pretty wild.
Pretty wild. Tesla down 26.
Yeah. Well, so far so good.
Beautiful.
Right. I'm Tom Sosnoff. He's Tony Batista. It's 8:44. We're in Chicago, so for whatever that's worth. Thank you for joining us this morning. It's been pretty action-packed so far. Any takeaways so far, Bat? Position adjustments?
No, but volatility really has been pumped. So if you're having these money sitting on the sideline, you were waiting for volatility to expand. It's expanding all around. ETFs, individual stocks. It seems like it's pretty good. You got almost a 5 or 6% move in volatility. That's pretty good.
Yeah. I'm not sure what to do here yet. I'm not sure what I need to do here today.
Mm-hmm.
I don't want to chase them too far down, but they look kind of ugly. So you got to chase them a little.
I think you do. I think you have to stay mechanical.
I'm trying to stay.
You'll get bailed out because you got volatility high. You know what I mean? Any kind of roll you do, if volatility.
I know. I'm trying.
Mm-hmm.
I'm trying. My biggest loser is just premium expansion in IWM.
Mm-hmm.
Other than that, positions are pretty damn good, which is a miracle. SMH too. A little bit of premium expansion at SMH. Again, I'm Tom. He's Tony. This is Tasty Live, and thanks for joining us today. These are emails that came into us from traders all over, and Beth G from Menlo Park, California, is bullish in IWM for the next 8 weeks. IWM to 270. Well, IWM, Beth, is it's well on its way. IWM right now is 222. I'm not sure it's going to 270, but we're leaning long. So we've been long. We've been leaning long. I'm long rut. I'm with you. I just took a little bit of the NASDAQ rut trade off this morning just because it moved so much. But yeah, I'm agreeing with you. I'm not going to do this trade because I'm already long it. It's my biggest long position.
Beautiful.
As is right now, it's my biggest long. Let's go to the next slide. So Pamela from Hahira Joyce, Georgia. Ridiculously oversold, looking out for resistance. You mean looking out for support, maybe? So CrowdStrike is a position that we actually agree with her. We are short the 240 puts and the 305 calls. It is delta neutral. We're just a couple deltas long. I think it's ridiculously oversold too. And we are looking for a bounce back, but we are already all in, Pamela.
Yeah, you have a position in there, and if you don't have a position in there, volatility seems to be expanding, so you're good to go also there. It's up $1 right now. It was up higher just a moment ago.
Yeah. I mean, I think we're in good shape in there. Let's go to the next slide. Cameron from Queensland, Australia. Like it. Looking for, he's got a 1-year Nike Starbucks. Surely these two stocks are heavily underpriced. Long-term perspective. So you know what's funny, Cameron? Because I hate to sound like a broken record here, but we're completely on board with you. Our two biggest longs right now that are not indices are Starbucks and Nike.
Yep.
So I'm on the same page. I'm going to look at my position really fast. Starbucks, we're just naked long, and Nike. I already know we're naked long Nike. We have a way bigger position in Nike than Starbucks. We're long stock, we're short puts, and yeah, I mean, we're just flat out long both those two, Cameron. So I'm right there with you. We are in both of those. We're short puts, we're long some stock, and we're short some far out of the money calls, just as a kicker.
Mm-hmm.
Let's go next slide. I already had all these positions on. Jason from Seattle, Washington. Hims. Never traded this stock.
Is this that pill you take in the morning you were telling me about?
Yes, this is the pill I take every morning, Tony.
What it was? Hims and Her Health. Yeah, I believe it is.
Hims and Her.
Yes. Mm-hmm. You've said you've had good success with it, not all the time, but sometimes it'll work. Is that what you were saying?
Spotty.
Like 68% of the time, which you think is pretty good? Yeah.
I think Hims does lots of things. I think they sell
who cares what else they sell, Sazno? As long as, 6 out of 10 times, it moves.
Jade Lizard candidate with rich premiums. Large insider buying. Stock is $22.50. I have never traded.
I don't know if it's a Jade Lizard candidate. I mean, it's at the higher end of its range. I mean, usually a bullish strategy, we're looking, middle to lower end of its range. But you do you. I know you're a fanboy, so please go right ahead. I'm
actually not a fanboy of Hims. I don't never
August 5th, but whatever.
I have never traded this stock.
Sure, it's somebody else's Hims. Markets are 15 cents wide.
Somebody else's Hims.
My friend's Hims. He left them in my house.
Hims. What does a new subscriber do here?
Yeah, I don't know if the markets warrant a trade in the stock, but it's up to you.
I think you have to trade something where you can actually get
paid.
Yeah, the volatility is plenty high.
Mm-hmm.
And there's a crap load of call skew. Like a real lot of call skew.
Yep.
But they don't have a lot of strikes.
Nope. And kind of wide markets.
Kind of wide markets.
You filled. Oh, that's coin. Sorry.
I think you sell the 2931 1917 Iron Condor because I think you're going to get a better fill on the Condor. You know what I'm saying?
The farmers trade is the way to go in there too. I agree with
But I think you get a better fill on the Condor. I don't know what fill, but we're going to try.
Just trying to find out what Tony was telling Tom earlier. This might not warrant the trade that he's been trying to do here.
It might not warrant a trade, but it might. We're going to try. We're working on Iron Condor and there, nothing done yet. Wow, they just turned around the IWM.
Takes you a little while to get to where the bat is, but eventually you get there.
Takes me a little while sometimes. I'm working it.
I'll take it. It's a win for me.
Let's take a look here.
Mm-hmm.
Yeah. All right. What else do we got? So Derek from Monroe, Louisiana. You know where Monroe, Louisiana is?
No. You?
GDX and GDXJ. He's neutral on both of those. 58 days. Pick your favorite gold miner, either the big boys or the juniors. They have decent IVR. They do. And you know what's funny is
7 hours and 13 minutes.
What?
7 hours and 13 minutes.
I have positions on in both of these already. Let's take a look.
It's by the airport, Sadnov. It's more in the middle of the state, middle upper part of the state, closer to Mississippi and Arkansas.
GDX or GDXJ? I think GDX is the better trading vehicle by a lot.
Mm-hmm.
I'm currently in a position in August. We're up small amount of money. I would like to take my August position and move it out to September. How's that? And reestablish a new position. I've had lots of rolls and lots of stuff to do. I'm neutral in here as well. I think you saw the 3641 strangle. It's about delta neutral, and it's going to trade for just about like 167 or something like that. And I think that's the trade. Boom, right at mid price.
Nice.
Let's go to the next slide.
Next slide it is.
Good Beer from London, England, Netflix.
You met Good Beer, right?
Yeah, sure.
Awesome.
He was at our London show. All right, Good Beer, what do you got here? Netflix, neutral. We have no Netflix position on. IV rank is super low. Expect it to be range bound, hardly move during earnings. How about a $5 or $10 wide iron condor? It still has decent premium. It has decent premium, but
IV rank is low at 15.
we don't sell. We generally don't sell iron condors with IV ranks at 15. It's too low for me. So I'll do something in Netflix because it's liquid enough. What would you do, Bat?
You want to do something in Netflix that sells premium? Is that what you said?
I could easily do something in Netflix, yes.
I mean, I don't. I mean, if you're looking to do something with an IV rank of 15, I would probably use defined risk. I don't mind. I kind of agree with his assessment. I don't know if I want to sell strangles with an IV rank of 15. August with 23 days. I'm not looking to go in there. It does have ACK options, SEP ACK, but ACK is almost four vol points higher than SEP, so I don't think you can do anything calendarized either. So SEP would be my play. I would probably be defined risk. Maybe a $20 wide iron condor, $30 wide iron condor.
I don't like it because I don't like it. I don't like it. I'm leaning towards a diagonal spread. Buying.
Can't do SEP ACK. It's 4 vol differentials.
I know, but I don't know if that's too big.
I just told you it's too big. You don't have to know. I did the thinking for you. You know what? You should put it on. You know what? Let's mark it down. You should put it on.
We're going to mark it down, and I'm going to try to put it on here.
Uh-huh.
Good Beer. I'm going to try to help you here, and
uh-huh. He was looking for an iron condor, $5 or $10 wide. You're doing a diagonal spread. Completely different. You're not honoring his word.
I'm not.
No.
With the market doing what it's doing today, and
The S&P down 70, Sadnov. Russell down 19. That's almost a 1% move in the Russell. It was unchanged.
It was up 10.
It was up 10. You're right. And with short delta and IWM down $2, I'm basically unchanged on the position. That's how much volatility is expanding today.
Yeah, I mean, vol is just exploding.
This VX 1585, volatility up almost 7% now, flirting with the highs of the last couple of days.
Yeah, I haven't seen it down 72 in the S&Ps in a while. I'm working a diagonal spread in there. I'm trying to sell it out of the money put spread. I'm sorry, an out of the money put in Good Beer. I'm trying to sell an out of the money put in.
Doing Good Beer?
In SEP, and buying an out of the money put in ACK. I'm away from the marketplace right now by a couple pennies. Let's see what happens. Let's go to the next slide. I'm being cautious here because I don't like the tape activity right now. XBI, Aaron from Aaron. XBI, let's take a look and see where we are here. XBI, it's $99. We have a small XBI position on. We're in, it's time to roll this position to put it on September. I'm okay with XBI. It's got a high IV rank. We're going to do the, markets are a little wide in here, so you got to be careful, Aaron. I'm looking at the 30-ish delta. It's the 10, let's say the 105 calls, and let's call it the 93 puts. Oh boy, that's close. 105, 94 puts. Take a fill in SEP. I'm short the 94 calls and the 105 puts.
Got it.
Yeah, it's a tough one. Again, we're playing close to the vest here. Let's go next slide.
The S&P's down 76.
From Bozeman, Montana, Chris. I think he got us in this last time. CELH. I think we're still choking on this trade, Chris. Bullish for 60 days. CELH. We have the August 45-55 spread on right now. Oh, actually, we're up money on it.
Oh, look at you. Don't sound so surprised.
I take it back, Chris. So far, so good. We're going to change the strikes. We'll go 40. We'll go 40 put, 60 call in. Take a fill in SEP. That's a bullish strangle. Let's go to the next slide. So that was a good trade, Chris. I take it. I thought it was going to be a bad one. It worked out. Jack from Philly, XOP. I think we have an XOP trade on. We do not. What does Jack want to do? Neutral, September monthly. IVR of crude oil stocks is creeping up. Strangler and Iron Condor. I'm not a huge fan of XOP. So let's do an Iron Condor because I think you get a better fill. What do you think?
Dokie.
What do you think?
An XOP, hard stock to make money in 30% monthly implied volatility in September. It's actually 28. So I actually prefer you to be with an IV rank of 42. I actually prefer you to be naked.
I don't do well in that stock naked.
Okay, I understand completely. Then how about a directional bias? Got any directional bias? Kind of the low end of its range, 142. If you look at its big wide range over the last 6 months, it's been down to 130, up to about 160. It's right in the middle at 143.
129, 134, 155, 160. $5 wide Iron Condor. Why are these markets so weird?
What do you mean by weird? Because there's no bid on the 134 puts. There you go. Now they got a 132, 182 is the market in those puts.
Yeah, that's why you got to do Iron Condors in here. Because the markets are so bad.
You got to be careful in there with like your pricing.
I know.
You're going to get price approved if you're going too low or too high. But I mean if you go too high, obviously not going to get filled.
Obviously. You got to be really careful in here, Jack. The markets are wide. They're not very good. You got to do a little price discovery.
Mm-hmm.
I'm gonna put this Condor in, but I'm working it. I don't know if I'm going to get filled. I do not love these markets.
Got it.
Okay, I'm working it. Let's go. Who's next? David from Irvine, California in Roblox. RBLX. What do we have on in here? Hold on a second. We have an August position that is about unchanged. We've had this position on for a while. What does he want to do? He's bullish in the SEP monthlies. Let's, okay, so we've had a position on here. We haven't made any money on it yet. We have the August 37.5 put set, August 37.5 put 45 call. I think we should probably, he's bullish, right?
Yes.
Well, that takes you up to the 35.50. And let's see if we can squeeze some. We haven't 35.50 and SEP. It's a bullish strangle. We haven't made any money in there yet, so I'm working it. Let's go to the next slide. Okay, hold on a second. Let's see. Before we put that up, John, I'm going to try to get filled in XOP. Nothing done. I'm going to try to get filled in Netflix. Nothing done. I'm going to try to get filled in hymns. I'm working these three. Hold on. Let's see what we get.
CELH got filled at 50 cents. I don't know if you said that.
Hymns filled at 92 cents. Netflix.
Even the S&P down 76.
I can't believe it.
Russell hanging in there, down 9. Dow hanging in there, down 3.
Nothing done in Netflix. It's a really hard, and Tony does not like that trade anyway. Not at all. He's anti that.
Yes.
I'm going to try to get filled in XOP here. I went down to 150. Nothing done. I'm not going to go under that. Nothing done. So IWM, CrowdStrike, and Nike and Starbucks, we already have positions on. HIMS, GDX, Netflix, no, XBI, CLH, and Roblox. We got 5 out of 10. We're working the XOP trade. Nothing done yet. I'm doing price discovery in there because it's really a wide market.
It is.
And Netflix, I think Tony's right. So I played it a little bit conservative.
Wow.
I tried to do a diagonal trade, but you don't like to do diagonal when you're buying back month volatility.
So high.
So high relative to the front month.
Yep. Yeah. Very good. Are you ready to take a quick 90-second break?
Sure.
Because I am. You know why? We've got this man coming on, Jacob, the skinny on options math. Next, we'll be back in 90 seconds at Tasty Live. Help us, NASDAQ down 425.
Wow.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
If you missed the live show, here's our cherry on top weekly recap.
I went to the pool at the.
You went to the pool at the Soho House?
Yeah.
And you didn't go to my pool?
Yeah.
Do you think he wore his Crocs?
100%.
100%.
You can't.
100%.
You wear your jorts? You wear your booty jorts with like your ass hangs out just a little bit in the back? I'll gross myself out.
I just threw up in the back of my mouth a little bit.
Daisy Dukes in like a crop top with Crocs. Meow. What are the good traits of a data scientist?
So I think you have to be inquisitive, right? Extremely good looking. Advice to new traders would be the same thing that I learned when I was young, which is just do something very simple. Buy something. It gets you interested in the markets because you got some money in the game.
There's all sorts of different strategies that we can do to protect ourselves, and it helps us become a more informed trader. So, by the power invested in me in Tasty Trade Nation, I'm going to make you an honorary quant in training for fulfilling the obligations of this 30-minute lecture. Thanks.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm. Okay, I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm gonna be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right. I knew it was on there.
It's warm.
No, I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5, just because I like Kentucky Fried Chicken.
Come on. Do you want to be KFC's power?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce. I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot. Is what he's trying to say. It's an elevated. It's an elevated. It's an elevated nothing. It's a chicken. It's actually pretty good.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tomas, we are back, my friend, and today might be the first day that this generation gets to see a down day. Even the S&P down 78, NASDAQ down almost 2%, that's 417. But all that means nothing right now. We've got this man. What's your assumption? Jacob in the house. What's up, Jacob?
What is your assumption? No, it's getting an option now.
Don't ask the question you don't want the answer to, Jacob.
All right. How's it going, Tony? How are you?
I'm doing good. How about yourself?
I'm well. It's a nice day here.
It's an entertaining day today so far.
How's Chicago?
Volatility.
Every day is a nice day in wherever you are.
Yeah, but mark it up, mark it down. Every day's a nice day in Chicago.
I don't know.
Yeah. Today's going to be today. They're going to scare the children right now.
Mm-hmm.
Or they're scaring the children right now.
Yes, they are.
Yeah, once again, they did this like a week or two ago already, didn't they?
Today's
a good scare so far.
Today's a good scare.
Volatility almost 10%, well 8% and change. Yeah, NASDAQ down 400. You don't see that every day.
Yeah, no, they're they're putting a little bit of they're putting a little hurt on everything.
Or a reminder that it goes both ways.
Yes, a reminder that it goes both ways, much like Tom on Saturday.
And we
What do
can
you got
describe
for
it,
us
but
today?
we can't predict it.
That's right.
Today I want to talk about something that goes both ways. I want to talk about Brownian motion. And in particular today, what I want to do is sort of go over a number of different ways that one can define or view or construct a Brownian motion, because they're all equivalent under the, like, eventually they can all be shown to be equivalent. But I think that as far as anyone having an intuition with it, having just a lot of different ways to look at it can help, because if any one of them clicks for you, then you've made a good progress. Or alternatively, if you're, more of a mathematician theorist, having a bunch of them at your hands and then being able to switch rapidly between them to see which one's like more useful in a given context, and then remembering that they're all the same, is very useful in doing stochastic processes. So we'll talk about Brownian motion, what it is, why it's so central to so many things, and then a number of different ways we can define it.
Let's do it.
All right.
I'm into it.
So initially, the initial inspiration for Brownian motion does not come from modeling the markets, nor for any of the other myriad uses that it gets used for. It comes from the idea of trying to describe how a hot particle moves, so like a singular water molecule in like a boiling pot. How does that particle travel around? Or you can trace all the way back. There's Lucretius is an ancient Roman philosopher who is a little bit confused, but he pretty much accurately describes Brownian motion, but he thinks it's how dust motes floating in sunbeams are traveling, which isn't quite right. That's more due to air currents than temperature, but his description is remarkably accurate for being misapplied in an ancient Latin poem.
Are you making fun of somebody who's not here to defend themselves?
Yeah. No. Lucretius did a good job. But so it's intended as a model, and remember, model is just a fancy word for a precise description of the movements of an individual particle. And so Brownian motion is the bedrock of almost all continuous time stochastic processes, because it winds up being sort of the most centralized, like not dispersing random process. Almost every other random process can be described as Brownian motion plus some drift plus maybe a changing in how fast it's wiggling, but like the core driving randomness portion can be pulled into a Brownian motion. You can put most things into a deterministic part and its Brownian motion part, no matter what other random structure it had. So for that reason, it winds up coming up all the time. And over the years, a variety of different formulations have been developed. So today we're just going to go through and several of them and see if we can get an understanding. A particle moving around is a complicated thing. It has like 3 coordinates in time. We only need 1 coordinate to deal with our things, because we usually talk about price or volatility or other one-dimensional concepts. But if you just take the collapse and like just look at the x coordinate of the particle moving around, and ignore when it goes up, down, or into and out of the page, and just look at it going left and right, that'll get us a Brownian motion, or in the more formal mathematical sense, it's sometimes called a Wiener process. Those are, in my mind, they're the exact same thing. Some people draw the distinction that Brownian motion describes the movement of the particle, and Wiener process is the mathematical model for it, but to me, they're the same. So that's where Brownian motions come from and why we're going to care about them. And now let's start getting into ways to look at them. And I think this first one we're going to do is, to me, the most intuitive, and so it's the one we've covered before the most times, and I've got this nice animation running, which is to say, you start with a simple random walk, right, which is maybe the most rudimentary of all random processes one could do. You start your process at 0, at time 0, and then every second that goes by, you flip a coin. It's a new fair coin every time, and if it's heads, you go up 1, and if it's tails, you go down 1. And this gets you a particle that moves around like this. Sometimes it goes up several times in a row, sometimes it goes down several times in a row, but it goes up and down about the same amount of total. And as we zoom out, it gets less and less to be this jagged, sawtooth, simple random walk that it starts off here in the animation, and starts looking smoother and crisper and more like what we imagine a particle might move like. And that's the whole thing. There's a number of little things that I'm sweeping under the rug. One is that the scaling rate has to be set relatively carefully. We've covered Brownian scaling a number of times. It's sort of determined by the central limit theorem. But the key thing is that if you zoom out too fast, then you won't see it move at all. It'll just look like it sits still. And if you zoom out too slowly, it'll escape you and run away. So you have to zoom out at the right rate, or the scaling limit. But you do get a well-defined process, provided you go at the right ratio, and it gets you something that can then later be shown to be Brownian motion. But it sort of gives you an idea about why it's so central, is because it takes this most fundamental idea of a random process where you have a very simple idea of every second we're just going to go up or down 1. And then this can be generalized. It doesn't have to be up or down 1. It can be any fixed zero mean, fixed variance, random distribution. I just like the ±1 coin flip, but it could be something else. And you just do a number of steps of it, and you shrink them down at the right speed, and you get, on the right, it starts looking like a Brownian motion. And, this is the general idea, is that we all sort of can see these jagged lines that look kind of like a stock graph and think, and be told that that's a Brownian motion. But here's how one way to get it is you start with these simple random walks, and then you just keep compressing it and speeding it up. Shrink the step size, speed up the step speed until you get something that's well-defined macroscopically. And that gets you our limit of random walk. It's my personal favorite because it's how I think about, when I want to think about what is a Brownian motion going to do, I think, well, if it was just a simple random walk, if I zoomed in far enough to see the granularity of it, what would it be doing? And this is what affects my intuition the most, but there's other options. Let's go forward one. Yeah. So here's one that's the least substantive of a definition, but the best for mathematicians, because it's just put forward four qualities, assert that your process has them, and call it a Brownian motion. So a process, right, is something that goes forward in time. So it's a function of t to positions b of t. And it's a Brownian motion if it started at 0. And we say almost surely all the time in probability because what is a 0 probability event between friends? If it does something else in a crazy doesn't happen situation, we ignore that, and it still counts as a Brownian motion. It has to have independent increments, which is something we talk about a lot of times. If you have how it moved over one span of time and how it moves over a different separate span of time, right? If they have overlap, then there's going to be some influence on each other. But if there's no overlap between the two spans of time, then they're going to be independent of how they behave, right? This is, in our world, this almost always boils down to the efficient market hypothesis, right? Saying that all of the motions going on in this first span can't affect how it moves in the second span. It can only affect where it starts. And really the only part of it that can affect where it starts is where it ended. The increments are normal with variance proportional to the length of the time interval. So this is the property the most like the Black-Scholes constant volatility because of the proportionality requirement here. And this is what makes a Brownian motion not a perfect model for all things, but is the base model that then gets iterated on to make all of your other things. And they're, of course, normal because of the central limit theorem. Anything that's made of lots of little pieces that are all independent and the same comes out normal. And then it has to be continuous. And this is somewhat surprising to some people because when they everything they think of is continuous. But in fact, we can make something that obeyed the other 3 properties but jumped around kind of crazily in between. Some people do this. They call it a jump diffusion process as to try to model binary events and those sort of things. I don't know that they really get you that much more as far as understanding goes, but it does make the theory slightly more robust. But yes, but Brownian motion does have continuous paths, whereas a Levy process may not. It's sort of the possibly discontinuous extension of a Brownian motion. This is a great definition for mathematicians who only want to be able to reason, and so it gives you nice properties to use to reason about it. It's not a great definition in terms of construction because it's entirely abstract and doesn't even promise that there is such a thing, right? I could write down a list of properties, and there's no guarantee that those properties are internally consistent. There's no guarantee that there could be anything that obeys those properties. But we will have one on the very next page. Right, so that one usually needs to be followed up by a constructive version. This constructive version is maybe the least intuitive, but is the most direct way to get at those 4 properties. What you do is you say that you're, rather than trying to go forward in time and look at how the Brownian motion evolves over time, I'm going to take a series of snapshots. I'll start at 0. I know it's supposed to be 0 at 0. And then I'll look at some fixed time capital T out at the end. And I know that it's supposed to be a normal distribution with mean 0 and variance t out there. So I'll just take an independent normal random variable, and that'll fix my b of t there. And now I know that between here and here, it's supposed to do some sort of wiggly thing, but I don't really know where it is. But I'll guess, well, right in the middle, the mean of that should be the where the line is, right? The straight line from 0 to b of t. Right in the middle is b of t it crosses b of t over 2. So I take another normal with mean b of t over 2 and the right variance scaled down. And pop that point in there. So now I've got 3 points. I've got a zero at the start, a b of t at the end, and or a b of t at the end, and a new normal random variable in the middle. And then that gives me 2 more middles at the quarter and the 3/4 mark. And I fill those in using new normal random variables, both with their mean put at the midpoint between the 2 endpoints and the variance shrunk down appropriately to be the right size. And you keep filling in all the midpoints. And this doesn't get you quite every point because it only gets you quarters, eighths, 16ths, 32nds, right? All of the times that are dyadic, so that have a power of 2 in the denominator, will be covered this way. And then for the last step, you say, but I wanted it to be continuous all along. And since the dyadics are dense, right, there's no interval without dyadics in them. Between any two points, there's more dyadics. Between any 2 dyadics, there's infinitely many dyadics. And so what we can do is we can just say, well, we're going to be continuous. If you want to know what the value of this process is at a dyadic, you follow my earlier thing and we find you your normal random variable. If you want it at a point that's not a dyadic, I say, well, find me a sequence of dyadics approaching the point you do want. And since it's continuous, it'll have to approach the right limit. We'll just go through all of my dyadic points that are properly constructed. There's some limit shoving under the rug here, but I think that people will forgive it. This is not the most intuitive one, but it is sort of necessary in order for the property one to stand on its own. Here's another one. We've got this is Einstein's. This is Einstein's way of approaching it. Before he did the photoelectric effect and relativity, one of his earliest papers was trying to describe the motions of the quantity of particles in any given region of a hot box of gas. And you write down that there's going to be any sort of distribution function for them. And then you see that they'd have to obey because you assume that they're going to have a tremendous number of collisions, right? Someone's worked it out. It's like 10 to the 34, an air particle undergoes like 10 to the 34 collisions per second if it's at room temperature, which is a lot of collisions. It's too hard to model them each classically individually. And so you do a statistical mechanics approach where you say, well, over the net of those many collisions, they'll have some displacement, which will have some distribution. And then because this distribution is divisible, I can wind up with central limit theorem that this distribution is going to wind up being normal. And then winds up having to solve this heat equation, which is that the derivative with respect to time of the position is this delta is not our usual delta. This delta is the Laplace operator. In one dimension, that's just the second derivative with respect to position. In general, it's the sum of second derivatives with respect to coordinate positions. And so this gets you to a heat equation, which if you love stochastic differential equation or differential equations like most physicists do, this is the version that you like working with best because you can get the most equations out of it. But I like the simple random walk construction best. This is the physicist's favorite one, though. But the heat equation gives you a lot of access to being able to show a variety of things. And it also tells you sort of why it's so ubiquitous, because anything that's moving in a instantaneously unpredictable way is essentially a hot particle. And so this winds up describing how everything has to move, right? And once you factor out whatever deterministic drift you have on there. So we've had simple random walk, properties, and heat equation. I think that's going to be enough for today. Yeah, we can go takeaways.
Yeah, I think it's enough for today. Yeah.
What's the, like, how does that change? Like I don't understand, what's the difference?
Yes, why care?
Yeah, why do we care?
We care because, so my goal here is to have people understand Brownian motion better. Why care about, trying to understand Brownian motion is important is to help you understand things like, right, you're scaring the children with your down day. Well, but down days are understandable and predictable and like shouldn't be surprising to anyone who thinks to themselves that the underlying price drivers, right? In the Black-Scholes model, it's the log returns that evolve as a Brownian motion. In the Heston model, it's the volatility that evolves as a Brownian motion. But almost everything is going to travel as some sort of permuted on Brownian motion. And so being able to understand how symmetric it is and sort of the scaling rates of it and how ubiquitously these apply to everything can help you at least be more accepting of down days, up days, right? The randomness of it all. I don't think people, you've got a predictive process.
Yeah, I don't think that it's people that are freaked out by down days. I think that people get freaked out by the the velocity of down day, like the velocity inside of a down day. They get freaked out by the speed at which markets go down. Like today, that what freaks people out is the speed of this, not the fact that it's down.
It's not the fact that it's down, but it gives you an idea of after the fact, we can like sort of do an autopsy and see, well, it did go down pretty fast, but was that faster than one would expect for a Brownian process? If so, maybe we need to adjust our models, right? Which is why we have these dynamic volatility models, these autocorrelation models, because in practice, we do see that it tends to go down faster and up slower than a pure Brownian motion model would suggest. So there has to be some sort of permutation. But every random process, more or less, uses Brownian motion as its like undercore, as its driving function, right? That the randomness is that the actual process is some function of a Brownian motion and a deterministic part. And so being able to accept that the Brownian motion represents the random portion of the process or of our prices or of the market, and then to think of yourself, well, what is a Brownian motion? Well, it's just a simple random walk, or it's just a hot particle in a box, or it's just a continuous, normally distributed, independent increments process, or it's a solution to the heat equation.
I mean,
right? All of these are the same.
Brownian motion is just random movement, right?
Yes, but it's a very particular sort of random movement, and then it's surprising that all other random movements can be derived from it, more or less, except for discontinuous ones.
Okay.
Right, and then you can add on a discontinuous portion if you want to fancy up your model. But Brownian motion isn't just a random process; it is a canonical random process. And then it's very interesting that all the other random processes get well described by it. You don't need to keep adding on more fundamental random processes, right? We don't have to have Brownian motion and also Hessel motion, and right, we don't have to have 7 different categories and flavors and atoms.
Okay.
It functions as the singular base building unit for all of the other random processes, which is really convenient for a mathematician.
Okay. You're good?
I'm good.
Very nice. Let's take a quick 90-second break, then we'll come back. We got more Tasty Live after this. Your joy, my joy, our friend, Mr. Scott Sheridan. Next, we'll be back in 90 seconds.
Oh, so nice. So nice to have.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, with special guests Mad Mike Martin and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Are you tired of one-size-fits-all financial services? Tasty Trade is a bespoke brokerage that tailors to the unique needs of your trading style and account size. You can trade stocks, options, futures options, and crypto all on the same platform. Find stocks that fit your criteria and analyze them with studies and drawings on our charts, or keep up on a company's events and performance with our in-platform newsfeed and fundamental data. No matter where you are, you can trade with confidence on tastytrade. Place trades and keep track of the markets with ease on our desktop, web browser, mobile, and tablet platforms. Having any trouble? Don't worry. We have the tools and resources to help. Check out the tastytrade Help Center to learn about our platform, trading concepts, strategies, and more. Forget the one-size-fits-all financial services and go with the bespoke broker that can help you grow. Learn more at tastytrade.com.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Tomas, we are back, my friend. That face can say only one thing. Tasty Trade World Headquarters, your friend of mine from the Scott Sheridan Studios, Mr. Scott Sheridan. But first, Tom Sadloff has a word.
I mean, on my one trip a year, Sheridan Palace.
I wanted to go out earlier, and you're like, no, and we had plans. Race. I couldn't change them, so you don't get the whitefish on a plank with the whipped potatoes.
I don't want the whitefish on a plank.
Yes, you do.
You might want a club sandwich.
We can get you a club sandwich to go. You can get a hot dog at the halfway house.
I don't want a hot dog at the halfway house.
They've got other treats. They've got some treats at the halfway house. I could probably figure out a way to get you a club sandwich delivered on the course.
I don't want a club sandwich delivered. I want white glove service.
Wait, don't you guys still have those great hot dogs?
Yeah. The Romanian.
No.
Romanian hot dogs.
Romanian hot dogs. Come on.
Your gout will flare up. It'll be perfect.
Part of my contract says...
Yes, what is it? I can't wait to hear this.
I get a sit-down...
Lunch? If you want to go early...
No. I want a sit-down dinner.
Okay, this is what I'll do. Because I have to leave, so maybe I'll find another member who will sponsor you for dinner.
No.
Okay. Maybe Jay's there. You can sit with Jay.
With one of those losers.
Yeah, you can sit with Jay. That's good.
That's okay. I'll go to...
Myron and Phil's. It's closed.
No.
You know where you should go?
Myron and Phil's closed?
Burned down.
30 years ago.
No, it burned down like 10 years ago.
Did it?
Like 10 years ago. Maybe.
I'm telling you exactly.
No, go to...
It's not my people's place.
Pisteria.
What?
Pisteria. Pisteria, the Greek place on two. It's good.
Cistaria?
Pisteria. Yeah, that one.
Piscatoria?
Piscatoria.
What did you say?
Whatever, that one.
Piscatoria?
That one.
This is why you don't get parking up front. Piscatoria?
This is why I told you he's public.
It's good.
Cistaria is great.
Really good.
Yes.
It's like...
Here it comes. You've never been there.
What?
You've never been there.
I know, but I know you...
Oh, my God. Here it comes. I know I've never been there. Okay.
I'll take you.
Yeah, see, after... You guys should go.
Obviously, I do. You've never been there.
I would go, but Fred, it would be perfect.
What about the other place?
Which one?
Superdog.
Okay, that's disgusting.
Wait, anywhere near where we're talking.
Go to the Bunny Hutch.
Superdog is right down the street from him.
No, it's not. Superdog's on...
Milwaukee.
Yeah, Milwaukee's Devon or something.
Yeah, well, we're on Devon.
But no.
It's not close.
Superdog?
Whatever, it's disgusting. It's disgusting. It's a boiled hot dog, which I don't get what you like about a boiled hot dog.
6,300 Milwaukee.
It's perfect. It's right there.
Actually, not that far.
It's right around the corner. You guys don't even know where you are. You've lived here your whole life.
I don't go there.
Because it's great. How could you not go there?
Disgusting. First of all, you can get
west to get to
You can get
one of the 7 wonders of the world. According to the New York Times food critic, said there are 7
I
places.
give him. I like Superdog too. But
7 places
over a Romanian grilled.
There's 7 places in America you have to
I
try.
can't get into your
Superdog is
I don't
one
let
of
my
them.
people in there, so I'm never going to be able to get them.
I'm telling you right now.
No.
Get Frankie.
Do what?
Get Frankie on the phone.
He's listening. He doesn't have to be at the.
Yeah, I'm sorry. You can't. I'm sorry. You're not. No.
I'm in Superdog territory.
Go to Superdog.
And you know what's so funny? If I'm in
No, I lived right by Superdog when my girlfriend kicked me out. I was in the White Horse Motor Inn right down the street from.
Oh, that's bad.
It was real bad. It was horrible. I had to stay a week there.
Never heard that story.
Oh, that's
White Horse Motor Inn. Yeah,
that's a rent them by the hour.
Kathy, she was a nice girl from New York, Kathy.
That's a rent them by the hour place.
It's basically like a 3-hour motel.
If you got kicked out, and
you must have deserved it. Here it comes.
You must have deserved it.
You must have deserved it.
Yeah,
I deserved it.
Yeah, you got caught.
Oh, that's bad. You did.
Yeah, I deserved it.
Yeah, but the White Horse, yeah, that's an hour.
Horrible. It was like a motor inn, like a White Horse motor inn.
Yeah.
Like you.
They have a.
All I had was a motorcycle too. I had
That's
to ride to
the
work in the
weirdest
rain.
thing. Like if you're on Lincoln, heading up past Foster, north of Foster, there's a bunch of those motels. Like why?
For people like me who get kicked out of their house and have to have a short-term
lease.
You know,
short-term lease.
Short-term lease until you can.
Those are 1 hour leases.
Stay.
I don't know.
It was horrible.
Like how much is that a night?
I don't remember, but it was horrible. couldn't have been more than like $30.
I was gonna say 50, 60.
Yeah, no, it was horrible.
Oof.
Low point, but I was young. I was like,
we stayed in one of those
years old,
at a
20
golf
years old,
in Sheboygan.
Oh my God, it was.
You know you're in a bad place when you go to play golf. These cheap bastards that we were playing,
and they didn't book the lodge. They're like, no,
we booked a cheap motel. Got to the motel. We looked at Scott and I. We had a shared room. Okay?
We shared a room.
So what?
Yes,
there's a.
So it was like $15 for each of you.
Yeah.
Who knows? There's water leaking out of the beds, out of the ceiling.
Yes.
Out of the middle of the bed.
The shower towel. I have dish towels that are bigger than this thing. I mean,
he had a container
I think I slept
on the bed.
catching water. I think I slept in my clothes. I do. I'm like,
I thought never take your socks off in a place like
ever.
I wouldn't. That's a
take my
pro tip right there.
Put my socks off at the Rio or the Flamingo in Vegas.
Oof.
But
was that where it was? Sheboygan. That's where that was.
Oh, Sheboygan. Yeah.
Oof.
Yeah, we were playing Black Wolf Run.
Oof.
Then didn't we go the next day? Didn't we go that night though? Leave that hotel, go that night, and drive to the other motel in Kohler?
No, we couldn't get in.
I thought we didn't stay there and we left.
No, I don't think. I know. We did stay at Kohler a long, long time ago. We did go up there once and played, but that was with.
Oh my God, that was the worst.
The worst. I like
with a bunch of drunken traders. Never forget that. I had 2 guys in my foursome that were so drunk they couldn't even drive the cart straight, and we're supposed to play like this big money match.
Yeah.
And these guys were like so wasted.
Yeah.
And they
don't care. They're like, what difference does it make what hotel you stay in? You're going to be so drunk. You're not going to know when you fall asleep. We're like, we're not going to be so drunk. We will know. And we're like, what were you thinking about staying here?
You guys are great designated drivers. I will tell you that right now. You have to have one of you in your foursome. It's great.
I'm telling you, it was horrible. Black Wolf Run is so hard.
Very hard. Yeah.
And the other course there, the
river and the meadow.
River course, whatever it was.
The river's harder than the meadow.
Meadow's hard too.
It is hard, but the river's got the river. Like there's water in every hole.
I know. And that meadow course, I think that day, first day we played the river, the second day we played the meadow.
Yeah.
And the second day, we're playing the meadow. These guys are drunk off their ass. And it's raining.
Deer?
What?
Did you see a deer?
Deer?
Deer. A deer running on the golf course. Usually a lot of deers up there. Oh, all right.
I don't know. I saw a deer. What would I care?
They're beautiful.
There you go.
They're beautiful golf courses.
I thought you were saying the deer's beautiful.
No, deers are pretty too, but they're. I mean,
the golf courses are really nice.
Beautiful. What do they got? The General. What's the Whistling Straits? The General.
Well, the General's in Galena.
Oh, Galena. Whistling Straits. What else do they have? They have They have 4.
The Irish course.
The Irish course. Yeah.
Good course too. They're all good courses. Wisconsin has a place that all these courses. We haven't even played half the courses in Wisconsin. Place where they played the PGA. We never played.
We got our work cut out.
Aaron Hills, right?
Aaron Hills.
Yeah, that's what.
Where Nikki plays the Sand. What's that place called? Sand Valley. Never played there.
How's that?
Really awesome. It's a huge compound. They have like 3 golf courses. They have a
hotel.
Yeah, it's like there's a hotel there. There's restaurants. It's really.
Yeah, we never played. Oh, and then there's all the Lake Geneva courses, which are beautiful.
Yeah.
That's Mikey's. No, not that. Not the old Playboy Club, but the other one down the street, Geneva National. They're great.
Geneva National. Last time we played Geneva National, I think it was you, me. I don't remember who it was. Shelly B. Cone, and it was like 40 degrees, sleeting.
Yeah.
It was like
the Arnold Palmer course. Those courses are so damn hard. You try playing it in the rain,
sleet. Going like, why are we doing this? You have to question your sanity.
I once played with Chucky at Midlothian, and we were playing, and it was snowing.
Snowing? That was a nice course.
It was snowing, and on our clubs, snow was caddying on the clubs, and the caddy had a short sleeve shirt, and Chucky's like, "You'll be fine." The poor guy was freezing.
How much did you take Chucky for that day? Be honest. A lot. Yeah.
It's next month. It's next month's salary.
Have you taken all? Is Anton still here? Did you get all his 20s?
I didn't get his money.
Anton didn't show up for his week.
He did one day.
Yeah.
No.
Did one day.
He had a funeral yesterday.
A funeral.
Oh, that's.
He did the show in the afternoon. Funeral.
Yeah.
I mean, that's garbage. What
Him and Jules were spotted at Superdog.
And Rivers.
Does Jules take advantage of him?
Take advantage of who?
Anton.
No, Jules.
No, he was just comparing their work ethics.
Jules is a little classier than that.
Okay. That's
not much.
Because you have the.
Jules feels guilty.
Does he?
Yeah.
No, he doesn't.
He's a little.
Since when?
Yeah, since when is right. You got that. You got the Rocco gene. That's a for sure.
Jules feels a little guilty. No. He has a guilt thing. Yeah,
he's repenting for everything he's done in the past. Is that what he's doing? Is like he's starting to feel like a little bit of guilt.
No, he'll take your money, but he won't take Anton's money. Like,
not the kid.
Like, I'll take the kid's money.
Yeah, you don't care.
I don't care.
You're agnostic.
Take anybody's money.
Yeah, to however you hustle, you don't care.
Yeah, I don't care.
20's a 20's a 20.
Yeah, I don't care.
I know.
I don't care because it's a lesson.
And you'll smile about it too.
Oh yeah. So you got to teach a lesson. You take your own kid's money because it's a lesson. You got to teach them a lesson.
I've never played pinochle, but my mom, my grandfather never met him, but he played pinochle, and my mom sat down to play with him, and he didn't sit down with any money, and she had like whatever, 20 cents, 30 cents, whatever it was. She said, "How come you don't have any money?" He said, "Because I'm playing you." Like that would be you with your kids. I'm going to teach you a lesson. I'm stealing all your money. All right. Should we get to some business?
Yes, please. Sure.
All right. Top 15 symbols going through the system.
They haven't bounced once today.
I'm sorry. Did the middle of your sentence get in the beginning of this? I apologize. You're right, Sadno. They have not bounced. You're on hold.
They haven't bounced $10.
They have not bounced $5. You do it for $4. Mr. Sheridan, please continue.
You sure?
I think he's done.
Top 15 symbols going through the system. First 40 minutes a day. No broad-based indices or futures. Time for you, number 15. SMCI to 37. For everybody else, Tesla to 29, NVIDIA to 54, Goog with an L at a 35, ENPH at a 39, AMD at a 74, Goog, no L at a 35, Apple at a 78, CRWD at a 63, Meta at a 69, Amazon at a 69, TQQQ at a 71, MU, that's MU at a 32, SMH at an 82, Visa at a 36, and number 15 for Tom, SMCI at a 37. Rounding out the next 10, Coin at a 52, PLTR at a 55, Microsoft at a 73, Dell at a 36, TSLL at a 72, TSM at a 63, AVGO at a 42, GLD at a 59, Rivian at a 42, and CELH at a 100.
You don't know this, but he shut off his.
Oh, shoot. I did.
Yeah, no, he did. So that while he was trading, he wouldn't interrupt you. That's how much he loves you.
Did you see that CrowdStrike trade? Just took it off. That's 2 days of work on a stock that dropped $100 for a nice profit.
Oh, who got you into that stock?
Not you.
Thank you for your time, Scott. Appreciate your list. I appreciate everything you do. Back at you. But enough out of you right now. We've got this band. Play some music. There you go.
Good morning, gentlemen.
Good morning, son.
How we doing? You look smiley. You look happy.
He's with that.
You know what?
No, he's got his Russell Nasdaq thing. He's
the Russell Nasdaq is sweet today.
Yeah. He's a happy boy.
Yeah, the Russell Nasdaq's sweet, but you know what? Today's one of the first times I didn't get burnt on Google earnings.
Okay.
Or Tesla earnings.
Or Tesla.
Because you outright avoided them.
No, I tried them.
Oh, you did?
And ENPH. Those are like three of my worst.
Okay.
Today I only sold some puts in American Airlines, which so far hasn't worked. And I have a small IBM position on. I don't know. What else did you have earnings in tonight? Did we have? I don't remember.
EMPH.
Oh, EMPH and...
From last night? Visa?
No. No, tonight.
I haven't looked at tonight.
Well, you did, I thought.
No, tonight.
Oh, tonight? Ford, NEM, Las Vegas Sands, AAL, IBM, CMG.
Oh, CMG.
RCL, AAL.
CMG is my big position. I don't know what to do in there. It's getting stock's big.
I put you in a strangle there in Johnny Trades last week. I'm sorry.
It wasn't.
Vinny's favorite
Sorry.
Mexican food, if you can call it Mexican food.
Which one?
CMG, Chipotle.
It is definitely not my favorite.
Vinny's favorite.
Oh, it's Vinny's favorite.
Yes, the 14-year-old crowd.
I think the 14-year-old crowd is big Chipotle fans.
Yep.
I don't know what to compare Chipotle to because I don't know what their competitors are.
Cava. Your favorite.
No.
It's the same thing, just Mediterranean. It's the same concept.
You hated
Cava this weekend.
I know. I heard you hated it. I'm shocked.
Yeah, I shouldn't say hate it. I was really disappointed. It's not nearly as good as Rhodey. I was very disappointed.
I think Rhodey is.
Grody.
Yeah,
Rhodey is.
I was very disappointed, and I waited online too.
Oh yeah, I mean,
you didn't get the local celebrity D-lister backdoor action.
No, and the guy didn't recognize me there.
Oh, horrible. Horrible.
So you're gonna short that stock then? Is that basically at highs, isn't it? It's like $80, $90
off highs, if I remember correctly. 80, just under $81. Yeah, it got as high as
95 or something.
Yeah. All right.
All right, what do you got here, Mr. Batista?
I got a couple trades for you. Ready?
Yeah.
Ready.
You probably have been trading these, but we'll see.
See. CrowdStrike.
First one, CrowdStrike.
I just covered it.
Okay. Did you do?
I had a short
naked
strangle.
puts? Oh, you had a strangle. Okay.
Yeah, I had a short strangle, and it took me 3 days because I sold it when they were down.
Ivy ranked 59.
The first time it went down 40, I sold the strangle, so I had to adjust all the way down.
Okay.
It has dropped another 45 points since I sold it.
Yeah. Might look at just selling naked puts down there. I mean, it uses $2-3 grand in buying power. It's too big for my position.
Which one?
I'm selling the 230, 220 short put spread at 215 in September, but I think you can sell those naked if you're
a big dog.
If you're a big dog. I mean, it gives you a break even at.
I think you can sell. I sold some naked puts. I sold some naked puts at the 210 level. I think just gotta be naked.
Yeah.
Yep.
Yeah. I think.
Okay.
Beautiful.
You've had the real.
I'm okay with that.
All right. Cool.
Look at Russell only down 4 now, basically unchanged.
Unbelievable.
Market's down over 2% on the NASDAQ.
Unbelievable. And you tried to get me out of that position a week ago. You're like, take a position up your minute.
Oh my God.
See how quickly he turned?
That was good. That was good.
First day the thing moved, he's like,
now you got to take it.
No chance.
Can you give me a day one?
No. I'm not. I told you.
See, that's why we haven't bounced yet.
Hold it for the rest.
We haven't got the day one. And I've been trying to get
holding it for the rest of the year. So keep going.
All right, 1 for 1.
Son, I've learned over the years, all you have to do is be patient.
I know. I feel like if I don't say it, if I don't ask him for it, he's going to give me the day one.
Just be patient, my son.
We need the day one. Everybody out there needs the day
up to 40, huh? I have no position. Let me see.
Yeah, so you got to pop in volatility. You got the VIX futures in the 16 handle. I'm looking at kind of sort of core position here in my Johnny Trader portfolio. So I'm doing an iron condor, $10 wide, 525, 515 for the short put spread, 570, 580 for the call spread. Selling around a 20-ish delta for the short options, going $10 wide, $3.39.
Hold on. We have a position on in there right now. I cannot believe it actually worked.
Yeah, you probably got bailed out.
I got bailed out.
On this down move. I mean, everybody's been feeling some pain on any call spread that you've had for the last.
I had some put calendars on, and I just took them off. Wow. Actually went $1.50 our way. All right. Well, we remember vol was really low.
Yeah.
All right. So now these are off. Now, what do you got in SPY?
Just a relatively delta neutral iron condor.
SEP?
Yes. 525, 515, 570, 580. You want to widen it out or do a strangle? Totally understand. I did this at 3.
I think I'm going to do I think I'm going to do 16 delta.
Okay.
Strangle.
Cool.
16 delta call puts are 510. 16 delta calls are 16 delta calls. Well, they got a couple different ones. I guess they're the 575s.
The show ends at 10 o'clock. Are you going to be able to do this by then?
No, I hear you.
No, him I'm talking about. I mean, fumble around. Didn't you?
Done. Take a fill.
All right, 2 for 2. Last one. I think you got buy the dip here in Google. Call diagonal spread, a little cheapy. Buying the 180 in September, selling the 185 in the August 16th against it. I did a 394 debit.
Oh, what are you doing?
You doing August SEP?
I'm doing SEP for the long option, selling August.
August has higher vol than SEP, so you got a little good thing there.
Sounds
23
vol.
days put you on the cusp of moving, but it is a diagonal. Or
Defined risk.
So.
Okay, so what do you want to do here?
I'm buying the 180 in September, call, and I'm selling the 185 against it in August.
Man, premium seems cheap in Google.
And hence why this delta is so cheap.
Why does premium seem so cheap in Google?
28% monthly implied volatility.
Get 20 deltas for $400.
Yeah, I'm gonna do something a little different, but you got me into Google.
Okay.
I'm gonna do.
Oh, you're gonna love this, son.
What do you do?
You are gonna love this.
What do you do?
Now remember, Google is trading around $174, so he's buying the 55 puts in October and selling the 60 puts in September for 5-cent credit.
Oh.
I like that diagonal for a credit.
Amazing. What an efficient use of capital. I applaud you.
That's got 9 cents written all.
I mean, and I can't wait to hear it. Oh, I made 10 cents on that downside. Did you do it 1 by 2 at least?
No.
So you did it 1 by 1.
Yeah.
So what's your delta on that? About 2?
What's my delta?
Yeah.
It's a healthy 3.
3. Beautiful.
Hey, I'm not.
You really lay them out. It's impressive.
I'm not buying. I'm not buying into today. I'm not buying into this rally today.
What rally? It's down $7.
I'm not buying into.
Down $25 from the highs.
Yeah, big deal. Google can drop another $80.
Yeah, you know why? Because it's day one, right?
I didn't say that. You said that.
We're going to take a quick 90-second break. Good try, son. We got more Tasty Live after this with Liz and Jenny from the floor of the CBOE. You're going to want to catch all that action. Even the S&P is down to 86. NASDAQ down 500. We'll be back in 90 seconds. It's Tasty Live.
Russell down 4.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Welcome to the Liz and Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix.
But you know what he did? And we've got those cards with us, and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card, and I am no longer afraid to trade anything. Just try it, Liz. Any strangle you want to put on.
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
If you missed the live show, here's our cherry on top weekly recap. How come I'm the only person in the office?
Tell you why.
Yeah, what happened, girl?
I have been waiting for a year and a half for Tony's guy, this is the truth, to come fix my HVAC system.
Nobody else can fix his heat and air conditioning. He's had other people there.
It's too complex a system.
What time is he supposed to be there?
Hold on, it's him texting. Oh,
yeah. We need to stop meeting on Mondays because last Monday it was the debacle with the RV. This Monday the debacle with the missus. Next Monday we're
Hey! Update on the RV. I got a bid for it.
Oh, reasonable?
No, 30% below asking price, but I got one.
It's literally 78 degrees and muggy outside, and you guys look like you're going to Vail.
Well, I wore a T-shirt underneath mine, which I never usually do because Beth says I never wear a T-shirt under mine. So I did it for...
We appreciate it.
I had a white T-shirt on, but I didn't want to. I thought it was like too revealing, showing all the muscles and,
all those muscles? Oh, sweetie.
Have you seen? I did bring the video in. Have you seen?
No, can you play the video?
Really?
Beth, do you have the video?
You
have the video?
For the past few months, she's been trying to get Scott Sheridan together with a woman you will meet in just a few moments. Scott, your age?
25.
Occupation?
Trade at the options exchange.
How important is physical appearance to you on a scale of 1 to 10 when you meet a woman?
10.
That's some good hair.
Was that the weekend that you two met?
Yes. So Al, who was in that video, invited me. And he's like, there's a bachelor's party, and said, come with. And I said, but I don't know anybody. He's like, doesn't matter, you'll stay in my room. So we went, I'm in Al's room. It's just a regular room, 2 beds. I'm like, okay, great. And I said, what's that door for in the corner? And he's like, that's the Tom's room. And I opened it up, and it was a Rain Man suite, the 2 split level. I couldn't see Tom, it was huge. I just turned around, I looked at Al, I said, who's Tom? And 36 years later, we're sitting here.
Get the full scoop by checking out the archives at tastylive.com.
Hello, everybody, and welcome to the Liz and Jenny Show live from the SIBO. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews.
It is a crazy day down here. We had lots of earnings come out last night. The market is falling today. This SPX pit is so busy. You can hear, hopefully you can hear it at home.
Oh, they're in rare form today back there, ladies and gentlemen. So yeah, you're going to hear some action today. We've got SPOOs down 1.5%, NASDAQ almost down 2.5%. So you know what you got? The RUT and the Dow are not down nearly as much as the two, but it's an exciting day in the markets.
It is an exciting day, and we have an exciting show for you. Today we have another amazing SPX study from our research team. And I do, before we jump into that or anything else, I actually want to jump into Twitter.
Are you going to show our special guest, Jenny Andrews?
If we could show this Twitter screen. Okay, we have all these visitors here today. So fun having visitors on the SIBO floor. We have Angeline Ong, who's from IGTV.
Yes, Angeline, Frank Berna, we've got Quentin, we've got Anton and his beautiful wife, Bella.
Yeah, so nice having our crew here. And not our crew, but just a slew of visitors. And for those of you watching at home, the tall guy in the blue shirt, Anton, he's the one who made our SPX study that we're going to be going over today.
Yes, he did. He's the one we talk about on a daily basis with that, so it's kind of exciting. Okay, so Jenny, I'm very excited to have everybody here. You're going to hear a lot of noise behind us because on days like this is when it is very active. It is very, you can see that it's going to be a buzz with action. We've seen lots of things across the board already.
We were just talking about hopefully next week having a guest join us on the show. If it were today, they might take a pass because they don't want to miss any action. There's a lot of action going on the floor.
They would, and so that's just it. This is live. Market makers, we're going to grab somebody, maybe talk to them a little bit, but if they have to run, they have to run. It's very similar to what you and I used to do on the trading floor.
Right. So I get it. They don't want to miss the trade. That's where these busy days are where they make most of their money.
They do.
They don't want to miss anything.
Very true.
Okay, should we pop into the study? Should we start with the SPX study?
Let's go. Yeah, let's do the SPX study first because we've got a lull in activity, so we can get into that.
Okay. So sitting here in the SPX pit, we have an SPX study talking about the difference between iron condors.
So yes, and this is a good one. So Anton puts a lot of work into this, and it's the difference between iron condors. So if we go to the first slide, stop loss orders. So everybody kind of understands what a stop loss is, but stop loss orders are a popular mechanism that get out of trades that have gone bad. But in fast-moving markets, there's no guarantee about what price they execute.
Defined risk trades such as iron condors have natural downside protection from their long strikes. You know ahead of time how bad they can go. We've had, the last few weeks, we've had study after study after study of SPX naked options. And we say every week, our account's not big enough for the naked options in SPX. We prefer defined risk. So I love that this study is about iron condors and defining your risk so we know our risk going into the trade.
You do know your risk going in, and that is true for these defined risk. I want to say for the record, though, this is a big product, big and liquid. SPX is big, so it's still going to be defined risk, but it's going to be a lot more than you see us put on on a normal day.
Okay, is having stop loss orders on iron condors, has it been a useful additional line of defense, or were traders better off staying in those positions in case they turned around? And you'll hear us talk about that on the network. Oftentimes people put in a stop loss, they get stopped out, they take a loss on a trade when that trade in the future might have turned around.
100%, especially when you're putting on a durational trade. Listen to the noise back here, especially when you're putting on a durational trade. So this is our first ever 45 DTE study. So let's pop in and get
first
to that.
ever here from the SIBO.
For the SIBO.
Yes.
We usually have the 0 DTEs.
Okay, study. This is looking at 20 years of data in SPX. Sold iron condors at 45 days till expiration with a variety of initial short and long deltas. 45 days till expiration, that's what our research team deems as the best spot to enter a trade and hopefully be in that trade for a few weeks.
And keep in mind, look at this, the last 20 years of SPX data. That is a ridiculous amount because it's daily. That's a lot. When we're doing the 0 DTEs, they've only been around for about a year. This is 20 plus years of data.
Using the 45 days till expiration SPX options.
Right.
Okay, we calculated the performance with P&L as a percentage of initial buying power. So when you're looking at P&L and you're seeing that percentage, it's a percentage of the buying power used, so similar to return on capital.
And we'll go into those when we get into the numbers, because right now we're just setting up the study. This is all archived. If you want to go back and forth, you can go back and forth on the study as well.
Sure. Our show's in the archives, and the study will be linked right to it.
Yes, it will. Yes, it will. Okay, so then we're going to look at if you're stopping out at 75, 50, or 33. So let's go.
Okay, and one interesting thing, we're comparing stop losses versus holding till expiration. Oftentimes, you'll see we close our trades at 50% profit. We didn't include that. That's not included in this study.
It's also not included managed at 21 days.
Right, manage it. I find I find that manage at 21 days or closing at 50% profit happen around the same time. Or you get to the 21 days. Now when I run studies, because I've been running studies, when I run studies, I run them all close at 21 days because it's usually about the same, or you hit 21 days just before.
And I understand why these don't have them in there, because when you have a defined risk study, it's 21 days or 50%. It's so easy for a naked option. It's not as easy for a defined risk.
Yeah. Okay, management was executed using closing prices on the day the stop loss triggered.
Perfect.
All right, here is our first batch of numbers, Liz.
Okay, so, and we're gonna, what I love about this is we're actually gonna jump into platform and show what these numbers mean instead of just running through them.
Yeah.
Because like I said, this is archived, you can go back and look at these. But the first one we're looking at is 40 delta shorts and 30 delta longs.
Now that's tight.
That's tight.
That's tight. If you're starting with a 40 delta call and a 40 delta put, that's tight. To me,
considering 50's the at the moneys, it's pretty tight.
But to me, that might make sense when vol is really high. When vol is really high, our old studies have shown get tighter. Bring your shorts in.
When the vol is high, get your shorts in.
Yeah.
Speaking of vol, we had the VIX today at.
Where's
the VIX? Is at 1664. We haven't seen it there in a while.
Big boost.
Yeah, big boost in the VIX.
Okay, so 40 delta shorts, 30 delta longs. What my eye goes to right away is the win percent. There is not one example here where the win rate is over 50%.
No, you're close at no stop loss. You're close at no stop loss. But what I want to say is these, you can see how wide these are going to be. You have $3,100 at risk. That's a defined risk. That means that's your risk definition. That's on average over 20 years. Right now it's going to be more than that, because the price is so much higher, but it's an average of that over 20 years.
So the risk is lower on this because you're selling the 40 delta, buying the 30 delta. It's defined risk. I mentioned you don't have any win rate over 50%, but because they're constantly putting this on. I think if you took this trade and put it on when you had high vol or a spike in vol, you'd have higher than 50% results for the no stop loss. You can see using a stop loss, the results aren't great.
They're not great.
They're not great.
Okay. So let's go to the next one as well. And then we're talking about these stop losses. And I think this is going to really drive home the points. And I hate to give away at the end.
Don't give away the takeaway. Don't give away the final slide.
But the takeaway is we say it all the time. I don't put a stop loss in my account. You don't put stop losses in yours. That's not the tasty way. But I love that they are actually edifying why we do it.
Now,
why we do it.
Now,
why we don't do it.
There are people with strangles, straddles, maybe not straddles, but strangles who do put in stop loss. I thought your father-in-law used to do it, close at X amount of loss on a strangle.
Naked options. But naked options are easy.
Yes.
But I don't.
So naked options, I get it. There are times I call mercy. There are times I have a naked option. I was like, I don't want to lose any more than this. I'll just close it and take the loss.
And it's different than saying 25%. It's a little different.
But you know what I mean?
We've called uncle on lots of things.
I've done a stop loss in my own mind. I can't take it anymore.
All right, do you want to show this one just because we should go through the study?
So this one, if you look at the C-bar, conditional value at risk, this is the highest. This is much higher, double or triple the previous page, previous information from the 40 delta, 30 delta iron condor. This 30 delta, 10 delta is much wider, which is why the C-bar is a lot higher.
Okay, so let's go into the platform and pull up both. I just want to show the collection on both so you can see what we're actually looking at.
Okay.
So let's go to the platform, and she's going to throw on an iron condor and close this to 45.
Spoo's down 90.
90. That's what I'm saying. We got to get through this and get back to this.
SPS.
Down 90. Close all watertight doors.
Hey, we're good on time. It's not even 10 after 10. We're not even 10 minutes into the...
No, I know.
Sometimes time feels like it's flying. We're 9 minutes in.
I know, but I want to trade. What's Spoo's down 90?
I promise you'll have plenty of time.
Get into that platform. We're going to show what it looks like to have a 40 delta, 30 delta iron condor in. 45 days till expiration.
45 days till expiration. I'm going to go with the September 6th, 44 days. And... look at the 40 delta. What are we looking? 40 delta, 30 delta first?
40 delta. We'll pull up both so you can see the difference in collection. Then we'll go back in.
Now the 40 delta is close. That's we did mention that. So selling the 40 delta,
which would be the 54.30.
Yes.
54.30.
And buying the 53.50. That's the 30 delta.
Okay.
So selling that put spread. Adding on a call spread, same mechanics. Selling the 40 delta, which is the 55.70.
And then buying the 30 delta, which would be the 56.30.
Yes. So here we're collecting $4,500, $4,525, and only risking $3,470. When you're bringing these in so tight, your credit is greater than your risk.
And that's your conditional value at risk. That's exactly it. When you have a defined risk spread, that is your value at risk. When you're defining it, that's your real risk in the trade.
Now, honestly, this doesn't look terrible.
This is my favorite. That's why we went to it first.
I know the study says hold this till expiration, but I don't hate this trade as a throw this trade on and take 20% out of it.
I don't either. But I just wanted to show the difference because when you look at just the numbers on the platform, it really looks totally kind of out there with the 30 delta, 10 delta because it's a wide spread. So this example, we're putting up, you have $4,500 in profit potential and you're putting up $3,500.
I'm going to go back to the study, to the page on the 40-30.
Okay.
So here we go, 40 delta shorts, 30 delta longs. We see a win rate of 48%. Again, that's putting it on every day regardless of vol.
And letting it go till expiration.
And letting it go till expiration. The average P&L, 2.3%. And that's per trade, 2.3% per trade. So if on this trade, we're collecting 45, it's 2.3% of the buying power used. So if we're using 3,000, it was 3,470, 2.3% of that.
Hold on. It's $80 in P&L on average.
On average, and let's say if you put these on with 45 days to go, maybe you get 10 on a year, 9 or 10 on a year. So what did you say? 80, so maybe $800 over the year using $3,500.
If you're doing that, the study with the percentages was daily.
So when you look at that, when you look at the average P&L, 2.3% of your buying power. That's about a 2.3% return on capital, but that's just for each trade, and you can do this multiple times a year.
Correct.
And that's on average, and this is looking at 20 years worth of data.
And no, I just want to clarify though, because I did ask Anton this. This study was done where they're putting them in every day. That's how the numbers are.
Well,
that's how the numbers got to be. That the number of occurrences makes the data more accurate.
Yes. Right, for sure. Okay, so that is the 40-30. I'm going to look at the 30-10, which was much bigger risk, maybe 3 times much as or more.
So let's pop in. So she's just going to show. I'm going to keep up the other one just so we'll both look at 2 different
Okay,
ones.
so selling the 30 delta, selling that 5350.
5350.
Buying the 10 delta. This is where it gets very wide.
Keep going.
50-50, buying the 50-50. So that's really a very wide spread. I don't even consider that defined risk, even though it is. But
technically it is, right? But that's why what I love about the research is they're showing we're putting actual numbers around what we do and why we do it. And so let's take a look at that. Put it in the top.
Okay, so I put in both sides. You're taking in $7,200. So you're taking in $3,000 more than we were on the 40-30.
Correct.
Our center strikes are further away.
10 deltas farther.
But our risk, our buying power effect, our width on those iron condors, the risk on those iron condors, 22,700.
So keep in mind when you're looking at what you're going to make, it's on the buying power.
I think this is yes, but a percent of 22,000 is going to be a lot.
Yes.
Yeah.
But you're farther out. So that's what I'm saying. These are an average. This is done day after day after day.
So
it's a percentage of the buying power.
For me personally, now this isn't set in stone. Like you have to do this one or that one. For me personally, I would tweak it. Maybe I do start with the 30 delta to give myself more room, but I tighten up that spread.
Hey, you're going all the way to the end. That's what one of the takeaways is.
Is that what it says? I didn't read the last line.
The takeaway is make it to your own risk tolerance.
Let's see. So the 30-10, which has the most risk compared to the other one we looked at, that win rate is 61%, and that's over time. And the average P&L, 4% of your buying power for each trade. Now it says the conditional value at risk is about 10,000. The one we just put on was about 20,000. This is taking data for 20 years.
Yeah, I mean, SPX used to be a lot lower in price.
Yeah.
So if you're going to average everything together, it used to be a lot lower in price,
right?
Which is why these are so wide now.
Okay, finally, looking at narrow iron condors, but further out from at the money, win rates were the highest. Ooh, 2010. But what about 30-20? That's the only one that's missing from here.
That's what's great, Jenny. You can do whatever you want to, but I do kind of like looking at this. But what my eye line tells me is that in every single one of these scenarios, you can retrofit it. But the stop losses in an iron condor, I sort of feel like, and I'm going to give it away. Your defined risk is your stop loss.
Right. You decide how much risk you want to take. You buy those wings. You set your risk, and the stop losses just don't work. They don't make sense for these defined risk spreads.
They don't.
Do you want to get out there and get in there?
Kind of do. I wanted to see if there was a big order that was going up.
But these aren't bad. This isn't bad. The 2010. I'll take a look at one of those.
Yeah, we didn't look at the 2010.
No, we looked at the 3010.
Yeah.
So I'll take a look at the 2010, and then we'll decide. And we're gonna put one of these in.
Okay.
You didn't sound that excited. She didn't sound that excited. I'm putting one of these in.
I would put an iron condor in. I just don't know that it would be that wide.
Okay, so exactly. So selling the 20 delta, that takes you all the way to the end of the brown bar, which is the expected move for the cycle.
That's
so
perfect.
With a rank of 40 and VIX up today, it's taking us to the expected move. So that's selling the 20 delta, buying the 10 delta.
What's the strike price?
50. We're short the 52.40 put, short the 52.40 put, long the 50.60. And now on the calls, selling that 20 delta is the 5700 beyond the expected move.
Beyond the expected move.
And buying the 10 delta, we're taking in $3,230.
What's our maximum risk?
14,000. I think we got to bring this in 30. Bring it into the 30 delta, tighten it up.
So I think the takeaways are, you can tighten it up, but I'm not going to buy the 10 delta. What I love about this is hit your own risk parameters. Yes. I don't want to spend $14,000 to make $3,000 in a small account. That's not my risk parameter for this account size.
If I had a larger account, sure, fine. If I wanted to do this in a larger account, sure. But our account is smaller, and we don't want to take that much risk. If I leave it at the 20 delta shorts and bring this in and make it, let's see, $60 wide. $60 wide on either side. I'm going to try that. 52.40 and then 51.80. I'm just moving the longs. I'm leaving the shorts, moving the longs. So here we're taking in $1,775 and putting up only $4,200.
So that's not bad, but that's what I love about this. These are liquid. This is a liquid product that you can decide what you want to put your risk parameters in. And what I also think is great about these studies is that I don't want everybody to say, okay, I'm just going to do this. This is the only thing I'm going to do in my account with, say I've got a $50,000 account, this is all I'm going to do in there. This is something that you can layer on and add on top of an existing portfolio. It's not bad to have in occasionally when the implied volatility is high.
Honestly, and I know the numbers wouldn't be exactly the same, but this is how we tweak these to fit the size of the account.
Yeah, you might need to take that a little bit lower.
Take it in a little bit?
Well, $4,000 is a lot for this account.
Okay, let me bring each side up one. Then it's going to take our risk to $3,400.
We're going to use a lot of capital today, Jenny Andrews.
Okay, if I bring it in one more, then we're taking in $1,260, risking $2,700.
Sure.
How do you like those numbers?
That is the number I can tolerate the most out of the ones you gave me.
All right, so I'm going to ship this SPX trade. We're in the 44-day cycle. We took this study, we made it our own. We decided what risk we want to take.
Well, and let's go to the takeaways, and then we'll ship it in. So the takeaways on this study are, I think they're pretty interesting. So if you're going to look from this perspective.
The single most important virtue for managing losers comes with lower risk, obviously, but there is a trade-off to performance, right? The less risk you have, you won't make as much of a percentage.
And so this is what I love about this, the trade-off, the stop losses. And it says it down here, the alternative stop losses is to buy wings where your maximum profit on that loss would be your acceptable threshold. And that's exactly what you did.
We looked at how much are we willing to lose, and that's how narrow we made the spread.
That is.
Okay, an alternative to stop. Oh, that's the one we read. She just skipped the middle. The trade-offs by using stop losses comes in the form of significantly lower average P&L, slightly lower win rates.
Well, and I do love the defined risk in such a big product because that is my stop loss. That's when you call uncle. You can't lose any more than what you're putting into it.
Okay, so if we are not willing to lose more than $2,740,
and it's real risk. Take a look at this. So So wait a minute. Where are your short strikes right now?
My short put is the 5240, which is the 20 delta. It's beyond the expected move with the high rank and vol up.
So 5240.
Yes.
Okay.
5240, 5240, 5200, $40 wide.
5240?
Yes.
Okay. And it is outside the expected move. You've got a 20 delta. That's actually pretty good. I also want to say for the record that if somebody wanted to take this, you can make it into a bite-sized nugget and a spy. It's not bad.
You know, I'll tighten it up even more. 5240, 5210, $30 wide.
I'm okay with all this. I just want to show. SPOOs are down, what, 93.75 right now. So you're looking at SPX down 92.19 right now. Look, they have a slightly different numbers. It's 100 points today, right? So we've got a trade on for 44 days till expiration. You could move 100 points at a clip. You could, and that would get you there in 3 days.
I tighten it up where it's $30 wide.
I'm okay with it.
Risking 2,000 to make 1,000, which fits our mechanics of collecting about a third of the width.
Yeah.
So our on an iron condor, collecting a third of the width, collecting 1,000, risking 2,000 on a $30 wide.
Correct.
You can't be afraid of this one.
I'm not a huge fan of iron condors. I like trading SPX, but 45 days till expiration. This is mechanics. This is mechanics 101. I would press it.
Okay, and when you say you're not a fan of iron condors, oftentimes I do say this. Trading in a smaller account is tough. You have handcuffs, right? You have to define your risk. You have to tighten these up. We just looked at a study where they were doing $60 wide iron condors,
Correct.
$100 wide iron condors.
Well, I consider those more like naked options when you're looking at that.
Yes, and those have better results.
Yes.
Better results. When we have to tighten it up and bring in the wings and reduce our risk,
and you follow the mechanics. Risking 2 to make 1 is the mechanics. And you're looking at this, you've got a 43 rank, you're following all the bells and whistles, you are checking all the boxes.
So I'm going to ship it. But I'm not going to let this go till expiration. I'm going to put in a GTC to take, if we're taking in $1,000, if we take 20% out of this, it's $200.
Yeah, 20%. I think that's a good idea.
20%.
So we took the research piece and kind of made it our own.
Yes, and I'm going to ship this trade.
Okay.
I used $2,000.
I love it.
That's not unreasonable for us.
No, that's reasonable. We can't spend this. Our show account has, I think,
$30,000.
30-ish. So you can't spend half your account in a trade.
No, we couldn't do the one for $20,000.
Or the one for 14. No. You don't want to do that. So in my account, maybe we will. Like in your account, you might.
Yeah, make it wider, take more risk, take a bigger credit. Sure,
with the checks and balances.
But you have to realize, whatever your risk is, that it can happen. You can. We talked about this yesterday. Wheels fall off scenario, and Liz wondered, where did that come from?
I don't know who said the wheels fall off scenario. I do want to know.
I don't know. But I thought it was another great research piece. And if we stuck to the results, we could have done the 40-30. We could have done the 40-30 because that one had less risk too.
It was about $3,500.
Yeah.
We could have.
Okay, so we are taking live tweets today. I shipped it.
Okay,
I shipped it. It's working. We're taking live tweets today. Send in tweets. Include the hashtag LIZJNY. We also have What's Your Assumption to Do.
It is a jam-packed show today. It is a Wednesday. We've got a lot of market activity behind us, and it is fun to kind of take advantage of.
As you say that, it turns to crickets.
It was like a lull.
There's a lot of activity.
It hasn't. And I think that's what is so fascinating about being down here. You can see it goes up and down. And down. Okay, so do you want to pop into Twitter?
Okay. I'm going to go to Twitter, and I'm going to go to our What's Your Assumption. We're going to start. I'm going to scroll to the very first What's Your Assumption that came in. What's Your Assumption coming in from Beth from Menlo Park, California. She's bullish IWM. We have been seeing this. IWM's had a boost lately. What do you do if you're bullish in IWM?
So this is very near and dear to my heart because yesterday I was on with Business Insider and we were going through how you can make a neutral to bullish trade in IWM. And they were looking for something that all the traders are doing. Now, I don't know what all the traders are doing, but I know it's something that what you and I might look at if you want to make a bullish trade. So we're going to do this for Beth. But Vanessa did a piece today, too. It is the #1 searched ETF.
IWM?
Because
recently.
Just recently. This morning she did that piece. Because there's been a sector rotation. The NASDAQ and the S&Ps have been held up on the backs of these tech stocks. And so there's been a little bit of a sector rotation. So let's go place a bullish trade, a neutral to bullish trade in IWM.
Okay. That's perfect. I'm going to go to IWM. And
looking at it, so these come in yesterday. So hopefully you waited till today to put it on.
It's down $1.18 today, but it's not down that much. You mentioned the Russell. Okay, Russell is down 0.5%. 0.5% when we have the SPOO's down 1.7%, NASDAQ down 2.75%, Dow down almost 1%, and Russell's down the least 0.5%.
It is. It's been keeping its wings up. Can you go to the chart and we can take a look at the chart real quick?
Okay, so it's down today, barely. If you take a look at that chart, it had its boom. That's great. What was that quote you heard the other day? About the rise of the...
So if you have a portfolio full of dogs, they will rise. They will have their day to rise like a phoenix from the ashes.
That's me. My portfolio is full of dogs. I'm waiting for it.
But IWM has not participated. I know this looks like it's up, and it has had that little spike recently, but it hasn't participated in the straight up move that the NASDAQ and the S&Ps have had.
Yeah.
So that's why a lot of times people look at this as a pairs trade. You don't have to pair them. It can just be a straight up. I have long run in my account. We have long run in this account. We're going to take a look at putting on a neutral to bullish strategy in IWM.
Right. If people
which is the ETF that tracks the Russell.
Yes. Okay. We're going to follow similar mechanics that we followed in the SPX trade. We're going to go out 45 days till expiration. 45 days. And our plan would be, all right, 45 days till expiration. We've got August 30th with 37 days or September 20th with 58 days.
So, I kind of said this yesterday when I was talking to her. We usually 45 days. I said between 40 and 60. So I would go with the September regular monthly with 58 days.
And I'm good with that because what's your assumption? The viewer that wrote in, she had said time frame 8 weeks.
Brings us right in.
Perfect.
So we're going to open up the September 20 with 58 days till expiration.
Okay.
Now yesterday, only because I had the prices in my head, yesterday that 215 option was about a 30 delta and was trading for about 380. So it's not that different.
It's 450 now, 35 delta. Boost in vol. We've seen a boost in vol today, and Russell's down a little bit.
IWM is a 95 rank.
95 rank. If I were to sell a put, you mentioned 30 delta. Now the 30 delta put maybe about that 212, and the 212 is 362. So you said about 350, 362, 30 delta put, and $360 using $3,400.
Yes. So let's just kind of break this down a little bit. So if you're selling a 215 put, and we're going to stay at the 215 strike, if that's okay. We're going to stay at the 215 puts at 35 delta.
Oh, we're going to stay at the 215 strike?
We're staying at the 215.
Okay.
Yes.
Sure. Liz is getting aggressive. Vol is high, rank is high. She's getting aggressive.
We're going to stay at the 215 because I want to send this to my friend. So the 215 strike, you are now getting $4.55 in premium for that, and you're putting up $2,159 to do that. That return on capital is pretty good.
Using $3,700, getting $455. Sure. If someone wanted to get long, we're selling the 215 put. I've got buying power effect $3,700.
That's very bizarre.
What do you have?
21.
No, because you're not in your account. You're in. You're not in our account.
So $3,100. What is it? $3,100.
30, almost $3,800. Okay. So it's a lot for our account. Almost $3,800. But we're going to send this trade.
We are. So if you take a look at this, the whole concept is IWM can go down. It can stay right here. Anywhere to the upside, you get to keep your credit. But your break even on this is around between 210 and 211.
Yeah, not bad at all. If someone was bullish in IWM, wanted to get into the Russell, it had that run up. They maybe missed that run up, but they can get in on a pullback if this put ends up in the money, or they just keep the credit.
Or you just keep the credit. This is pretty aggressive, but as we were talking about in the SPX study, when the rank is high, you bring your strikes in.
You can get more aggressive.
You get more aggressive.
Okay, selling that 215 put. Get long stack at 215, you're taking in 450 credit. So your break even is 210.50. If I go to the chart, 210.50, it's right back there.
Where it had its breakout.
Yeah, right where it had its breakout.
So then you're long. So the whole crux of this is you would get long IWM at the break even of about 210.
210.
Now, can you do me a favor and show it on the analysis page just to keep this?
Well, we have other positions in IWM.
Oh, we could take those off.
I would have to. So hold on. Hold please. If I sell this put, we're going to go to analysis and curve view. Hang on. I have other positions in here, so I just want to make sure we've got just that 215 put. Okay. Now.
There. Well.
There we go.
Here we go. So if you take a look at this, you get to keep that credit in that sweeping area where that green bar is. You get to keep all that credit anywhere to the upside. This is a neutral to bullish trade. You can see where the flag is trading, and you have that little bit of room. So it's as if you're getting long the stock. I was trying to talk about this. If somebody tells you that selling a put is too risky, they don't understand buying a stock.
Right. If anyone's willing to buy a stock, if anyone's willing to buy 100 shares of a stock, they should be willing to sell a put.
All right, Jenny. You know what I'm going to ask you to do?
What?
The naked put dance.
I don't have enough room. If you want to see the naked put dance, you have to come to Canada. We're going to be in Toronto this Saturday, and I will be on stage doing the naked put dance.
So she made up this whole dance about the P&L for a naked put, where it goes like this.
Don't spoil it. Don't spoil it. I'm doing it in Canada. You've got to come see us in Canada on Saturday. If you want to come to Canada, come to Toronto, tastylive.com/events. It's free. We'll be in Toronto Saturday. I will be on stage doing the naked put dance. If you want to see it, that's where you have to see it.
So that is it. So essentially, you're getting long stock at a better price if it goes down. It's a neutral to bullish strategy. So we're going to press the button on this one, which is great. So it fit what's your assumption and what I need to do for my friend. So we're good.
And that's in.
Chip, are we filled?
No, not yet. Not yet.
Well, it's a liquid market. We're going to want to get filled.
I am working the order.
Take it down by a penny.
Working the order. Replace this. Sell this put. 440, 444, and still working.
Still work. 43.
And again, a put. Okay, how does a put change? As the stock goes up, there, we're filled. Perfect. 444. As the stock goes up, the put gets cheaper. If the stock rallies, and we sold this put for 444, and the stock has a big rally, we may be able to buy it back for $2 next week.
You could. If the stock goes up, you can buy it back for less. If we stay in a bubble and all things remain equal, in time marches back for less.
So we have it in our account here, the 58-day September 215 put. We just sold it for 444.
Perfect. We are now long IWM. Neutral to bullish IWM.
Yes, neutral to bullish. Okay. All right, I'm going back to Twitter because we have quite a few assumptions coming in. Also, I don't know if we should go to the top to see any tweets coming in.
When I went to mine, it went top down. We should go top down, then we'll get back to it.
Okay.
So Jack JT, he's top of the list, and you're right. I will make it happen. I can make it happen.
Okay.
I'll make the video. I'll post it everywhere.
Can't make it to Toronto. Expect a video showing it. Liz, please make it happen. Sure. I promise you, I'll do the naked put dance on stage, and I might pull Liz up on stage with me.
I gotta video it.
You wanted to do it so badly here. You're doing it on stage with me on Saturday.
No, I'm stuck. So I can't. I got a video. I got a job now. Jack,
no,
thank you.
She's in it.
Take a film.
She's in it.
I'm not the cameraman.
I'll get someone else to film it. She couldn't wait to do it. She's doing it on Saturday.
Okay, then
Where are your dancing shoes?
I always have my dancing shoes on. So then he comes in with a generational opportunity in MU with this down move.
Oh, Jeff.
Oh, with his darling.
His darling, Micron. He loves Micron. It's been his darling. Micron had a crazy rally this year, and Jack profited on it. Now, with the drop down, and that's been a big drop from 165 to 111.
It's a big drop.
What do we want to do in Micron? 32 rank.
I'm going to look. I'm going to
go to the trade page.
Earnings are gone. Over, not gone, but over. So you could go open up September and or August. So here's my question, Jenny, and this is a legit question. I love jumping into this, and I like looking at things like this, but we've got MU with the 32 rank. We are noticing our ETFs have higher ranks than that. So a lot of times we'll go into an individual name if the ETFs aren't providing that volatility. I really do want to lean towards an ETF.
I agree. I agree with you. We just sold a put in IWM to the tune of $4,000 in buying power. A put in Micron is $900 in buying power.
Sure. Yes.
So I like to have many different positions because you never. And I get trading the ETFs, but most ETFs are pretty high price now, and so then it forces you to define your risk. I prefer naked options always. The larger price on the ETFs to force you to define your risk for smaller accounts.
They do.
For smaller accounts.
I mean, Micron's not bad. It's not a bad. It's not a bad to jump in. I do like the buying power.
Hey, Jack, I'm with you.
And I like being in with Jack. We can do it. I don't care. Ship it.
So here would be my question. Do we want the 95 foot for $1.60?
Oh, I had the 100
Do we
foot
want
in
the
for
97.5 for $2?
I had the 200 in.
Or the 100?
The 100 queued up for $267.
Excellent. You see, the buying power didn't change. The buying power, 900 for the 95 or 950 for the 97 or 1,000 for the 100. I'd rather get 270 and use 1,000.
It's not bad. Now, I also want to say ETFs move. Individual products move as well. So there is event risk, and individual products can move. The ETF does have some type of little bit of protection.
She's loving the ETFs today.
No,
folks.
well,
loving them.
I have to give my pitch to IWM because I spent an hour on the phone call with about this yesterday.
Business Insider. So she loves the ETFs.
I do love the ETFs. So there is individual event risk in these, but I don't mind. I don't mind jumping in with Jack.
I like the buying power.
We missed the opportunity before.
So, and I'm just going to point this out. When we talk about apples to apples, $4,000 to make $450. Here's $1,000 to make $260.
Yeah.
So buying power for us, a smaller account, sometimes we are forced to go into individual products because we're getting a better buying power.
Because you're getting better buying power. Correct. I like it.
Okay, so I'm sending that. This is our account's turning into Put City USA.
That's what happens when vol goes up.
Vol goes up, market goes down, Put City USA.
Yep, because, and I love that TP said this, puts are neutral too.
I know.
Puts are neutral too.
Okay, looking at the hefty call skew in Mara.
Ooh, I haven't looked at Mara lately.
We will go to Mara. We will, but I do want to get to the what's your assumption. I want to get to earnings. Yesterday we had Tesla, Google. We have positions on Texas Instruments. There were lots of earnings yesterday. There are a lot today.
So Google, we have a position in, so we should probably go manage it.
Okay.
And that is wah-wah, but that's okay. It's not as bad as you think it's going to be.
It's not that. It's not terrible because So let me get back to a few of the what's your assumption. So here's a neutral trade, and I don't mind throwing in a neutral trade because we've been throwing in the last two trades were bullish. XOP neutral, September monthly. IVR crude oil related stocks is creeping up. Strangle or an iron condor in XOP. This is from Jack from Philly.
Okay.
XOP.
Let's take a look at XOP. XOP is the ETF, the oil and gas ETF.
What do you want to do?
It's not my assumption. It's not my assumption. If you're neutral in this and there won't be earnings in there, I would open up the September 20 with 58 days and you can sell. Now, granted, it's a $143 product.
So I was just looking for $1 and $1. You can get $1 on the 160 call and $1 on the 130 put for $2 credit.
How much buying power is that?
1,500.
That's not bad.
That's not bad. No, it's not bad.
It's not bad. Sure, you can ship that. And this is easy. This is an ETF. You want to be neutral. You're just going. It's a 14 delta. I want to see if there's a skew. They're both 14 deltas.
Yeah, that's what and I just went to looking for $1 and looking for $1. So we're $14 down with that 130 put. And the 160 call is $15. $16 up.
Yeah.
So it's pretty it's very neutral.
And that's what they were looking for. Let's ship this.
Okay. Ship it. We're going to be out of buying power by the end of the day.
I know. Especially when we get to the earnings trades today. I was surprised you went to what's your assumption.
Well, I get the neutral trade in XOP.
I have no problem.
If you look at oil, so look at this fall it's had. It's kind of in the middle of this longer term range.
Yes.
Neutral strangle makes sense to me, unless we want to go to micro crude and check the buying power in micro crude.
But I don't think they have options in micro crude, do they?
Yeah, they do.
In MCL, let's take a look.
They do. Let's look at that. Because we might get more bang for our buck in MCL.
Well, you'll get a better. That is span margining.
So here's micro crude. Looks similar to the XOP. They do have options. If I go
to the expected move, don't get $1 and $1.
Are you in the 55 day?
55 day, because you want to go with the regular standard. 22 days is too short, and 55. There's nothing in between the 22 and 55.
So if I get $1 on the put and $1 on the call, kind of comparing apples to apples, we're using $700 instead of $1,400.
Yeah, you're inside the expected move for the cycle, and you're at about 20 delta.
Right.
Yeah,
And
I
the other
like
one was
XOP better.
You like XOP better?
I do. I like XOP better because this is giving you span margining, which means it can grow teeth if it gets closer.
We've been in microcrude before, where our short gets tested. It gains. Liz said it could grow teeth, meaning buying power can increase. The $739 buying power can change.
Yes.
If our out of the money becomes an at the money, then the buying power there goes from $700 to $900.
Yeah.
At the money. That's not bad at all.
No, it's not that bad. Plus the loss on top of it.
If it goes
Yes.
in the money. If it goes in the money. But it's not bad. It's not bad, but we have seen microcrude.
I don't mind. I think microcrude is a good example for XOP, but they're very similar right now.
Sure.
I'm good with either. I'm good with either microcrude or XOP, but considering it's what's your assumption and they wanted XOP, let's go to XOP.
All right. I'm getting 202 on a strangle and XOP using almost $1,500. I will say, Liz, if we're a little concerned about buying power, if I made this spread $10 wide, 160, 170, 130, 120, I'm getting $1.35 and using $800.
It's not bad. Forever give me there's a gotcha. You're buying something, you're defining your risk. Sure, ship it.
I mean, I don't know. I kind of prefer the $2 on the strangle.
I do. I 100% prefer the $2 on the strangle, but sometimes buying power gets in the way. Sometimes that little thing called capital gets in the way.
All right, that sense.
Okay.
$2 on an XOP strangle. Back to what's your assumption?
Talk to me about where you're going.
XBI neutral, Aaron from Waukesha, North Carolina.
All right, let's do it.
Or I know we have a lot going on. We have a lot to do. We can pass.
Well, I think that what's your assumptions are great. I want to make sure we manage our earnings trade from yesterday.
Okay.
And look at there's a huge thing on deck today.
I will make sure we get to those. I'll read the one other one, and we can decide when we're back in the platform what we want to look at.
Okay.
Bullish, Nike, bullish, Starbucks. These two.
They tried to sneak that in. You get one. What's your assumption?
You get one. Pick one, Cameron. Cameron's from Australia. I don't even know what time it is in Australia right now.
Oh, I have no idea. What do we filled on?
I'm guessing XOP strangle.
Nice. Okay.
Okay, so Starbucks has really gotten beaten down. I was talking to Steve. His daughter works at Starbucks. I don't mind trading it. I'm in it.
Starbucks has been totally beaten down. It's trading $74.55. That's fallen from grace from 150 down.
I know. So I don't mind selling puts in Starbucks. 85 rank earnings are coming. So that's the one hesitation. Earnings are coming July 30th. Do we wait till earnings to get into Starbucks?
That's what I would do.
Just get in on earnings.
Yes.
You sell some puts on earnings. If we get in, we get in.
Yeah. And then Nike, I think, has earnings coming up as well. And you want Starbucks and Nike. What do the two have to do with each other?
We don't mind selling puts going through earnings. They're directional. We don't mind putting on a directional trade. If earnings aren't on deck, we'll put that in. But we can trade Nike. We can trade Starbucks next week.
So Nike and Starbucks have the same price.
And the charts are neither of them look good.
Neither of them look good.
Yeah. So Nike $71. I think they already had earnings because the rank's only 26. It had a big fall. They probably had earnings when there was this big fall. That would be end of June.
That tracks. And it's kind of stayed within that range. So you can see it had the big fall and then it kind of stayed within that range.
Yeah. Okay. So you wanted to look at earnings. Let's look at our earnings trades from yesterday.
Well, we have to. We have to manage Google. Google's down. Tesla's down. Texas Instruments was up. We did not get filled in Texas Instruments. We did have a bullish crab trade in Google. It's not a full loss. It's about a 50% loss right now.
So we bought in August. It was at the money. Google's down $8.50. After the close yesterday, it was up.
Yeah.
Google was up. Texas Instruments was up.
But that's why when you look at these, I mean, I'll open them and then I glance because it could be a tale of two cities the next morning when you open it up.
Now, this the ratio spread in this week's is worth nothing. Our long calls were 224. A diagonal is almost like a zebra, where if we could manage it, if we wanted to sell out that long call, reestablish the diagonal, we could, or we could just leave it.
Well, that's kind of that's my management. That's my go-to management when I put a crab trade in. If it goes down, then I kind of put a bullish trade in that's defined risk. But that being said, because you have 224 that could decay, and you could sell that out, sell it again, and buy something in September.
So that's what I'm going to look at. If I sell this, so if I sell that 180.
Okay.
And then to Liz's point,
you can't do it twice.
Right. So maybe I do the 180. I could even. I'll take a look. I don't know if I'm going to put it in just for pricing.
Yeah, please.
If I sell that twice, and then buy the September 175 once, we would be putting another 250 into the trade, but we'd have, and our diagonal would be 175, 180. That's not good.
It's not good, but it's a way to maintain it so you've got the bullish position going. Because the decay in there, the other way that I think about managing a crab, Jenny, and I don't think this is going to work out for us, is selling a call that's nearer term to calendarize it, to take an additional premium. Then you're not letting that extrinsic value just decay.
Or the alternative is just leaving it, because when we put it on, we said, okay, if it goes down, we have 24 days.
Sure.
And anything could happen in 24 days. And Google didn't fall that much. So we could just leave it and assess it later. It was a defined risk trade when we put it on. We said this is our risk in the trade. If Google pops up, great, it'll come back. If it does, do we want to put more money into it?
I mean, I don't know that I want that to decay. But yeah, I say we leave it. Maybe leave it a week. Give it a couple days.
Give it a couple days and see
if things turn around.
Because it was up after the close yesterday.
Yeah, they had good numbers.
I thought it was going to be a good trade.
And then Tesla's down about 10%. If you take a look at that, that one took a huge dive yesterday. We did not put anything in Tesla. We attempted to put something in Texas Instruments, but that we didn't get filled.
So Tesla took a big hit. I don't know that I'm dying to get into Tesla though. I think I said this yesterday.
I thought you were going to put in the 217 calendar.
Oh, it's trading around 217, and I will do that for you.
They only have $5 white stripes. Okay, womp.
And Texas Instruments, we had a viewer, what is it, TXN?
TXN.
We had a viewer yesterday looking at an iron condor. It's only up 72 cents. It would have been perfect.
That would have been perfect.
So
that would have been perfect.
That would have been perfect.
Okay, so those are the three that were yesterday. Today, I believe, and we'll get to the what's your assumptions, but if you take a look at the earnings trades from Bob.
So today,
we have positions in quite a few of these.
Okay.
Yeah.
CMG, Chipotle, Ford, now IBM, Las Vegas Sands, Newmont Mining, Whirlpool.
American Airlines. We have positions in American Airlines. We have positions in LVS, don't we?
I know we have positions in Ford, and there's Honeywell, Raytheon. We talked about Raytheon yesterday as a defense stock.
Yep.
Southwest Airlines. There are a lot of earnings today.
And we have existing positions in things that have earnings. That's the reason that I wanted to kind of focus on this a little bit. I know we have Ford. I know we have LVS. I know we have Love, and I know we have American Airlines.
Yeah.
So
all right, let's take a look.
Let's take a look. We got what I want to do is assess whether we want to stay in that position or not when you're going through earnings.
Okay.
So let's start with Ford. Did you want to put anything in Chipotle Mexican Grill?
No.
Okay, just checking. Okay, because this is their first earnings after split.
Here's the good news about Ford.
Okay.
The good news about Ford, if you go to our Ford position, we had a long position in Ford. We made money on it. We said, let's take this off, take some risk off the table. We put in a very baby $1 wide debit spread. We paid 40 or 50 cents for it, and we really cut our earnings risk down. We really cut our risk down a lot in Ford and took some of our profits off the table. So I'm happy we did that. We have two choices here.
It's still worth a lot.
Well, because earnings are coming.
Yeah.
Because earnings are coming. We could use that 40 cents, that 14 strike, sell it out and move it down to a lower strike call to not just have that 40 cents extrinsic value evaporate.
Yeah, let's take the 14 to the 13.
Take the 14 to the 13.
And keep our position baby small, but we're adding a little bit extra risk, but we're not using that extrinsic value. We're just washing extrinsic value.
Okay, so I'll pay 57-cent debit. We've got a bullish position on through earnings in Ford. Now, GM didn't do well on earnings. Ford took a little bit of a hit after GM earnings. I don't know how Ford will be.
Jenny wants to get a Ford Bronco. We're getting long Ford.
My kids. I was gonna get one for my kids, but I'm trading in the Subaru
for a Ford Bronco. Love it.
I told you our Ford is expanding. They can't keep up with the amount. There are Ford Broncos everywhere.
There are? No. They're hard to get.
No, but on the streets.
Yes,
they're everywhere. They're everywhere.
Yes.
So let's keep our bullish trade going in Ford.
Yes, I'm happy with that. Okay.
I'm moving that. I'm moving the call. All I'm doing is moving the call down, selling out that 40 cents in extrinsic value in the 14, moving it to the 13 that only has about 17 cents. Do you want me to leave that 15 short 15 on?
Sure.
Okay. 13, 15. Yeah, if it goes to 15, great.
Yeah, that's great.
Excellent.
And we've made a little bit more money in there. Now, the other thing that we have an earnings trade in already, and I think we put this in saying this was our earnings trade, is American Airlines.
AAL, we have short puts. Short the 11 puts, they're in the money. I don't know that there's much we can do.
I think that we created a synthetic covered call because it was something that happened.
Yes.
This is our earnings trade. Are we comfortable? When I have an existing position on, I like to leave it and then see, like, we're looking at this, assess if we want to have that on through earnings. I don't mind having this.
We have short puts in the American Airlines. I know I have short puts in American Airlines. I'm going to guess that you have short puts in American Airlines.
Good guess. You know what we don't have in here, though, Jenny? We don't have LVS or LUV.
Okay.
I was shocked by that.
So, LUV, Southwest Airlines. Southwest Airlines, it's
110
interesting.
rank. They took the fence off.
110 rank. It's not at its lowest lows, right? I don't know what to think about Southwest. You know, you and I used to almost only fly Southwest.
Now I don't get on there at all.
Now we barely do.
Yeah, and we've already got our, so I kind of look at the airlines as a basket, right? So we've got a bullish position in American Airlines. We don't need to double up.
Right.
So
and if I did anything in Southwest, it would probably be a strangle. It wouldn't just be a short put. I would probably do a strangle or a Jade Lizard.
For sure. And
sell both sides.
So there's not a lot of premium. In the 2-day, there's not a lot of premium for a Jade Lizard. If you open it up, it's a $27 product. Now, granted, 110 rank with 113% implied volatility, but there's still not a ton of premium. It would almost have to be a big lizard.
When you open this up and you look, 60 cents on the at the money put, or 65 cents on the just out of the money call, when I see that, if I want to make a directional trade in Southwest, I'm buying it. I'm buying it. 110 rank, the reason it's there is because they have to put premium into these options, and so that's what's boosting this up to 110 rank. But I don't think there's enough premium there to make it worth selling.
I don't either, and we've already got our bullish AAL trade.
Yeah.
That's what I'm saying. We'll do an after earnings trade for here because there's not enough premium. Want to take a look at LVS?
Sure.
So that is Las Vegas Sands, which we don't have anything in.
We don't have anything in, and that chart looks ugly.
Oh, yes, it does, Jenny Andrews. That does look ugly. And it's a $40 product, right?
$40 product, 87 rank. Let's see if there's any premium here. 228 expected move. Sure. I think we can do. Do you just want? We can just get about $50 on that 38.5 put.
What do you think?
Or is
Because this saved us. So the earnings moves have been a little bit outside the expected move. We had UPS that was outside. We had, what else was crazy outside? GE that was outside its move. One up, one down. We don't know which direction they're going to go. You know what saved us in the one? Is the baby Jade Lizard.
That's what. I pulled it up. Selling, we're filled in XOP strangle. So I don't know what we were filled in before. So selling that 38 put and the 42.5 for 50 cents.
I like it.
But do we want to take risk for 50 cents on earnings?
How much capital are you putting in?
No. You know what I'm going to do? This is going to be the cheapest trade you'll ever see.
You're doing a calendar.
I'm going to do the 40.5 calendar for 23 cents. If it doesn't move, great. And I'm going to do 2 of them.
So here's and I don't want to drill too much in this because we're almost running out of time. If you're doing 2 of them, would you ever think about just buying one that's farther out in time instead of?
Oh, instead of doing 2.
Instead of doing 2.
Sure.
It's just a food for thought question.
Sure. Yeah. We can do that. We're just saying LVS isn't gonna move that much. It's a cheap earnings trade. I'll go the 23-day. It's not the same strikes.
Oh, I get it. Then you have to stick with
you know what? I'm just gonna watch it. We're gonna put in one calendar just for fun, 24 cents.
I love it.
We'll see what happens with that tomorrow. I want to take a look at Bob's list again.
Do we have IBM?
We have an IBM calendar. We're set for IBM. We need it down tomorrow.
We have the 170 line. IBM is trading 183. It's not that crazy.
No, it's coming. It's like moving its way down towards our
strike.
strike.
Yeah, it is not that crazy.
It's moving its way down.
Okay.
Okay, Raytheon. Yesterday, someone was looking for stocks that might go up if Trump won. I mentioned defense. Raytheon. What were the other ones? Lockheed Martin.
You said Boeing,
Raytheon.
which I thought was.
But I know. But if you want just defense, you're right. There's
a lot of other baskets in it. That's why it's
to
down so much when all the defense stocks are up.
Okay. And they have earnings, so not a bad time to get in when they have earnings and vols inflated. Raytheon, $104.
Okay.
You can $4 expected move in the 2-day. If you go out to September, you're only getting a $5.50 expected move. So I would stick with the 2-day.
Oh my goodness, look at how liquid this is. What is its stars? Hold on.
Raytheon, 3 stars.
It's 3 stars. So you got 2.11 thousand shares have traded, and there's no weeklies.
What are you looking at? RT, you're looking at Restoration Hardware.
Thank you.
RTX.
Thank the Lord. I was like, you are not placing a trade in that.
Okay.
Okay. We got now there's 1 million, correct, and there are weeklies. Good job, Jenny.
Okay, we have, it's not terrible. You can do a Jade Lizard in Raytheon.
What is the capital for selling that at 101? You're putting up how much?
The buying power's high. The buying power's high.
Everybody wants in.
Everyone wants in. They've jacked up the buying power.
I'm just kidding. That has nothing to do with buying power.
We're running out of time. Is there any last minute?
Well, I would like to jump back
items?
into tweet. So we've hit everything that we have a position in that has earnings we've addressed, which is good. Then we have kind of gone into. I want to go to
Punish Pixels.
Where are you? Sure, Punish Pixels.
All right. What is the best way to get rid of a futures position that you got assigned, other than just closing it? If you were assigned and you can aggressively sell calls against it until it's through your calls.
That is what I will typically do, or just close it.
If you were assigned by selling a put, sure, you can close it.
Yeah. So to Jenny's point, if I get put a stock, like I'm just using stocks, you can say futures options as long as there's options on it. So that's the other thing too. If there's futures options on it, just keep selling aggressive until it gets taken away.
Yeah.
Yeah.
Right. When I want to get rid of something, that's what I'll do. If I'm long the stock, sell aggressive calls right at the money, and every week or every month until it gets called away from me.
Until it gets called away. And then Liz and Jenny Forever says, "Good morning, ladies. Is it true open interest on options are support or resistance points?" It's underneath the.
Oh, okay.
So there we go. So everybody can see it. I just want to make sure we got to it because we've been kind of skirting around this. Is it true that the high open interest on positions are support or resistance points because the market makers project their books at these prices? P.S. How did your 0 DTE on Monday go?
It was in the middle of. It was in the middle of the spread.
It was in the middle.
It ended up in the middle of the spread,
which is fine because it's all cash settled.
And right, but it ended in the middle of it.
It didn't go according to plan,
No.
but it wasn't as bad as we thought it was.
Yeah, it wasn't a full loss, but it was a loser.
And so then, So I thought this was a good point. Can you go back into the platform and just go to SPX, because here's where we are.
Okay, I'm going to go to open interest, but what cycle? That's the monthly?
Yeah, just go to the monthly, because those are going to be the most actively traded. We're just going to show where the open interest is. I don't necessarily know that those are support or resistance points. I think some people might say that, but I don't necessarily know that people believe that those are going to be support or resistance points.
So here's the August expiration.
SPX, okay.
And open interest. Where do we see big open interest?
So you're going to kind of take a look. You can scroll down. You can see at the 5,400 level. 5,400 level, there's 34,000 contracts. That's big for SPX, though, because it's a huge product.
5,400 level. What cycle are you in?
The August 22.
Oh, you're in the AM. So I was in the I was at the end of the day. You're in the AM. So, and again, there's so many. Now, I think it's tricky. There are so many cycles right now. You've got the 0 DTE. So there's so many cycles. You would have to go through.
Well, go to the end of the month. Go to the one that I was in. It's got a lot more open interest.
The
a lot
AM.
more, like a lot more in the AM.
Yeah, you've got 24,000 at 5,450.
Yeah, 34,000 at the 5,400 level. That's a lot of open interest.
And if you go to the round numbers, 36,000 at 5,300.
Yeah, so I don't know that they're price points. It's good to know. I think knowledge is power. It's kind of like that commercial from when we were kids, the more you know. It's good to know where they are, but I don't know that they're actually resistance points. I like big round numbers, so that's where I look at.
You are never going to believe this. Our SPX broken butterfly on both sides. Now it's through the puts.
I know.
It's through the puts, which we put this bullish trade on here a couple weeks ago. It had blown through the calls in a week. Now it's through the puts.
Yep.
This market is moving like crazy.
It's moving. It's bonkers. All right, Jenny, we are actually out of time for today. We hit all the earnings trades, which was good.
All right. We're done. Yeah.
We're hoping for a pop now in SPX so we can get it up instead of down to go in the middle of our downside broken wing butterfly.
All right, everybody. Thank you for tuning in and for watching the show today. Everybody have a wonderful day. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
5460.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock, Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
If you missed the live show, here's our cherry on top weekly recap.
I made smash burgers, and well, I can tell you what I do. That's a game changer. I took it from TikTok. You freeze a stick of butter, and then you put it through a scraper. You know, one of those things, a grater.
A grater, cheese grater.
Yeah, cheese grater. And then you put a little butter on the, mix it in with the, you know, when you smash them. It's great.
In with Tony. You mix it.
This is a second language. I mean, you take you freeze the butter. It's like all that, and you take the thing and you freeze the butter.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
We built the Tasty Trade app for today's traders. See it, tap it, trade it. Deposit and withdraw money right in the app. View company financials, forecasts, news, and more. Set custom alerts to stay up to date. See things bigger in landscape mode. Get the customizable trading experience you want. The tools, the data, the knowledge. See it, tap it, trade it. Join the club, genius. Tasty Trade.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batiste. I got my man Mikey Butler, and of course, Mr. Westwater for Westwater Wednesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like and subscribe to our videos because it helps us immensely. But more importantly, come chat with us live because we'll be strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I spend it with my buddies, Mike and Thomas. Thomas, how are you, sir?
I'm doing good. It's hump day. We're halfway through the week. Weather looks good for this weekend. Low 80s, sunny.
Yeah.
So looking forward to, kind of the back end of summer here. We have to make the most of it. It's good times.
What's the update on the farm life? Have the chickens started to...
Eggs are coming in.
Oh, they are?
Yeah, we got
They
the
were
eggs.
holding out for a little while.
Yeah, they were. So we got like 5-6 a day now. They're the pullet eggs, so they're smaller. So it's mostly all yolk in there. There's like just a little bit egg white. So really tasty.
Huh.
Mix it up. It's all just like golden. Looks like the scrambled eggs you get from McDonald's, but without the food dye.
Yeah.
So,
There you go.
Yeah.
Is that typical, or does it get like...
Yeah, they'll
like-
get bigger like over the next few weeks, and then just regular eggs. But the still tastier than your average grocery store eggs, I think. So.
And how about the corn?
Corn kind of got wrecked in the storm last week.
Oh,
We
yeah.
had like 88 mile per hour gust recorded by us, and some of them got blown over. So yeah, gonna see how
So
that
good.
recovers.
Love it. Farmer Tom.
Oh yeah,
I love it.
it's good times.
How are you, sir?
I'm doing great.
Doing okay?
I
Doing
got
okay?
a filling replaced this morning, so this whole side of my mouth is completely numb. I was actually hoping for a little micro lisp. Maybe there is. Maybe it'll come out during the show, but yeah, I can't feel half my face right now. It's like the song.
Yeah. Can't feel your face.
Exactly. And it's not from this market sell-off down 100 points. So Yeah.
As Mikey alluded to, E-minis down 97 here, 55.02. Wow, a number that I don't think we've said for quite some time. 5,500 basically on the dot was the low of the day, 5,550. So lots of 50s in there. NASDAQ down 581, almost 3% here. You got the Dow down 300 and the Russell holding strong, only down 6. The Russell has been significantly outperforming the NASDAQ here over the last week or two. Oil catching a little bit of a bid, /CL up 80 cents, 77.74. You got volatility futures 1640. They've spiked higher and continue to go higher as the E-minis tick below the 5,500 mark. Spooky. Bonds down 4 ticks. You got gold up $15, silver up 5 cents, Bitcoin giving it up a little bit from this morning's high, up 600 on the futures spot, basically unchanged. Thomas, what is this it? Is it over? Is it straight to zero?
I think Microsoft could kind of change it next week. That's like what, the third Mag 7 stock we get?
Yeah.
Google,
Microsoft is on the 30th. I think Meta is the 31st. Yes.
Yeah, Google is just didn't impress enough. So
I guess so.
Classic example of beat numbers, sold off.
Tesla was the other one. Tesla down 24 right now. It's actually bounced off the lows. It got as low as 214. It's a little bit of a reprieve there. But yeah, this doesn't seem good. Down 100 points. Very orderly. You've had a steady uptick in volatility.
Fixed at 17.
Yeah. We're back to average.
That's something.
So that's kind of scary when you say we're back to an average and the E-minis are down, almost 2%.
Mm-hmm. Classic.
Wow.
But yeah, I guess we'll see if the VIX pops up above 20. That might be the indication that bigger moves are here to stay in the E-minis at least.
Yeah. I'm excited to get the text from my sister who moved over. She moved over an IRA from like an old job that she had to Tasty. Mm-hmm. And yesterday, she texted me to do something with it. And I after managing hers for a little bit, then the ups and downs that we experienced together of, her couple $100, I decided that I will no longer manage money for friends or family.
Smart.
Yeah, I have learned my lesson.
It's just so much stress for zero reward, actually.
Zero reward. Yeah. And the option part of it, it just does not... there's no positive to it. So I learned my lesson there. So I told my sister, I'm like, I'm going to put you just into S&P and NASDAQ and where I am not doing any trading. I'm going to do this once. That's it. And you'll have it, in 30 years from now. So I'm excited for her to open up her platform today and see that it's now down 2 or 3%. And I'm excited to get those texts saying, what the hell did you do? What'd you put me in? Mm-hmm. What's wrong? Like all that stuff, and have to explain that. So that will be pretty funny.
It's going to be great.
Yeah.
Yeah, money and family, it's good to keep it separate.
Yes, I learned that lesson. Yeah. Learned that lesson significantly. The bad part about it was that I made her a significant amount of money, and then we lost some of that.
And you got the text about losing some of that.
Yeah, and the question was, why'd you lose 500? Not why'd you make me 2,000, and then you lost like a couple dollars. So
that's how the cookie crumbles.
So,
No win.
Again, no win scenario.
Yeah, it's a zero win scenario. Yeah. If you make that money, it's expected. If you ever have a losing day, that is your fault, and you are the worst thing ever. So for anybody listening, if you're considering managing money for friends or family, just keep that in mind. That's my quick PSA.
Love it. It is Westwater Wednesday. I haven't done anything in this portfolio.
Oh, I was going to say, because I've done a couple things. I'll go through those quick because it is Johnny Trades Day, so I did some of those trades. Mikey said he didn't do anything. So I did make some trades today. So I bought in the risk on an end phase crab trade type position. So I closed out of the puts. I just have a long put at the 100 strike in September. I did the same thing in my Google call diagonal spread. I also had a Google strangle that I took off that was in the August expiration. Volatility and premium came in significantly there. This is a trade that I've been in for like 3 or 4 months that I finally scratched out of into what has been a wild ride, and Google will be showing that one and doing an anatomy on Friday. I closed out of a SPY iron condor that I had in the August expiration, one that was tested on the upside. I mean, I was at the 570 or the 560, 570 call spread, which, when we got up to 5,700, it was $10, $15 in the money. It's now out of the money, so I took the money and ran like a thief in the night there. CrowdStrike, I sold the put spread in the Johnny Trader account. I bought the dip in Google, and I did an iron condor in September in SPY. In Tesla, I had a broken wing butterfly in this account that I closed out of, took a couple bucks out of that. It was on the upside. Stock obviously moved lower, so that was good for my position. And then my Tesla position, my Johnny Trader account, I had a broken wing butterfly as well that I bought in the risk and gave myself a little shot to the upside. So we'll see if we get a little bounce there.
Love it. I actually did just place a trade. I have my wheat short put spread with 2 days to go. We got a little bounce in wheat today up to 550.
Nice.
Right where my short strike is. So I just rolled the 550, 540 put spread with 2 days to go out to the August cycle. And I did that for like 80 cents.
Cool.
So I now have moved that short put spread out. And then I still have the 620 calendar at the long option in the 30-day. The short option is worthless in the 2-day. I'm going to see if I can just hold on to that. There's really not much I can do other than like turn it into a vertical spread, which I don't necessarily want to do. So I'm just going to hold on to that, see if we get a pop.
We need a day or two more of this move in our corn position.
Mm-hmm.
Because I think you have the same one, right? 520, 505?
I don't actually.
Oh, you don't?
I have the gold butterfly, micro crude long contract, and the wheat position.
Oh, okay. Well, need a little bit of a continued balance in the X.
There you go.
Yeah, the Trump trade or whatever it's called, it's kind of interesting for soybeans and everything because the day after the market opened or after the assassination attempt, soybeans dropped a lot. Traders were expecting, Trump's odds increased, so expecting the trade war to come back. China targets soybeans a lot. Tariffs are still at 25%, but market says, what if they raise it even more? So soybeans dropped on that, but then traders said, wait a minute, China could stockpile before Trump gets in to try to, front load all those purchases. So that's good for soybeans. Then we started rising there.
I like that thinking. Wait.
Yeah.
Wait.
Yeah.
Do we have this completely opposite?
Yeah. Okay.
So you're saying maybe there's a play to the upside.
There could be a play on the Trump trade. China doesn't buy a lot of U.S. soybeans anymore, or at least they haven't this year. They've made one purchase. They're getting most of them from Brazil now since 2018. That trade war kind of took the market off for U.S. soybeans to China, so that hit us there. But we've recovered up until this year, and they haven't been making purchases. Brazil's had a really good crop, so they're getting all their supply from there.
Do you think the Trump trade of, obviously having more, drilling more oil, doing everything more oil, is that what has kind of led to some of the sell-off in crude? Or is there other stuff there?
Yeah, it's possible. I think it's more speculators kind of getting out of their long positions after the the good
higher.
bounce there. So I think that's probably flushed out. I think on overtime yesterday we talked about getting long crude oil. So I don't really expect it to go much under 76.5, kind of where we bottomed out yesterday. That coincided with like a support level from a range we carved out in May, and then resistance from a range from back in February to March. So some confliction there in the price. So good time to, take profits if you're short.
Yeah.
And then all the longs reestablishing right now. So maybe some range trading for a while before we move higher.
I support that because I've got a short put spread at 76, 75. So I'm ready for range bound / higher. That's a position for that. So
The big thing is China right now with crude oil. So all the teapot refiners, which are the smaller ones, that they don't necessarily have the state mandated. So China, for its large refineries, they're kind of state owned or state directed at least, where China says you have to put a certain amount of crude to refine these products each month. And no matter if demand is super low, prices are super low, the refiners still have to do that because China sees oil, things like agriculture, as more strategic versus just commerce and economic versus, a more open market like us. So they do that for that purpose. But the teapot refiners, which just means smaller refiners, they don't have that government mandate. So they're more sensitive to crack spreads over there, things like that. So the refiners pulling back in China, that's a bad sign. It's showing you that demand for oil is weak domestically in China. So yeah, that's kind of the bearish side for crude oil. The bullish side is, Russia's exports look like they're falling. There's some seasonality to that. They usually fall around this time of year.
At the end of summer kind of thing.
Fuel prices going into the winter, things like that. Russia has very harsh winters. So seasonally, yeah, that happens, but it's kind of deeper than what we've seen. So we can kind of think OPEC compliance, things like that. Most of the refineries that were hit with Ukrainian drones or whatever, they flew remote-controlled Cessnas and things like that, they're all back online. So that's showing that it's not coming from things like outages or maintenance, et cetera. So some interesting stuff in the crude market. I think the long trade or a neutral trade is probably the best idea right now.
A wealth of information that young man is over there.
Always.
Good.
Yeah, let's pop over the slides and we'll talk a little crude. We'll talk a little natural gas. These are both things that we are very interested in hearing about because we need some trades and we need some non-tech trades.
I thought you went,
most importantly.
You got long natty gas, didn't you?
No, I got long crude. I did get long natty gas, closed it though.
Oh, you did?
Got the bounce, closed it.
Did you close it like 2 days ago on that move?
Yeah.
Yeah, Monday's move was really nice.
Awesome.
Yeah.
Look at you.
Look at that. Finally, crude oil not destroying me. I actually did the micro crude.
Yeah, the Q, what is it?
The
QG?
micro NG.
Oh, MNG. Yes,
MNG, yeah.
This is a relatively new one, I think, right?
Yeah, I think we got it just about a year ago.
Yeah.
We used to trade, we have traded QG, but MNG is a little smaller.
Yeah, the MNG is a micro, so it's 1/10 the size. The QG, I think, was 1/5 the size.
Yeah.
It moved $25 a tick, I believe so. So
either way,
much smaller, which is great.
Yeah. Either way, let's go through the content. If you want to join us on the YouTube channel, we're streaming live on the Tasty Live channel. You can see us. Just go to Tasty Live. This video is front and center. You can pop in your trade ideas, questions along the right-hand side. But yeah, what's going on in these the natty gas crude oil space? Thomas?
Yeah, so some interesting stuff going on. I'll walk us through my thoughts on why we should sell the rips.
Ooh.
And I was hoping crude wasn't down today so we could kind of capture some upside and sell it. But yeah, anyway, so this is the contango, the futures curve. And, on the platform, you can see this just by looking at the price of the contracts in the trade tab going down the expirations.
Yep.
But yeah, this is just those prices plotted out along the curve. So, we see this really steep curve going into the winter, and this isn't abnormal necessarily. Winter prices are usually priced higher because, of course, demand increases in the winter. But this contango has been increasing from where it's been over the past month, 2 months, and it's pretty steep right now. So there's a few factors to consider when you look at this chart. Number one, producers have been pulling back slightly over the past month, the low prices, but we're still up. Lower 48 production in billion cubic feet per day is around 101.3 BCF. That's up all the way from around 98 in May. So producers have started producing, and that's also normal as we go into the winter. But the long trade right now, what I'm seeing some people on Twitter and elsewhere think is these low prices are going to get producers to cut. So production cuts, prices go up. So I think that's kind of a narrative that doesn't take into consideration kind of this contango curve. Because if you're a producer, you're only a few months away from the winter. Do you want to shut in production, or can you sell those futures contracts at a higher price, hedge your production, not cut it, continue to move product? And you're disincentivized to cut production when there's a steep contango like this. So what I would expect to see is this contango now start to contract as we move towards winter. These winter months coming down, but the spot prices and the near-term futures prices going up to meet that convergence, whatever you want to call it. I just think that is going to kind of put the production cut story kind of on its head. And if we go to, I think it is let's go to chart number 3 really quick, that third chart in there. So this is the commercial short position in the purple line. And this is also the storage spread between the October and the January contract. October, January, you can do like November, January, November, February. But what it is it's a storage spread going into the winter. It's kind of indicating how tight the market or the predicted physical market is going to be, a few months out. So that, the January contract being priced much higher than the October contract, we're at the lowest pretty much now since, going back at least since the beginning of 2023. So when producers aren't speculators. They're going to be more interested in hedging and things like that. And that's what the purple line is showing us. As the price goes down here over the past, or the storage spread goes down over the past month or so, producers are now getting more short. So what's that telling me? That they're doing exactly what we just talked about in the curve, that contango, they're selling those contracts, which adds volume to the shorts and the COT positioning. So that's kind of confirmation that producers are selling those contracts. That could be, doesn't tell us necessarily that they're not cutting production, but it tells us a pretty good indicator that they're selling these futures contracts instead of cutting their production.
Yeah, to lock in that higher price than right now.
And now we're almost in August, so we're coming up to the tail end of the summer. So you're even less, incentivized to cut production on that. But let's go to the second chart, talk about the other side of this, which is kind of the differences in regional pricing. There's 3 major benchmarks in the world for natural gas and LNG. There's the U.S. prices, Henry Hub. There's the European prices, the Dutch TTF futures. And there's the JKM futures, the Japan, Korea, Platts pricing for LNG. So I've normalized, usually you can't directly compare these products because they're priced different. Number one, Dutch prices are in megawatt per hours, which equals like 3.4 British thermal units, million metric British thermal units. And the JKM prices are priced differently as well. It's an LNG pricing more.
Okay.
But you can compare them if you normalize, and that's what I've done in the chart here. So we could look at how these spreads are moving. So if we look at
incredible. I mean, I got these.
I'm just listening, ready to smash any
I'm
button.
like, it's incredible. I mean, I just how you put this together is incredible. Go on. I'm sorry to interrupt you.
Yeah, but if anyone wants those calculations and stuff, I can send them to you, and they're pretty easy to put into charts and things like that. So, for instance, if you want to normalize the Dutch prices to the U.S. prices, you would just times the Dutch price by the Euro USD rate, and then you would divide by 3.412, which is that megawatts per hour to MMBTU conversion. Anyways, if we look at the dark blue line, the Asia premium, this is the JKM premium versus the U.S. natural gas. So JKM, that's the left axis, we're all the way up to $10 of premium for Asia over U.S., and that's been rising, as you can see. The light blue line is the JKM premium over the Dutch prices. So, negative would mean that JKM is more expensive than Europe, and that's also been increasing or decreasing on the chart. So what's that do to the market, especially for U.S. cargoes, Atlantic Basin cargoes, they call it? That's going to suck product from the west to the east. So from the U.S., from the Atlantic Basin, from Europe, all the way into the east to Japan, Korea, China, all of those Asian countries that this JKM pricing is based off of. So that opens arbitrage. Arbitragers, they want to take one product and sell it in another market if it's a higher price, and it covers those storage costs. So things like insurance, freight rate, just any transportation cost. You got to consider that. So that's called your basis, the futures price minus the spot price. If the spot price is higher than the futures, you have a positive basis. But you got to factor in that
the cost,
storage or carrying cost, whatever you want to call it, is higher than that basis. You don't arbitrage.
Yes.
If it's less than, you do. So right now, these, the market's telling us that this arbitrage is going to open up. That puts more demand on U.S. product. And after Hurricane Beryl, whatever they called it, now that we have Freeport back on capacity, I don't think they're 100% yet, but they opened one train. They have 2 more trains at the facility. And then, it's just the U.S. ports and the Gulf Coast are opening. So this product is going to start flowing to Asia. All these traders going to compete over U.S. cargoes, going to compete over European cargoes. That's bullish. And that's, kind of the counter narrative to the hedging and production. But in any case, storage stocks are well above their 5-year average. So I don't think that that's going to really feed bulls too much on that side right there. So my view, what I wanted to do, I was going to do it yesterday. I was kind of waiting, see if a one-day move. I don't usually like shorting just the first one-day down move because you usually have retracements, things like that. But we are down again. So I think you can still take a stab short here. I would have liked to do it, more around 2.3.
Yeah, Monday.
Kind of
we were up
where
there.
we were Monday. I think that was a really good place to short. But anyways, I think this narrative kind of holds for at least the next few weeks, maybe the next couple months, especially going into winter. I don't see it really changing too much there.
I love that.
So
now when we're looking through this, when we see a big move to the upside, we can play on that over the next couple months. Shorter term, even using the micro contract.
Yeah.
I think we'll definitely be able to do that.
Yeah, we got some decent premium in the NG contract.
It's certainly tradable. It's just that we have sworn it off. It's a little bit of a big product. It moves a lot. It's kind of one that's.
I was long, for an entire year and just taking pain, and then right when I exited the position, it rallied 50%.
Yeah.
There you go.
So yeah.
Yeah, natural gas has been kind of a beast over the past few years since the whole Ukraine-Russia war invasion, whatever they call it.
Yeah, you can on the platform you can pull up a longer term chart. If you put the dollar sign with the natty gas futures, it gives you a continuous contract. So, just like when we were looking at the curve, they each trade on a different, there's different contracts. So to string them all together, you use that dollar sign in the platform. You can see, we've been at the lows basically for, the last year and a half-ish. So.
And I mean, there's also, I don't think we've talked about the leveraged ETFs for natural gas before. There's BOIL, BOIL, that has pretty good volume in it. There's also cold, KOLD, that's kind of the opposite, the short leveraged. I believe it's a 2-time leveraged product, so if you really want, some exposure.
Cold.
You can go to those. Yeah.
Not heat.
Yeah.
Cold.
It's good. That's good. Very
clever.
funny.
I love it.
They sat around a table and, came up with those names at some point.
Yeah.
They're like, this is great.
Yeah, this will be something we'll add.
People will love this.
We'll add to our watch list moving forward.
But yeah, anyways, one thing to consider with a really steep contango too when you're trading is rolling positions kind of makes it a little more expensive if you're doing that.
Yeah, because if you're short, or if you're long really into this contango, you have to sell out of a cheaper one, buy a more expensive contract. So it's there's a cost there to keep rolling these forward if you do want to be long.
Exactly. Yeah. Yeah. I have a weather map too on slide 4.
We got to get the weather map.
Yeah. So this is actually kind of bullish, but this could set up our opportunity to kind of sell.
Okay.
We're seeing the East Coast. The Upper East Coast is really where a lot of demand is concentrated. New York, Boston, Washington, kind of being spared from that crazy heat right now. Florida, the Southeast, kind of Texas, California, that's looking hotter than average for the next 15 days. So yeah, I'm not sure exactly how prices will react. Usually when that whole East Coast is blanketed in really hot weather, that's when you really see a nice weather-based rally.
Why would it rally on hotter weather?
More people churning on their air conditioners. So you got energy demand. So hotter weather in the summer is good for demand, and then colder weather in the winter is good for demand because people are using the furnaces, which directly uses natural gas, and that's what really that's why stockpiles withdraw in the winter. Everyone's heating their homes. Heating is all usually mostly natural gas. A lot of homes in the East Coast, especially up in New York, are heated with natural gas tanks. People, if you ever gone through upstate New York or Maine, you'll see people's houses, they have those big tanks next to them. They're either using propane or natural gas to get those. And heating oil is also what they call it. And rates, Christopher Vecchio, his house, heating oil, he said, his last fill up compared to this fill up the year before, he said like tripled or something like that, if I remember correctly. So.
Wow.
Crazy.
Interesting stuff. Very good.
Love to see it.
We'll be looking to sell some
rips.
Sell some rips in natty gas.
Yeah, and cold has moved. I mean, from the high to the low.
It's
gone
2x.
It's gone from 35 to 75 at its peak. I think it's 2x. But options market doesn't look too great in there. But don't mind using that as like a short-term share trade, something like that.
Yes, it's 2x short.
Love it. Glorious. So we will look for some rips to sell in natty gas. I just closed my micro crude position for like $135 profit.
Oh, oil on the highs. 78-ish.
Yep. Put that on yesterday, actually. That's nice. Look at that.
That's all you could.
That's really that's all you can do.
And if we want to talk about the yen also, the yen strengthening, it's kind of good for demand in a way for Asia, and that's kind of maybe why we're seeing these Asia premiums also spike. Japan imports almost all of their energy, right? So the yen is always looked at as the currency to correlate with oil, natural gas, things like that. A stronger yen makes those imports cheaper for the country because their currency is rising. So if they have capacity to store natural gas when their currency is going higher,
they might do so.
They'll buy more unless they expect it to keep going up. So it's always good to keep your eye on the yen if you're trading energy.
Got a little weakness in the dollar, at least in the last couple weeks.
Love it. This is the biggest rally we've seen in the yen in quite some time.
Yeah,
it's a good one. It looks like the shorts are finally capitulating against the BOJ.
Maybe, I don't know. I feel like we've been thinking the last couple 1 day moves to the upside were like the bottom, and then the bottom falls out. So
don't fight the Fed. They said don't fight the BOJ. It looks like the BOJ may. I mean, a lot of shorts had to cover over the past couple weeks.
Yeah. Some big volume. Some big green bars to be paired with that as well. All right, great stuff. Thank you. Popping over to the YouTube chat now. we can kick it off with David. He's got a portfolio margin account. We're actually going to have Mr. Klink on next week, most likely. Probably on Tuesday.
Is he the mayor of Margin Island?
Yes.
Is it Margin Island? It's
Yeah.
Margin Island. Right?
Margin Island
Yeah,
is the intimate name.
Is the intimate name, and he is the mayor.
Yes.
Yes.
Correct. So we're going to likely have him on next week. We're going to break down portfolio margin, explain the process, explain what it is, explain some of the tools you can use on the Taste Trade platform to analyze risk and things like that. So definitely check that out if you're interested in portfolio margin. But looking to put a zebra on an XSP, 1/10 the size of SPX, as David has a bunch of SPX naked puts sold. One zebra only increases buying power by about $8,100 no matter the expiration.
If you're short puts, I think it would decrease.
Yeah.
It would.
I don't know if XSP is going to be paired with SPX.
Yeah, in a portfolio margin account, it's all
considered.
Yeah.
Either way, I'm looking at a zebra right now. I'm looking at $2,200.
Yeah.
For
I don't know if
wide zebra.
Are they doing a put zebra or a call zebra?
Looks like a put zebra. Yeah, if you can clarify a little bit, we can take a look at it. But
if not, call the trade desk and ask for Margin Island, and they will get you. They will tell you exactly what's going on.
There you go.
But yeah, if you're putting on a zebra in XSP, the delta should offset some of the risk that's in the puts on SPX. It's obviously going to be very small because XSP is much smaller than SPX. One zebra is only going to hedge 1/10 or so of each naked put. So it depends on what you're doing.
Is it time to buy an iron condor in silver? If by buy, you mean sell? Maybe. We don't buy iron condors because it's just one side's going to be a loser. You have to have the other side go completely in the money.
Yeah.
It has to be near expiration for it to be profitable. So we don't necessarily do that. But what are your thoughts on silver, Tom?
Silver, I'm not trading it. You got to consider the Trump trade there too. Tariffs are sometimes seen as inflationary. Inflation that can slow down the Fed's cutting or at least keep the rate higher than where it would have been, which is not good for silver being a non-interest bearing asset. So I don't know. I like gold more than I like silver right now, just because of geopolitical risk, political risk. China, again, with the trade war, they're already diversifying their reserves. So one way they've been doing that, at least for the first 5 months of this year, is buying gold, selling U.S. treasuries. You got to buy something else in your reserves. We could see that gold trade kind of pick up if they want to further, accelerate that reserve rebalancing away from U.S. assets.
Yeah, silver's tough because the IV is so low too.
Yeah, it's a low price.
Yeah. So we usually trade it directionally with zebras, but it's up to you. Copper lower? What are your thoughts on copper?
I mean, it's kind of China, right? The PBOC, they did a 7-day repo rate cut last week or 2 weeks ago, but it hasn't been enough for markets. Markets really want China to really step up stimulus, fiscal, monetary, all that good stuff. And they're not really doing that. They're taking a really moderate approach. They're trying to get away from the problems they did over the past decade, kind of overstimulating, and then they get into credit problems, things like that. So the copper trade's kind of falling apart. Druckenmiller had that big copper call a few months ago.
Long or short?
Long, yeah. He pretty much said the whole EV thing and data centers and all that stuff is going to increase demand. So I would say this was like a profit-taking pullback, but we're kind of beyond that now.
He was all in on IWM on the Russell. That was his newest big trade.
That worked.
Wrong on this one.
Yeah.
Yeah,
I hope.
Isn't that sad when you know like the components of the whole AI thing could be like a silver and all that,
Yeah.
and you pick the wrong one and it just sells off. I've been there before. Let's see. What happened with CrowdStrike? Does this create more industrial competitors?
It's a great question. I mean, I'm sure they're going to have to be called into Congress at some point to discuss this.
Like what happened here?
Yeah, they're blaming it on the EU. So saying that because the EU mandates that Windows gave kernel privileges to security developers, where Mac or Apple's kind of immune from those rules. That's why the Macs didn't go down and all the Windows systems did. But
I don't know. I was talking to my dad about it. It's like it seems like CrowdStrike has a piece of pretty much everything, and that seems to me to be a bullish thing. Like, I know it's a bad event right now, but it seems like CrowdStrike is a part of basically every tech.
It's like Boeing. It's like Boeing's at the lows. They're going to get saved.
I don't know if it's like Boeing. I think it's more like, CrowdStrike is now a national security company.
Yeah.
Because if
like too big to fail, too infiltrated to fail.
Yeah, they just shut down for 3 days, like all credit card payments, airlines,
it's wild.
Computers. It's crazy.
Yeah, I mean, no one knew who CrowdStrike was a week ago.
Oh,
if you didn't trade,
Yeah.
now everyone knows, and not in a good way, but
Yeah. I will say some of the other stocks like PanW, which is Palo Alto Networks, another one of the cybersecurity companies, it's, been steady as opposed to, it's not the whole space that has gotten smacked. It's really just CrowdStrike. So, yeah, maybe it does open up competition for the rest of the names, or at least, market share for the rest of the names, because it's clear CrowdStrike is the leader.
There you go. H. Montero looking at a QQQ September Iron Condor, 35 points wide, with short strikes at 505, 425. Yeah. Collecting
How wide?
35 points.
35 points. So this is like a synthetic strangle. So $5,000 in buying power if you're doing this as a strangle. 35 would put us at 40.
That's
here.
$3,000 if $3,000 if it's an Iron Condor. Collecting $5. Just over like 15% return on capital. Don't mind it. Yeah, that's what you want to do.
Yeah, it's a little bit big for my position sizing, but I think this is that was my thinking with the Johnny trade position in SPY. Like, you've been waiting for a little bit of a pullback and a pop in volatility. I think this is the time to, whether you want to buy the dip or just sell some premium on both sides of the market, we've been waiting for this pop in volatility. It's probably a good time to consider it. Assuming we don't completely V bottom back to highs or crash to zero, maybe for a week or two we'll stay kind of sideways, and that would be ideal.
Thoughts on IBM for earnings? They have a huge expected move in the weekly relative to September.
Stocks basically doubled in the last year.
Crazy. Yeah, this is a really big expected move for IBM, especially relative to September. September, you're looking at low IV of 30% with a 13-point expected move. You're looking at a 10-point expected move for the next 2 days. What are you gonna do here?
Bullish or bearish? What's the thought? I mean, I know IBM has more than just like chips and AI and all that good stuff, but tech has not been strong over the last couple of weeks. You'd think that kind of is way.
Mm-hmm.
Or at least that would be the play.
Yeah, it's tough here. It's tough in these streets here.
It's after the close today?
Yeah.
Oh, I'll do something because I know you'll balk. You say, oh, no, I can't. Up only. Now you're thinking down only.
And now it's going to moon.
Now it's going to moon, so it's okay. All right, I'm playing the downside.
There
I'll do a put diagonal spread. I'll buy September. Let's do the 180.
Is your thought like, if Google can't do it, how's IBM going to do it?
Yeah, I mean, IBM it's rallied back from 165 to 185. It's what, $10 off the highs here, which were a couple months ago. I just feel like with the way the market's trading right now, I mean, how could you go long, at least in the short term, into earnings, especially when you had, not rough earnings, but, downside move in Google after earnings.
Yeah.
All right, let's do like a cheapie. 180, 175. So the 175 in the 2-day.
There you go.
390.
Nice and cheap.
And this trade, it's a $100 risk reward sort of setup at, $3 and change.
Yeah.
It's not like I'm leaning into this.
Nice and small.
Nice and small.
Does the market favor a president? The market favors policy, I would say. Like if there's a president that's like, we're going to do X, Y, and Z to boost corporate America, you might see the market react favorably to that. When Trump initially won, the market sold off like 110 points, and that was when the S&Ps were at like 2,000.
Yeah.
So it was a big move. But then the next day it rallied back like 130 points, and then it mooned from there. So
I don't know. When you zoom out, there's been a handful of presidents in this chart, and this chart is pretty much just up and to the right. So I think, in the short term, maybe there's some dips to be bought.
Yeah.
But for the most part, it's gone up over time. So I don't know.
Just up and to the right.
I don't know if one side is better than the other. That's short term stuff. So we'll see.
Kamala Harris, she's gained, at least as far as betting odds go, she's up to 46 cents, Trump 57 cents. So
wow,
she's gained, a good amount over the
Which one are you
past
looking
week.
at?
Predicted.
Yeah, because we can't actually trade those, right? Or can we? In the U.S., I remember Tom mentioning this on like last call. I think you have a cap of like $500 or something per.
I'm not sure. I know it's like an auction market, the same way the stock market kind of is for
Yeah.
these. Not sure how you can trade it. Yeah.
Smack lovin'. With earnings coming up, how would you look to manage a strangle that's leaking in an inverted AMD strangle? Short the 160, 165.
August.
Would you roll the calls down, roll out, or hang tight?
It's a better position than what I have on. I'll tell you that much. So I have the 165, 175. All right, they have the 160, 165, you said? Or
160 calls, 165 puts.
Okay, so
Inverted.
slightly inverted in August.
Yeah. Would you roll the calls down, roll out, or hang tight? If you're bullish, this is a fine setup. You have plenty of extrinsic value in August.
Yeah, and you're not that far out of the money. I mean, it seems like it is because it's a lot of price movement. But from a delta perspective, a call at 160, $14, $15 out of the money is still a $30 call.
Yeah.
So you have a 50-50 shot of being back up there in the next 23 days.
Yeah. There's a pretty big IV crush implied in August relative to September. So if you roll out to September, you're going to get rid of that IV crush. You're going to pick up more time-based premium. So I might stay in August and just play for an inside move. Even if you get an inside move to the downside, you can probably pick up a bigger credit than what you're looking at now, because August is going to get decimated in IV and premium, and then you can roll out to September and still pick up decent premium. But if there's a rally, that's your best case scenario if you're in August relative to September.
In sympathy, I am rolling down my my call to be in that same position. And
perfect.
In sympathy, I mean because I have to roll down the call because I had a junky 175 there that was trading at $1 and change. So rolled that down. I got the 160, 170 inverted strangle, leaning a little long here, which doesn't feel great.
Boston Frank, in the April correction, the Qs went down 6.9%. In this current correction, QQQ is down 7.4%. This might be a selling climax today. This might be the end of the correction. We'll see. I mean, you have a ton of earnings coming up that are heavily weighted in the Qs.
Yes.
The Mag 7 make up for 40% of the Qs.
Maybe even more.
Yeah. So if all of them sell off, if all of them miss, like if this is just the writing on the wall for the rest of them, you could see this thing continue pretty aggressively, I would say. But we'll see.
Yeah.
Crowd CRM pairs trade.
Which one would you do? Are they saying long? I would think you do long CrowdStrike, short CRM, but
I know you don't mind being short Salesforce.
Salesforce stinks.
Yeah, I mean, like Nick said, like CrowdStrike has infiltrated many different business units. So if you think that this is just going to be washed away eventually, you now have a discounted stock price that brings you back to the beginning of the year. But there's still plenty of risk. It just went from 400 to 260 in 2 weeks. So just got to keep your size in check. But at the very least, I don't mind taking a little shot here with CrowdStrike. I'll probably wait until earnings. I think by then, maybe you see the price stabilize a little bit, and then earnings, they can repent on the earnings call. We'll see, though. GPI, where would you play it? Happy I shorted copper last night. Nice work. GPI. This is one that we are, it reported earnings this morning, up $24. This thing doesn't have any weekly expirations, which tells you that there's not enough activity to create them, which means
100,000 shares traded today.
It's nothing.
On earnings.
Yeah. These markets are really bad. And this is like peak liquidity, as we normally say with earnings.
Yeah.
These markets are still $1 wide, $2 wide, $3 wide, so there's nothing to do here.
Yeah, you gotta be very careful. I don't think any of these are even trading. Interest and volume, basically zero. Yeah.
Thoughts on a short put on Tesla?
Any strike selection? Round number 200.
Yeah, I mean, something like that.
Pumped some juice into this. Use it $4,000 now.
Yeah. Pretty big move today.
Yeah, I'd say 10%. I think it was actually right at the expected move. I think it was a $25 or $26 expected move. Yeah, I wish I had a little bit more capital to do it, but I think you can certainly consider selling some puts into this move.
What else do we have today?
I don't think there's any real interesting earnings after the close today. AT&T.
Las Vegas Sands.
Oh.
LVS. Vegas Go Moon.
Stocks at lows.
Yeah. Could do something in here.
What are you thinking?
Just a small little thing. Maybe
You get long or short?
yeah, definitely long. We get long Vegas for Anton
What about
specifically.
selling the 40 strike puts in the 2-day little wheel?
Oh. Little wheel action. It could work.
Or you can do it in forward if you want to get long again in forward. You're gonna go back to the well on
They
that?
have earnings today. Ooh.
I think it's after the close today. Yes.
Oh, look at that continuation, almost 15.
Yeah.
Crazy.
So do you try and get it back with a 13.5 short put at $3 or at 33 cents in the 2-day?
No, I can't do it.
Okay, good.
That was a trick question.
That was a trick question. I
Got
tried to
it.
bait you into that.
Yeah. LVS, I don't mind the short put, but yeah, there's not much premium here. You could do a really cheap diagonal spread too, like long September, short the 42 and a half for $2, but I'm just gonna watch it.
E-minis at the low of the day.
Crazy.
Below 5,500. You know what we're getting close to?
53.37.
Mikey's guess for SPX Guess the Market quarterly guess.
Every quarter, 53.37. And I've been teetering, getting close.
You're close now.
If I win, and I make Tom give me that cheddar, we'll go on a golf trip.
Well, that would be nice, and that would be fantastic. But
I'm unable to win.
You are unable to win.
Yeah.
Not because like any legality or anything. It's just that.
It's just how it is.
That's just how it is.
Yeah.
Yes, you are just banned from it.
Yeah.
That's sad.
Thoughts on TLT, TMF?
TMF. Is this 3 times short, I think. So you
TMF. What are your thoughts on rates? Bonds.
I mean, now the market's saying there might be a hold in September or whatever. So
they're never cutting again. We're at this for.
No, I'm not trading the bonds. So
if they were going to hold here, you wouldn't expect the Russell to be this strong.
Mm-hmm. Yeah.
I mean, wasn't that the whole basis for like the Russell move was, now we're getting the rate hike or the rate cuts. They're like coming. It was basically a 95% probability or something just a week or two ago.
It's 95% that
right
we stay.
Now. That we stay or that they cut?
For July 31st that we stay.
Yeah.
And then September there's a 90% chance we cut.
Yeah.
25 bips.
Has that come down?
It's at 89%.
Yeah, I know, but has it come down from the previous day? Doesn't it say on the previous day? Doesn't this CME watch tool?
Yeah.
I think it's come down a little bit.
It was 92% yesterday.
Yeah. Okay.
It was 95% a week ago.
So if that comes down even further, and there's let's say if it got to a 50-50 coin flip of like rate hike or no hike, you think the market is significantly lower? Like if they kind of take that probability off the table, or at least it gets more gray?
I would think so. I mean, yeah.
Okay.
We're going to find out one way or another.
Yeah.
Let me tell you, we're going to find out because
I think that would be I think it would be sort of neutral / bullish because I think everybody would get back into all these big name tech stocks that they have been holding through the last couple of years of higher rates.
If they say we're cutting and we're going to cut more and they do, then the market should react in a bullish way.
Yeah, Google had a line item on their earnings for like 1.2 billion, I think, in interest income just from their cash reserves. It's like when these companies are basically savings accounts. At least
Apple
not
has
today.
a lot of cash too, so
yeah,
probably doing good on that.
Yeah,
they're savings accounts except for today.
Correct.
Today you give up a little bit.
Yep. Well, I think that's it. It's 11:58. About a minute to go. What do you think happens on the close here? You think we're down only 50? Only 60 or only 70?
I don't know. We haven't had a single uptick all day. It has been just a stair step lower all day. So I don't think you're getting any sort of bounce. Maybe you get some covering on the close of 10, 15, 20 points, maybe. But yeah, I think it'll be interesting next week. I think if the big boys come through, I think you could see the FOMO rally.
Because next week we have
all of them, all the rest.
Amazon's August 1st.
Start with Microsoft, then you got Meta, then there's Apple, then Amazon.
Microsoft the 30th after the closed. Meta 31st after the close. Amazon August 1st. What am I missing? Apple August 1st. So yeah. It's going to be very interesting to see what goes on there.
Fantastic.
Lovely. Thanks for tuning in. If you have any questions, you can let us know on the Twitters. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. Always a pleasure having you on, giving us the lowdown of the
everything.
The depths of information. Yes. We love it. But yeah, we'll be back same time, same place, 11 a.m. Central tomorrow for tree trade ideas. We're still broadcasting plenty of content the rest of the day, though, so stay tuned on the Tasty Live YouTube channel as well as tastylive.com. Have a great rest of your trading day, and we'll see you tomorrow.
See you, everyone.
Peace.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
90% goes to S&P index funds. 10% straight to
Is 20th Century Advice driving your 21st century portfolio? Tasty Live has joined forces with the CME and SIBO to offer the industry's first multi-exchange trading collaboration. Our new live event, Building a Complex Portfolio, puts active traders on the path to modern portfolio creation. Tom Sosnoff and other Tasty Live personalities will cover strategies that'll help you integrate futures and options into your portfolio. Sign up at tastylive.com/events and see where we're headed next.
He squirreled it all away. Now his financial life is dead.
Don't die like squirrel.
We are back. It's still Wednesday, July 24th, 2024. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Anton Kulikov, and we're both feeling pretty bad today. Anton, how bad are you feeling?
So bad that I had to turn the lights on like it's the sun to light me up a little bit. Oh, it's pretty bad. This is the time in the week where I blame everything on you, and I take no responsibility for my own trades.
Makes sense. Okay, let's start there then. Well, this is a correction, Anton, and it's a correction because it's a 10% decline in the Mag 7 stocks. Listen, they're still up an astounding amount. And the Mag 7 stocks down 10%.
Stayed away from NVIDIA. If only he just had the fortitude to not touch that stock, trillions of dollars would not have been lost. Billions, multiple billions.
I think you did tell me that your dad bought NVIDIA the day that it had set the all-time high.
I'm telling you.
So when he gets out, for everyone's sake, when he gets out, please let us know so we all know it's time to get long again. But this is a correction, Anton, and the technical damage that looked like it may have been warded off yesterday, obviously not here today. It's why on yesterday's Future Power Hour, we called it Technical Purgatory, a theme that we continue through overtime, where if you were bullish, you didn't really have everything you wanted to see there. The levels weren't hit yet. Never got above 56.20 on a closing basis in the S&P, so might as well just chill. And, well, maybe even chilling wasn't the right decision because this is a market that's experiencing its worst day since March 23 for the S&P, the worst day for the NASDAQ since December 22. It's been a long time since we've seen price action like this, Anton. What may be spurring it on? There is an interesting discussion going around today thanks to an opinion piece put out by former New York Fed President Bill Dudley, in which he argued that he has dramatically moved away from the higher for longer camp and thinks the Fed should cut next week. He thinks that by waiting until September, the economy is going to be facing a cavalcade of risks that the Fed will be too late to address. Why do we care about this, and why on earth are we showing the GDP tracker in context of that note that went out this morning? Because the GDP data is due tomorrow. The second quarter reading, the initial release, Anton, comes out tomorrow morning, 8:30 a.m. Eastern, 7:30 a.m. Central Time. It's perhaps the most important data release of the week, and it looks like it's going to be pretty good. 2.6% is the expectation according to the Atlanta Fed. And so why, if it's a good report, would that be bad news in context of this Dudley commentary that may have soured sentiment this morning? My opinion is that it looks like it's going to give the Fed a reason not to cut next week. If the data is actually spoiling, it's here for the third quarter so far. It's not going to be reflected in the most recent GDP report, which will probably tell the Fed that they can stay on hold for a bit longer. Anton, if that's the sentiment coming from former Fed officials, then the Fed is cutting not for good reasons. Rate cuts, when they do come, maybe it's not next week and it is September, but when they do come, it means they're coming for recession reasons, not for Goldilocks reasons.
Okay, so let me get this straight. So the Fed is basically concerned about economic stagnation, and that's why we're planning on cutting interest rates.
I think the Federal Reserve has shifted from a mindset of we're cutting rates because inflation's been defeated and we don't need to stay restrictive to we need to cut rates because bad things are happening.
I think well, then why aren't bonds up?
That is my biggest quandary with my theory here. And that's what we're going to be discussing.
Be a theory with that wrench. That's too big of a wrench, my friend.
Well, the yen is a big problem for this because the way that we're seeing, the yen unwind of the yen carry trade, which is not just dollar yen or the 6J futures contract, you're looking at it in euro yen, Aussie yen, Kiwi yen, Mexican yen, right? All these positions, they're tied to the treasury market. So if you're delevering your short yen position, you also are getting out of your long treasury position. It's a problem. It's a theory that we've talked about, Anton. If the BOJ intervenes in the market to lift the yen, what does it do for treasuries? It's probably negative for treasuries. So I think there's a few things in play right now that we have to be aware of, but this is not a good environment for risk either way. You don't want former Fed officials coming out starting to press the alarm button saying, hey, yeah, I know I've been telling everyone that we should be holding rates higher for longer, but by the way, I've just updated my worldview. We should start cutting next week. That's a really strange, sudden shift. And it's not coming from a random old Fed member. The head of the New York Fed is one of the most important policymakers in the world. And this is the former head of the New York Fed. So his words are not taken that lightly.
Do you know, oh my gosh, if that's the reason, you have to buy them here like your hands are bleeding, if that's the case. Like, I can't imagine a more like BS reason for this sell-off than the fear of a recession because of a Fed chair or head of the New York Fed saying that we need to cut now because of a recession fear. I mean, what do you got? 94 points left in the day. 94. ES down 94. What are the odds of being unchanged today? Probably 0, but up 100 tomorrow, basically 75%.
So you're buying one DTEs coming out of this conversation. I get it. All right. Let's do it.
It doesn't make sense to me. It's like it's like, I mean, maybe I get the whole sentiment thing. I get that, and maybe a spooking sentiment, because of this. But that stuff never holds. You know what I mean?
No, it doesn't.
Like, it doesn't hold. So, and I'm being facetious about buying it tomorrow and 75% chance and all that stuff. But realistically, if that's the actual catalyst for today, it doesn't really make me more nervous. In fact, it kind of makes me feel like, this is a ripe time to buy to buy the bottom. And also, on top of that, this is coming off of a period where you have seen a few down days over the last week. So it may just be a continuation of that kind of excess sentiment kind of being flushed out right now. I mean, I don't know. I can't say for certain, obviously, but it seems a little bit too foofy to put any extra weight on that.
It's a remarkable change of pace from yesterday. Obviously, we had Google and Tesla earnings out after hours, Anton. Google beat, but obviously their guidance was a little disappointing. When you look at Tesla, it was just a garbage fire across the board. They're facing significant macro headwinds with the EV market becoming saturated thanks to China's exports, and then the margins they're facing here at home. Bad news. Tesla itself today, perhaps one of the bigger problems that the NASDAQ's facing right now. Where's it off to? It's down 12%. Only down 10.4% now, I suppose, Anton. But with Tesla falling, with Google falling here, with these earnings out, it's been a really tough day for the NASDAQ right now. I'm curious, you say somewhat facetiously that this is a dip to be bought. We are getting to a place where actually that would be reasonable technically for a short-term bounce, but that's really it. I say that because we have that former swing high coming in at the end of May, the swing lows that we had through June 7th down towards 19,189 3/4. You could size up with an IVR of 76.5. I could sell a put spread down there, right? The risk to reward is going to be pretty good. That said, only for a short-term bounce, because with the way the technicals have shaped up here, the momentum has clearly turned negative, and this looks like a bearish rising wedge still. So until there's some negation of that trend, you have to be patient if you're going to be playing this long.
Yeah, it's an ugly chart. I mean, the Russell NASDAQ trade, funny enough, has still held up, and that's kind of an interesting. It's kind of an interesting thing to look at. And I'm not 100% certain of this, but isn't the Russell, if recession fears are actually on the table, isn't the Russell the one that's supposed to be the weakest of the group?
You would think that the small cap growth sensitive index would be, yes, but alas, it feels like a positioning flush. That's what this, that's what this feels like. It feels.
That's exactly it. And I wouldn't be surprised if we saw a 50-point jump on the close, like into the close. Not saying that because don't take this as any recommendation, but I'm just saying that on rare occasions we see this kind of, flush out and then late day reversal. Does happen, doesn't happen often. Obviously, it would be great if it did happen, but yeah. I say that all the time, by the way, just for viewers who know, I basically say that on every single down day, so this isn't let's forget, cut the last 37 seconds out. Go ahead.
You start to run into the very real problem, and this is why if you're going to try to play this on the long side, it's patience. Today's a good day, not necessarily here in New York to go for a walk because it's 76 and rainy. But, if you are wanting to look to try to pick some up and fade this move, today's probably not the day to fade it. The continuous contract in the NASDAQ says a lot, whereby today is the first day that we've broken the uptrend from the May, June, and then last week's swing lows. We also see that this could be a potential head and shoulders pattern, not exactly pitch perfect looking, but it's close enough. And that would still suggest we have a deeper setback here towards 18,750 or so, maybe another 600 points. Who's to say that we stopped falling at those swing levels that we pointed out earlier near 19,189? So if you're going to look at this, yes, the volatility is ripe there. Tom has a really good rule of thumb when it comes to those big binary events that take down any individual stock, right? When Boeing has an accident or CrowdStrike goes through what it's just went through. He usually says, wait a few days. Today feels like it's not day one of something. Day one was actually on the CPI release a few weeks back, believe it or not. But now we've entered a new realm where the technical damage is accumulating. And I got to say, there's that vibe shift that happened 2 weeks ago where a lot of people were out there. I think we mentioned it last week on Futures Power Hour. If it's a market that's up 25, 30% year to date, you've done a really good job, you want to take off August, why not just pull some capital off the table and come back in a few weeks and see what happens with the election, right? So, yeah, there's technical damage, but has the underlying situation actually changed or evolved? We'll see what the GDP report says tomorrow. We'll see what inflation says on Friday. But the market, if you look to oil, if you look to copper, growth is leaving the picture, dare I say?
Yeah, listen, I mean, so you have these, cyclicality trends in everything, including sentiment, and I think that sometimes, for no rhyme or reason, you just have stuff like this happen. And again, if you're a bull, you have to be asking yourself, if I'm gonna get out, are you gonna stay on the side or are you gonna get short? And I think honestly, if you're gonna get out, I don't think this is necessarily the time to get short, but I do like your idea of maybe putting some capital on the sides, maybe even staying long, but just to a half your position, quarter of your position. You still, and at the end of the day, right? If you were long this market, you probably had one of your best 6 to 7 month runs. Like probably maybe since 2021, and even 2021 had some bumps along the road. So I mean, all things considered, in terms of a yearly performance, most people were able to probably achieve at least an average yearly performance in maybe the first couple months of the year, maybe the first 3 months of the year. So again, returns have already been kind of set, right? They've already kind of been realized. So nobody should be really surprised if we see the rest of the year be choppy or even down a little bit, because I mean, we're like the S&P is up so much, relatively speaking, in the first quarter, and I'm sorry, the first two quarters. So like, even though you have this, this kind of down day, it doesn't really spook me as so much as it's kind of like, okay, well, took it long enough, I mean, and I think a lot of people who are long are actually kind of thinking the same thing. Because I mean, of course, you have to realize the gravy train doesn't end. It's kind of like you're at the craps table, and somebody's rolling the dice for 2 hours. It's like, oh my gosh, it's like you look like you're really excited, but like at that point, like after the first 30 minutes, you've been there. I don't know if I'm sure people know what I'm talking about. You've been to the casino, you've been 30 minutes, 45 minutes. Then you're kind of like you're kind of happy, like you're satisfied, and now you're just kind of waiting. Like you still have your bets out there, but you're kind of like locked up in your mind. You're ready, for the guy to crap out, because how long? At some point it has to end. So this is kind of like this same kind of analogy. Like you don't want it.
It's
to,
so
but
funny.
It will.
No, it's so funny that you mentioned that, because I actually a few weeks ago when I was talking about, are we gonna put back on the same longs at the start of August as the market looks frothy going into an unseasonably friendly part of the year? Probably not. We'll wait to see what the price action looks like. And quite frankly, if this is the price action, if today is July 31st, there's no reason to put back on any longs right now. But one of the memories that came through my head was when I was in college, several friends and I went to Atlantic City, because it was only about an hour and a half away from where we went to college. And these two guys, Joel and Dan, were at the craps table and went on a heater. And they were there for a very long time. It was definitely, at least an hour. And I remember when they, when we went up to them and said, like, what are you guys doing? How are you doing? I think Joel turned to us and was like, we can't stop playing. Like, and it was in a bad way, right? Like, we want to walk away from the table, but we're so hot we can't. So we keep having to bet and bet and bet. And then eventually they crapped out. And it kind of feels like that's how the market was being on the long side a few weeks ago. Like, yeah, this is going on and on. Like, it's great. And the stats are still good for the future, but do I really have to keep putting on these longs right now? And now we're, paying the price for it, which is fine, because it's one trade amongst an 8-month run of success otherwise. This will be the second month since November that the long call spreads haven't worked.
I want to be, I'm saying this with a huge grain of salt, so nobody hopefully nobody misunderstands me, but it's almost kind of like, and even in your example, it's kind of like you almost kind of are getting bored. Like if you're long, it's almost like you're kind of getting bored of just raking in like 5% a month. Like, and I'm not saying that the only reason I'm saying that is it's not like you're annoyed that you're making money. But it's more so like you said, just rinse and repeat. And here's another up. Wow, I'm up more than I've ever been. And it's great, but at some point you kind of get, and help me out here. Hopefully you understand kind of what I mean, but it's kind of like you're kind of on this edge of like, not boredom, but you're kind of like, okay, now what? Like you're kind of waiting for something to happen internally, even though this is a good month and a good year. You know what I mean? It's kind of like you're kind of getting a little bored. I don't know, maybe that's just me, and it's not about making that kind of money. It's just the boredom of the fact that everything's happening in the same way, like every day. It's kind of like, even though it's a good thing, it's almost very dry and just boring, I guess. Does that make sense?
Monotonous.
Yeah.
Monotonous. Yeah.
Yeah.
Well, one of the reasons for the lack of monotony in recent days is because of what's happening in the semiconductors. Yes, this is a future show, but this is the theme that we're watching. AI and GLP-1 drugs are perhaps the two biggest themes that are lifting certain sectors of the market. Of course, SMH being the semiconductor ETF, I would argue the bedrock of much of the NASDAQ rally. We pointed this out last week. The SMH looked like it was putting in a potential double top, which gave you a measured move just below 230. And we're continuing to make progress towards there, Anton. As far as I'm concerned, until we start to see some stability here in this sector, tech feels like it's going to bleed. And maybe it's going to take an NVIDIA earnings report, which doesn't come out for a few more weeks, in order to change the tune again. There's a lot of time for damage to be done if companies are beating but not guiding much higher in the future. So I would watch SMH. If I'm watching the NASDAQ here as this damage accrues, SMH is the one to keep an eye on, because that really needs to turn around if this bleeding is going to stop. You mentioned the Russell, though, which all things considered, it's only up by 0.58% today. That's why today has a little bit of a different feel for me, because it's not just rotation. Sure, small caps are outlasting their mega cap counterparts, but they're also underwater themselves. It feels like a day where people are raising capital, Anton, again, going to cash.
Yeah. All things considered, I mean, I think the net outflow, yes, you are correct. But I think that on a relative basis, this move can't really be ignored, because it's very common for the Russell to underperform on days like this, and we haven't had the Russell underperform a single day since that initial jump on, what was it, July 11th, right? 2 weeks ago.
Yeah, wow. Coming out of CPI. Yeah.
So, with that being said, it's kind of like that's one of the parts of the market. Now, again, there could be a lot of reasons for this. I don't think, you can read too much into it, but with the Russell outperforming to the upside, which it is. I mean, today it's down 0.6% with the NASDAQ down almost 3%. S&P's, the Russell's down more than the Dow Jones, which says a lot. Russell volatility, for context, is sitting at 30-day cycle at 26%. S&Ps, which are down 3 times what the Russell is on a percentage basis, its volatility is the S&P, 17.5%. So you have an index, the S&P, that has about 30% less volatility and is down 3 times more than an index that has 35, 40% more volatility. So again, it's a very weird thing to see. It doesn't happen often. We got it back. Oh no, RVX. I couldn't get RVX low the last couple of days. I don't know why. Anyway, Russell volatility up again. But again, it's just such a gap compared to the S&P. I think you just got to keep an eye on this, because this is another thing that's preventing me from saying, yeah, this is like, continuation of a further down move. Because again, if it's recession fears driving this sell-off, you would expect the Russell to be the leader to the downside, and in fact, today is just the opposite.
They usually shoot the generals last, but in this case, the generals are getting shot first. Mega cap tech out to the woodshed here. You point out that RVX has seen volatility jump into levels that are more or less consistent with highs that we saw when the Russell was digging depths of recent lows. I think that's important, right? If the Russell is able to hold up here and while the NASDAQ and S&P pull back and it just churns and trades sideways, this is going to be a gift for volatility traders. Is that a 99.6 IVR there, Anton?
Yeah.
I mean, it doesn't, now only 97.8. But this is really unique. I know Russell is not the sexiest product for people to trade. Only 171,000 contracts traded today relative to the bulkier, 1.24 million already here at 1:25 p.m. Eastern time in the S&P 500. Nevertheless, though, the opportunity is perhaps greater there, especially if you're a bull, at least in the short term. Now, if the Russell starts to keel, everything's killing. I don't think we're going to see a putback on of the Russell off, NASDAQ on. We want to see stocks rise generally. But this is a good place for a swing low in the S&P, Anton. We have the swing lows that we had going through late June into early July. The July second low comes at 5502.75. Holding that would be a good first step to calming things down if we can, and we get below there on a closing basis. You may be looking at another 40 to 60 points to the downside before you even come close to the uptrend. That's carried us here from the October and then let's fix you. There we go. From the October and the April swing lows, and that would be about 54.60.
I don't know if I should blame my dad or you, actually, because you were the one who top ticked the market yesterday, and we have not about 125 points higher from here.
Yeah, but in fairness, when I responded to my own message later, I said nothing. And then you were like, yeah, nothing.
Yeah, I know, because you were. You know what's funny? I didn't even have to look at the market, because I was looking at the market from the time you sent me the message to then. As soon as you sent me that, I'm like, yeah, we didn't move a tick higher, did we? Anyway, yeah, I mean, again, I think here you're still in this purgatory. I'll use your term from yesterday. Whether this is going to be I don't think you can really use today's price action to get a sense of what's going to happen in the next couple of weeks. I think you need more than this, and that's kind of, again, it's kind of a tautological statement, because of course, if you have more than this, then you're going to say, well, there is a correction, and you wouldn't have been able to catch it. But unfortunately, that's kind of how it goes. Like, you don't really know if this is the beginning of a future down move. Otherwise, everybody would be able to do it, right? Which obviously would defeat the purpose. You know what I mean? Like, you can't do that. So, I mean, you have to, I think, for the time being, I wouldn't really put on any new positions, but, you just kind of wait and see. Chances are, if you're in August right now, August cycle, you still have the 3.5 weeks to go. 3.5 weeks. When's August expiration, actually? 23 days. Yeah, 3 weeks. Just keep it on. That's the benefit of using call spreads. It's not over till it's over, and you can't lose more than you put on. So if this is it, then shoot, chances are you're going to be down less than if you had just held stock. So,
Anton, if you liked the S&P on July 1st or 2nd at 5502, you probably love it here on July 24th at 5502. We'll see if that works out. Just a quick update on the earnings season, looking at the market broadly, not just the S&P, but thus far through 1 p.m. Eastern today through second quarter, for second quarter earnings, 378 companies in the market had reported earnings. 54% had stock moves with positive returns. 45% had negative returns. The average move is 0.4% higher. In terms of this earnings season producing a range of outcomes, 20.1, 45.8% of earnings have produced moves in stocks between -3% and +3%. So this isn't a bad earnings season so far, Anton. It's not like the distribution curve of where most of the outlier returns have been are to the upside. I'm just looking at it right now. So it seems just like people taking some chips off the table, not necessarily, a lot of technical damage, but we'll see what GDP says tomorrow, what PCE says on Friday. If the Fed can nail a soft landing, ultimately, I think that some fears are filtering through to there. Bonds struggling, question, Anton, because if my theory is correct about stocks, how on earth do we square this with bonds, which you took that delight away from me and called me out on the incongruity before. But 118 and 19 ticks right now here in ZB, sitting near the session lows. I happen to think this has to do with the yen and what's happening in the FX world. the way that okay, so let's unwind some theory here about how the carry trade works. And you and I have talked about this a little bit over text, Anton, but for the broader listener who doesn't necessarily trade FX, what you do and what you can do over time is you can take your currency and convert it into another one, or you could borrow in another currency and you could take that currency and invest elsewhere. So let's say I'm a Japanese investor who sees that my interest rates are 0 or negative. What I want to do is I want to invest in US government bonds as opposed to Japanese government bonds. So what do? I take my Japanese yen, I convert them to US dollars, dollar yen exchange rate goes up, I buy US treasuries, treasury bond prices go up. In theory, that's how it works. So now that the dollar yen trade is collapsing, the yen is at its highest level since May across the board. If it's Aussie yen, Euro yen, pound yen, name a yen pair, you're seeing this happen, play out everywhere. That means that people are selling their foreign government bonds. They're taking their money out of euros, converting it back to yen, bond prices down, local currency down, yen back up. So the move in the past week, I think, is causing some of this indigestion as I've, spending some time looking over, macro notes and some academia here. I can tell myself, and it can make sense why we're seeing the price action at the long end of the curve that we are, even though there may be growth concerns percolating. The unwind of the carry trade is that significant of a flow right now where it's going to be an albatross as long as the yen's going up. But further to that point, Anton, it underscores the notion that if you want to be a bond bull, this is not something we're looking for a move up to 120 tomorrow. We are looking for a slow, steady burn to the upside over many months, which is why duration and time is your friend.
Mm-hmm. Why didn't you just say that when I called you out? Why did you have to?
Because I wanted to save it for the bond segment.
No,
there's a show here, Anton.
It makes sense. It's just my question is why today? Why would the carry trade unwind today?
It's been unwinding for a few days.
Well, right, but I mean, if today is producing such a huge, red day in the equities market, why it would have to be that much stronger of an unwind to offset the theoretical gains you should see in bonds, right? Because I mean, bonds down 14 ticks, on a day where stocks are down for a reason that should be bullish for bonds, and having bonds be down on the session while stocks are down, 100 points. I don't know.
Anton, how big is a stock? How much money is traded in the stock market every single day?
A fraction of what's in the bond market.
And how much is in the bond market compared to FX markets?
A fraction of what's in the FX markets.
So if FX markets flows are strong enough, they're going to subsume everything else. FX is $6 trillion a day. It's a big tidal wave compared to everything else. Equity trading is a drop in the bucket compared to FX, right? Globally.
That's interesting.
I point that out only because if you look at what's been going on here since July 17th, the long yen short bond trade has gone vertical, right? There is this very clear. Bonds are down basically every session since July 17th, and the yen is up almost every session since July 17th. Obviously, this is something that I did not consider enough when thinking about bonds in the short term, because now that the yen has broken out, and this is really a true legitimate breakout here, July 17th comes around, bam, this breakout of the downtrend in the yen from the highs that we have at the end of December here in March at the start of June. That's when the bonds start to struggle, even though you have all these concerns percolating in equity markets and safe haven demand beginning to pick up elsewhere. Gold does well. Silver was doing well. The dollar was rebounding back. You're not seeing the same movement in bonds. So I can actually find a rationale for why bonds aren't benefiting today. And it's because you have a very big carry trade position that's unwinding right now. And not just for an individual firm, but this is a market position that's been built up over many, many months and years. That's now finally the air's coming out of that bubble.
Which
I'm not a part of.
Here's the final challenge then. 11:15 a.m. Eastern time. The yen stagnates and is actually lower over the last, 2 hours. Bonds had their biggest drop of the day in that same period, while yen was at the same time that the yen fell. So how do you reconcile?
We had a bond auction come out. we had a bond auction come out here at the top of the hour, which wasn't good.
The top of the hour. Oh, okay,
5-year
fine.
notes.
But even before then, even before the top of the hour, you had both yen and bonds continue to sell off. My point is,
listen. These macro FX overlays are not going to. I can't pin it down to a minute to minute.
I know. I gotta save my ego a little bit.
But this is not something that we've discussed, right? So this is me trying to take a step back and go, what's happening here? What am I missing?
Yeah,
right.
fair.
And this is an aspect of the trade that I don't think we've talked about we've talked about it over text, but not here on air. And you're the one who's broached the conversation. So I think you were sniffing in the right place, but neither of us really decided to see what was smelling in that corner of the market.
Bond auction was bad. How does that make any sense? If the
5-year notes, I didn't see any good information on the 5s.
Well, but hold on a second. But do you see that there's a lot of stuff at play? If the bond auction wasn't good in the place where theoretically it should be, I mean, that's not because of the yen, is it? Possible, maybe.
If there's a lot of supply coming into the market because people are selling elsewhere, why would you go get a fresh offering? Why would you need to go get a direct offering? It's not like there's a lack of available high-quality liquid assets out there. There's more coming onto the market.
Why would that flush bonds lower? Because if that's already priced in, I mean, I'm asking these questions not to get an answer, but I'm just, it's kind of things to think about. Things that I think about.
Weighted interest was 4.11%, which in context of recent auctions and the way the curve has been moving, it just didn't come across as a good auction. I mean, the demand was basically in line with the 6-month average. It didn't, let's see here. Did it tail through? No.
Yeah. Weird. Okay. Well.
But listen, Anton, I'm glad you're poking holes in this because I don't have a cohesive answer.
No,
I'm trying to figure things out, and it's just a day where things are red, and but there's also this FX part of my brain, which says how can you ignore what's happening between yen and bonds? So look, the point here is if I'm right here, let's just say I am right about this, that the yen is the reason why the bonds are struggling today and struggling since July 17th. Does it change the fundamental longer term view that if the Fed is cutting for maintenance reasons or recession reasons, it's a good idea to be long bonds? No, of course not. Historically, It's good to be long bonds when the Fed starts cutting for whatever reason. And if that cycle is starting next week or if it's starting in 2 months, that should be good for bonds. So I'm willing to ride the historical tendency of the market and give myself the time in the market as opposed to trying to time the market with these long duration trades. Just knowing that maybe in the short term, this yen thing is going to be a problem and cause a bit of a headache. So just be mindful that this could stay underwater for a little bit longer than we'd like.
So do you remember yesterday on Overtime, we were talking about this and I wanted to, did you say no? Well, let me refresh your memory. So we were talking about this and I had a little bit of a, I was standing on a soapbox the last 10 minutes. You asked me a question about, do the fundamentals matter? Right. And I had said specifically that they do matter, but not in the way that people think. And I wanted to clarify that a little bit because I think the misconception of fundamentals being important is that, okay, if you know something, if you do your research, you can get a better sense of what direction to pick. And I don't think that's necessarily true by itself. That statement isn't true by itself. Because again, the ability to be profitable as a trader is not just direction. It's direction plus time period. And both are equally important, right? This is the same reason why I was long call spreads in the Russell or short put spreads, but I was also long call spreads through the end of June. But had I had it through the end of July, it would have been the best trade of the year. If I had it 1 month earlier, which I kind of did, I still rolled into July, but the fact is it was not the best trade of the year. The time frame can make such a big difference. And I think that's what the fundamentals allow you to do. It allows you not to set direction, but to set time frame. And that, I think, and the reason is because, again, it's like each trade is perfect, but knowing these things, and this is why I like our show, because we get we kind of combine these two notions, right, of the fundamentals and the quantitative stuff. and why it's possible for a market to be hyper efficient and also not negate the fact that fundamentals matter is because if I tell you, here's a bet, you have a 50-50 chance of being right, and I'll pay you even money on whatever side you take. Is that a fair trade? Like you flip a coin, you heads or tails, you get even money on each side. It's a fair bet, right? But what if I told you I'm going to give you a dice to roll? I happen to have one right here. I give you a dice to roll.
Happen to have one.
And you have, if you roll a 6, I'll give you 5-1. If you roll any other number, you lose. Is that a fair bet? The expected value is the same exact thing as flipping a coin. The difference is the odds of what your payout is, and it's 5-1. And it's not 6-1 because 6-1 you're getting overpaid. So I had to think about that for a second. The expected profitability of the trades are both the same, but the trades are fundamentally different because one has a much higher pop, the other one has a lower pop. And I think that's what fundamental analysis allows you to do. It allows you to understand not necessarily how profitable your trade will be, but it allows you to understand the probability around what the probability of your trade being profitable is and over what time period. And when you meld those two together, that's what makes a powerful trader. And the reason I'm saying this right now is because bonds are a perfect example of that. You can't trade bonds like equities, right? If the fundamental stuff didn't matter, then there would be no reason why you would ever trade bonds different than equities, right? If we were truly completely agnostic to fundamental analysis, there would be no reason why we should treat gold differently than equities, bonds differently than gold, yen differently than equities. It should all be the same thing because it's all a random walk, but it's obviously not. There's a reason why we choose to be longer duration bonds and shorter duration in something like equities. There's a reason for that. And the reason is because the probabilities of a trade being profitable are skewed different for different assets. Now, it doesn't mean the trade's less fair, right? Because let's say bonds have a huge move to the upside. Well, you'd get paid more if you were shorter duration. That's the point. You'd get paid more in bonds if you had a bigger move in bonds than you would in equities, because equities have a naturally higher volatility. Bonds have a lower volatility. And understanding the fundamentals behind it allows you to know, does that volatility change or does it stay the same? Anyway, all this to say, longer duration bonds, I think, is the only way to go. And I think if you're going to be, you could be in this trade for another 3 to 6 months. And I think that's totally fair.
I think the long bond trade is going to be viable for perhaps a year and a half, if not longer. That's why I'm willing to be patient here. Same thing with silver. Patience is the name of the game in so many things right now, not stocks where it's just ugly on the long side, but at least in some of the metals, you're finding stability in areas where you would hope. We're still holding above 29 here in silver when we hop on over to its golden counterpart. GCZ for now. Can't believe we're talking about the December expiry already. We see ourselves pivoting and holding back above levels that were important peaks. June 7th swing high, when the PBOC announced that it was no longer adding gold to its FX reserves, marked an important psychological top. And yet, here we are in recent days treating that former resistance as support. So, Anton, this is not obviously a market that's going up, but in terms of a market that's holding its own, it definitely feels like the metals are still doing so. It's not like there's been a ton of vol reintroduced right now, which is why on the long side, it feels like it's cheaper to get some exposure. 37.1 IVR, long call spreads here against 29 could be a good deal as far as I'm concerned.
Yeah, again, I'm going to say I see more of a silver trader than I am, but looking at the volatility, I mean, again, I would say probably I'd agree with you, but from a different perspective. Yeah, again, I think vol is high. I would even justify an iron condor here. I think silver, I mean, especially for the last few months, I understand you wanted to take a directional shot, but I mean, iron condors have been profitable because of the range-bound nature of this product over the last few months, and gold as well, but actually gold more so. But silver has a higher volatility, so you're going to get more fluctuation there. Anton,
let's talk about that. Let's talk about that condor, because I think that's just looking at the range that we've been in, we go back over the last several months, there is a legitimate case to be made here. And I believe it's something that we've discussed previously, but haven't actually made a move on. Look, if the range highs are near 33 and we see here back in March a spike up towards 26.5, and then the lows at the beginning of May are carved out right around 26.5, you could make a very cogent argument that we are basically halfway in the middle of the range. And so sizing up a trade in that perspective where we look to 26.5 and say 26, we'll go 50 cents wide, and we'll go 33 and 32.5. There's a 62% probability of profit 63 days out.
Mm-hmm. Yeah. Yeah, I'm even looking at these options right now. Let's see, 29, 24. Let me go out $2 on each side. You're in August. Oh, you're in September. Okay. What I'm looking for right now is to see the call skew. Yeah, there's quite a bit of call skew in here still, even though silver's at, which tends to be the case. I would probably actually go closer. I would probably go to August with this trade. Yeah, just because there's so much vol in here, an iron condor will be a lot slower of a trade if you go out to September. You're going to be waiting probably a good month at least for any premium to come in. Iron condors are just kind of finicky that way, especially with products that have call skew and also have high vol. Same exact trade, same width rather, in a shorter expiration will give you more of they'll give you more of an active trade. You're going to see this trade move more than you would if it was in September.
Gold's in a very similar position if we think about those charts as well, sitting close to the middle of what's been a range that started developing in the beginning of April. Anton, there's so many ways to skin these cats. I think that gold has a pretty strong case to be made to be looking higher. If you think about the relationship between gold and real yields longer term and what happens to gold during Fed cut cycles, okay, I can convince myself directionally I probably want to lean that way. But the price action speaks for itself. So the way that I don't have anything on in gold right now, but I think we talk about recentering strikes. What about recentering strategy, right? We have to mark to market our views on this. So yes, we may be bullish, but in the near term, you still should be playing the range. And if you want to do something along the lines of like short put spread coupled with an iron condor or a long MGC coupled with an iron condor, that's a way to crack that egg. Bias to the upside within the range right now. We're beginning to pivot through swing levels. Another test of near 2,500 is possible here, all things considered. So let's see what goes on.
Yeah, gold, I think very similar to silver. I would probably do neutral and in August. I don't think September makes any sense right now for these for the metals. From the Tasty mechanics perspective.
I hear you. Let's actually pop on over to energy because we are running out of time. Truth or Skepticism is on today, so we are out a little bit early. Crude oil prices. I have no business in here at the moment right now, Anton. $77.74 a barrel. Yesterday we hit the measured move from the highs. It was $3.60 less $80, and that brought you down to $76.40. And so right now I think we should look at this market from more of a range perspective. We raised this topic on Overtime, Anton. You and I formed our friendship in the crucible of iron condors and crude in the first half of 2023. It feels like this is now giving us a longer-term price action perspective where we could actually justify doing that once again. Is there an IVR that you look to for the oil market to draw you in, to make it enticing enough to get back onto that iron condor trade?
Yeah, unfortunately, IV came in a little bit, but usually, okay, so for oil, my threshold's a little bit lower. Like I'd be willing to sell premium if IVR is even 20. Usually I try to shoot for 30, but 20 in oil is okay, and I'll tell you why. If you're going to do an iron condor, it's a defined risk trade anyway, so you're not really subject to that IV expansion risk as you would if you were going naked. But more so, volatility in oil tends to be high just on a percentage basis. So what that means is that even though volatility rank can be low, you can still get some premium for those options, for those iron condors. And again, because you're not going naked strangles, the risk of IV expanding doesn't really hurt you as much. So that's why I'm okay with doing this at a lower volatility rank. In fact, usually for all underlyings, if volatility rank is low, iron condors are actually still a viable strategy because the volatility expansion risk isn't really as present. So again, if I was doing defined risk, I think oil is perfectly fine to do that in. And let's see, if we're going to go to, probably I'd go to August as well. Let's see. Yeah, August 21. Yeah, 21 days. I think that's fine. I mean, you could justify going further, but I'd like to do mine a little bit closer to expiration. Let's see, the 30, the 75 put, the 81 call, and then you can cap them with $2 wide wings. Let's see what that gives you. 64, yeah, it gives you 1360, $1,360 max loss, $640 max profit, pop a little bit over 50%. And what's nice about this is that even though the volatility rank is low, because the vol is high, your theta decay will still be there. And as this trade gets closer to expiration, this can come in very quickly if that range remains in oil.
I like it, Anton. I'm going to chew on this a little bit more today, but I think I'm going to put this up on the Tasty Live follow page later. Look, one of the best predictors of oil prices is where oil prices are sitting today. Seriously, go look at the research data. If you're trying to predict the price of oil within the next year, the current spot price historically is the best thing to guess. Beyond there, then you could start to look to the futures market as a loose gauge of where you should expect oil prices. But right now, if we're talking about 45 days or 30 days, well, that's less than a year. So let's bet on the current situation remaining the same. And the current situation has been choppiness between 70 and 85, we'll call it, more or less. So that's a simple way of approaching this market. There's no reason to overcomplicate it bidirectional, particularly now that the downside directional target with the shorter term head and shoulders pattern has been achieved. Anton, we've talked a bit about the dollar here and the yen today already, and we can revisit the yen real quick. It is up by 1.19% on today's session. Everything else meandering versus the dollar. Aussie up by 0.32, Canadian dollar down by 0.12, euro off by 0.03. We look to our lovely new ticker, $DXY, and we are bouncing around near support. Anton, I think the FX market shouldn't be ignored, even if you're not trading it. Just folks should be keeping an eye on what's happening with the yen right now. Yes, we've been saying that for months, and obviously it didn't work out. As you mentioned, time and direction are important things for trading. We were right about the direction, wrong about the time frame. And so now the market's moving without us, but it can spill over and impact other things. Historically, Anton, when the yen's going up, gold typically rallies. So if we're thinking about how gold may be on approach to 2,500 and momentum's building there, it would also speak to a relationship that suggests the yen, that rather than gold is going up, yen is going to be continuing to go up as well. So right now, the dollar, tough spot. I don't have anything here at the moment, but what's going on with the euro and with the Aussie should not be ignored either. This is a market that's signaling there's some stress.
Yeah, I think the yen's the biggest thing to keep an eye on, not necessarily the other currencies. I mean, quite frankly, if it wasn't free, I wouldn't really be even looking at them at all. But volatility is there, and I think again, even if you wanted to take a stab and have no directional bias at all, you can do that. I mean, volatility. Now, the only deceiving thing is that volatility rank may be very high, but volatility. This is the opposite of oil. Volatility itself is very low, so you're kind of constrained in how much premium you can get. But again, you don't need to put up a lot of capital. And ironically, I say ironically because people wouldn't look at this typically when they think about beginner strategies. But if you're a beginner in the future space and you want to look at some low risk products to trade, the currencies is probably the lowest risk product out of all the futures products. They may look weird because like the price isn't what you'd be used to. It's like it's not $50 or $67.50 or anything. It's like 0.006 55. So you're kind of thinking, okay, this looks a little weird. But when you look at a risk reward basis, volatility is low, volatility rank is high, and that makes it a very good product to trade from the standpoint it's a small product and a lot of people can trade it even with small accounts. In fact, you're doing an Iron Condor here. I see it on the screen. Buying power $200, max loss $200, and that's a currency future. So yes, futures don't have to be risky. It all depends on what product you choose.
Anton, what's next on the calendar for tomorrow? Maybe China releases that foreign direct investment information that was promised today that never came out. Germany, IFO business climate, so keep an eye on the euro in the morning as well. We get into the U.S. hours, U.S. GDP at 8:30 a.m. Eastern, 7:30 a.m. Central Time. There's a speech from ECB President Lagarde later in the morning, and then that 7-year note auction. Friday, we get the PCE index, the Fed's preferred gauge of inflation. Anton, as we typically do at the end of every one of these shows, we talk a brief bit of education. Head over to tastylive.com, get past that photo of you, go to Learn here on the top banner, Beginner Futures, and you can find this great coursework put together by the fine folks of the Tasty Live research team. Today we're talking contract size, notional, and tick values. The notional value of a futures product is the total value of the underlying asset which we have bought or sold, aka the contract size. Due to their unique physical characteristics, each product is measured in a slightly different way, so gold's in troy ounces and oil's by the barrel, for example. And then the minimum tick size is equivalent to the minimum price increment for a given futures product, which you can learn about by going to tastylive.com, top banner, Learn Beginner Futures, or click the link here on the bottom of this slide. It will take you there directly. Anton, this day is terrible. Let's end it. We're out. Oh no, we're back later with overtime, so the pain continues. I guess I'll see you later, buddy. For Anton Kulikov, I'm Chris Vecchio. Good luck trading. After a brief break, it's Wednesday. Truth or Skepticism, Radigan, Sosnoff, up next.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Are you tired of one-size-fits-all financial services? Tasty Trade is a bespoke brokerage that tailors to the unique needs of your trading style and account size. You can trade stocks, options, futures options, and crypto all on the same platform. Find stocks that fit your criteria and analyze them with studies and drawings on our charts, or keep up on a company's events and performance with our in-platform newsfeed and fundamental data. No matter where you are, you can trade with confidence on Tasty Trade. Place trades and keep track of the markets with ease on our desktop, web browser, mobile, and tablet platforms. Having any trouble? Don't worry. We have the tools and resources to help. Check out the Tasty Trade Help Center to learn about our platform, trading concepts, strategies, and more. Forget the one-size-fits-all financial services and go with the bespoke broker that can help you grow. Learn more at tastytrade.com.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies. And there's a show that I don't like. to be honest, that education piece is highly important. I found that Tasty offered that.
Hello, everybody. We are back. Wow, for another session of Truth or Skepticism on a day when the markets are getting rocked a little bit. Mr. Radigan, S&P's down a C note. NASDAQ down 600. The Russell, they can't even budge that baby. But it's a little ugly out there in the world today. And you and I are going to make it even uglier from what I've been told.
Well, listen, the markets obviously don't like the American transition to the Soviet system of appointed successors and the bypassing of all democratic functionality.
Well, I'm surprised. I'm surprised they don't like it, because it seems like most of the interviews I see with with a certain party are very in favor of the Putin political process.
Listen.
So I think you're already starting off this with a false narrative here.
You think this entire structure is rigged from the get-go, but it's not, and I'll tell you why. Because anything that's said by any of the parties, be it the Republican or Democratic Party, is by definition a self-interested deception to perpetuate the illusion of democracy, while they deliberately bypass all democratic measures such that they can do a Soviet-style appointment of their anointed successor, while they so-called spread democracy around the world to places like Libya, which then turn into slave farms, which currently have Spain and Italy overrun with exiled Africans. Thank goodness the democratic system is spreading democracy.
Oh my God. You must have gone to go get 'em Tiger this morning and had way too much caffeine, because Mr. Radigan, you are all fired up. What is going on? Okay.
Listen, I've had it with the so-called democracy. These people knew that Joe Biden was a full fruitcake.
Who are these people? Who are these people? I'm not sure where you're going with this, but who are these people?
I think we know. I think we all know who these people are. Okay.
So you're telling me that Joe Biden knew that Joe Biden was not capable?
No, I'm telling you that the major corporate interests, so the large financial institutions, the large health insurance institution,
those bastards,
the large real estate institution, the Obama family,
of course,
the Clinton family,
of course,
Jill Biden,
yes, Hunter Biden's notebook, all knew that the big guy, was full fruitcake. And they deliberately chose not to allow a primary process, which would be conceptually democratic. Conceptually. And instead decided to go full fruitcake into full Soviet and simply appoint Kamala Harris, who couldn't win a single forget her lack of whatever. Forget the opinion on her as a candidate. She could be the world's best candidate or worst candidate. I know this is not a referendum on her. Sure. But the very process by which the candidate has been selected is, by definition, a complete, total, and fundamental betrayal of anything remotely resembling a democracy, one. And two, clearly was done with intentionality to try to avoid a primary, because the obvious thing would have been to say, thank you, Mr. President. We're now going to have a primary because you, sir, have completed your time and you're going to go sit on the beach now and enjoy some lemonade. And instead, that's not what happened. And I guess my point is that whether it's that the markets are in a sell cycle, who knows? I don't know that it's actually, the only thing I would differ from you about is, one, I don't think they had time to go through the primary process again. Number two, I think they spared us a lot because with respect to the primaries, because there was nobody else that was even interested in that role. So I'm not so sure.
No. If he had said last summer, I'm out,
But he didn't.
List.
But he didn't.
No, but he should. But he should have.
But he didn't.
My point is.
But that doesn't matter. What your point? He didn't.
He deliberately did.
So this was a plan. This was the plan.
Yes.
All
this
along.
Is a Soviets. Yeah.
Oh.
Yes.
Brilliant. So the plan was all along that he would go. Okay, I got it. I didn't realize there was a plan.
Yeah, it was a plan in order to bypass the primary process so that you don't have a Gavin Newsom, a J.B. Pritzker, a Gretchen Whitmer, RFK, whoever, a proper Democratic Party primary. You bypass the primary completely and anoint your chosen successor while claiming that Russia and China are totalitarian dictatorships and America's a democracy, which is at this point laughable.
And
the markets don't like it, and the markets do not like it.
This has nothing to do. The S&Ps were up 70 points on Monday after this whole thing happened. This is the markets.
That was because they were excited. That's because they were excited the old man left, and then they realized, they're like, hang on a second. That's all well and good that the old man stepped down. That's a relief. But then they realized what had just happened upon reflection, and they realized that they lived in the Soviet Union.
Oh.
And that it.
Oh, it has nothing to do with the fact that Tesla missed all their numbers and Google missed all their numbers and a lot of these other tech stocks, and they just figured out that AI might not be all it was cracked up to be. It had nothing to do with that. It had to do with the fact that they just figured out this grand plan. So this guy with dementia that's losing his cognitive senses.
Not this guy.
Okay. Oh no, it was a grand plan. The whole party. Yes.
It was those people.
Why don't you just say it? It was Nancy Pelosi. It was for sure her and her grand plan because she's the GOAT. So it was her.
But, yeah. Well, thank you for saying it. Finally, at least you're admitting the reality.
Of course.
Which is Nancy Pelosi's calling the shots.
Of course.
We all know that they're all hanging out in order.
I mean, I might be mistaken, but isn't she older than Biden?
Again, Mick Jagger's older than Biden. It's not just a matter of age. Some people age better than others. Mick Jagger can still articulate a clear sentence and dance all over a stage and travel around the world.
I told you. I watched an interview the other day with Mavis Staples. She's 85 years old. She just launched a new single. She's freaking amazing.
Amazing.
Yeah. My mom has
a Tina Turner.
My mom has a one-woman show right now. In Maine, she's 91.
Yeah. So again, it's not about the age, as they say along the spectrum. Age is just a number.
Yeah.
However, some people after a certain amount of time, some people after 40 years, they go full fruitcake. Some people after 20 years. Some people after 60 years. Some people after 80 years. The percentage of people that go full fruitcake goes up as people get older.
I understand.
But that is not to say that you got it. So anyway,
I understand. I'm not sure who of the two candidates. I'm not sure who is in worse cognitive decline, Trump or Biden. But at least one dropped out.
I agree with that.
Yeah, at least one dropped out. I actually think, and I know people are going to think this is insane, but I kind of think there's a good chance that on the Republican side, I think there's a really good chance now that they might just drop J.D. Vance because I think they realize they made a mistake and they might try to dump him. And because I think he's a horrible pick. And I also think there's an outside chance, like let's call it 2 to 3 standard deviations, that Trump drops out because he's in pretty serious cognitive decline. But J.D. Vance, I think, has an even greater chance because I think that they messed up thinking that they had a lead locked in, and so they went for the kill, and it backfired. So I think they have bigger problems, and so I don't, I like all this wrangling.
I agree with that.
I like all the wrangling right now because it makes for a much better campaign. Like, it was embarrassing, as somebody that has a lot of respect for what Biden accomplished in the last 4 years. And I think it's impossible to deny what was accomplished in the 4 years of his presidency. And I think for somebody that has a lot of respect for that, I did not want to see him go out as somebody who couldn't complete a sentence in a debate, or somebody who couldn't, who can't give a speech. It's not the way America should be represented. So I think that your whole premise is actually crazy, and that a year ago, Biden was in a very different place than he is today. And I think that a year ago, he thought, hey, you know what? This is a piece of cake I can do 4 more years. And then a year later, the speed at which he has declined is so evident now that it's impossible. It was impossible to continue. And he's a patriot, so he did the right thing for his country. And that's all there is to it. Don't read into this any more than that.
That is good. Yeah. Okay. I can't even, it's not, I don't want to, it's like I don't want to, you have a comfortable illusion that you live inside of. And
Yes.
I'm far be it from me to try to, to make any efforts to dispel it. But while we're saying things that we think, I don't think that Donald Trump was shot in the ear with a bullet.
Oh, I do. I actually believe that. The funniest thing for me is
a piece of shrapnel or glass, or if an AR-15 bullet hits your ear, you don't get a little cut on the top of your ear.
Yeah,
it is
that's
ridiculous.
possible. I mean, but I also believe that he maybe he didn't know. I don't. Of all the crazy things Trump has done throughout the years and all the tens of thousands of lies he's told, this is one where I actually believe that he got hit with something he doesn't know, and
I'm not saying that. Obviously,
he got hit.
The kid didn't try to.
He got
shoot
hit.
him.
I watched the whole thing.
The
He
kid
got
tried
hit.
to shoot him. The kid tried to shoot him for sure, and something hit him. But I'm telling you, it was no AR-15 bullet. Have you seen an AR-15 bullet? It's like a small missile.
Yeah.
It'll take off. It takes off like half a house. It doesn't slice the side of your ear.
The only two things in the whole world I believe about Trump, and this is crazy, is one, that he did get hit in the ear with something, and number two, that how old is he, 78?
He's the oldest person ever run for president now. Whatever.
Yeah, right.
I don't know. He's way old.
For a 78-year-old, he has a pretty good golf swing. I watched him yesterday. I watched some TikTok videos of him and Bryson DeChambeau playing golf, and he can swing the club pretty good for a 78-year-old. I was impressed. But that's it.
He plays a lot of golf. He plays a lot of golf.
Yeah, I know. So what? It's still hard. I play a lot of golf. It's hard.
So did you see the mashup, the Veep mashup with Kamala, where they do quotes of Julia Louis-Dreyfus, where she'll say, "Words are things that leave from your mouth when you move your lips," and then they'll clip over to Harris, and she'll be saying, "Words are things that leave from your mouth when you move your lips," and you really start to question.
No, I didn't
question reality.
I can't. So
I recommend
one of the only things I can't stand is mashups. Like, they drive me crazy because you could go down a TikTok.
You can do anything.
You could go down a TikTok mashup rabbit hole, and it will put you like into a trance for 100 hours. And I'm like, do not take me there. Do not take me there.
It's like a bad trip. You could lose 3 days.
I'm going to tell you this right now, because I don't want to go off topic, but whoever the hell it was that invented TikTok is the greatest freaking thing in the whole internet. The two best things in the last 20 years, in my opinion, that have been created are TikTok and Uber. Uber is freaking genius, and TikTok is genius. Uber is absolutely freaking genius. Uber and TikTok are the two most genius things on here. They're worth so much more to me than AI ever.
Well, you've been sort of hinting at this. So you're arguing that it's not the Soviet nature of the American presidential selection process,
right,
of the anointing of the chosen successor that's the issue, but rather you're suggesting that it's the tech behemoth's failure to fully aggrandize the glory of AI in the last couple of days of earnings that has everybody a little bit squeamish. Am I to understand you correctly?
Yes.
Do you think that if NVIDIA doesn't deliver next month or whatever it is, that this thing's going to get pounded? I mean, is AI the entire foundation of the market's current or recent position?
Well, I don't want to get into a whole market discussion today because we've been only talking about that. But the answer is that the concentration of wealth creation over the last, since the beginning of 2024 can be traced back to NVIDIA and all its cousins and brothers and siblings and stepbrothers and step cousins. And it's a NVIDIA tree that's bigger than like the Bill Parcells tree in coaching. And so, yes, you can attribute it all back to that. I don't think it's ready to end, but I think it was, overdone. And so this is fairly normal. But no, I'm not comparing us to.
It looks like Trump is just to stay on the topic du jour, however, not because I agree with you. I don't want to get, but it does look like Trump is. I mean, Trump's point is it's easier to beat Harris than it was to beat Biden.
He only said that. He's dead wrong. The hard part for Trump is that Harris can fight back because she's a good speaker.
Because she can talk.
She can talk. And the other problem that Trump's going to have is he is an absolutely horrible front runner. He's a great come from behind player. He was born to be an underdog in any kind of competition because he thrives on getting under your skin. He thrives on being in that underdog role. That is his absolute strength. That's his power. As a front runner, he's incompetent because he doesn't know A, when to shut up, or B, how to focus on the things that you have to focus on. He can't change his story. So he makes somebody else who's then the underdog that much stronger. She has to do less work. And unlike Biden, who was not in the public eye, like he was never out there. There was no such thing as Joe Biden. It was just Joe Biden was a phrase. Okay, Joe Biden didn't exist. Harris, on the other hand, Kamala is going to go out there and she's going to be everywhere. You look at a high school basketball game, she'll be there. She'll be somewhere every freaking day. She's got nothing else. This is her whole life.
She's going to do 3 days a day for the next. She's going
to be everywhere. And listen, there's a bunch of things that the Republicans have survived without really catering at all. Joe Biden didn't speak to women. It was very hard for him because, just because of his age, he wasn't in touch, whatever. Kamala's very different. The Republicans have a very tough case. They're anti-contraception. They're anti-abortion. They're all that stuff. Women do not take kindly to losing control of their own bodies and the things they can put in their body. That is not a cool thing. And that is the Republican platform. And if you don't have women supporting you, and Trump only has a small base of crazies, it's very hard to win an election in this country.
Do you still? So we spoke whenever it was a month ago or something like this, that the market doesn't care if Trump, Biden, whoever wins, that basically that it doesn't matter at the end of I won't review the discussion. You know what I'm talking about.
Sure.
Do you think that still holds true on Harris-Trump?
There's a couple of things that are interesting. I don't think the market cares if it's Harris or Trump, because I do think that either one of those two cases, you're going to end up in gridlock. We're going to be basically deadlocked. There's going to be there'll be split decisions all the way down the line. I think it matters for, Supreme Court appointees. I think it matters on a social level. That's really important, at least to me. I do not think it matters to the stock market. Harris will continue the Biden policies. The market was at all-time highs, and I don't see her changing anything in that regard. I think the market has a lot more risk with Trump only because of the whole tariff thing, which I think is really dangerous to global trade. And I think that's really dangerous to American companies. So I think Trump poses more of a threat to U.S. equities. I think with respect to the bond market, if I think the bond market might treat things a little bit differently, and it'll be interesting to see how that plays out. I think that if Harris jumps into the lead, the bond market will have a little bit more difficult time because she will be more aggressive, and I think Trump will be more focused on really making sure, because he likes to have lower interest rates because he believes that lower interest rates mean lower inflation, and lower interest rates. I'm one of those people that think interest rates need to find a reasonably decent level. I don't like low interest rates because low interest rates to me mean low growth, and the market likes high growth, and higher interest rates mean higher growth. So not too high, but like right around where we are right now.
Do you think Harris? I mean, it doesn't matter. I just don't think that Harris even has. Like, Trump has an economic philosophy, might be delusional, misguided, and insane, but because of his history with all the debt and the real estate and everything, he has a very clear point of view on rates, the relevance of rates, and on the accessibility of money and markets. I don't get the sense that Harris has any opinion of any of it. I get the sense that Harris is will do whatever she's told by the banking elite in New York, more like a traditional politician who's taking order. Like, Trump doesn't take orders from Jamie Dimon or from Powell, whereas most politicians, and it's not to pick on Harris, but almost every other politician in Washington D.C. defers to the banking elite in New York when it comes to any real opinion on leverage.
No, but Trump doesn't take orders from Jamie. Trump doesn't take recommendations from Jamie Dimon or anybody else. Trump only listens to the people. Trump only listens to two people. You have to be a person that supports him with a lot of money. So you have to be Jeff Yaz from Susquehanna, or you have to be somebody like that,
or David Sachs, or Peter
whatever
Thiel.
It is. Somebody, or somebody from BlackRock, whatever. Or Trump listens to his own little inner circle, and he'll have like insane economists like that nutcase
Peter Navarro,
or the nutcase Stephen Moore, or who was his old Treasury Secretary?
Mnuchin.
But not Mnuchin. He's another nutcase. But the other guy that was on CNBC with you. Who's the guy from CNBC? I can't think of his name right now. He was on CNBC with you.
Larry Kudlow.
Yeah, Larry Kudlow. Another crazy. Yeah. That's who Trump listens to. I don't know if Larry Kudlow is still in his inner circle or not, but that's who he's listening to, because those are the people he trusts. But I'm just saying. Yeah. So you're telling me that's better than No, that's not. I'm sorry.
But what I'm getting at is the reason I believe that there was such an effort to bypass any democratic process and anoint Harris and skip any interactions politically is to ensure that the establishment status quo institutions that have the ear of the establishment status quo Democratic Party could retain power. That they wanted to avoid a Bernie Sanders scenario or they wanted to avoid any kind of a primary that
Dylan, I'm surprised you're saying this, because I don't think it was avoiding a Bernie Sanders scenario. I don't think Bernie Sanders was
I don't mean Bernie Sanders. I'm just saying they were
I understand
a loss of power.
I understand. I think it was to protect the unity and integrity of the party by not putting it through that process when it wasn't necessary. And the only people that are calling for it to be, the only people that are saying, hey, it's undemocratic, are people on the other side of the aisle that are scared of what they have to face right now.
It is empirically undemocratic.
So what? The other side of it is it empirically democratic to support somebody that didn't support a peaceful transfer of power, or somebody that supported it and basically encouraged an insurrection, and that's your candidate? So that's what you're going up against? So you want somebody that's undemocratically placed in that role versus somebody that led an insurrection against your own government, and he's your candidate? I mean, my God, what do you know? What kind of argument is that?
I want a proper representative.
Do you want
democracy.
that? Because I don't care. I'm totally fine with this. Save the process. Let's get right to it. Why do you want it? Why do you want to have fighting? You know, you're all against one person or one other side. Why do you want to create a situation where there's no unity?
It's not about no unity. It's what I think. I believe in order to have a credible government, that you need to have a credible process for selecting the leadership of that government.
Okay.
I believe that the reason why the largest voting bloc in America by far is people who do not vote is because there is an ever expanding loss of credibility.
Really?
No,
I don't think so. I think it's that we've created a very apathetic consumer. And if you want to compliment, if you want to find one positive characteristic about Trump, which is very hard for me to find, but if you want to find one positive thing about him, he has, because of his, I would call it insanity, but whatever, he has got more people interested in politics than anybody else in recent memory, because he has stirred up all those people that you're talking about that never voted before. They didn't care about politics or anything like that. They're all fired up now. He got them. So that number is a lot less. That sideline number is a lot less. So he has engaged more people. You know, he's created essentially a viral movement in the world of politics, which, you know, nobody else has been able to create. You want to give him credit for something. He created virality in the world of politics that in my lifetime, I'm not so sure. Like, it was very hard for me to get fired up as you know, as a kid. If I had to, I don't even remember who was in, I can't even remember at this point, you know, who was in every election. Gerald Ford versus who? Reagan. I don't even remember who Reagan ran against in 80, or who Bush ran. I don't even remember who the other candidates are. Nobody was exciting. You know, I mean, Al Gore versus Bush. I mean, who's going to get out of bed for that one? You know what I'm saying? I mean, Obama was the first one to kind of, okay, he's a little different. He's younger. He's black. You know, there's something going on. He's different. You know, and
he's also brilliant. You know, brilliant orator.
Yeah, of course. But you know, there's different stuff going on. Trump fired up a whole different crowd that had never been fired up in 50 years. So he did create some virality, and you know, we'll give him credit for that. He brought people to the polling stations. So I don't think there's as much apathy as there used to be. And clearly people that were never cared about politics or were never involved are involved. And so that's one of the good things. You know, he created a movement.
J.B. Pritzker for VP?
He's not going to be. I freaking love J.B. Pritzker. He is one of the most decent. I know he's
your boy. I know
he's my boy. He's one of the most decent human beings on the planet. He's a longtime advocate of Tasty. He's been here many times. He's a wonderful human. I would support J.B. Pritzker for president in 2028 in a freaking heartbeat. I love the guy, but he's not going to be involved this year.
Who do you think the VP is going to be for Harris?
Who do I think? I think it's going to be Mark Kelly from Arizona.
On the astronaut tip?
I just think it's an important state. I mean, I could be Josh Shapiro. I don't think they'll go Jew, but
I agree. I don't think so either.
But I don't know the guy at all. I heard he's a good guy, decent guy. I don't know. Never seen him talk. I've never known nothing about him really. Mark Kelly, I know a little bit about, but not that much. Seems like an interesting guy.
Can you swap JD Vance and still? I mean, can you do a VP swapperoo? I guess now that
everything's on the table in 2024, everything's on the table. I mean, who cares? You know, what are you going to swap him for?
Vance? Well, now you swap for Nikki Haley. You bring in your your woman.
Nikki Haley is already such a sellout that it's pathetic. Like, what's pathetic. Wrong? Like, I would cut my if somebody called me a piece of blah blah blah, or called my family or my kids or my wife or my dog, whatever it is, all these names, I don't care what you couldn't buy me back or do whatever for any amount of money in the world.
Give a keynote at the convention.
Yeah, I mean, you wouldn't. Trump, there's no chance he would. I mean, if she did, she'd be pathetic.
Who's the Trump replacement in your third standard deviation outlier? Who beats who? If it's rock, paper, scissors, and you can keep swapping candidates till if Trump beats Biden but Harris beats Trump, who beats Harris? Mitt Romney?
No, Mitt Romney's not. Mitt Romney is not in the running. Mitt Romney is done.
Mitt Romney was being talked about for the Democratic position. If they were going to have an open. People.
He's got a better chance of getting Liz Cheney to run with him than he's got Mitt Romney. But no, I don't know who he pick. I don't know. He'll pick somebody who's more of a centrist, and probably a woman. But the problem is, in the Republican Party, I don't know what woman that would be. He can't pick Kristi Noem because, as she's found out, you can't kill dogs in America. I don't care, Republicans, Democrats, or Libertarians. Dog killing is not cool in America because people love their dogs more than they like their spouses. So you cannot kill a dog. So she's out. And that Katie Brick, or whatever her name is, from Alabama, she's a whack job. So I don't know.
What about you got Elise Stefanik? She's a hardcore. She's a New Yorker. She's a reliable New Yorker.
She's a reliable New Yorker.
She can lie with the best of them.
Yeah.
Tell as many lies as you want.
She'll out there.
She'll keep lying. She'll lie straight at it.
She's a good talker. She can talk.
But bottom line, though, for all the political talk, as far as market levels are concerned, you're going to hang on to the idea that the market really doesn't care Trump versus Harris at the end of the day.
No, the market doesn't care. If Trump wins. With
the asterisks on the tariffs, basically.
The only difference between Trump and Harris winning the 2024 election, as far as the market goes, is, and this is just my personal take, I kind of feel like vol will be a little bit higher until Trump gets his picks in place. So if Trump wins, I think the market will stay volatile through November until he puts all the pieces in place of his administration and people see how that plays out. Like, I think they'll be concerned about, whether or not he keeps Jay Powell. He says he will, but who knows? Depending on the moves that he makes, I think the market will stay volatile if he wins for about a month. I think if Harris wins, the market will expect virtually nothing to change. Like, she'd be a fool to change too much. From our perspective in the world of finance, I mean, we're clearly hoping that she gets rid of Gary Gensler because he is the weak link in everything that we see with the Biden administration. He is the weakest link. And there's probably a few others that, that I hope she makes changes on if she wins. But I think the marketplace will have an easier time absorbing what they already know than, the devil sometimes is better than the devil you don't know. And I think that that's the only risk of a Trump administration is you don't know. But I don't think the market will react negatively to either of those two candidates winning, because I think you're going to have gridlock everywhere. And I don't think it will make a giant bit of difference as far as the stock market's concerned. I also don't think that you're going to see, at this point, I don't think that you're going to see very many people in big corporations make a lot of endorsements anymore. I think Elon realized he made a huge mistake and he's backing off of it already. I think others like Zuckerberg just came out and said, I'm not endorsing any candidate, which is the right thing to say in his position. And I think you're going to see a lot of executives and powerful people say, listen, you know what? I'm not going to get involved in this mess. And we're going to...
You know who else it falls into that category is Ackman, who chose the Trump side a couple weeks ago.
Which really
like Elon.
Which really surprised me, Ackman. But Ackman has a tendency to be... He has a tendency to be insane from time to time. You know, like Ackman will go off the deep end, as he's done many times in his career with different topics. He gets all hung up. You know, the biggest surprise for me was probably Mark Andreessen from Andreessen Horowitz. That was the biggest surprise for me. But I don't know the guy myself, so I have no idea. Never met him.
But it seemed like there clearly was like a libertarian Silicon Valley like decision, because it was David Sachs, Elon, Andreessen. They all kind of, but also the calculus surely has changed in the context of Crazy Ball.
Well, because Kamala is also, she's a Silicon Valley, you know.
Yeah, she's one of them. Born in their broth.
So they're gonna like her because they've always supported her and she's always supported them.
For sure.
I mean, Trump gave to her campaign. I mean, people forget about that. You know, Trump gave her like $5,000 or $10,000. You know, like this is not. You know, it's a crazy little world.
That's why I'm saying it's not a democracy, but it is a government. That's all I can say.
Well, I know you have a flight to catch, and this was a fun little fiery chat. I'm sure I'm going to get 10,000 emails telling me to jump off a building or whatever else it is, but that's okay because you know what? At Tasty, our job is to keep people engaged, to keep discourse, to show that we can do it with a smile on our face and we can still be productive. Dylan, have a great trip. I'll talk to you later. Take care.
All right. We'll catch you next week. Thanks a lot, Tom. Bye.
If you missed the live show, here's our cherry on top yearly recap.
I bought a Westinghouse TV for my gazebo outside.
Oh, look at you!
Yes, and I put up Roku. I would watch the game. I got my apps on. Yes.
Can you see it from the hot tub?
Yes,
wow.
yes.
Are you going to invite Tom over?
No.
Yeah, that's going to... There's a spider on my desk. No, kill it. Oh my God.
Where is it?
It's on my microphone.
I don't see it.
Thank you, Bat, for coming to my aid.
You're welcome.
Anton, where's your firecracker popsicle?
Yeah, really.
When did you see that?
On every single Zoom call you've ever been on, you're pounding
I didn't want to spoil
firecracker
it.
popsicle. On any Zoom call I've ever been on with you, you've got a firecracker popsicle rocket pop, and you're not just like licking it, you're literally like biting it off of the thing.
And I don't know who was taking pictures of me.
Anton, if somebody's on a Zoom call and somebody's eating a rocket pop and they're just like biting into it, somebody's gonna notice and somebody's gonna be like, what is going on here?
I'm doing this just for you this one time.
Yeah, you got to put it against your white shirt. There it is.
It's disappearing. You see that? All right. There you go. No, that's all you get.
Oh, but getting back to our soda machine, which does work. It's the greatest feature we have because it makes nice ice cubes. And
got a lot of reports. It's out of syrup by 9:30 in the morning.
I just use it for the ice, and then I get water, which we
you got
a water
ice?
filter.
Don't be showing off. Don't be showing off.
Do you know what kind of ice we have?
None.
Mid-ice.
He learned that on TikTok.
I learned that yesterday. That was my whole lecture. I got lectured.
It's like mids.
I said,
hey, the ice, it ain't bussin'. I'll tell you that much.
I said,
Mickey,
I said we have ghetto ice here, and I got lectured. And I go,
you should get lectured.
We have mid-ice.
Yeah, no cap on that.
So does Tom get to take his paw and stick it with the scoop, or do you just go in and grab it? See,
There's a cup right now. Wait.
Hey, it's not a cup, it's a mug.
No, that's right. We have a ceramic mug that chips off on the ice that you can use, but Tom's already used his hand in all the ice.
And that mug, it's...
Nobody thought about putting a plastic cup in there or something like that. It's a ceramic cup with chips in it.
It's one of the old mugs from like 12 years ago.
Oh my God, has anybody died here recently?
go mode.
Has anybody died?
The ice is so old; it has like that like old ice smell. You know, like the ice that sits in the refrigerator or the freezer.
Mold, Nick. It's called mold.
Like it has like kind of that stale smell to it.
Burn.
Yeah.
Freezer burn.
Yeah, exactly.
Yeah, the ice is freezer burnt. Yeah.
That just means it's colder.
Little cantankerous, but.
And I'm not cantankerous. Why does anybody ever say I'm cantankerous? I'm not cantankerous. I don't even know what that means, but I'm not cantankerous.
Do you want to know what it means?
Yeah, what does it mean exactly?
Bad-tempered, argumentative, and uncooperative.
They laughed.
I heard laughing.
Not
perfect.
I'm not bad-tempered. It's not my design, period. I don't want to be with you losers. All freaking losers. Degenerates. I'm not going to your stupid hat store in Manhattan.
Argumentative.
That's not Empirical Ham.
Well, they say it is.
No, they don't.
You just said she's vegan.
I didn't say vegan.
Oh, she's pescatarian. Okay.
Pescatarian. Never heard of it. Occasionally.
And uncooperative.
No, I'm cooperative. Yeah, what else you need?
Yeah, nothing.
There you go.
Okay.
Beautiful.
I could be
You're
argumentative.
68% cantankerous. Okay, there you go.
Get the full scoop by checking out the archives at tastylive.com.
90% goes to S&P index funds. 10% straight to
Is 20th Century Advice driving your 21st century portfolio? tastylive has joined forces with the CME and SIBO to offer the industry's first multi-exchange trading collaboration. Our new live event, Building a Complex Portfolio, puts active traders on the path to modern portfolio creation. Tom Sosnoff and other tastylive personalities will cover strategies that'll help you integrate futures and options into your portfolio. Sign up at tastylive.com/events and see where we're headed next.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
God, I'm serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. You know, and tastylive in particular because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. You know, that education piece is highly important. I found that Tasty offered that.
If you have any questions, feel free to toss them in the chat.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Today. What is going on? Welcome back to today's assignment. Another Wednesday in the market, another sell-off. Volatility is expanding. It's not so sunny today, but things are going well, right? Dr. Jim, how are we doing today?
Man, I mean, just a flesh wound, right? Just 115 in E-mid S&Ps, 660, 650 in the old Nasdaq there. Yeah, 650 right now.
Yeah.
I don't know, man. Didn't the same thing happen last Wednesday when we were?
What was that? What was it, like a sell-off, or what do you?
Yeah, didn't we have? Yeah, wasn't last Wednesday kind of that first real big drop in the market? I mean, you can bring up the chart real quick and see.
Yeah, here I'm
pretty sure it was last week.
Let me see. Let me go to this daily chart. Let's get a bigger perspective on what's been going on.
It would be what? July 17th.
July 17th. The 17th we have.
No, not June. No, not June. July. Just a week ago.
July.
I think it's that big candle right there, isn't it?
It is. So this is a second leg down on a Wednesday. What's going on a Wednesday, Dr. Jim?
And I don't know. We got some Fed minutes today. What do we got today? Next week is the week. It wasn't supposed to happen today. It's supposed to happen next week.
It was. Hey, maybe we get a bigger move next week. I wouldn't be upset because volatility. This is what we've been waiting on. This has been the story, Dr. Jim. And this is like one of the first times where it hasn't been teasing as much. We got a little bit over here in April, but the other little expansions and volatility were eaten right back up within the next few days. So this is looking good so far. I know it depends who's asking, but I had to wave the white flag on Celsius on Monday, but have SPY right here, Dr. Jim. And I know I should take it off. But what if we keep selling off until Friday, Dr. Jim?
Just famous last words, my famous last words. Because I'm telling you, man, this face ripper back to the upside.
No, I know it's gonna be something serious.
It's taking everybody out. Oh yeah. So you're at what'd you sell it for, and what's it marking at right now?
I sold it. I took in about 226 when I sold it.
Okay.
So that's pretty decent. It's a $5 wide. A little larger than a third, which would be about 166. So it wasn't too bad on that one. Sat on that one for a little bit. That one was going against me when I initially put it on. We kept rallying to the highs, and then I finally got a little bit of a breather. So I guess I'll take it where I can get it, because these other sell-offs, these didn't sustain at all. Will this be the same thing? Is this time different? Who knows? We'll see. But I guess I won't take my chances on SPY, but there we go. We just got filled there. Tell me, why am I so tempted to sell a put spread now on SPY, Dr. Jim?
No, you have to, man. No, you have to. I have to, obviously, but it's like, in terms of the catalyst that's being attached to this move, which, this is anybody's guess, right? But it's like, were Tesla earnings really that bad? Like, were Google earnings really that bad? Like, I don't think so. And so,
Tesla earnings was kind of bad by looking at it. I don't know what the numbers, what they said in the call, what was going on. It's not looking too hot, though.
I guess when I'm thinking about it, and I didn't listen to the call, but I caught some of the highlights in terms of the conference call. The conference call seemed pretty good, actually. The numbers themselves may have disappointed, but when you look at the whole package, it's like, man, I don't know. This seems a little bit overblown. And so I would be very surprised if this sticks. I'd be very, very surprised if this sticks. But the Nasdaq just chewed through another 100 points to the downside. So, man, we haven't seen a move like this. It's been a while. It's been a minute. And, I mean, another thing too is it's like you've got the NASDAQ, rallied on the way up 17,000, 18,000, 19,000, 20,000. I mean, just went through that stuff like butter, man. And so now on the way back down, you have to remember that you're dealing with a higher base. Like you have to remember that now, the NASDAQ being down 700 points is still just over 3%. It's still only a 3.5% move. It's still not like that. I mean, it's a big daily move, don't get me wrong. But it's not like 5%, 7%, 9%, whatever. And so, personally, I think this is just going to I think it's going to snap right back. That's just my take.
No, I hear you. I mean, I'm hoping. I don't know if you're waiting for anything on VIX, but I mean, we're screaming to 18 right now. And the thing is, I was looking at the watch list today on the high options volume, and just most of the tickers that I'm most interested in that look the most attractive, pretty much almost all have earnings. Like 8 out of 10 of them or 9 out of 10 of them have earnings within the next like 2 to 4 weeks. So there's really not much to do. And some of the more popular names, there's some other stuff to do, but the fan favorites, we have earnings soon on all of them. So I'm kind of sitting on the sidelines for that. Even Apple is soon. I don't know if you have any thoughts on Apple and what they've kind of been doing and how their earnings might look, but that's another one I've kind of been sitting on the sidelines for. I can't believe we were talking about it earlier on the Bad Trader stream. Another iPhone is about to come out. I mean, it really does just feel like, man, another one's coming out, another one, and their business model seems to work that way. And I mean, Apple's one that I'm bullish on for quite some time. But in the short term, it'd be attractive to sell, maybe a put spread in here too. Leaning more SPY, but Apple will do. But we got earnings here coming up. But that's all we got over here, Dr. Jim.
Yeah, I mean, I wouldn't do anything in Apple yet. If I was going to do something in Apple, I would wait until next week. I mean, I don't know. I mean, I heard about iPhone. Isn't it going to be a foldable iPhone? Is that the
way
little
no way.
Is that what they said?
No way. You're falling. Are you falling for these prototypes, Dr. Jim? That they
no, I'm just reporting news. I'm just giving you straight news.
Maybe I'm not informed. Maybe they are having some type of flip phone.
No, it's not. No, it's not a flip. It's a fold. That's a very, very big.
Whoa.
Not a flip. It's a fold. Right?
Okay.
Flip is like 1994. Fold is 2024. Now, at the end of the day, it's the exact same thing. But the flip, that's 30 years ago, bro. Come on, man.
The fold. I don't know if that is a thing, Dr. Jim, but I'm gonna fact check that for you, and I'll be right back to inform you on that.
There you go. But I mean, it looks like, man, I'm just looking at this. I mean, NASDAQ down 700 now. That's, man, wow, that's really something. It looks like, the whole market is now, it's on. I mean, we have IBM tonight, I think, and Chipotle tonight. I think it's Chipotle. It's IBM and somebody else tonight. But then next week, it's like, man, everything rests on Apple. Like everything is resting on the shoulders of, Apple, Amazon, etc. So, man, it's if we even get to that mark. I mean, is Apple on July 31st or is it August 1st?
I think they were like August 3rd. Let me double check. Oh, never mind.
Either July 31 or August 1.
Yeah, it's after the bell. After the bell on
August 1. Okay, so next week is going to be wild because we have FOMC on Wednesday. That's July 31st. And then the next day is going to be, is it Apple and Amazon on the same day? Is Amazon on August 1 too? I think they might be.
Yeah, both. Wow.
Man, that's going to be, dude, that's going to be a crazy 48 hours. Like that's going to be an absolutely crazy. And what's even crazier is where are we going to be, 1 week from today?
All right.
Like where are we going to be?
I'll let you know. I'm glad you asked. I'm
very curious. It's like, man, I mean, are we going to snap back? Is ES going to be back at 5,600, or is NQ going to be back to 20,000, or are we going to be below 19,000? Are we taking ES down to 5,400? I mean, it's crazy.
We're touching 18,500 before we're getting to 21,000, a new high, Dr. Jim. That's what
okay.
That's what my intern told me.
Okay, well, and that's why you have an intern. Right? I know this very well. This is the reason why you have an intern.
That's what my future intern.
Because now, if you're correct, you can just say, "Hey, thank you for your research and your insight. I'll take all the credit." But if you're wrong, you can just say the intern took me down.
No, yeah, that's the goal. So I mean, maybe we see 18,500. We'll come back in a week. And maybe the intern will be able to stick around a little longer. But anything other than that, Dr. Jim, we should check out before we get into today's slides.
I don't think so, man. This is just some crazy stuff. I mean, and we've still got an hour of trading left in the day. Man,
are you adjusting anything on your end with the move like today?
Not really. I mean, most of the things I have on right now are of the defined risk variety, and so it doesn't really require a ton of oversight. And I did do a strangle for Google earnings. Where is Google at right now? Can you bring up? I know it's down, but it's not getting like absolutely crushed. I think it's down like maybe 10 or it's nothing. And so the strangle was plenty wide, and I'll go over that tomorrow from theory to practice. And so, I mean, that's the beautiful thing about a strategy like a strangle. I mean, you put your strikes out pretty wide. It's like, man, you can handle a lot of different moves. I did a little something in Tesla, but it was just a short put spread. It's going to be kind of a sit and kind of hold on to it for a while. And then that's pretty much it. I have an MES strangle on, but I still don't even know. I can't remember what my short put strike is. I don't even know if my short put strike is tested yet, even with this huge down move in the market. So.
No, I got you. For me, the only adjustment this week, Celsius, and let me check that out before we actually move on. This one took me as victim too. This one, I don't know what's been going on with Celsius, but I mean, I'm glad I managed my position when I did, because we sold off so much. I almost didn't really want to, but I was like, you know what, we're down 2 times the credit I received. I might as well just get out. And if a different opportunity pops up, just re-enter that trade. So I did end up getting out. It was a naked position. And then today we sold off to another new low. So, I mean, I'm glad I managed the position and didn't hesitate to do that. But Celsius has just been getting hammered. I know this one has been kind of been bagging a lot of people, and then got out a little early because, again, it was naked. So I had to be more proactive on managing that one since it wasn't the defined risk position. But that's all we got. That's only recent things that I've done. Some SPY, probably get into another SPY position soon. Wait for some of these earnings. And then, I don't know. I'm excited for volatility to expand, but this market's been volatile and I'm not complaining. But that's it.
Well, yeah, but wait. Well, hold on a second, though. Yeah. Why would you, if you want to trade SPY, why would you not trade SPY today? Today's the perfect day to do it. Why would you wait for earnings?
No. I'm not necessarily waiting for earnings. I'm going to wait for earnings in terms of, I know I said I'm not going to trade earnings, but with some of them coming up, I kind of want to maybe trade a little small defined risk position. I want to throw in some more.
He's back. No, you're bad. No, I mean you can dress it up however you want to, but
don't take this the wrong way.
I'm back. That's what I just heard.
Don't take this the wrong way, Dr. Jim, but volatility is a trader's best friend, and things have been pretty volatile lately. So, but anyways, I know you don't like Celsius, but we can go ahead and jump to these slides.
Definitely don't like Celsius, so it's good to hear that you
I don't know why. So wait, good. Why do you?
I'm encouraged.
Do you? So as we all know, watching the network, Dr. Jim stays in the gym. Do you use pre-workout, or do you ever take pre-workout, or what's your thoughts on that? I didn't think so.
I take too much pre-workout.
Oh,
I love pre-workout. I drink pre-workout like for my
You're talking about
bedtime.
No, you don't. You're talking about coffee, huh?
No, dude. I'm taking the good stuff, man. I'm taking the real good stuff. Don't you worry about what I'm doing for pre-workout. But I'll tell you right now.
No, you don't.
It's not Celsius. I'll tell you right now. Celsius
it's coffee.
A time beverage.
It's coffee.
No, it's
coffee.
Not.
You're considering that your pre-workout.
Dude, no, I drink coffee as my warm-up set for the actual pre-workout.
There's no.
So coffee is.
I feel like you don't drink pre-workout.
Gets me started. I drink all kinds of.
You're giving me very dad vibes right now, where they just keep joking and joking and joking. You don't know if they're being serious.
Oh, that's what my kid. Oh, dude,
that's what it feels like right now. It's like, are you being serious? Do you do pre-workout?
That's so good.
My dad right.
No, I love pre-workout. Absolutely love it.
All right, all right. We'll jump into these slides. Managing emotions. Volatility is a little higher, Dr. Jim. Volatility is increasing, fear is increasing in the market, and that might make some people a little bit more fearful. And whenever emotions tend to be a little higher, we could be a little bit more impulsive or just start recognizing those emotions coming to the surface. So thought we'd kind of touch on this for today. But emotions, they can cloud judgment and lead to impulsive decisions. Why? Impulsive decisions. I mean, just when fear is higher, that uncertainty really rises in the market. And I think the VIX and that little meter does a good job of kind of describing those kind of things. And then another thing, I know, again, when I was back on the Where Do I Start series with Tom, putting on some of those defined risk positions helped with more so impulse kind of decisions. It was more so you had a straight checklist. How many more days are left? Are we at our profit target? Are we at 30, 40, 50% of the credit received? So there's like kind of a checklist we can go down and tell ourselves yes or no to consider when to make a decision. And I think by kind of approaching the market that way, looking at IV, is this still worth being in? Am I at a max loss? Excuse me. Am I at a max loss already? Might as well just hold this till expiration. So like considering all those kind of factors and knowing that beforehand helped with, emotions, when emotions rise, and making a decision that way. Then managing emotions, traders can maintain a rational, objective approach to decision making based on analysis and strategy rather than reacting to fear or greed. An objective decision making. What does that even mean, Dr. Jim? What is objective decision making? Is that just kind of weighing your options, not being too married to a stock? I don't know if you've heard that term before, like getting too married to a specific position or underlying, but what would you say about objective decision making and managing those emotions?
Yeah, so when you just think about objective, being objective or being subjective, those are kind of the two categories when it comes to decision making, at least within this context. When you're objective, you're actually you're able to look at things, analytically. You're able to look at things in kind of an unbiased way. You're not necessarily, cloudy with your judgment, which is something you just talked about a couple of minutes ago. When you're subjective, now you're really emotionally tied to what's going on. Now you're not necessarily able to make the best decision because you do feel some kind of personal connection to, the trade, the position, the move in the market, whatever it might be. And so it can be really, really difficult. I personally think that it's impossible to eliminate your emotions. That's just not a realistic outcome because we're human beings. Like we're human beings and we're constantly managing, just a bevy of emotions on any given day. You've got hope, you've got fear, you've got greed, you've got, confidence, overconfidence, underconfidence. You have all these different things that are happening all the time. And so, we're trying to control them and manage them and maybe minimize them, but you can't eliminate them. And so I don't really think that's a good end objective to give to people. But the only way, and you know what I'm going to say here. What am I going to say, E? There's only one way. There's only one way to be able to be objective with your positions, and what is it?
One way to be objective with your positions. Only one way. Where are we going with this? Give me 2 more seconds. One way. Repeat that one more time. Can you use that in a sentence? I feel like I'm at a spelling bee right now.
Sure. Yeah.
Yeah.
Well, there's only one way. If I'm a trader, right?
Okay.
And I'm in the markets and I'm actively, doing what I do, and I do it, kind of the tasty way where I'm selling some premium.
Right.
Right. The only way that I'm going to be able to maintain my, my objective ability to process things and make good decisions is if I am what? Fill in the blank.
Is if you are objective. Blank filled. Is no. If you are
blank filled with one of the words that's in the sentence. No. It needs to be its own word. This thing needs to be a standalone entity.
Okay. Is if
man, don't overthink it.
I'm overthinking already. What's gonna make you objective?
I'll tell you what. Why don't you sit on it? Because I think you might even have this on one of the later slides. Why don't you go to the slide for us?
Okay.
What do you got? What do you got?
We'll circle back around. All right. Yeah. We'll circle back around. We'll jump to the second slide here.
The only way to be objective is to make sure that I am objective. Earl Coleman, July 24th, 2024. That's it, man. I'm putting that in the office, dude. Like, yeah, I need to remember.
Love that. July 24th. Things change, Dr. Jim. The market can be pretty dynamic and conditions can change very quickly. I mean, just like we've seen over just like the past week or two. Emotional control allows traders to adapt to changing market conditions without making impulsive decisions, touching that on the first slide. And it helps them kind of stay focused and in their goals and adjust strategies as needed. And I think that's something that has helped me, is just kind of focusing on the bigger picture, especially when it comes to an individual trade. I know if I'm putting too much emphasis on one particular trade, either one, I'm just losing perspective, or two, I potentially sized in more to that trade if I'm putting so much weight on that specific trade, because I really shouldn't treat one trade with more emotions than another. They should all kind of just be the same to you, and one not have more weight, excuse me, to your emotions than another trade would. So I know if I'm doing that, I know I messed up somewhere if my emotions are being tugged in all these kind of directions throughout the duration of the trade. But really just, things change. The market adjusts. The market sells off. I had to get out of my Celsius position quickly. I have to roll down iron condors, do these kind of things because things are dynamic. So we have to make decisions as we go on. What were you going to say there, Dr. Jim?
Well, no, I mean, you nailed it, right? You said if I
did I answer the question?
You absolutely made. You answered the question. Like if I'm impulsive, if I've got too much going on in one trade, you said it yourself. That means that I may have oversized into that trade.
Right.
Like once again, that's it. That's the only way that you can remain objective. Right? If you're constantly trading with max leverage and max size and all these different things, sure, maybe there's a time and a place for that. But man, if it's like your go-to, there's just no way that you're going to be able to maintain objectivity from start to finish. There's just no way, because it's just going to be, the emotional roller coaster is going to be way, way, way too significant.
So what is it? Is it just I mean, we talk about this so many times, position sizing, and how position sizing is the answer for most trading related issues. Is position sizing the way to really control the throttle on those emotions the best? I mean, even just, staying objective. When emotions are so high, I don't know, if we have a smaller trade on a $1 wide, the market tanks, that's probably going to get a less reaction out of me, or that's probably going to get me, it's not going to really tug me in either direction. So I mean, it does seem like position size has a lot to do with, when it comes down to emotions, and less of the position itself, and more so tied to the capital we put into that trade.
Yeah, I mean, it's 100%. It's 100% the answer to something like emotions, to something like managing emotions. Like when we're talking about other things like, being successful and finding winners and managing your losers and like adjustments along the way, that has a lot more to it than just size. When you're talking about managing emotions specifically, I think it's really, really, really all comes down to size. I really, really feel because I believe, again, if you're small enough to where, a day like today, you get a day like today. I mean, even if you're small, it's probably going to rock the boat a little bit. And that's going to happen. I mean, that's what you're signing up for. So you're not going to be able to, just avoid these things 100% of the time. But if you find yourself constantly swayed left and right in ways that you weren't expecting, then that's almost always going to be a size issue. And that's almost always going to be something that you can improve on to help kind of control and mitigate these emotions.
Yeah, no, definitely. We could jump to the third slide here. I did answer the question though. What was the sentence again?
I mean, it did look good there for.
What's the best way? The best way to be objective is to be objective. Is to manage your position.
That's correct.
Size. Yeah, there you go.
That's right.
All right, we got last slide here for managing emotions. Emotional responses, particularly fear and greed, can lead to the same things again, such as panic selling during a market downturn. I've done that before. Chasing profits in a rising market. I've done that before. That was one of my first trades in Riot. Perfect example. And these impulsive moves can lead in poor trade outcomes. Again, this just reminds me, right? I learned so much on that Where Do I Start series. Again, one of my first losses was in Riot when crypto was absolutely skyrocketing. Mara, Riot had such a high correlation with crypto at the time. And because that was happening, there were so many new people getting into the market, just buying. I'm like, okay, I'm not new to the market, but I'm brand new to selling premium. Let me do what everybody else is doing. Let me just buy. Everything's going higher. And I do that after Riot went on a massive rally. I think I sold it wasn't even a simple strategy. That's how you know Tom threw us in the deep end. It wasn't even like a put spread, or it was like I think I did a diagonal or something crazy that a beginner wouldn't typically be doing. But I did something like that, bullish to the upside. I paid a debit for it, I remember, and then I think I literally bought the high. But that really did come down to like, okay, everybody's doing this, and I'm kind of just getting in here, so I was kind of chasing some profits there, and I learned from that a little bit. Not that I could have known what the market was going to do anyways, but it was a good example, chasing some profits. But anything to add on this last slide for today, Dr. Jim?
Well, that's always a very interesting experience. Like when you have like today, of course, is a really, really good example. And all right, nobody knows what's going to happen next. I mean, maybe this is the beginning of a nasty bear market. Maybe there's more continuation to the downside. Maybe this is only the beginning, all those things. Most likely, though, this is going to be, if you're looking for an entry point to get long, like this is probably not the worst spot to get long. It's much better than buying at 21,000 or buying at 20,800, in my opinion. Right? Like I understand there's momentum traders. I understand you're buying breakouts, you're doing all that kind of stuff, and hey, maybe it works. But generally speaking, if you think about, the goal of the stock market to just, the average person, the novice investor, is to buy low and to sell high, right? And what's interesting about that is if you actually try to do either one of those things, it never feels like the right thing to do. Never. Take today, for example. Does it feel like the right thing to do to step in and buy right now? Not exactly. This looks kind of nasty. It's like, man, I kind of don't want to be a part of this. But this is most likely a good opportunity to buy. Now, again, I don't know. Maybe it's not. I mean, nobody knows. Yeah. But the other side of it is also true, right? When the market's just taken off and the market's just, can do no wrong and it's just shrugging off all the news, it's shrugging off all the whatevers. It's like, man, you don't want to sell your winners and you don't want to get short on some new positions, but that's probably the best time to do it. And that's what makes it such a difficult thing to master because, you got your FOMOs and you got all your other things going on. It's just, buying low and selling high. It's very easy to say. It's very simple to put on a bumper sticker, but it's very, very hard to actually do in practice.
And now that you kind of bring that up, how it's kind of difficult to do that, it almost seems to like, especially when you're trading a little less directional, maybe you're trading or you're selling premium, kind of taking into account how volatility tends to contract. Not to say price has to do that or has to have the same type of properties that volatility does, but it almost like understanding volatility can make you feel a little bit more comfortable on selling some of those positions, for myself at least. Not to say I know what price will do, but if I can understand that volatility may contract because it tends to do that, it might help me pull the trigger a little bit, or it has helped me pull the trigger a little bit on some trades whenever volatility is a little higher. But that's gonna
exactly. Yeah, exactly. Yep.
No, that's gonna wrap it up for today. Managing emotions. Thought this one was a pretty good one. 2 back-to-back Wednesdays with some massive sell-offs in the market, larger than we've seen in the past few months. It's been a little while, and then now we have volatility really increasing past some levels we haven't seen in a hot minute, and I'll put it that way. But anything to add on today's segment, Dr. Jim, before we head on out of here?
No, man, it's some good stuff. And yeah, another crazy Wednesday. I mean, last Wednesday was crazy. Today's crazy.
Yeah.
And I mean, it's because I mean, every week, man, you challenge me. Every week I learn something new. And now I know if I really want to stay objective with my positions, I just need to make sure I'm objective.
Just be objective. To stay objective. I mean, it makes sense.
I mean, when you put it that way, it's so.
When you put it that way, it really makes sense. Before we head on out of here today, have you seen anything on the U.S. Olympics men's team for basketball?
Basketball? No, I haven't.
Yeah. You haven't.
Didn't they almost lose to like somebody like?
Whoa, key word. Did they win or Dr. Jim? Look.
Come on, man.
Out I know you're not from the generation that gives out participation trophies, so this is really surprising to me what you're saying right now. A win is a win, right? Especially in your generation.
No, it's not, dude.
Absolutely.
The U.S. men's basketball team. No. We're putting asterisks. We're putting parentheses.
What?
They're all No. If you're the U.S. men's basketball team, dude, you better be just crushing.
Okay, but
you better be just dominating, just making people look silly.
They have a 60-year-old man doing all the work. What do you want the man to do, Dr. Jim? We got a 60-year-old man.
I'm just saying, it's like was it South Sudan? Like, now I know North Sudan's got a pretty good ball club, but South Sudan, like, man, that was almost not good, man. That's all I'm gonna say about that.
All I'm saying is, it's making a case for LeBron. The career's not over. That's all I gotta say. I don't mean to pull any strings right now here. I know we got a lot of people in Chicago that are viewers and a lot of Michael Jordan fans, including Tom. But I don't know, Dr. Jim. Things aren't looking hot for Michael Jordan after this man retires. But we'll kind of leave it at that.
All right. Well,
you were sitting kind of quiet, so I had to see. But no, that's gonna wrap it up for this assignment. Dr. Jim, we always appreciate you having you in the teacher seat over here and adding your input as always. So thanks for taking the time to hang out with us today. Be sure to stay tuned for Tim Knight coming up next. We'll catch you guys next week. Peace.
Peace.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I started trading around 2018, soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Well, hello, Tim Knight here, and what a red day we've got. Just last Tuesday night, 5 trading days ago, I was ready to just throw in the towel. It's like, there's no hope. The insanity is going to rule. Steve Eisman, Mr. Big Short, declaring that shorting this market would be insanity. Those were his exact words, which was like the millisecond the market topped. So I figure, like, if Mr. Big Short, who's got a lot more money and success than me, if Mr. Big Short has raised the white flag after everybody else, there's no more hedge funds that do shorting anymore. Everyone's given up. So you got Tom Lee prancing around talking about 8,000 on the S&P. You've got Steve Eisman saying insanity to short the market. It's like, I guess there's just no hope. There's just no hope. Madness will win. Well, I've done this long enough to know that when I'm feeling that down, it's probably time to sell everything you've got and just buy puts, which is close to what I did. And it has been a massive turnaround in the market, because I'm here in the Silicon Valley. I'm surrounded by insanity. I see people just out of college getting paid $1 million by OpenAI, and I know these guys. And what do? They enjoy the catered meals, blow in whenever they feel like it, chit chat, blow in whenever they want. And it's like, that's not a sustainable business model, I don't think. Paying people 7-figure salaries to sit around and shoot the breeze and eat and then go home. It's not I don't know if Steve Altman's really insecure or his husband's telling him to do this and hire everybody you can or what, but it ain't working. It ain't working. And there's an article kicking around today saying if they don't raise more money, they'll be gone in a year. Of course they won't, because Microsoft will keep throwing money at them, I suppose. But it's really heartening to see a little bit of sanity, which is my stock and trade, come on into this blighted world. So everything's going as God intended. It's just beautiful. Semiconductors getting blasted to smithereens. Charts absolutely friggin' perfect. Absolutely perfect. This is one of those shows I wish I had 3 hours with you. Go to slopeofhope.com if you just want to hang out with Tim. That's fine. But I'll make the most of the time I got right now. So it's going beautifully. And, the only thing, all right, not perfectly, the only thing that would make me beyond giddy now is if precious metals were still up a lot. Earlier, they were doing pretty good. Precious metals, silver, gold, they were the only green on the scene, which is great by me because I'm all about long, precious, short equities. That's me. Gold's up a little bit still, It's the only green left, and not by much, and silver's down about 0.2%. So that's kind of a shame, but I haven't given up on those fellas. They're not doomed yet. They could still, maybe they're just like bleeding out because of all this selling going on, but I haven't given up on my friends in precious metals. But the other stuff's going great. And what I had expressed in recent days, on Friday in particular, was that as we approach major support, it's like, this is what I want to happen. I want us to rally and get back up to that cute little top and then get enough momentum to break the midline. And that's exactly what we did today. And that's terrific. And that's exciting. And, a lot of people were seduced into like going all in July because they rolled out the stats and say, well, the past 370 years, every single July is up. Wow. Mr. Eisman is right. You would be insane to short something like that. Those statistics don't lie. There's something magical about July. And I would contend that there's no statistical data, historical precedent is meaningless now because $36 trillion in debt and this AI insanity going on and the valuations we're seeing. I don't care about the past 900 Julys. This is July 2024. And the irrational, discerning, logical, empirical information that I examine says like, oh my God, this is so overpriced, I can't even believe it. So that's where we're at in my estimation. And, I guess there will be places here and there to cover. I've regretted any covers I've done so far. I'm still very, very, very short. I've gotten impatient. This morning I was short Netflix. It was the only thing showing a little bit of a loss. I'm like, oh, I can't stand Rand. I get rid of it. And of course, Netflix just barfed all over the place after that. So I was kicking myself for that. But I've held on to everything else. Got 12 bearish positions, 2 longs, that is gold and silver. And everything's doing really well. So in the 8 minutes we have left, let me just jump into the charts, and I'll try to go swiftly. But like I said, come visit me elsewhere if you want more chart stuff. All right, here's the spider. We're below the midline. That's exciting. We blasted above it here, and uppity, up. And then here's our cute little top, because everything changed last Wednesday morning. That was the first good news bears have had since the Pleistocene epoch. And we reached support. I'm going to need 2 hours. We reached support on Friday, rallied Monday because everything's on sale. And then we rallied a bit more yesterday. And that's when I went hog wild with the rest of my buying power, buying puts. And then today, barfitude, down it goes. The cubes are getting particularly hit. We have a gap here. We have a gap here. We've plunged past this gap. Down it goes. Tech stocks have never been more overvalued. And, these are not valid business models. To these college graduates getting CS degrees, God help you. Be a plumber. Be an electrician. You'll never go hungry. CS, God help you. You're going to be debugging COBOL or something. I don't know what. You ain't going to be Zuck. So stop having your parents harass you. SMH, this one I took profits on just because I have so many semiconductor shorts. I don't want to be absolutely unhinged. I mean, I've already got puts on Micron and on NVIDIA, big positions. I took profits on SMH. It has closed the gap, and so I'm out. And so, yay, it was a great profit, but I don't want to be, I don't want my entire life to depend on like what NVIDIA does. Tesla, as God intended, once again. What did we talk about yesterday? Our old friends, the Fibonacci's. These have worked for months and months and months and months and months. And I had some insider information, not really. Those of you who read my post today know what I'm talking about. But I had some very subjective, emotional information that I concluded that things aren't going to be so great with the conference call, and that's good that I figured that out because definitely sidestepped some major losses there. Long story, but Tesla getting zapped, and this is just about where it's probably going to round about here. I've called for a long time 213.01 being support. We just about got there today. We have unwound 2 or 3 weeks of gains. It makes all the sense in the world. Absolutely makes sense. So yeah, terrific. I also yesterday said Google, although I didn't feel strong about it because the stock is really boring. The chart is, at least. I figured it would go down. That was my patented dumb guess. That guess was correct. Visa, even more boring. Also down hard, over $9. So I think it's beginning to dawn on people. You know, they get conned by Powell doing his shtick, but then the earnings reports are coming out. It's like, this isn't so good. You know, and as you get a critical mass of these, it's like, oh my God, you know, generational top time. So, you know, you don't have Powell giving all these conference calls and all these earnings reports. And these CEOs are storing AI this and AI that. It ain't working. Bloom's off that rose because, you know, what letters are going to replace AI in the vernacular? ROI. We have $5 billion worth of NVIDIA. What good has it done us? None. Huh. All right, well, we'll insulate my barn house with them, you know. So it's people are starting to slowly wake up. Like 0.1% of people are starting to realize that this ain't so cool. Potatoes. This is a company that does like French fried potatoes or something like that. Absolutely nuked here post earnings. But eggs are doing great. Remember old friend Calm? If there's one stock I've been persistently bullish on, it's this boring thing. Cal-Maine Foods. They sell eggs. God bless them. Omelets, crepes, scrambled eggs, you name it. That's all they do. And they're doing great. Why do I like this chart? Because I like the chart. I don't know anything about the egg business. I have chickens. I grow my own eggs, as it were. But the chart's beautiful, just like gold is beautiful. And so it's doing well. So yay, Calm. GDX, it's up, but it's not, you know, I get and think some of the assets here, like I say, I want precious metals to have a mind of their own. I want them to like shake off equity blues and just move higher and recognize that the US dollar ain't worth one ply toilet paper. So, but they need a little time. I think this is a patient trade here. So as we look at GLD, you know, it's up like 2 pennies right now. I'm going to be a little bit loose with this. There's my stop right there. Try to be a little bit patient with it. We'll see. Silver getting hit a little bit here. I'll get out of half if we break this and the other half down here. I'm trying to hang in there on those. You've seen some of these charts before next, but I've added some positions, so I want to just one or two new faces might be in here in terms of these short setups. And I've started to kind of like scrape the bottom of the barrel for stuff whose options aren't so terrific, but still whose charts are so appealing that I just can't help myself. So in alphabetical order, we've got Archer Daniels Midland. We've got Abercrombie and Fitch, like so. And I'm just zooming in so you can get a better view on these. Here's a new one, Aon, A-O-N. Not very heavily traded. You can see the little grade up here, D. Not so great in terms of volume and options volume, but this has got a nice price gap. And this is, I bought, I think, January, if I'm not mistaken on this. I'm going to live lots and lots of time on AON. Our old friend EWZ, down again. Some of you wrote me nice thank yous yesterday on that. I'm glad that's going well for you. Micron, MU, down nicely. It rallied earlier today, sealed up the gap. I'd like to hang on to this until we get way down here. Where are these lines coming from? The gap itself is right above the green right there, so that's not really to the penny, but it's close enough. Of course, NVIDIA. I'm not showing AMD, by the way, but this is, I think, illustrative of how brutalized the sector's become. AMD has lost 1/3 of its market cap in the past few months. And NVIDIA has lost, I don't know exactly, but something like $600 billion in shareholder value in a matter of just days. What was Justin Wong doing at the top, besides the tattoo? Selling NVIDIA to these poor, hapless folks who are like, I want to make money too, and bought NVIDIA at the tippity top. And Jensen Huang gets in his one of his Lamborghinis and blasts away. So there you go. NVIDIA getting clobbered, and I think it's got a lot more clobbering to come. My view is that this could get down to the double digits before this is all over. So we've already lost a lot, but I think there's more to come. On semiconductor, forgot about that one. That's a relatively new one. ON. It's not as saucy as some of the other ones, but it's a nice rounded top. UPS. Do I still have it? Yeah, I've got a little position still on that. It's gotten so battered that I took some profits on that. It's still, the options are like up 130%, but I've backed off because I don't, I'm looking for stuff with juice in it. This one's kind of gotten zapped. Here's a new one. Just got this one early this morning. Also, well, this is totally, I've never traded this in my life. Vistra, VST, down nicely today. Look at it curve away from that gap. Very, very pretty. And then finally, back into XHB. You've seen this many times. Pressing against the top of a multi-decade channel. Absolutely lovely. Just terrific. Terrific stuff. Okay, well, there's more earnings tonight as we wrap up here. I'm not in any of these. You've seen my positions already. ServiceNow is one of them. This will help inform, I think, sort of the tech zeitgeist. It's very tech. It's rather richly valued. A real wipeout here would, I think, exacerbate the selling for tech in general. Hey, I did so well with my dumb guesses yesterday. I think I batted 1,000 yesterday. Dumb guess time. I think it's going to go down. Just a guess, but no position. IBM. These guys, I don't know. Let's say down on this one too. They always have these kind of accounting, sleight of hand, cute stuff. I don't know how they do it, but yeah, let's say down on IBM too. And then CMG, and I'm out of time already, forgive me, but let me just say one last thing, then I'll get out of your hair, for those of you so adorned. This is a great example of don't get fixated on like stock splits meaning anything in terms of value, because SCMG was up in the thousands for whatever reason. The big news came that they were going to split their price. Finally, I think the first time ever. The little guy can get in. Yay. The split took place here, right here. And then split don't mean nothing. All split means is you get out your calculator and you divide it. It doesn't mean anything about the value. This is not the days of odd lots anymore or $200 commissions on stock purchase. This is not 1968. Stock splits and such. All right. Well, I hope you're doing all right. And this is an exciting week. And I'll see you here tomorrow with more charts and pulchritude. So take care. Bye-bye.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all freaking losers. There's no skill.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
My favorite time to read is when I'm away on vacation. I'm on like an island somewhere and I have nothing to do except sit under a hut. That's my favorite time. But I don't see that happening anytime soon.
You believe this shit? The favorite time you like to read is when you're under a hut on an island. That's pretty specific.
Yeah.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Oh, yeah. Tasty Nation, good morning.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. But, well, the last call, my friend. It looks like the last call, well, last one to leave the room, please shut off the lights in the E-mini S&Ps. They're down 115 right now, 116. They haven't had an uptick all day long. That's about a 2% move in the E-mini S&Ps. NASDAQ down 3 1/3, Sosnoff, 664 points. And they, too, have not had any type of uptick, and you can see here by volatility expanding across the board, which we will get to in just 1 minute. Russell down 33.60. The mighty Russell is only down 1.5, about half as much as the NASDAQ and almost down as much as the E-mini S&Ps. But the Russell really held its head up today. Volatility, you can see here expanding. I have short delta in the Russell, and I'm making pennies on the amount of delta I have, not helping my overall cause for the rest of my long positions that I have. Dow down 400 and change. And there's the mighty Russell. There's the mighty volatility up $1.91, a 13% move. You can see that bar sound. That's one of the biggest volatility moves we've had all year long. Probably the biggest, if I had to guess.
There you go. I just bought in just now. I bought in some NASDAQ futures. Down 660. That's a hold for me.
You most certainly did. Good hold.
Waited all day.
And your NASDAQ Russell spread.
Manster.
Yeah, Manster.
Manster. But
You're in the chips now.
Oh yeah.
I mean.
Oh yeah. Now this.
You waited and waited and waited for a year.
Yep.
You're in the chips now.
It's finally positive.
You big swinging right now. You're all good. You're all good. And now you did it in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 sessions. This is classic Sosnoff trading right now. You were able to hold out for 16 years and you got back to even, and now you're up money. Now what do? Do you make the classic Sosnoff mistake and stay with it? Or you just go back to the man I know and love who trades them like a god?
I think I can take off a little bit here.
All right, good for you. Good for you.
Not a lot.
I think I talked you into it. I think you had no intention to do anything.
I didn't really, but I'm going to take off a little bit because
just that moment.
I kind of think that maybe for like day, it's
day.
I took a little bit off. I took off.
You got low D over there.
Oh, I do? Okay. I took off one tranche this morning, 300 points worse.
I remember.
And I just took off one here at the best price of the day. So that's all right.
Good job out of you.
Yeah, that's it.
Man, the myth, the legend, everybody.
Yeah.
Tom Sosnoff.
Yeah.
Sosnoff, let's take a look at what's moving this market lower, because there are a lot of stocks moving the market lower, and there's some big numbers here. We started the day with bookings. It's still up there. 88.88. Sosnoff mean anything to you? Probably not. Tesla down $28. I think that means a lot to a lot of people. $218 in Tesla. It's a huge move
I haven't done anything in Tesla all day. I have a couple of positions in there. The IV rank stayed kind of high.
Yeah, I mean, it all for a post earnings play in Tesla. Yeah, for sure. Volatility.
I have one set of positions left on in there. I'm going to take them off right now. They finally some short call spreads that I didn't cover all day. It's small, but I feel like time to take them off. All right.
Feels like it's the right time.
I can't believe I waited all day.
You probably forgot about it. That's why.
I did totally until you just mentioned it.
Meta down 24.
Would you put anything on in Tesla here, premium wise?
I would, and I want to tomorrow.
The one I kind of feel like you got
option trades today every Tuesday and Thursday.
Yeah, I think a 16 Delta Strangles in order.
September, I'm assuming.
In September, 185 calls, 185 puts.
270 call.
270. 270 call.
$52 away on the calls, and you're a lot closer on your puts.
Yeah. Do you move the puts at all? Calls a little weak. Market's weak. Yeah, you move the puts down to 80. 720.
No, you would leave the puts right where they are with that logic that you just said. Market's down a lot, stocks down a lot. You would leave your puts where you are. You would not be getting short Delta. You'd be keeping them right where they are. Come on, show some intestinal fortitude. I texted her. She said it's okay. She said the amount of buying power, the original spread. Okay, yeah, it's $300 more. Can you do it?
Filled. Put a fork in it. Filled. What else you got?
Johnny, you'll be rolling up puts tomorrow. Such a sissy Mary. What else we got? Meta down $23. Costco down almost $20. Microsoft down 15. ARM down 12. Qualcomm stinks down 10 and change.
I have a weird meta position. I can't even figure it out.
How about the Bucker side? Enough. Usually this is where I would see your Chinese stocks. And I don't see any of your Chinese stocks today. They didn't come for them at all.
They did this morning.
Yeah, I mean, they weren't down that much. They're still not down that much. I mean, Baidu's down $1.40. I mean,
I didn't add to any positions today. The only position I just added to it was I did some ratio spreads in the bonds. I was very active today. I don't know if you were. I'd made 120 trades.
Yeah, you were a lot more active than I was, but I have good positions.
I should lay those NASDAQ futures back out right now. Just up 35 handles on them.
You don't make 35 handles like
you don't make 35 handles like
ever.
Yeah. like seriously, 30 handles. Boom. Give them to you, Johnny. Let me see for a quick second.
My Taiwanese sources says they have a stupid amount of F shares, and they would like you to support them. Ford has earnings after the close today. Your support would be appreciated, is what they said.
Ford has earnings?
Yeah. Ford, NEM, Las Vegas Sands, AAL, RCL, IBM, CMG, same order.
What does your source have? They're long Ford?
Yeah, they're long Ford. I know you're going to look at it and say, well, why aren't you out already? I mean, the stock's $13.66. The stock was $11 2 weeks ago.
No, I can't trade Ford. I don't know what to do in here.
Sorry, Taiwanese source. He can't trade Ford. He's not going to support you. He cannot put his hat in the ring for you.
I seriously, I don't know what to do.
Tom, we are all delighted with your NASDAQ rut success. Enjoy the lap of honor. Spare us Johnnies that couldn't hold it. So true. I love you guys out there. I really do.
Yeah.
I don't want to say his name because you probably know who it is. I don't want you to get mad at him.
That's okay. Looking at some stuff. I'm cleaning up some messes here.
Cleaning up some messes where?
What?
Who?
Huh?
Ford, NEM, Las Vegas Sands, you have a position in. AAL, RCL, IBM, and CMG.
Okay, you ready for my positions?
I sure am.
Hang on, I gotta just add something right here. Perfect. Okay, now I got my position. Perfect. Okay.
Sorry, did we interrupt you?
No, got it. What do you want to know? I'll tell you everything I got.
Do you want to do anything, or I need to adjust anything in any of those earnings?
Give it to me one more time.
Ford,
nothing.
NEM,
Nothing.
Las Vegas Sands.
Small position, Las Vegas Sands, LVS. I'm short the 37.5 puts in Augie. Augie 37.5 puts, Augie 44 calls. I am short 3 puts.
34 puts?
No, 37.5 puts, 44 calls. I am short 3 puts to every 2 calls.
Understood.
Should have sold those boosts back up.
That's pretty. I mean, it gives you a little
flat.
long delta.
Yeah, it's pretty flat. Tiny long delta. All right, what's
You're
next?
gonna stick with that.
Yeah.
AAL. I know you've been selling some puts.
AAL?
Yeah.
Just short puts.
American Airlines.
I sold them all today. Did not do a good job. August, 10 puts. I'm short them at 37 cents. They're 45 cents.
That's your average price. Yeah, you said it early this morning. Yep.
My first sale was 30 cents.
Got it. RCL, do you care?
Nope.
I heard the company's going out of business.
Yeah, they are. I don't care.
Down $5 today, Sadnov.
Nope.
Look at this chart. Come on.
Nope. Not touching it. I wouldn't touch that stuff.
Spit in your face. You say they're going bankrupt. Unbelievable. IBM.
Sure.
You know what you like to do in IBM? You like to sell puts, and you're always disappointed.
IBM?
Yeah.
Short the 165 puts.
August,
165 puts, 205 calls.
Delta neutral Johnny trade.
Yep. Delta neutral Johnny trade.
Which, by the way, I'll be doing the Johnny show with my son tomorrow at 2:30 while Sas has some important business to take care of.
Delta neutral Johnny trade. What else you got?
CMG.
Ooh, my big position.
You have the 50-60 on in August?
Ooh, I got killed in there today.
Killed?
Yeah. CMG.
Down 81 cents.
I know.
He ranks 102, so volatility's expanding.
Yeah. I'm short the 47 puts naked, the 52 puts, the 53 puts, the 55 puts, the 56 puts, the 60 puts. And I'm short the 56 calls and the 53 calls.
Okay.
I'm on a ratio. I'm naked short puts.
This is a scramble, obviously.
It's a scramble.
So what do you do here?
I'm all scrambled. I don't know what to do.
August, 23 days. You want to stay in August, I'm assuming?
Last time CMG had good earnings and the stock popped a little bit, but that was prior to the split. Since the split, the stock is down.
It's not had an uptick.
Down 30% almost.
Mm-hmm.
Not 30%, 25%.
$65 to 51, yeah.
65%. I'm sorry, 25%.
Yeah, you're there.
25% drop. I don't know. I'm selling 47 puts, figuring that's probably around the low.
Oh, has he got a memo?
I'm just guessing.
Uh-huh. Okay. You got some delta. CMG expected move, Sadnov, you have any idea?
I'm going to say $4.
I'm going to say a little bit higher, but $4.84 here.
Okay.
Right there. Good job out of you.
Okay.
Good job out of you.
Yeah, it's. I was going to say it's probably going to be about somewhere between 8 and 10%.
You don't want to do your patented buy the 50 puts you're short and sell 300 puts out of the money?
No, I'm good.
You good? You sure? Okay. You don't want to do that because usually that's your patent.
No, I'm good.
No?
Nope, I'm good.
Even though
I just said I'm
Don't
good.
double up trades. We don't.
I just said for the 100th time.
I know. I just want to make sure we don't chase anything. We don't do anything like that.
I'm good.
We're infallible. That's correct.
Yes.
All right. That's all I got for you for earnings. Good job out of you.
So I'm playing.
Tesla, Google take the market down. Is that the end of this market?
No. So I'm playing IBM small, IBM average, CMG a little bigger than average, AL average, let's say, but just short puts, and LVS, just short. No, short strangles, small. Last night, all the earnings plays worked for a miracle change. We made money in ENPH, Tesla, and Google. Let's see what happens tonight.
Nice covers. You never talk about that either, right? Because all of these went significantly lower.
I didn't. Yeah, I just.
No, I mean just covering the trade on the opening. People always say, like, do you cover the trade opening? Do you keep it on for the rest of the day?
It honestly wouldn't have mattered because the stuff I was short was so far out of the money. I was covering them at 10 cents, 20 cents. It's nothing. Yeah, nothing much. I am going to just sell a few calls here on the close because I covered some futures. This is really how I get myself in trouble when I do some delta adjustments. Just because I love doing delta adjustments.
Do you?
Yeah.
Well, the spread you close at $1.25 is $1.70 something. So lied to me at Tesla. Let's see Google.
What did I do?
You had a strangle or something on. You close it at $1.25 in Tesla.
It's $1.75 now?
Yeah, $1.70 something. Yeah.
Yeah, because I'm good. I'm just going to sell a few out of the money calls in the Qs and a few out of the money calls in the spiders. And the reason I'm doing that is just for a little delta.
Okay.
Honestly, it's really not a big deal. All right, what else do we...
Talk to me, Goose.
No, I don't really have much to... What time is it? We got 10 minutes left to go.
Yes, you don't want to mention anything about how this market had not had an uptick all day long. I was sitting at the big boy table with Anton when the E-mini S&Ps were down around 90, and he was looking for a rally. You and I were looking for down around 90, 85 to 110, something like that. We did not think they were gonna rally. You thought they would go down a little bit more than I did. They didn't have an uptick all day long. New markets here? Is this a new paradigm? Is this a new
when you say
new 2024?
When you say new paradigm, I mean, no, it's not.
Volatility is certainly here.
Yeah, this
volatility trading 17. We haven't had a 17 vol without a downtick in volatility. At least if the market doesn't uptick, you usually have a downtick in volatility. There was no indication at any time that volatility was pulling back to give this market a little bit of a breather. All day long, it had its foot on its neck.
Yeah, the one thing I'll say about this market today, to be fair,
15-point move in vol, 15% vol move. It's dare I say crash-like?
No, it's not. Dare you say? No, it's not. Dare you say crash-like? No, it's not crash-like. But
well, it's the biggest move by far of the whole year in volatility.
Yeah, that's okay.
Close down up 15% on volatility. That's got to be the biggest closing move all year long.
Yeah, we haven't done anything all year. I mean, we haven't had a 2%.
What do you think about for tomorrow?
We haven't had a 2%.
We're selling off right into the close too.
We haven't had.
Only an underwater close can save us.
Oh my God, will you shut up? We haven't had a 2% move in the NASDAQ.
Just so you know, I think Greg will let me know in just a second. That could be your fourth shut up of 2024. You only had 2 in all of 2023.
Okay.
2 in all of 2023.
We haven't had a 2.
You're on tilt. This Dylan character, whoever you're playing with, whatever you guys are talking about, I don't want you hanging out with him, Anthony. You hear me? That's what my mom used to say to me. That kid Frankie, I don't want you hanging out with him anymore, Anthony. He's no good. You hear me? He's no good and he never will be. I don't like what you're doing, Thomas, whatever that kid is. I don't know who you're hanging out with.
All I'm going to tell you is that...
Sorry about that, Frankie.
We haven't had a 2% move all year, and today we got ourselves a good old 3% move.
2.25%, 3.5% in the NASDAQ, 2% in the Russell, which was trying to hang in there. Only the Dow down 1% and change. Come on, Sadler. This was a woodshed moment.
Yeah, and I mean, at least I had a little bit of short delta today. I wish I had more.
I had short delta in the Russell. It didn't even pay me.
No, you're not going to get paid. I mean, not if you're short premium.
No, it didn't pay me.
I'm just looking to see if we can. I got to goose up some of these here, putties. We're going to have to move some stuff down here. Create a little. I did not think. I thought at some point today you're going to get a rally of maybe like, I don't know, 20, 30 handles.
At least.
We both thought that you were.
We always do.
We both thought that on the close you might see them down, I don't know, 90, 80. I thought they closed around there. I did not think they closed down 130, but all day they did not bounce once.
Mm-hmm. Agree.
So,
what's an underwater close when the market closes but the futures stay open? The futures keep going lower. It's the only thing that could save us, enough.
Yeah, I'm not so sure how to play. I'm not so sure how I want to play this close. That's all I'm going to tell you.
Well, you know what? This was the same thing like when the market crashed in 87. You didn't know what to do back then either. So I don't expect you.
I know, but how do you position yourself overnight? Do you? You go home?
I took everything from August into September today. That was my big, bold move.
That was your big, bold move?
That was my big, bold move. Instead of waiting for 21 days, I did it a little bit early.
Well, I'm going to tell you, there is definitely the whole tone. There's been a whole tone change today.
Yeah. Yeah.
There's been a whole tone change.
Expanding into the close 1725, Sadnoff. Even the S&P is down 136, 135.
Yeah, with 5 minutes to go.
Anton calls that he bought for, the little bounce this afternoon didn't work. I can tell you that right now. Kid's going out for a hot dog this afternoon.
We're going to bring the kid in a second and see what he's got.
Oh, poor wife is. Oof, she thinks she's going to Avli. She ain't going to Avli tonight. She's having a hot dog. And they might have to split it. And he has to lie that he didn't buy the calls, too. That's the worst thing. And you got to be,
He's a contrarian. I've trained the kid right.
No, you did not. No, you did not. He went rogue a long time ago.
All right, what do we got? Russell down 50.
Yeah.
Didn't see that earlier, too. I'm going to check my Russell position. All right, let's bring in the boys. Let's see what we got.
Oh, let's do it. Let's do it. Who do we got? I believe we got Chris, Anton, and Thomas. Welcome, gentlemen.
What's up?
Welcome back, my friends, to the show that never ends.
Anton, I didn't see you there in the room. Sorry, I wouldn't have talked about you in front of you. I like to say things behind your back.
I like how you know what fascinates me about you the most, Tony? You have such a penchant for like digging under people's skin.
Stirring
like
the pot. Yeah. No. Sugar-coat it, Anton. Don't say it as it is. Just sugar-coat it.
Here, I will tell you this. I sold an iron fly in the NASDAQ about like a little 30 minutes ago. It's already in by like 10%.
10%, so you're up 8 cents. Good job, buddy.
So
Thomas, Thomas, how are you, my friend?
Doing good.
Go ahead.
I missed my natural gas short, but I'm fine with it.
Oh, I love natural gas here.
Yeah.
You mean you're short?
He missed his short. You love natural gas.
I love natural gas.
I should talk.
Monday's pop, I was going to short. And,
what do you think of this market today? We haven't had it. You're a younger gentleman than I. Anton's a younger gentleman than I. We're all younger than
everybody's younger than
We're all younger than Sosnoff. This is the first time you've probably seen a 2 or 3% move in the market without an uptick. Usually we have an uptick. What do you think of this action today?
Yeah, this is fear is taking over. It's getting pretty crazy out there. So everyone's hoping that earnings will come in and save the day. We got some big ones next week, but
oh, come on, we're not going to wait till next week for earnings. We're on fire right now.
Yeah, it looks like if you want to buy, you're getting better prices. So
some of these stocks are down 10%.
Oh my God, you think that's a lot? They're up 150.
That's the other side of the coin.
Yeah, I mean, my God,
that's kind of what I thought. I mean, at the end of the day, it's like even if you're a bull, which I'm a perma bull, basically. I don't know if you knew that.
You did to him?
Everybody's a perma bull that's in your generation. Your whole freaking generation is perma bulls.
Okay, thank you.
All you've ever known is a bull market.
It's not truth or skepticism. This is the last call, okay?
Oh my God.
So, listen. So, I'm saying, even for a perma bull, and Chris can attest to this, nobody should have seen this as some kind of surprise. I mean, it's like, at some point you're gonna, and I told Chris this analogy. I know you're gonna like this. It's kind of like when you're at the craps table and this guy is rolling the dice for an hour and a half, and then now by that point you're like, yeah, this is great. But like like how much longer can it go?
This is a different Anton than that was sitting next to me at 11 o'clock this morning.
What was I
when you were
saying?
like that? When do you think they rally? And I said to you, they're not rallying today, Anton.
That was a different rally.
We're
That's a
not
different
getting an
rally.
uptick. You're not getting any uptick, Anton. He goes, oh, really? You guys always think we're going down.
Well, you didn't have 130 on your radar.
You know what's
said it was
weird?
gonna close down
This-
100.
the way this is a good experience for people today is that even when you're short delta, short premium, no bueno.
No, it's no bueno. Yeah.
You lose
I said
money on
that
the way
from
up
the
and the
beginning.
way down. What's the benefit
Yeah,
of that?
well, it's because we're not good. Other than that, it's fine.
But the hard thing about today is, like I had some decent short premium in what I thought was a crazy high IB rank in the Russell.
Russell was up today at one point.
A couple different points.
Yeah.
Down 50 now. But what they did was they expanded the strangles in there by about $1. That's a big move on a crappy index. Like it had a 50-point move today.
Yes. Yeah.
Yeah, but that's because you got the VIX up 230, right?
That's correct. 15%.
Yeah.
I should have sold premium today.
You should have.
I should have tried to sell. I knew better. I knew better than to try to get long via long options. I should have just sold. I mean, okay, I'll be honest with you though. The NASDAQ expected move for tomorrow came in like 50 points in the last like 30 minutes.
Oh, really?
Mm-hmm. Yeah. Well, maybe not 50, 40. It was like
Well, you told me we were going to
235.
have a $70 expected move all week. We're down 125 in the S&P.
I didn't think anything.
Right
Tell
now,
your
you are-
market makers at the CME that they're full of crap. They don't know how to make markets properly.
Right now, you're on my doo-doo list. And you know what? You've got a show this right after this bell, right?
Hold it. How do you get on this doo-doo list?
What's that? You want to get on it?
How do you get on the
You want to get on it? You can.
How do you get on the doo-doo list, Anton?
I think it's something only he knows that
I'm
I
going to
did.
tell you.
I
I'm
don't
going to tell you
even
right
know.
now. You have a show to do, right?
Yeah.
As a favor to you, I'm going to take your wife downstairs for a little bit of coffee and have a little
listen,
talk with
so
her.
we have, we work for a corporation now. I could technically take your house because of that comment. I could technically.
I heard it. I'll take
Oh,
it.
and it's all recorded too, so I don't even need any witnesses.
I'm going to take. She asked me to take her for a cup of coffee downstairs. I'm going to take her.
And the
it's
best part is
in my neighborhood. That's a code word for other things. But I'm going to take her downstairs for a cup of coffee.
And the best part is Sosnoff here. He can be now. You're
He's an
responsible.
accomplice.
You're responsible.
That's
'cause you
right,
didn't
that's
say
right.
anything.
Responsible for who?
Tony.
I did not sign up for that.
Well, of course you did. Didn't you take the course?
I'm not responsible for him.
Mandated reporter.
You guys are all good. I'm going to take a quick 90-second break. Bella, get your bag. We'll be back in 90 seconds. We got these three guys next. Hi,
You
Chris.
are sick.
See you
You know
later.
that?
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Rewatched that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots. Okay, thanks for the heads up. Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Sky's falling. It's Wednesday, July 24th, 2024. This is Overtime. I'm your host, Chris Vecchio. In studio today, Thomas Westwater, Anton Kulikov, to talk about what was one of the worst days for markets in nearly 2 years. NASDAQ biggest spill since December 22. The S&P 500, its biggest spill since the depths of the regional banking crisis last year. Not that it provoked a big move to safe havens today, at least in the bond market, where short-end yields came down, but long-end yields went up. Thomas, we have to explore whether or not that's related to the movement in the yen and unwind of the carry trade here. Otherwise, we took a look at the precious metals markets here, which were bouncing a little bit off of support once more. And, of course, you head over to energy, modestly weaker in today's session. But, guys, we have to talk about what's happening here in the indexes because this was a bloodbath. Nothing good to see if you were a long Delta person in the mega cap heavy tech stocks today. Your Tesla, your Alphabet after earnings yesterday come down quite precipitously here. Guys, we can pull up the charts here on the screen now and share what was the worst day of the year and the worst day of the last, again, 2024 or 2023 here in the NASDAQ. Anton, what changed over the course of today from when you and I last spoke around 1 p.m. Eastern?
Well, what changed? I mean, S&P's fell another 30 points. I don't know. Not much has changed other than, we just went lower another percent in not the S&P, but the NASDAQ. But, I mean, listen, I'm going to say the same thing I just said. I don't think even if you were bullish, okay, if you were bearish, you're like licking your chops, hoping for a day like this for like the last, 7 months. But even after this, I mean, look, I'm going to pull up the S&P. You're controlling the platform, right, Chris? All right. I'm going to pull up the S&P 500, and I'll just say it based on what I see. I can't even get daily charts for some reason. Okay. So, we've basically given up all the gains in July. Let's see where we're at. 54.77. I have to go back a little bit more than a month. All right. So we're trading back where we were in June. Okay. So that's quite a bit of gain to give up in the last week and a half. But at the end of the day, how much is the S&P still up for the year? I mean, I don't have the exact number in front of me, Chris, but yeah, it's certainly still quite a bit. And the thing is if you're bullish, you can't expect every day to be up. And then that's why we prepared the way we do with the strategies we use. I think this is a day that you just take a step back and say, okay, if I'm doing calls from long call spreads or short put spreads for the month of July, and obviously, let's say this month of July is not going to be a good month, transition to selling premium in the month of August if you have a close like this. Realistically, there's nothing that, like from a trader's perspective, I don't think anything changes besides the tools in the toolbox, i.e. the strategy that I'm going to employ for the following, few weeks or month. But to say that I'm surprised, I can't really say that I'm surprised, even though it's such a large day, just because of the huge skew of up days to down days that we've had in the last few weeks, or rather this whole year, basically. So to me, yeah, it hurts, but I can't say I'm surprised.
Well, this may be a big test coming up, Thomas. The uptrend from the October and April swing lows comes in right around 54.60, 54.70 or so here on our chart. Anton, that's the price level that we called out earlier on Futures Power Hour that may ultimately be a magnet. Is this the last line of defense for the bulls, Thomas? We have to hold the uptrend from the lows last year. If not, then you can make a very cogent technical argument that we are due for a much, much deeper setback. Forget this little correction.
Chris, it's a little hard to hear you right now. I'm having them turn.
Yeah, a little tough. I'm going to ask you to repeat the question too, if you don't mind.
How do you hear me now?
Nope. Guys, a little bit louder, please. All right, try again.
One more time.
There you go. A little bit better.
The uptrend from the October and April swing lows is being tested right now. Anton, you and I called out the 54.60, 54.70 area on Futures Power Hour as a potential place of support, and that's where the market finds itself resting here in these after hours. Thomas, is this the last line of defense for the bulls? Do we have to put up or shut up here lest we open the door for something more than what has been a decent correction thus far?
I don't think it's the last line of defense. 5,400 around there is kind of, if we move below there, I'd definitely expect to see a little more selling on technicals. But no, I think this could be a pullback that we recover from. It's just a matter of how you want to trade it. Do you want to try to be really risky and catch this move? Do you want to take advantage of the volatility and sell put spreads? If you want to, if your view is more neutral to bullish, it's just a matter of question of how you're handling the trade. Personally, I'm going to sit back and kind of wait for this to play out. Haven't traded equities all week, probably will not for the rest of the week. Yeah.
And I think that the market shaped up in a manner consistent with what we were more or less anticipating yesterday. If you're stuck between 55.50 and 56.20, you don't want to be bullish or bearish. If you're below 55.50, you want to be bearish. And if you're above 56.20, you want to be bullish. The market spills below 55.50 and then it just keeps on spilling. There is a little bit of recovery here after hours, though, 54.81.5 right now on the chart, Anton. I shared with you a pretty unique stat about what happened to the NASDAQ today, and I will have to update my data series to make sure it is true for the close. But as I see it here, based on this tweet I saw earlier and then ran the numbers myself, this is the second time in history that the NASDAQ was down more than 3%. But the advanced decline ratio was positive. The last time that happened was on July 19th, 1995, which was the low in the NASDAQ for the rest of the year. And a low that the NASDAQ never revisited again. Well, obviously, one data point doesn't make a trend, so we're not going to draw any conclusions from it. But I thought that was pretty interesting that we just saw something that's only happened for the second time in history today.
Yeah, you didn't mention the second little part there, which is a lot more interesting there. That it was the last lowest point for the NASDAQ going forward. Shoot, Chris, I really want to believe. I really want to believe that's the case. But the latter, that's just a stat. But the fact that it's the low of the NASDAQ. I don't remember how high off its highs the NASDAQ was back in, what did you say, 90, was it 95? What was that, 97,
yes.
95?
1995.
Yeah. So, again, I don't, if you know if it was like also at all-time highs and coming off of all-time highs. But I don't think it's necessarily a tradable takeaway or a tradable stat. But what's interesting about that is it does kind of play into it does kind of prove a little bit of the contrarian nature that Tasty research kind of tends to follow. We don't try to follow any research, per se, but it just, the chips, lie where they fall. So, we don't present it in any way except for the way it's written, right? Or the way we get it. But, this is another one of these things where, there is mean reversion at play in the market to some degree. And I think, the fact that you had most of the NASDAQ stocks be higher, but the NASDAQ was down 3.5%, just goes to show that, listen, what was the big driver of growth for the last few months? It was the big mega cap stocks, tech stocks leading the way higher. So you have this reversal, and obviously the small cap stocks were lagging, right? Or even in the NASDAQ, I'm going to categorize them as lower cap stocks or smaller than the megas. They were lagging. Now you have a huge reversal of that. Same thing with the Russell. You had the Russell lagging all of last year and this year, and basically since July, I know the Russell gave back a little bit more today after we talked, but since July, it's been the strongest of the group, and July 11th. So I think there's always a season for imbalance to take place, and a day like this just shows that at some point it snaps back. And that's why I say that it's not surprising to me. It hurts, but I can't really say that it hurts. I can't really say it hurts. It's kind of like if somebody it's like, somebody you start, you make a ton of money and then you give a fraction of it back and you're like, ouch, that hurts. But does it really hurt? Because in order to get to the place you were here being bullish, you had to, in order to make the money you were being bullish, you had to go through something like this, right? At some point you were going to. So the question really isn't oh my gosh, I can't, this really hurts. It's more okay, well, how much money did you make on the way up doing the thing that caused you to lose a little bit today? And when you look at it that way, it doesn't make the day hurt as bad.
No. And I guess my question is, has your dad gotten out of his NVIDIA position yet?
Did you hear about this, Thomas? Did he tell you?
No, I didn't hear about this.
So on July 11th, so I have access to his IRA. And I check it, once in a while. And I because I put the positions on, I don't notice anything. He doesn't ever trade in his account. One day I log in, it was July 10th, whatever. But basically the last day the NASDAQ was up. I've noticed in his account he has 15 shares of NVIDIA, and I'm like, oh my God, it's over. And I texted Chris that same day because I wanted there to be proof. I said, Chris, my dad just bought NVIDIA. He responds to me, it's the end of, what did you say? We're all smoked now or something? And that was the closing high for NVIDIA for the rest of the,
there you go.
For the last couple of weeks.
It's like the guy in the elevator telling you about a stock.
And I said, and we've topped.
And we've topped. And we've topped. Yeah. So.
Obviously, we didn't trade it like that, but that was a bearish outset engulfing bar day in NVIDIA. You mentioned NVIDIA coming in today, Anton. That's part of the story here, right? The NASDAQ declining is the AI bubble potentially bursting. Thomas, that chart on my screen here looks awfully toppy in NVIDIA and contextualized by what you're seeing in the broader semiconductor space these days. This is an ETF that just less than 2 weeks ago was up near 280. Now it's at 240.98 here in the after hours. The double top points to a potential target near 230, which would make for a nice return to a former era where the market found some congestion and resistance in the previous months. But Atlas SMH looking heavy, NVIDIA looking like it's topping out. Those aren't exactly the kinds of things that would make a bull feel good. Unlike that stat, Anton, the last time we saw this minus 3% down day with a positive AD ratio was the low for the market the rest of the year. I don't know if I'm banking on a one-time occurrence when I look at charts that look like this.
Mm-hmm. Yeah. No, sorry, it was directed at me, right? I don't know you.
Well, you answered, so it's directed at you.
Well, yeah, again, I don't necessarily think there's a tradable takeaway, but I think when it comes to just, understanding the nature of markets being cyclical, and not just from a price perspective, but, even within the market, you have certain groups of stocks that go up more than others over certain periods of time. I think treating this as a very normal occurrence, as in the market being down this much after being up so much, that'll make you be that'll make your positions in trading be a lot better over the next couple weeks. I mean, if I can say anything to anybody, for the
You may.
What? Yeah, if I can say anything for the people, like, if there's one takeaway from today's show, don't try to look at this, especially if you're because if you're bearish, like, this is a good day for you. So I'm gonna ignore those group of people. So I'm gonna ignore those people. I'm saying if you were bullish, chances are you've been bullish for a while, and if you were, think of this as a day where you give some back, and that's totally okay. Because going forward, the key is if this is going to be the new norm for the next couple of weeks or the next couple of months, i.e. volatility being, volatility futures up $2.33, today closing at $17.15. If this is going to be the new norm for the next couple of weeks, the best advice I can give you is take this as just a time where you give it back and focus on structuring new positions in the new volatility environment. That's going to save you the most money and make you the most money. Because if you try to use basically a low vol playbook for a high vol environment because you're on tilt or whatever after what happened today, that's gonna just bring more pain. So just focus on the new vol environment, because I think now there's a lot more money and a lot more opportunity to be had, especially selling premium, because you have a huge vol spike, and statistically speaking, these are short-lived. So take advantage of it while you can.
Anton, before we move over and talk about what was going wrong with bonds today, let's talk a little bit more about the volatility here. We popped up to 17.05. I'm looking at the continuous volatility futures contract here. This is an area where over the past year, if we've moved up into the 17, 18 area, we've more or less topped out, outside of the crisis that we had for the regional banks, outside of the sell-off at the end of October last year, and the brief interlude thanks to Iran and Israel in April. Mm-hmm. Isn't this an area where we should be thinking about capitalizing on the volatility while it's here? Because quite frankly, it hasn't stuck around at these levels for more than a few weeks unless something really terrible is happening, and that's not been the par for the course.
Yeah, so I think, I think that's exactly it, right? You just have to treat this as another vol spike. And what do we like? Here's the thing: every vol spike has a story, right? And the reason I say that is because a lot of people tend to fall into the trap of, oh my gosh, this time's different. This vol spike, this one's going to be the one that takes us to 85. This is the one that's going to make us like 2008 or 2020. But again, vol always spikes. If there was no catalyst, no reason behind it, vol wouldn't spike. So of course, every vol spike happens for a reason, but most vol spikes, because even if you take the time period from 2005 to today, right? You realistically had like three really scary, two really bad events, and then you had one drawn out, which realistically would have been good for short. So I'm going to actually boil it down to two. You had 2008, 2020. Okay. That was really scary for a lot of people, for good reason. But there were many other times where vol spiked to either 20 or 25 or 30, and then all those times they went back down. For whatever reason, doesn't matter. But the point is that's the environment, that's the market we live in. So knowing that's the case, you have to structure your trades around the majority historical occurrences, right? You can't play for the outliers. You can't play for this being like a 2020 or a 2008. You just can't, because that's just too infrequent. And quite frankly, I don't even know how you would play for that, right? Unless you're just buying out of money puts. So again, vol spikes, what do? Sell premium. Defined risk, undefined risk, doesn't matter. But that's typically the playbook, because statistically that's what's worked, regardless of the reason. Now, of course, are there situations where vol can go now to 30 or 40? Of course. But that's why we slowly wade in with our capital. We put a little bit more on now. Then if we have another vol spike, then we put a little bit more on, right? Because we want to leave ourselves room to survive continued increased volatility, but chances are it won't. So that's why we put more positions on, We don't put everything in, but we start with a little bit. And then we play it by ear.
Anton, you and I were talking earlier about what was happening to the bond market here. I rolled out the theory that I think it has something to do with the Japanese yen. Thomas, you and I have worked together on the FX side of business before, and so we are very familiar with the carry trade. I was hoping that perhaps you could help convince Anton, and in the process convince me once again, so that I actually think I'm right here. What's happening in the yen is influencing the longer end of the bond market, right? The carry trade is such that you borrow money, you borrow funds in a foreign currency, and then you invest it in a higher yielding asset. And so in Japan, for example, this would mean they take their low yielding yen, they convert it into US dollars, and then they buy US treasuries, right? US treasuries offer way more, even accounting for exchange rate risk, than holding Japanese government bonds. And the fact that the yen had been weakening the entire time and the dollar's getting stronger, all the better. Because when they convert it back, hey, they're getting more dollars right out of their yen. So good news. But now as the yen starts to reverse, those positions get closed and the dominoes fall the other way. They have to sell treasuries so they can get those dollars back. And then they convert those dollars into yen and then they repatriate them back home. I see everything going on since July 17th where bonds, ZN, ZB have struggled to rally, tied to the fact that this is when the yen breaks its downtrend for the year. Do you think that this is a problem that bond bulls like Anton and I need to contend with, or is this just a story that good old Chris is telling himself so that I can put my head to the pillow at night while watching my ZB position slowly slip beneath the surface of the water?
Yeah, I mean, it looks like the Japanese yen shorts could be done with their fight against the MOF. But you have to realize that, I think it's more about the U.S. side. Whether you want to say it's about the Trump trade or just that we're getting really close to rate cuts now, that carry trade is definitely falling apart. So, I mean, we've seen a lot of steepening in the 10S, 2S spread today. Big spike up today. So does that continue where the 10-year yield is going to outpace the 2-year? The short curve dropped on those rate cut expectations. The long side is being influenced by the threat of a environment where we're in tariffs or back to protectionist policies, things like that. But the yen, I think, whether it's temporary or this is a new trend and we go higher, and usually the yen strengthens on risk off because it's a safe haven currency. So I think this could be more on the temporary side, but I wouldn't let it influence my views on equities too much. But where's to say when, if it accelerates and equities keep going down, then you can draw that correlation out. But I don't know. I'm not basing any of my trades
anything
off
I want to
of it.
hear. I don't want to. I want to be told, Chris, you're right. This is gonna be a problem for the bond market. Don't worry, but that does not make me feel good at all. What do you attribute to this split in the curve today? Right, there's a big steepening, as you point out, and I think that's a really untold story here. The 210 spread now sitting at negative 13 basis points. We're starting to go out of inversion territory, and that is a market signal that people don't like. So many uninformed, and I say that intentionally, uninformed market participants and observers say things like the yield curve's inverted, a recession's coming. Au contraire, it's when the yield curve exits inversion territory, that in and of itself is the recession signal. That's when the timer begins for the countdown of the recession starting within the year. So with that commentary from Dudley today about a cut being needed next week, with the curve steepening the way that it is, Tom, is this a market that's worried about recession? What did this today? I need an answer, Mr. Westwater, because I don't like being one of those people who just says, hey, it's a random walk. This just happened because it's Wednesday, July 24th.
Dudley said he wants rate cuts. The thing with the market, if rate cuts become too much where we want to cut, that's saying that, the economy is slowing too much. So I think if rate cuts strengthen or move in from this point, that's kind of bad. You know, in my view, yeah, because you're saying the economy is getting so weak, home sales, things like that, that the Fed has to step in sooner and kind of rescue the market. They've choreographed their moves pretty well throughout the year. So I think a change in their calculus right now would kind of spook the market a bit more than help it.
Anton, today the bonds didn't do what we would hope they would do on a day when there was a little bit of risk aversion in the market. Obviously, that's not great for someone like you and me who's been long ZB. And yet it feels like it's part of that cadence of what's been more or less like a sine wave off the lows at the end of April, where we go up a little bit, 3 steps up, 2 steps back, 3 steps up, 2 steps back. Until we break that uptrend, should we really be worked up at all about today's price action?
No, I mean, again, like this is a day where equities fell like more than, what was this, the worst day of the year, right? Or is it the second worst day of the year? Okay, worst day of the year.
Worst day since March 23 for the S&P, worst day since December 22 for the NASDAQ.
Yeah, so, I mean, everything was red today. Again, it's hard for me to... look, I'm a type of trader, whenever I put on a position, I always have a risk definition baked into the trade itself, right? So I don't typically deal with stop losses. I let the trade itself be a natural stop loss. So either defined risk options trades, all that stuff. And I don't manage my losers. Right. So what that means is, like, if we get to expiration and my position's the full loss, then I've accepted that because that's the amount that I've already put at risk from the beginning of the trade. So for me, this doesn't really signal, number one, we put our positions on for an extended duration than we would equities. So for example, in equities, I'm mostly in August. For bonds, I'm in September. There's a reason for that, because you tend to have unpredictable days like this in the bond market where you can't really explain it, but you don't really, but you know that it's happened before. So tomorrow could be a green day and nobody would question it, right? So, when I trade a product like that, I extend duration specifically because there will be more days that kind of, aren't really what you want to see, but they don't really scare you out of the position because you've already accounted for that in your extended duration of the trade, right? That's the whole point. So it doesn't really scare me. I mean, of course, it obviously is like, it's a little bit frustrating, but again, it's like, here's another bright side to look at. Like, you're trading equities and bonds together, long equities, long bonds. Long bond position was the best performing position in my portfolio today. So, like, there's your added diversification that you always look for, right? And then I say that kind of jokingly, but I'm really not, because the whole point of diversification, the whole point of extending duration is to lessen the effect of days like this. Right? It's not to make more money. Nobody diversifies so they make more money. The whole point of it is to reduce your risk. So when you have days like this, I'm actually happy I had some long bonds on the table. Now, of course, I'd rather have short bonds on the table, obviously, but that I think that's missing the whole point of the trade itself, right? You put this on for September because you're looking at bonds going higher from now until September. Right, not from the time I put the trade on to the day I'm looking at on the screen, because obviously that's just moronic. You might as well just not trade at that point. So,
how do you really feel?
Go ahead.
Oh, just keep going.
I was just gonna say that it's just it's a sucky day, but like I said, you dust it off, and you look at your positions. And I'm like, oh, thank goodness I went into September and not August. So that's the way I look at it.
And I know it's a tough pill to swallow that the S&P is now up by 0.05% over the past 4 weeks. That's not what the bulls want. I know the bears are celebrating right now, but the market is still up over the past month. Let's talk about these sector winners and losers today. We already covered SMH, which is down by 5.45%. XLK takes a nice haircut itself, down by 4.14%. Consumer discretionary, of which Tesla is a significant portion, that is down by 4.09% here. Home construction, ITB, home builders, XHB, those are down by 2.88 and 2.87% respectively. And then the banks. The banks have been on fire, guys. In a good way, right? So this is a bit of weakness here that's coming in for the first time in a few days. Is this perhaps one of the reasons why we really should not be too worked up about this rebalancing trade that's going on right now? I mean, you have the banks still holding up here. Sure, there's some rotation, but if this was really about a recession, wouldn't the banks be on the chopping block?
Thomas, you want to take this?
Yeah, I think that's a good point. I mean, you've seen rotation into the banks earlier on. That fell apart when the market started to sell off a bit more. Utilities doing well, which makes sense when you sector rotation. I'd call this more like concentration risk rotation, just from what we've seen, getting out of the big names, diversifying. The big move away from tech is the most telling because that's gone up the most. So, of course, when there's pullbacks, fear in the market, you're going to see that retrace the most. It makes sense just because they are the highest volatility. Banks have reported pretty good earnings. Their stress test earlier this year, they did really good. Increasing buybacks, returning more through dividends. And smaller regional banks have done pretty well too. So rate cuts, that helps consumers, things like auto loans, personal lines of credits, those things that regional banks are more invested in versus your larger names like JP Morgan and BAC. So, that is encouraging. If the banks did start to sell off, I mean, definitely keep your eye on it, and that could be more of a warning. But so far, they're holding up fairly well. I think, everything mostly outside of healthcare and utilities was down today. So you just saw some fear coming in the market. So,
and I want to add to that. It's like, I don't think there really has to be a reason for, I think a lot of people try to explain the reasons why, the NASDAQ did this or the Russell did that or all this, but I mean, realistically, it's like, I feel like the more explaining you do, the more you can sometimes trip yourself up and like try to create a narrative that just isn't there. Not saying that it's not important to know these things, but I was speaking just from personal experience. I always like to try to find the reasons and all this stuff. But I've noticed that especially as a trader, probably the biggest thing that this is important is being a trader. Is that sometimes you just gotta like not even ask the question, because I think sometimes asking the question of why did this is a sector rotation? Okay, so what sector am I going to look at next? Maybe I should take a look at this more than the other thing, and then you just basically like psych yourself out of what really should be a very, very, very simple trade going forward, right? Which again, going back to the beginning of the show, falls up, sell premium. What other reason do you need except for vol being up? And I don't say that dismissively. I say that more so that we aren't too thrown off into the analytical realm, because of course when markets move big, there's a much more of a bias for people to try to explain the reason. Or nobody cares about explaining the reason when the S&Ps are flat. Or even up 20 points or down 20 points. It's these days where people like to try to explain stuff. And sometimes, granted, there is stuff to talk about. A lot of catalysts and historical events, of course. But the trade going forward, right, that's a different topic. That I think should be divorced from the reason why today happened, or largely divorced, not totally, but largely, because if you try to explain today's price action, sure, there may be a few things you take away for your trading tomorrow. But most of the time, I think a lot of people can get psyched into this analytical loop, and then they kind of get scared and then they don't trade. Because it's now all of a sudden, oh my gosh, if the yield curve uninverts, oh my gosh, that's when the recessions happen. Oh my gosh, it means the stock market's, oh my gosh. And you can see how this starts to snowball into, okay, I'm just going to sit out. And that's, I think, what a lot of people did in 2022, unfortunately. And I, unfortunately, I got caught in that. But 2022 was one of the best years for selling premium in the last 20 years. By far. simply because vol stayed high, market stayed range bound. Even though every single month in 2022 there was a story, there was a reason. There were people saying, "Oh my gosh, like the interest rates are staying high. Oh, the yield curve's being inverted longer than we thought. Oh my gosh, interest is going. Oh my gosh, inflation could resurge." And all this stuff led to people staying on the sidelines. Even people that typically would sell premium didn't do it because they were scared of the narrative. So that's, I think, the biggest takeaway is, yes, this is a big day. It's important to know why. Leave it at the door, and then tomorrow you trade what's on the.
Leave it at the door, trade what's in front of you. So Anton, on Futures Power Hour earlier, you said that you thought that tomorrow could easily be a day where you take all this back in the S&P. What's your plan for the second half of this week?
Second. So not much different for my longer term positions. Like I don't adjust mid-cycle unless there's a winner. So I don't adjust losers, I adjust winners. Right? So obviously right now being long, I don't have many winners, so I'm just staying put for the longer term positions. For the second half of this week, you got some near term weekly iron condors, short premium. And that's basically it. I mean, right now, expected move in the NASDAQ for Friday, July 26th is 300 points. That's an IV of 31. So again, when you have this big backwardation in the front end of the volatility curve, that to me is a signal, okay, I'm going to put a small position. It doesn't have to be a lot, but you don't need much of a vol collapse to take 10%, 15% out of this trade. And sometimes that's sometimes that's really the only thing I change. I mean, you don't have to, try to readjust everything. Just put some extra positions on. And again, next week, if we have a continuation, then that's it. Then, we'll maybe consider short premium for longer duration trades. But for now, I'm just adjusting the short duration trades, not so much my monthly positions.
Thomas, how about yourself? You're going to stick to your point of view that this is a week where you stick away from equities, considering that you prefer operating on the long side and the charts just kind of look messy?
Yep. Getting long oil, short natural gas. I kind of missed that, so I'm going to wait for the next pop on it. But yeah, staying away from equities this week, trading things that are not correlated as much. And then kind of waiting for the volatility to at least settle down before I get back on the long side. So I think that's what I'm going to do.
Yeah, I'd be remiss to mention that when we think about oil, you mentioned that you're looking to get long oil. One of the places in the market that was pretty reliable during the downturn in 2022 was the energy sector ETFs. They really haven't done much since the end of 2022. But longer-term charts show that they may just be sitting short of very major long-term resistance. This is the high going all the way back to 2014. So a little bit of price improvement in here, and potentially with an oil and these energy companies might be on better footing. But Anton, I've referenced this in crude oil a lot with you the last 2 days. When you and I first started to work together, one of the trades that was a consistent, let's go back to the well, what's the appropriate strategy? It was the condor in crude oil. And I don't have anything on right now in crude, but it feels like when you look at the past year of trading, we're sitting pretty darn close to the dead midpoint of that range. Mm-hmm. Why not put these condors back on, given the fact that geopolitically everything looks like it's calming down, at least in the Middle East and areas that are somewhat caustic or catalytical to the energy market, like, Yemen, Saudi Arabia, Gaza, etc.
Yeah, so I'm just looking at, if I go to September, August, because that's where I was talking earlier in the show. So the range for the last, since June 5th hit a low of 72, call it 70, 72 now, but let's call it 72, and then a high on July 5th of 83.58. Okay, so we go to 83.72, 83 call, 72 put in August. 83 call, 72 put. So this is kind of based on our conversation earlier. So right now, if you look at that position, the issue with it is you have to go pretty far out to tag the high and the low for the range in crude. In other words, the delta for the call is 12, the delta for the put is 14. So you really have to kind of go far to basically pin the ranges in the form of a strangle. And then, of course, if you want to do an iron condor, you can define it with whatever you want. But the reason I'm with you, I think it's fine, but it's a little different than 2022, because in 2022, if you took the high and the low and you capped it with the range, your deltas are about 20 or 24, 20, 25, which means you got a lot more premium and still got outside the range. Number one, because the range was, I think, a little bit tighter. No, I'm sorry. The range wasn't tighter. Volatility was a lot higher. That's why. Volatility was a lot higher. Right now, volatility rank is, because I remember, I think the range in 22 was what, like 63 to 80, 65 to 80 around, roughly?
You're thinking of first half of 23.
Oh, first half of, well, that's when we did a lot of it too, if I remember correctly.
Yeah.
Okay. Yeah. So that's approximately, so it was still about 15 points wide or $15 wide, but the vol was so much higher that you could actually get a 25 delta on both sides and still cap the range. Right now, vol's lower. Volatility rank is 16. So you could still do it. I just think you have to be okay with putting the strikes a little bit inside the range. And as long as you do that, I think it's a fine trade. It's just a little bit, it's a little drier of a trade. There's not as much premium, but I still wouldn't mind doing it.
Thomas, what are you looking at for natural gas for later this week? What kind of position are you looking to put on here? It's a 60.8 IVR. I have a position that is about to expire worthless here from a while back. So don't really care what's happening in natural gas myself, unless it goes back to $3.20, which I can't imagine it's going to do by the end of this week. But if I wanted to dip my toes back into this water once more, why are you of the mindset still that we should be selling rallies here?
So we're a couple months out from winter, right? The long trade is kind of based on the idea that producers are going to cut right now after this big sell-off we've got from the early June to July over the past month, pretty much. We've gone all the way from 315, 320 down to 210. So people are saying as these prices fall, producers are going to cut. They're going to shut in some production. But you have to consider we're a couple months away from the typical withdrawal season starting September, October, around there. You also have a steep contango in the market. So producers, they could sell these futures out in December, January, February, where you're getting 271, 324. They're going to sell those contracts to hedge their costs. So why cut production if you could sell the futures and keep producing? So that tells me that production is going to remain high or move higher into these winter months. And we could keep on getting these spikes based on, weather patterns, weekly storage, and things like that. But in contango, steep contango, those future prices, the contracts further out, they typically come down. Spot prices rise to match it. So that's telling me right now that I am inclined to sell these rips. I think we're going to see selling into strength. That's kind of what we're seeing now over today and yesterday, the big move from Monday. Missed that one, but I'm planning on getting on the next one. So there are a couple risk factors to the upside. The arbitrage window to the east is widened with the JKM pricing rising above Dutch prices, the European benchmark, the U.S. benchmark, LNG export facilities, more and more are going to be coming online later this year and next year. So, that could increase demand on U.S. product, but I think production is going to continue to run ahead of demand for now.
Anton, Westwater is a walking weekly inventory report when it comes to energy. It's fantastic. What a compendium for us. Yeah. I have no compelling reason to do anything other than those range trades in crude right now. Directionally, the short worked out. Nothing going on there at this point in time. And Anton, I hear you about saying like the juice really, it's not as juicy as it was when we were doing this a year and a half ago. Yeah. Granted, approaching the market from a technical perspective first, granted there's shortfalls there and there's lots of caveats to all this, but there's more than one way to skin a cat here. So given that I don't have anything on in energy and this 55-day window out is pretty decently traded when you look at the strikes, right? Enough open interest where you'd want to operate. I think I can do something around here for myself personally.
Yeah, and I think if you want to go to September, you're going to get a little bit more premium raw, just dollar premium. I'm going to explain the difference. You're going to get more. You're going to get more credit, more premium, and you're going to be able to go basically to the full range of crude. The difference is because volatility rank is low, it's not going to come in as fast. And being in September, and I talked about this on the show, being in September, one of the issues is if you do the iron condor too tight, it's going to be basically a dead trade for a couple weeks. Like you're not going to see much happen to it, up or down. And that's not a bad thing. It's just it's not going to be as rich from the standpoint of that. Oh my gosh! Like if nothing happens to crude, you're gonna make like $50 a day, right? And I'm not 50. I'm just picking a random number. So instead of, let's say in 2022 or 2023, you could make $50 a day. Maybe if not, assuming nothing happens to crude, right? That today maybe it's like 20, right, or 50. So it's going to be less, and that's the only thing, right? That's the only difference. Otherwise, if you're okay with that, I don't think it's a terrible trade. I actually think that directionally speaking, I'm with you. I don't have any directional position or bias in crude. And for diversification purposes, it's pretty nice when you have, the equity market's down 3% or 2%, 3%, whatever. Crude's up 54 cents. So a slower trade may not actually be the worst idea right now as everything else picks up volatility.
Thomas, we have 10 minutes left here. Usually when you're on these programs, it's people like myself telling you what to think and what to say. Let's split the last 10 minutes up between you and Anton. What have you been thinking about or talking about? What's a trade idea that's in the back of your mind that you're not quite ready to execute yet, but you feel like could be a good opportunity? It's just not there. It's not ripe enough for you to take advantage of. And you can't say natural gas because you just gave us natural gas.
Yeah, no, I want to wait to get long soybeans again. We've had a good bit of rallying over the past week, and there was export weighing numbers that came out on Monday. The USDA, they weigh the product for export. Those numbers were really good. They doubled from the week prior. I want to say around 330,000 metric tons. China hasn't been buying, but I think they could buy some over the next, up until the election. I kind of want to say the Trump trade is kind of at play here, because if traders expect Trump to get back in, China, one of the products they typically target is soybeans. They did that in 2018, and you saw the U.S. soybean market get hit pretty hard from it. So, if they're expecting that, and, if Brazil runs out of soybeans for them to buy, who's their primary seller right now, since 2018 actually, can they front load these purchases? And that can happen because China sees things like oil, agriculture as strategic resources, not only as commerce and trade, like we do in the U.S. with you could say a freer market, more open market. So do they see the Trump administration as a threat to those strategies, and will they try to get what they can now? So that's kind of what I'm looking at. And I think we're just way oversold. If you look at the COT positioning, soybean shorts are just massively short for the speculators, non-commercial traders. Those positions have to unwind at some point. And the fact that we've had this nice little bounce over the past week, I think that's going to drive some out. But I don't really see them adding much more to the short position. It's already at a pretty extreme level. And I think that's going to help us on each move up. I don't think it's going to be a huge one-off rally. I think it could be, just a stair-step trend reversal starting here. So where do I want soybeans to settle back down to? I want them to make a higher low from from the July 15 swing low. So maybe if we drop down to 1100, 1090, I'd take a stab there. There's decent premium, not amazing premium in the product. So, whether I do it through futures or selling a put spread, I'm not sure yet, but it's one of the things I'm keeping my eye on for the next few months.
Anton, same question to you. You and I talk almost every day, so I don't know if what you're going to say is going to be a mystery to me. Mm-hmm. And you're not someone who makes adjustments mid-cycle, right? You're very much like I am, where with the macro overlay, I put things on at the start of the month, I let them run their course, and whatever happens, happens. You can't control those type of things, so you just have to read the tea leaves and hope that your interpretation is correct. Would you be, so let me actually pose a different question for you then, because you're not ready to do anything for another week. If the market were to close here today, right? This was July 31st instead of July 24th. At the start of every month recently, we've been able to go back to what we call our playbook where, okay, VIX is below 15, ES and Q is above the 1 week moving average, long at the money call spreads. And it's been working. The only month that it didn't work so far was April, and July might be the next month that it doesn't work since the lows last year. So knowing that this has been such a consistently good strategy, but that the conditions in which it has prospered are not necessarily there, how would you be approaching this market if today was the day for you to roll those positions, adjust your strikes, right? If today was 21 days to expiration, how would you be handling this price action?
Yeah, I think that I wouldn't change my duration. I would probably start off with a short put spread, and I would maybe even consider adding a short call spread. Short. Both short. But have it be skewed so that I'm a little bit bullish. So maybe like if I'm looking at ES as an example. Let's see, August is 23 days. Okay, let's just go to the 30-day cycle. So it's not August. It's not typical August expiration, but it's fine. Maybe I would start with like a 5,400 short put, and then maybe I'll go to the 5,675 call. I'd sell both of those, and then I would look to buy, let's take a look here, 56.75 to 57.75. So 100 points on the call side, and probably the same on the put side. There's still quite a bit of put skew right now, but that's okay. I mean, that's usually what we expect. I'd probably go a little bit further out on the put side to buy that short put. Buy the put to cover the short put. So 52.50. So let's see here, 5,400 short put, 56.75 short call, and then capping it with the 52.50 put, which is 150 points away from the short put, and then the long 57.75 call, which is 100 points away from the call side. So this, the goal here, right, obviously, we want a little bit of a rally, but realistically, we just want this to stay range bound. And
it's
notice,
like a recovery trade.
Huh?
This is a recovery trade, right?
Yeah, this is a recovery trade while still not expecting the same type of upward momentum we saw in the first half of July. This is kind of like a dead cat bounce trade, if there was something to call it. So not necessarily expecting it to go back down after, but kind of like a little bit of a bounce and maybe to hang out, just at maybe 55, 50, 5,600, and just kind of wait for premium to decay. Defined risk trade, and obviously this being 30 days out. Typically so iron condors, typically we don't manage if they're losers. But if they're winners, I'd like to take mine off, if I make 50% of the max profit. So.
Oh, for me, it's oil right now. It's agnostic and completely indifferent to everything happening in broader markets. Maybe there's a growth scare that's being reflected in oil, that's being reflected in copper, and that's why we're seeing what we're seeing in equity markets. But then again, how come the banks aren't down? How come we're seeing those signs of rotation still beneath the surface where there's more advancing volume today than declining volume in a market, even though the index was down 3%, something we haven't seen But for once prior time in history, thanks Jason Gofert for that stat, the guy who founded Sentiment Trader. Fantastic little nugget there. Is it actionable? I have no idea. So not to be drawn into that swan song of, well, that happened once before and it was clearly a big load. Time to load the boat, reverse mortgage the home, and tell my kid that this is it. Otherwise, we're eating hot dogs for the rest of our lives. No, I'm just going to stick to oil and wait for the market to show some signs of technical bounce. It did kind of what we expected it to on overtime yesterday, right? If you're below 55.50, the thing's going to, capitulate. And if you're above 56.20, then you get bullish again. Otherwise, there's nothing really else to think about. The bear scenario played out, and so now we wait to see if this new level of support holds. But for the bulls right now, obviously going unchanged over the past 30 days, not great. It was a very good month. The first half of July was fantastic, as is often the case. The second half of the month has been a bit of a nightmare so far, but we'll have to cover that and more tomorrow on Overtime, because we are just about out of time here on Overtime. There's no man in blue orange today, but I guess the men in the studio, Anton Kulikov and Thomas Westwater, thanks for coming back. And for me, Chris Vecchio, good luck trading. After a brief break, we're going to do a little commercial here, and then we're going to have Tasty Live at night, Macro Money with Ilya Spivak coming at you.
The markets have an ugly, ugly middle of the week as semiconductors plummet, driving a wash across the S&P 500, across the NASDAQ. But we are not done. Lots and lots of conversation around what could have precipitated the bloodletting today, and many, many theories circulating. But not really a clear catalyst one way or another that seems consistent with the price action, at least across most major assets. Nevertheless, we now refocus on something that is a bit more straightforward, and perhaps that will give us a bit of relief, or perhaps it will compound what is becoming an increasingly challenging story all around the world. This is Ilya Spivak, head of Global Macro here at Tasty Live. And today we are going to have a look at the upcoming monetary policy announcement from the European Central Bank. Here, the focus, not surprisingly, a little bit more clear cut than the bloodletting that we've just seen over the past session. A clear macro catalyst with relatively digestible lead-in information to suggest where it might go and what its implications might be. But of course, coming in the context of what we are watching across markets more broadly, something with a story to tell and a lesson to offer, not just for Eurozone markets and not just for the euro itself, but in a much broader way for Wall Street, for stocks in general, and for the many macro and broad asset classes as a whole. So what we're going to do here is we're going to set the stage a little bit with first what is expected, how it might register, what the impact could be, and the lesson to be had therein is where we ought to arrive at the end of that discussion. The ECB is not expected to change rates this go-round. Of course, they began their rate cut cycle last month, taking the target deposit rate down by 25 basis points from 4% to 3.75. That's the downshift you see right here. From this point forward, we see that the markets are pricing in a further 47 basis points in easing, which would amount to the overwhelming likelihood for 2 more rate cuts this year. 47 basis points is, of course, just 3 basis points shy of the 50 that you would need to fully bake in another 2 cuts. Now, if we look at the timeline here, we can see, of course, nothing is on the menu for this month. No cut implied here, although the trajectory clearly is still pointing lower and cuts are what is on the menu. We're almost there in September, almost to 3.5. In fact, the probability that we get this next cut in September now stands at a relatively commanding 76%. That cut is fully baked in by the time we get to October. And then when we get to December, we're just 3 basis points shy of that second cut. So 328 rather than 325. Now, what's interesting here is that the pathway for rates has barely changed from the last policy meeting on June the 6th. That's this dotted line hiding behind the current line for today's price action. And that's interesting because, of course, the actual economic backdrop has become quite a bit different. What we see here is that since the ECB met, which was here, the beginning of June, economic data outcomes out of the euro area have significantly deteriorated relative to expectations. Not only are we now looking at an extension of the trend from, let's call it, mid-March or so, of economic data outcomes from the euro area becoming weaker relative to baseline expectations, we've actually now pushed through the 0 line on this surprise index. So that doesn't just mean that the data is now converging on expectations, which would be this right here, or starting to outperform those expectations by a narrowing margin. Rather, at this point, we are now underperforming and tending to undershoot baseline forecasts, which is to say, on any given piece of economic data coming from the Eurozone, this suggests that the tendency now is to disappoint. Perhaps no release better summarizes this than what we just saw out of the June set of Eurozone PMI data, where we unexpectedly got the slowest pace of growth in 3 months. The expectation actually was that we would remain near these highs here, but unexpectedly, we saw a faster contraction in the manufacturing sector. Perhaps no big shock there. It was expected to remain in contraction territory, though the markets were not betting on that contraction accelerating. As ever, this is in the logic of PMIs. So 50 here is the neutral line, neither growth nor contraction. And above 50 is growth. Below 50 is shrinking. The faster you go above 50, or the further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And so manufacturing here clearly has been in contraction to various degrees for quite some time, going all the way back to the second half of 2022. So that's perhaps not the biggest shocker in this story. Rather, it's that the service sector has suddenly started to look much more anemic after a spirited rebound in the first half of the year. We can, of course, see that last year, late 2023, we are well below 50 on all of these metrics, which lines up with a shallow recession in the third and fourth quarter of 2023 in the Eurozone. We can see since then there's been something of a catch-up in economic growth. The latest data would seem to suggest that that catch-up has run into a wall, and this performance suggests further weakening is seemingly on the horizon. Now, while of course that's a troubling sort of conclusion, it is something that ought to help the ECB continue to push inflation in its desired direction. The latest numbers that we got had CPI down to 2.5%. That's near the bottom of the range that we've occupied since late last year. We can see that after rapid disinflation from 10.6 down to about where we are now over the course of the second half of 2022 and through 2023, we've now sort of anchored at these levels. And if we look at the component contributions to CPI here, we can see that the main influences of pandemic-era shocks and war shock with the onset of the conflict in Ukraine, we've seemingly digested the spike in food. That's down to more reasonable levels. We've seemingly digested the spike in energy. And although energy is rising a bit as a contributor from May to April here, it is nevertheless relatively constrained. You can see that here. Of course, energy was a big source of shock here as the war broke out. It then rebalanced and rebased here and is now this little sliver in the mix. So not a huge contributor. Rather, this seems to be the biggest sticking point. And of course, to the extent that the hospitality sector, restaurants and hotels, amounts to discretionary spending, an economic slowdown ought to make this stickiness in the price structure more amenable to disinflation as people scale back amidst whatever economic weakness is ahead on the kind of discretionary spending that powers restaurant and hotel pricing power. And as we get deeper into the summer and closer toward the end of that season, seems likely that this is going to unravel and inflation is likely to march more convincingly toward the ECB's objective. The bond markets are already onto this, seemingly. The German 2-year break-even rate, this is the difference between nominal and inflation-adjusted interest rates over the near term in what is, of course, the Eurozone's largest economy, and extracts out of the bond market's pricing that inflation adjustment, the implied inflation forecast that the bond markets have for Germany over a 2-year window. That has been falling precipitously here in recent months. We can see that here. So much so that we are actually now at 1.29%, which is well below the ECB's target. While, of course, this doesn't line up one for one, it does suggest that inflation expectations have been falling and the ECB appears to be on track to where it wants to go. Now, of course, what's interesting in this context is, again, that the curve doesn't seem to have changed in a meaningful way from June to now, despite the fact that we've had this downshift in the economy, which seems to suggest that there is room here for the ECB to surprise markets somewhat with a dovish pivot in official rhetoric. So as we get to this policy announcement, let's assume that there is no surprise change in rates. There is, after all, that slight possibility. And if we were to get that kind of a thing, we would likely see a very emphatic response from financial markets. But even if we get everything on the policy outcome exactly as expected, the rhetoric from ECB President Christine Lagarde and the tone of the policy statement coming out of the Governing Council may well take a more dovish tone, onboarding and flagging the economic data that has arrived between the meeting in June and now, and give a nod to the idea that disinflation appears likely to continue, that economic weakness has become seemingly more of a concern. What this might do is inspire a bit more of a concrete push to 50 basis points here, cementing these two rate cuts, and perhaps even extend to a more significant amount of easing. It might also upshift the timeline. So September might get locked in. A second cut could well be locked in as soon as October, giving room for some optionality on a third cut in December. Now, what's interesting about this may well be the direction in which an adjustment like that would push financial markets. So let's first consider the euro. This is a chart of Euro FX futures, ticker 6E. And what we see here is the euro finds itself attempting to break this range that it's been stuck in basically since mid-April, extending here past the 109 figure and attempting to take out these tops just below 110. Now, if we get a dovish ECB that sets the course for deeper interest rate cuts down the road, that may well arrest the euro's upward progress here, maybe set up another top in the vicinity of this one and this one, somewhere in here, and set the stage for the US dollar to begin a recovery. Because, of course, if the outlook on Fed monetary policy has been pretty well locked in over recent weeks, and of course, we know that there's been a dovish shift there recently, which might explain what's going on here. But to the extent that we're out of major U.S. economic data, at least for this week, and we now have that part of the story relatively locked in against a backdrop of a would-be dovish adjustment from the euro side, we might expect that if the ECB does in fact go that way, that we'd have a top, at least near term, and perhaps scope to oscillate down into the bottom of this range over the coming days and week. But the much more interesting part of this story, the one that's perhaps somewhat counterintuitive, is what may happen to local stock markets. This is where things get really interesting. This is the EZU ETF. It is a tracker of the MSCI Eurozone stock index, also very close to the Euro Stoxx 50 index, the Eurozone stock benchmark. What we see here is this right here, this top in the index is exactly June 6th, the day that the ECB starts to cut interest rates. The first cut in this cycle. Now, what this speaks to is perhaps the very same dynamic now getting ready to reveal itself, if it has not already, in U.S. markets. Stock markets, of course, we can see here, have been perfectly happy to speculate on the prospect of rate cuts, especially while economic growth is improving. Cheaper credit without an economic downturn is understandably good news for risk-taking and so for stock markets. And of course, as we've just mentioned, the growth story in the Eurozone since the beginning of the year has been of improvement. There it is. Meanwhile, the story on monetary policy since the beginning of the year has been of rate cuts. Now, of course, since the growth story has been improving, the scope for these rate cuts narrowed somewhat. That this was the cut itself, so we'll take this part of the chart in isolation. But the run-up into the cut, which is this to here, had improving Eurozone data, improving Eurozone growth. So not surprisingly, we went from 160 basis points in cuts to 67 basis points on the eve of the reduction, which is this wiggle right here. But nevertheless, rate cuts. And so the prospect of lower rates against the backdrop of growth that was improving, not surprisingly, a very positive catalyst. When those cuts actually arrived, however, what that seemed to signal to the markets is as speculation becomes reality, it becomes time to worry about why the central bank has finally started to pull the trigger. And that is, of course, because it has found whatever is happening economically to be intolerable enough that it felt compelled to act. And so while the markets were perfectly happy to speculate on some future date for the start of rate cuts given benign growth, once the central bank actually decided to move on those cuts, despite the fact that the move was widely priced in and expected, the implication became, well, now we need to be worried about the growth side of the ledger and where earnings come from. Because if the central bank has felt itself compelled to cut, it is not for no reason. This, of course, echoes with some delay the story that we're seeing developing in the U.S., where a rate cut in September, the meeting after this upcoming one at the end of July, looks overwhelmingly baked in. The scope for interest rate cuts has grown. And yet we find ourselves with the kind of dramatic sell-off that we now see in markets for seemingly incongruous reasons, which may well begin the kind of topping process that we see here and around the same logic. That when the cuts do finally arrive, the concern is about growth rather than a positive response to the final arrival of cheaper money. And so near term, what we find is that if the ECB is going to take a dovish tack, yes, it probably means the euro has some scope to backpedal on some of these recent gains. It may also extend lower on Eurozone stock markets. The lesson to be had if such a move does materialize on a dovish ECB is that U.S. markets may well follow the same dynamic. And if the moves we saw today continue to extrapolate, may be following that dynamic already. Though, of course, follow through is necessary, and we've yet to see that. So, if anything, it could be early days yet for Wall Street. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and what it might mean going forward. I'll be on in just 30 minutes after this show for The Price of Truth, the great new show with Victor Jones. Back on with Chris for Futures Power Hour Friday. On with Victor and Tom for First Call Sundays, writing for the news and insights portion of tastylive.com, and opining sporadically on the platform formerly known as Twitter, at Ilya Spivak. Thanks very much for joining. Happy trading.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of Jersey Shore get overexposure, I'm too Titanic for you Twitter and twist. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What? What?
Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick. Retweet. Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I make it real easy for family to talk. I make ex-girlfriends real easy to stalk. I show you life in real time that's completely amazing. I show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars, Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got 1 million customizable backgrounds. You're so totally boring. My card's on the table, hash mark. Facebook is disabled.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
All right, yeah, I'll talk to you.
There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you?
Didn't.
Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%, and I made a bunch of money, and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win, and it was mostly failures thereafter that. And I thought, I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
We're back, Tasty Crypto Show. I'm Ryan Grace. One last time, Mike Martin.
How you doing, Ryan?
I'm doing well, man. I can't complain. I mean, I wish that prices were a little bit higher here, but they can't go up every day.
Yeah. So I didn't even get a look at crypto. I was watching my call options.
What have you been doing all day?
On Qs. I knew that we were up for the most part, with the exception of Ethereum, which was odd.
Let me send you the slides, by the way. Actually, I did send you the slides. They're in your chat.
Okay. I mean, there was some bad earnings yesterday, right? Alphabet.
You're talking about the NASDAQ.
I'm
What's behind the unwind here?
I'm trying to wrap my head around this. I'm trying to find a reason for something that there is no reason behind.
I mean, maybe you have a little bit of a rotation here, right? Obviously, for some time now, you've seen outperformance in the Mag 7, these high-flying tech stocks, the AI narrative, et cetera, et cetera. That's done very, very well. You've made a lot of money if you've been long up until now. And I think on the other side of that, a lot of people...
But, I mean, Russell is down over 2% too today.
Yeah, I think from an institutional perspective...
What are they rotating into?
Well... I think maybe you get a little bit of an unwind in general, but I'm just saying in terms of what you're seeing now, all of a sudden you're seeing a little bit of short-term outperformance in the Russell. I think people have been short against that NASDAQ position, generally speaking. Some people probably looking for the trade on the other side of that. But if you've been riding AI higher and higher almost every day for the last few months.
Oh, yeah, it's inevitable.
You probably have a short on against it. It's probably in some of the small cap names here.
Yeah.
And, you're seeing a little bit of a reversal there. But spilling over into crypto as well, a lot of red here today. Bitcoin down about 1%, ETH down about 5%, 4.5% at the moment. Solana hanging in there, though, off of the highs. Solana's up 2% here. But everything else, it's been a pretty crappy day.
Yeah, I
Same
mean,
thing that we've
crypto
seen
was
in
up with the exception of
equities.
Ethereum. All through the afternoon, it was up. Just everything tanked today.
Yeah, a bit of a reversal. What do we got? The S&P down 2%, NASDAQ down 3%.
It's good, though. It's healthy. It's healthy for the market.
Nice healthy little correction. So that's where you're at?
Ryan,
Buy the dip here?
I gave you a trade recommendation today, and I think you made a little bit of money off
Yeah, I
of that.
made $7.
$7. Okay.
Bought a call option expiring within an hour.
Hour and a half,
Yeah.
90 minutes.
88 cents, sold it for 95 cents. That's how
Yeah.
you do it.
Yeah.
Yeah, that's making money. That's trading, Mike. Where do you want to go first? You want to jump into the topic today? It is, you're in charge, Mike. You are riding the jet ski off into the sunset. Mad Mike, his last episode on Tasty Live. The chat is open. So if you want to say what's up, leave us a comment.
So, yeah, Ryan, we're going to talk today about tokenization.
Okay.
So, in short, tokenization is simply taking something either tangible or intangible and giving it a digital representation. And this is a big deal for one reason primarily, and that is liquidity. You can tokenize anything around the world. You can tokenize U.S. stocks, which means anybody in the world could, in theory, have access to the U.S. market, which doesn't happen right now. It's kind of an elitist market. It allows for for shared ownership and historically very illiquid assets like buildings, high rises. You could tokenize the Sears Tower and give maybe 1,000 shares represented. Everybody could own a piece of the Sears Tower, or more realistically, a warehouse that nobody wants in the middle of nowhere, which is very illiquid. It's a massive injection of liquidity into the entire world. That's
So
what
when we talk about
tokenization
tokenization, we're not talking about tokens in the sense that we're familiar with a lot of different crypto projects
Yeah.
that have ERC20 tokens or have tokens that exist on other blockchains. We're talking about the tokenization of assets, of
Right.
real world assets.
of tangible and intangible assets. Any assets you can imagine can be tokenized.
Okay.
People can be tokenized.
Interesting. Well, we won't go there, but when I think about, the biggest real world asset that's tokenized today, as you alluded to, a lot of people instantly think about real estate,
Right.
fine art, commodities even. We're starting to see gold represented on chain. I think Bitcoin itself is a better representation
Yeah.
of that view as an investment. That said, the biggest real world asset that's represented on chain today is
Stablecoins.
US dollar.
Fiat
Yeah,
currency. Yeah.
exactly.
Yeah, by a huge margin. I think we're going to show some slides in a little bit, but I think like 95% of all tokenized assets are stablecoins, just because that is the only stable environment. That's where you put crypto if you're not using it. It's where you put crypto if you're doing half of the liquidity pool. It's a respite from the ubiquitous volatility in crypto.
You need that fiat representation on chain. If you become more and more blockchain native, you participate in various protocols, use different applications, you're likely to use stablecoins. And stablecoins, as you mentioned, are by far and away the largest by market cap when we think about real world assets on chain. We're going to look at that in just a second. But I want to move into the other sorts of assets by market cap that are now starting to grow on chain. We only have about 4 years of data. Obviously, prior to this, these things didn't really exist. They certainly weren't represented on chain. We've removed fiat collateralized stablecoins from this view here. And anyone that wants to check this out, you can go over to Dune Analytics. They've got a tokenization overview. There's a ton of great charts on the dashboard. You can manipulate the charts. You can filter different chains, different assets, and so on. But what we're looking at here is tokenization market cap by type of asset. And so you can see that while stablecoins have been removed, commodities are starting to grow in size. Government securities make up a very large chunk.
Those have just been taken off over the last year or so.
Well, when I think about smart contracts, I think I shouldn't say it's easy, but it seems straightforward in terms of representing debt obligations on chain. That is pretty straightforward. And so I'm not surprised at all that you're seeing fiat on chain is the biggest. Second to that, debt that's fiat based on chain. Yield generating, right? We're talking about packaging up US Treasury bills and tokenizing that, representing that on chain,
Right.
and that yield being passed through to the holders of those tokens. And a lot of this is not available to retail investors when we think about what's happening. But what you're seeing is large institutions, BlackRock's one of them, household name, it has become at least in crypto now, that is packaging up securities and then representing them on chain and just running this whole process, all of the infrastructure essentially being directly on chain, a little bit more efficient, as many would argue.
Yeah, no, absolutely. I mean, it's one of those things that just makes sense. You know, the smart contracts are, most of these, we're going to get into that shortly, but they're saved on the Ethereum blockchain, which has the most nodes. It's generally considered the most secure and robust blockchain in existence. And when you save and execute smart contracts on Ethereum, like you said, Ryan.
Yeah, let's look at that.
Yeah. What's growing in the tokenization world? So we can see Ethereum has the lion's share. That's kind of like that orange at the bottom. I would have thought Solana would have made some more progress on here, but it hasn't. Ethereum is still pretty much dominating, isn't it? Which is good because I own a lot of Ethereum.
Yeah, I think when we're looking at this, though, it's important to remember that stable coins have existed on Ethereum for the most part first, right?
Yeah.
And so we don't have a very long timeline. We have USDC, we have ERC20 stable coins, we have USDT, Tether.
Mm-hmm.
And we, up until really the last couple of years, didn't see any other real world assets, at least in size, that were represented on chain.
Yeah.
Only stable coins. Then you start to see some debt instruments. You have U.S. treasuries, money market funds moving on chain. So it's still very, very early days. But I believe that this is going to be a key theme of this cycle. I mean, it already is, obviously. We're talking about it. You're seeing the growth in the space. You're seeing a lot of projects that we'll talk about in just a second that are participating in building on-chain here. And so I'm not going to be surprised at all to see the growth, I think, of credit on-chain, corporate debt, the issuance of different debt on-chain. Obviously, treasuries are there. You're going to see funds packaged up and represented in a tokenized form. And then as we've alluded to at the beginning or talked about, real estate, fractional ownership of,
right, and that's down the road. That's not
of
even
the cash
really
flows that
today.
kick off there, right?
Yeah, right. It's what probably will happen. Even if you think about, we talk about fractionalized ownership, but even just tokenizing a home, an individual home. Like I recently bought a home. You end up paying, 5-6%. And the seller's fees, and it's just asinine. And the paperwork that goes into getting a mortgage, which is a different story altogether. But it's a lot of unnecessary paperwork and time and money spent in buying a home.
You think some of this moves on chain over time?
Yeah, I think a tokenized home was sold in Florida, I think last year, maybe 2 years ago.
What about equities?
Well, I mean, that goes back to, I think obviously me and you wouldn't be too interested in tokenized equities because I can buy any equity I want.
We talked about that the other day, right? Like as a U.S. investor, you're privileged in that you have access to all these investments.
That's why I think that tokenization is going to be a real catalyst to a true globalization, which I think personally is a bad thing. I think we need to diversify the world's risks.
Okay.
But some people are pro, the world coming together, and I can't think of anything.
New World Order, Mike?
Yeah, maybe even
you're
a New
against
World
that?
Order. Well, I mean, think the whole world's on one currency. There's a problem with the currency. What happens?
Yeah, well,
who's going to bail the world out?
We kind of are on one currency, the U.S. dollar.
For the most part, but
another show, another time.
Yeah,
over a beer or something.
But yeah, so I think it's going to have a lot of value in the future because anything can be tokenized, which means anybody can access it because blockchains are decentralized. The government does not control them. So I wouldn't think it'd be unreasonable to assume that in 10 years from now, most of the shares of what do they call them, the Magnificent 6 or 7, maybe held maybe held by citizens, global citizens outside the U.S. Because that's a big market. There's a lot of money in America, but it's not 50% of the worth of the entire world. It's much smaller than that. So this is just going to open up liquidity. It's going to open up accessibility, and I think it's ultimately going to be a very good thing, and it's very promising as we can look at these charts just from the last year or so, how it's taking off.
Yeah, I agree. I think this is the tip of the iceberg. Clearly, we have no predictive abilities.
Yeah.
I don't know what the timeline is, but I think what we're trying to show here is that this has started. It's not going backwards. We're going to see the continuation of the tokenization of real world assets. Not everything is going to be tokenized. Some things don't make any sense. But there's other areas where there's clearly an opportunity. Stable coins, debt instruments, we're starting to see that growth. Let's talk about how you can trade it. How do you play this, right? I want to make some money. Is this a macro trade? Sure, I can participate in the space by holding USDC. Depending on where I hold that and what I do with it, I can generate a yield off of it. Fantastic. But how do I make money in the growth of the ecosystem? Is it simply just the macro trade is Ethereum, more adoption, more use cases, more users, the value of ETH goes up? Or do you look at individual projects? We do have some projects or some things that we can talk about here in a moment, but how do you think about that?
I mean, I would say Ethereum. As we looked at the blockchains that have the most participation in the space, it's 85% Ethereum. Everything else is sort of a gamble, but again, Ethereum can be compared to the internet. Ethereum's always, in my opinion, going to be around, just like all the Web 2 apps are built atop the internet. Everything that happens in decentralized finance or Web 3, today at least, is built atop Ethereum. So you buy Ethereum, and I think it's a pretty safe, relative low-risk way to participate in this space, in every space in Web 3.
Yeah, I've used this analogy. I've heard this before as well. I mean, you go way, way back all the way to the beginning of ETH. And a lot of people used to talk about it, or maybe they still do, as the oil to the machine.
You're right.
If this is a machine, ETH, you pay gas fees in ETH. That's the oil that runs the machine from a commodity investing perspective.
Yeah.
If we take that approach, more people demand oil to use this machine. It powers the machine. The value of that, all else equal, should go up. And we've talked about the illiquid nature of Ethereum supply, given the burn mechanism. We've talked about how, and we can get into the ETFs, which just launched yesterday as well. Not quite sure where the flows are. Maybe they weren't as high as expected, and so that's driving price. I have no idea. But we'll look at that. But
And Ryan, real quick, you asked me about possible good investments to make in tokenization. I think another one would probably be Chainlink. Because when we're talking tokenization, we're talking an intangible or tangible real-world asset that has to be, which is stored on the blockchain. But how do you get that information, that data?
Right. You're talking about Chainlink as an oracle, a data source,
right.
really.
So
right? What is the value of that home in the real world?
How do they get the live information over it? So you have to pay Chainlink to do that, and they provide tamper-proof vaults where this information is stored to make resolutions on certain outcomes or representative prices. If I own a tokenized version of Netflix, how do I know that it's actually trading at Netflix's true value? Well, an Oracle or a Chainlink or a different Oracle will go out and they'll look at the price on maybe 7 different exchanges, and they'll do the average or a summation of the different prices, and they do that work for you. So we know that our asset is always going to track the real world asset.
I like that idea. There's a lot of ways to play it. I want to jump into some of the different projects here that are related to tokenized assets, real world assets on chain. A few of these we've already hit on. Then I just want to draw everyone's attention to market cap on the far right, just to get a sense and put some context around this of how big, or in some cases how small, some of this is at this stage. So we talked about the biggest real world assets on chain being stablecoins. Tether, the company behind USDT, US dollar Tether. Circle, the company behind USDC, which many people here in the United States, I'm sure, are probably more familiar with or maybe more likely to use at times. There's the market caps, 54 billion. Tether is the biggest by far. Beautiful, fantastic business. I think stablecoins as a business, it's amazing. Wild that the banks aren't just smashing the door down to get into this, but maybe that happens over time.
I mean, JP Morgan, I know, has started a tokenization project. A few other ones too.
Well, Circle and Tether are the biggest. You have First Digital, Paxos, we've talked about. They've been involved with stablecoins at times, commodities as well. They've got the gold-backed token. But you also have Securitize. Securitize has been powering or working with BlackRock on its Buildle fund, which is, again, real-world assets on chain. Ondo, another platform that's not necessarily always accessible for individuals or retail investors here in the U.S. at this stage, given a lot of the regulatory uncertainty. I think that changes over time too. But these are some of the protocols or the companies that are behind a lot of what's happening here. Ondo has a token, ERC20 token on Ethereum. You can invest in that. You can purchase that. Obviously, you're purchasing it because you hope it goes up in price.
ONDL, right?
Yes. Yep.
That's up 500% on the year.
Okay. So, I mean, that's worked up until this point, right? We've talked about this as a narrative. To realize those gains, you have to sell at some point too, obviously. Many times that we've seen, some of these things pump and then they dump. Not saying that at all about Ondo, but just in terms of what's behind it, it's largely at this point, it's narrative driven. You're seeing activity, you're seeing partnerships, you're seeing a lot of positive catalysts. You need those things to continue. Our view is that it's still very early and it's likely to continue. These are some of the ways that you can get exposure. Centrifuge, there's a wrap version of that. It's wrapped, centrifuge, WCFG.
Oh, I didn't know that.
Yeah.
WCFG.
Then there's a couple others that we don't have up here. We can only fit so many on the screen. There's a lot of projects that are involved in this space. If you go to the Dune Analytics dashboard that we mentioned earlier, you can see some of this. But you have others like Goldfinch. You have Maple Finance.
Yeah, Maple's a big one.
Right. I mean, look at the chart of Maple. It's straight up in the last couple of weeks, literally straight up.
Is it really?
Yeah. It's been
MPL.
a good one. Yeah, MPL. And so there's a lot of ways to trade this theme, to play this theme on both sides of it, right? And so if you believe that this narrative is going to become more prevalent in the market, you're going to see more capital allocated to this, more people participate, more actual use cases that are developed, and clearly that's what we're seeing in the data. The rate of change matters. How quickly does that continue to grow? We'll see. But these are some of the ways that you can get exposure to that. The other way being simply that most of this, again, is happening on Ethereum. ETH is the macro trade, in my opinion, as you called out.
I'm looking at a chart of Maple. I looked at the was it Centrifuge one as well. And these cryptos, they go from 5 to 20 over the course of 6 months, which is pretty normal. And I think a great way to approach crypto.
5 to 20 is pretty normal.
It is in this world. We don't know what's going to happen, but it's not wise to buy the top.
No,
obviously.
If you can identify the top, don't buy it.
Well, here's the great thing about crypto is we know there's going to be a new low in the future. Maybe not as low as the previous low, but it tends to.
It's going to be volatile.
It's like an ascending mountain range. Yeah. So if you don't,
the stuff moves.
If you like it, it tends. So I think that the way to be profitable in the space is to really understand it, to be following these protocols, see what they're doing, read up on them, understand their current price, and then maybe in 6 months, maybe they're 70% off the highs. That's when you come and you buy it.
Right.
Because it probably will happen. I mean, I told you, with the AI token 6 months ago, you said, Mike, are you buying Tau? And I said, no. TAO is one of the biggest plays in the AI crypto space, and it was trading at $600-700. And I said, I'm going to wait for it to get down to $200, and it's at $330 right now. I got close to $200 a couple weeks ago, but
yeah, I see
it's
that.
just wait it out, because you're going to have another buying opportunity. It might not be today, but just know your stuff and don't pay too much, and you'll do well.
Yeah, I think you're right. I think people are absolutely right to question market cap here of some of these things. Right? We've talked about the importance of looking at data that's available either through the Tasty Crypto Wallet or through CoinMarketCap.com, but just looking at how much supply is coming relative to what's currently available to trade in the market. When those token unlocks are likely to occur, when they're scheduled to occur, because that can change things very, very quickly, right? If you have a token that it was, let's say, heavily invested in by VCs, and those unlock periods are coming, it's very likely that given that liquidity, that availability, they're going to dump it. Relative to where, you might see that the chart is down significantly off of whatever its recent high was, but wherever these investors likely were allocated at was much, 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 much lower than where it even is today. And so there could be continuous sell pressure for some point in time. Just pay attention to that stuff. I'm not calling out any individual tokens or anything like that. I think for the month of July, it was known that there were some fairly big amounts of token unlocks that were occurring, some of the L2s, for example. Just be aware of that, right? That is going to drive some volatility. There's ways to trade that. We can talk about that in more detail on another show. But you got to pay attention to the details is the point. Know what you own here. Trade it with a bit of patience as well. And just understand that some of these things that we're talking about, they didn't exist last year.
Yeah.
Right? These might be short-term trading opportunities.
And more than half of them won't exist in 3 to 4 years from now.
It's entirely possible, but the space is not going away. There will be new opportunities. I think it's going to be, there's going to be continuous opportunity in here. It's just staying on top of everything, which is tough to do at times because it moves very quickly and there's a lot going on.
It's
what makes it fun.
positioning yourself in a diversified way to be there when it does happen. Ryan, do you know when the first email was sent?
I don't.
1971, I think, right? Now, how long did it take from that first email, from the technology being in place, for it to take on where actually computers were used in offices and schools? It took a long time, more than a decade for that regular use of computers. Now, blockchain has been around for over a decade now.
Hopefully it's moving a little bit faster than that.
Well, I don't think it is. If you look at, when was the white paper written? 2000?
Yeah, I think it was 2008 or so.
It was a while ago, but I think if this space is going to take off, and I think there will because it's simply too efficient for it not to, you have to be positioned right. And once the world does make that transition, you want to be in a couple things, even if it's just a little bit of your portfolio. You want to be positioned for that move, for that new internet to take off.
Look, you've done the work around portfolio allocation, and at least, as of recently, how does investing in just a little bit of Bitcoin specifically impact your portfolio? And we had a hard time finding that there was any negative impact to it.
I mean,
the traditional 60-40 portfolio blew up because of the equity or the bond position. Excuse me.
Yeah, I mean, it's, in my opinion, it's a brainless investment. You don't have to think about it.
Sure.
You have to have some. It's an uncorrelated asset class.
Look, I mean,
that's all there is to it.
Objectively speaking, it can go down 80%. It can go up 500%.
Yeah.
Historically, it's had more upside than downside. It's had that asymmetry to it. That's what we look for. I think a percent in your portfolio is a fair allocation. I don't know. We're proponents of it. We've been in it for a long time, so maybe we have a skewed view there. But it seemingly is continuing to grow. There was massive inflows into the ETFs just last week.
Yeah,
continuing to see that.
Ether is starting to show a little bit of promise too.
Let's talk about the market for a second, Mike. ETH has underperformed here following the ETF approvals and the launch of trading, which was yesterday. I don't have flows in front of me. I'll see if I can pull those up. But let's just look at
107 million inflows on the first day.
Okay,
alone,
which is
yesterday.
Relative to everybody's going to compare this to Bitcoin, best ETF launch of all time. That's still a lot.
I mean, Bitcoin had 4.6 billion.
Yep.
Versus Ethereum, which had what I say
100 something.
Yeah, so I mean, it's like a quarter of Bitcoin, which is exactly better than I thought it would be. Not everybody knows about Ethereum. Everybody in the world knows about Bitcoin.
Yeah, well, it's been trading for a day.
I said a million, 107 million. Okay, so that is a lot less. I thought it was
not a quarter. Yeah, a quarter would be a billion. Right?
So 106 million versus 4.6 billion. That is a shortfall, but
it's day two.
It's day two.
That said, I've got a spot price of 65,651 right now. When we ran these numbers, we had a spot price of 66,000. Bitcoin hanging in there in positive territory on the week, up a little bit on a rolling 1 month basis. And given just how volatile these things are at times, you see those monthly numbers change quite a bit. The weeklies, obviously. ETH is the relative underperformer. Solana is the relative outperformer. I've got a price of 177, so a little bit lower than 179 where we're at, and 3,400 was our spot price with ETH. Bitcoin volatility picking up a bit as well, so be aware of that. It's going to give you a larger expected move. The Bitcoin vol was really sticky in the mid 50s, and now we've seen on this up move recently, we traded as high as almost 69,000, 68.5, and so you're seeing volatility move a little bit higher. We know that vol and price typically move together here in these markets. It's the opposite of what we often see in equities, where if the S&P's getting hit hard today, obviously you're going to see the VIX is up quite a bit. A little bit different in crypto. That said, when you look at whether anything has changed structurally, like to look at momentum, try to stay on the right side of the trend here, nothing has changed in terms of the indicators that we look at. We look at moving average crossovers. Everything across the daily, weekly, and monthly time frame is still bullish. As that changes, we will update everyone. I've got some research, too, that I've been working on, Mike, that I'm going to present next week that just shows you how, when you follow that weekly indicator specifically and try to stay on the right side of the price momentum, you really can outperform, both by taking short positions where you can in the derivatives markets and simply just getting long and staying long when it's green, and then maybe getting out of the market as those signals change. The weekly is a little bit slower time frame, obviously. Pretty strong signal there. So we'll let everybody know once that changes. At some point it will change, and you're going to want to be aware of that, and you're going to want to get out of the way. But for now, still structurally, everything seems to be intact. Looking at expected moves for the week, we're using the spot prices in the table above. I've got almost a $5,500 to $6,000 move, $5,775 for Bitcoin, give or take a few $100. $5,000 move is what you're looking for. 60.2 on the downside, 71.8 on the upside. Kind of takes us into that area where I think you can trade into, just given the way that this has been moving within the range. That'd be about the top of the range at 72. And then a $300 move for ETH, 3,000 on the downside. If we get there, 3,700 on the upside. Again, an area that we've traded into and really haven't been able to break above. And we've talked about the relative outperformance of Solana. You continue to see that show up when you price it in ETH and you price it in Bitcoin. Solana has been the big winner on the week and certainly on the month. If you've been long Solana and short either one of the other tokens, or simply just long Solana in dollars, you've done pretty well.
You love Solana.
I do. I love the volatility, Mike. Also, just think, look, we've talked about this on a relative basis. Its market cap's like 80 billion. ETH is 400 billion. I don't know. They do the same things. Maybe it goes up a little bit more. Maybe ETH goes up a bit more. I think it's early, but yeah, I like the Solana trade. I could buy more of it. It's cheaper.
Buy some more right now. Load up. Ryan, I have to make a correction. I don't want the last thing I said on the show to be an error. I was researching on the fly. 140 million inflows into the E3 ETF on day one versus 655 inflows on Bitcoin. So that means Ether had 21.6% of the inflows, which is pretty good.
Which is Bitcoin. What a lot of people, ourselves included, have said we thought we would see.
Yeah,
25, 30%.
I said, I guess 25. So.
Which is about what the market cap of ETH is to Bitcoin.
Yeah, it's pretty much in line. Yeah. And given it doesn't have that brand recognition of Bitcoin, I think it's pretty good. So I just wanted to straighten that out.
All right. Well, as we wrap things up, Grumpy Mike, Joe, throwing out some comments, thanking you for your time on the show. Always enjoy having you on the show. I guess it's back to the lawn care business for you.
Yeah.
Absolutely. It's been a pleasure, my friend.
Yeah, it's been fun, man.
It has been.
We'll do another show somewhere, sometime.
We will. But until then, that's going to do it for our show. I'll be back on Monday with Frank Caberna. This is the Tasty Crypto Show. I'm Ryan Grace. He's Mad Mike Martin.
Peace out.
Peace.
Hey, Doc. Your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is going to be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's going to be hangry.
From the smart mouths at TastyLive.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
No.
My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11?
Oh.
First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast. Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
We just ripped higher up to 50 points, and I just thought we would stay there, but
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Oh, yeah. Tasty Nation, good morning.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And that he's still doing this. No, let's take a look. They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this. To me. And then, you know what? Money goes to money. You did it. Good job out of you. Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Oh, yeah. It is Wednesday, I think, July 24th, a little bit after 5 p.m. You know what that means. It's time for Tasty Live's evening show, a little podcast that we like to call The Price of Truth, where we like to explore the incentives that govern our world. Normally, we'd be having a great mind come on and share great ideas, but our good friend is on a well-deserved vacation. Ilya Spivak will not be here this Wednesday. He will be here next week, which means today's a solo show, baby. And by the way, I've been booking up the next couple of weeks while I'm in Chicago.